we've been able to come back up. So those are some numbers for the Nifty. For the Nifty Bank, I mean, again, you can look at but because this is more volatile, I'm not putting the hourly numbers. I'm just looking at the swing high, which is 49,650 in the case of the Nifty Bank. We're already at about 48,700. And on the downside, that level basically stands at 48.74. Now, the Nifty Bank has not broken that level. The Nifty did break 13th lows, but the Bank Nifty has not. And that's the 13th January level on the downside, which has not come into the equation so far. So, hopefully we don't have to look at those levels and the market does some base building. I mean, the overwhelming view still is that you'll get a bounce and the bounce has to come. And it has to come. I mean, that's the nature of things. After immense selling, I mean, all technical readings, etc., are showing very, very oversold signals. But the overwhelming view, I mean, out there is that, well, this is still a larger downtrend, and I mean, the market will eventually get to about 23,500, 23,400 kind of levels close by, and then you will start to come off once again. So that's the backdrop, that's the expectation. So be mindful of that as you approach the market in terms of at least the indices. 60 points lower on the GIFT Nifty is what the start is indicative of. Surabhi.
Absolutely. But the chatter around, what I've started hearing within friends and family now is that, the portfolio is down, all my funds are down, nothing that I've bought in the last 6 months is working. So, that sense of exasperation, I think it's beginning to creep in because the market's been testing patience.
I heard a nice one yesterday. My portfolio is flat, not too bad.
Yeah, that's true.
That's a sea change from what we were hearing. My portfolio is up
30% and 20%
in a month and all that. So, now having a portfolio that hasn't got hit, I think.
Is a not performing portfolio? Absolutely. Yeah. So I think we're still waiting for some of that positivity to come back. But there's plenty of it on Wall Street. And by the way, I mean, these indices that were roaring higher, I guess it's a mix of the fact that corporate earnings have been very good, big bank earnings have been good. Netflix's numbers, like Prashant mentioned, were blowout. I mean, the subscriber additions are now above 300 million. And not just that, they increased their 2025 revenue guidance by a whole $500 million. That's the extent of optimism that one company is saying, but it's obviously not the only one. And for the time being, it seems that this whole economic optimism and this whole Make America Great Again narrative, coupled with the expectation of easier, regulation in the US, that's really powering Wall Street higher. Anyway, now speaking of Mr. Trump, yesterday he made some big comments on geopolitics as well. And I think it's important to note that because now he's saying that this war needs to stop, the Russia-Ukraine war. And these are comments that he made on, his platform, social media platform, saying settle now and stop this ridiculous war. It's only going to get worse if we don't make a deal soon. So basically what he's saying is that he's threatening Russia with more tariffs and sanctions, but he says that's not the route I want to take. That's not the way to do it. The easier way would be just to come to a table and to get a deal done. So he's making a huge pitch for that and expects some more good news, at least on the geopolitical front, and how that plays out. On Asia, markets are mixed, but the bias is very clearly positive. Most of the key markets around us are actually in a nice shade of green. Though the numbers are a bit iffy. That's the Hang Seng for you, up about 0.5% right now. South Korea is the one where the economic data has not been very good. GDP numbers came out for the December quarter, and it's the lowest rate of growth in the last 6 quarters for South Korea. 1.2% is the number. But the market seems to be sort of moving along. The Bank of Japan is starting its 2-day meeting. It's today and tomorrow. And there's a rate hike expected. Remember, the Bank of Japan has been on pause for the last couple of months, so waiting to see what the Fed has to do, waiting for the US election to get over. But the indication is that we'll get a quarter basis points rate hike tomorrow when that meeting ends. So let's see how that plays out. The markets are fine right now, including the Nikkei, which is up in green territory. For us, quickly coming to fund flows, more of the same. Selling of about 4,000 crores from the institutional investors as the market was trying to bounce off the lows yesterday. At least there was some recovery, and largely that support has been retail flow or the domestic institutional flow, which was the case yesterday also, because 4,000 crores of selling offset by 3,600 crores of buying from the institutional side. Now, results and numbers, lots of them, and we'll talk about this as we go forward. BPCL, the LPG under recovery, and remember you've heard headlines around this, that the government will come and support and help alleviate the LPG under recovery pain, and perhaps it needs to happen because BPCL's performance has been marred by exactly that. For lever, there's no volume growth, flat. Manglam was telling us it could be 1 to 2%. It's not even that. It's flat volume growth. Numbers are absolutely, dismal, nothing to talk about. But it's their acquisitions. They're taking the inorganic path with brands like Minimalist. That's going to be, center stage, and it'll be the bulk of the chatter around lever today. So watch for that. Pidilite is relatively better off. Volume growth has come in, our long expected lines of about 9%. Margins, however, are under pressure. So let's see how this goes. Today is a very heavy day. There's Ultratech Cement, there's HPCL, there's Dr. Reddy's, bunch of mid-cap IT companies like, Cyient, Memphis is also reporting, and names like Indus Tower. The list is going to come up on your screen, or Jeevan Small Finance Bank. So it's pretty busy. I'm just going to end with something that our Delhi colleagues are reporting. It is budget season and the market's got its nerves. And it seems that what TIMSI is picking up is that the budget is going to be front-loading capex, and the market will like the sound of that, because it was this whole pickup in government capex, which you didn't have because of the general election last year. That kind of is, tempered the enthusiasm. So she's saying, expect it to be front-loaded. Where will it go? Infrastructure development, healthcare, EV, highway construction, and railway track expansion. So these are some of the big watch points in the areas. And let's see if there's some build-up, as we get into full throttle election mode, whether some positioning starts building up in these stocks, because they've been really battered down in the last couple of weeks.
Well, that's right. And the good news is that from February till, I think, November, there is no stage, because then those freebies and those populist measures will actually take a backseat. And then you'll see that capex push, which in the last few months, we've seen plenty of state elections, which has curtailed that. Well, let's focus on the cues overnight. The US markets, as you said, well, they did quite well. Brent crude prices well behaved. In fact, they're a little bit lower. The dollar index softer, and the yields as well pretty well behaved. So no worries on that front. Yesterday was an inside day. What does that mean? Well, the highs of yesterday was lower than the previous day, and the lows were a little bit higher. So we were in that range yesterday. But today, you'll have plenty of action, because today, in fact, you'll be having the weekly expiry that plays out. So that adds some more spice for today's trade. Yesterday, we saw a big recovery from the lows, and as you all mentioned, the institutions are nullifying each other. But you had a bit of a short covering bounce that played out, because the open interest was lower, and you did have the indices recover from the low point of the day, which was encouraging. The FIs, well, they added equivalent amount of longs as well as shorts. In yesterday's trading session, close on 3.5 to around 4,000 contracts or thereabouts. The good news was that on stock futures, the long addition was close to around 2:1. So close to 50,000 contracts were added. The previous trading session, we saw some unwinding of longs on stock futures. So that's another healthy sign that I'll be looking at. The FIs, as well as the clients on opposite ends of the spectrum, FIs net short more than 3 lakh contracts. The clients net long close to around 3 lakh contracts. For the time being, the FIs seem to be having the upper hand. But if you're going to get more amount of talk with regard to capital expenditure and things that are good for the economy, and maybe some monetary easing as well, well, those FI shorts, they could get covered out. For the time being, there's no yet sign of that. Moving to the options data, then these strikes expire today. So the 23,300 call was active. The 23,000 put as well was active. So if I'm looking at levels, the 22,950 mark becomes important. Last two sessions, we have gone to those lows and we have bounced off that. So that's very, very important. The 22,950 or thereabouts. On the upside, 23,350, we briefly traded about that in the past week. But in fact, we broke that yet again. So that becomes a bit of a resistance level, going by the options data, going by the recent technical levels. The Nifty Bank, you'll want it to make a higher high as well as a higher low. In the last couple of trading sessions, that has not happened. So you'll want the high to be above these levels, and you'll want it to protect the lows as well. Today is the weekly expiry, some kind of glimmer of good news. And if you can get the markets to trade in the green for a longer duration, then the shorts could get a little bit jittery, because of late we've been seeing the bears have an upper hand. Irrespective of the headline index, plenty of stocks have come to those levels where, in fact, you would like to gradually nibble in. So keep an eye out on a lot of them.
All right. Nigel, thank you very much for that. Well, that's essentially the setup and stocks to watch out for. Anurag Singh is managing partner at Ansit Capital, is with us now to take some questions. Anurag, good to have you with us here. Thank you very much for your time. So, as expected, President Trump is juicing up America with Stargate and whatnot. And of course, it's showing up with AI, tech, etc. doing well. Here in India, though, I'm not sure it's to do with uncertainty around tariffs, or I don't even think it's the budget in that sense. Not very much is expected, but just in a bit of a downdrift because of, earnings growth, deceleration, especially on the consumer side. What's your sense, Anurag? What are prospects looking like near term?
Yeah. Prashant, morning. So Prashant, I think you summarized it well. I think here is the quick view. I would say one, look, Nifty is fine. I think if I look at Indian valuations, Nifty is rather a tad below the long-term average. There's no froth or overvaluation, nothing like it. It's exactly where it should be, a tad below rather. right? But the catch is the FIIs have a bit of in the short term, they have a bit of a veto on Nifty at least, right? Because they hold all the consumers, technology, and the banks. The challenge is, Prashant, and I think I spoke the last time as well, and that's exactly after when the rupee kind of started to tumble a little bit. I think the rupee will have to find its level, right? If it has to go to 90, 91, I don't know where the RBI is comfortable with. But until the rupee hits the level where it should, really, it's slightly overvalued at this point. At least that's what the RER suggests. So I think that's the take on why the FI on the margins might want to just at least, nobody wants to at least put in money, when there is a clear depreciation just, facing us, right? So that's one top view, Prashant, on Nifty. But I think largely, Prashant, on the rest 450, look, you can spin it either ways. Now, there are two views about it, but here is what I think. I think the longer term story, Nifty delivers 12%, but the other 450, collectively Nifty 500 delivers 10 to 11%. That has been the history till 2019. That has been the history from 2011 to 2019. It's in the last 5 years where they've delivered, Nifty 500 has delivered 15, 16%, largely skewed by mid and small. Now, that said, I think at September peak, about 50% of the Nifty 500 stocks were more than 50p. That's kind of unheard in any developed market, any major market, right? And forget, at a size at which India is. I think so. That will, my view is, it will take a mean correction, and that's what we are looking at. I sense is that we need further correction in Nifty 500, which means Nifty mid and small and Nifty next 50. And really need to get back to the normal rate of return, because India story is basically large cap, big, major organized companies. That story is India story. GDP growth normally is for the last year, even this year, has returned back to 10% nominal. So which is fine. So everything otherwise, other than that, looks great in India.
Anurag, hi, morning. So what are you buying? Where's your money going?
So to be honestly, if I am in India, I think just pick a couple of private sector banks and park the money there. I think IT is expensive. You can buy a little bit of healthcare, eat hospitals, healthcare players on the margins, But other than that, I would advise buy 20, 30% bonds if you want to time it, right? But otherwise, just keep buying Nifty companies. They're all good. But except that nobody wants to buy an HDFC bank now because they say, well, the returns are not great. Well, that's how it has been. But that's the only place of value, Surbhi. I think other than that, I think I wouldn't mind. This is not the time where, you can go all out, especially on the outside of Nifty 50. I don't think there is much room for appreciation, at least for 2025. I mean, if you are a bottom-up stock picker, of course, you can find a lot of gems, but I'm not one of them, not for the Indian market.
Hi, Anurag. Good morning. Good to see you. And Anurag, you've made this point, just reading a post that you put out with regard to the two-wheeler sales. They haven't moved much. And, it's time that we wake up and smell the coffee that the lower part of the economy, in fact, is struggling. Do you think that, the government is likely to focus on that as well? And you like to play some of these themes that could get some kind of a boost? Or do you think that, no, it's just too much of pain out there, you'd rather stay away? Wait for the government first to do something, and then, in fact, you get into some of these names.
So great point, Nigel. I actually hesitate to put anything negative, usually because it's, I'm sitting on foreign soil, so I don't like that. But, we are investors. We have to really speak the data as it is. I think it's pretty much obvious to anybody. And, some of the people reply that, oh, look at four-wheeler sales, the car sales. Car sales are also struggling between 3.5 million. It has been for 10 years like that, right? I understand there are upgrades, but for a market which is sitting on such a huge demographic dividend, that's not the story which ideally it should be, right? So I think, it is time where, the government should be given a message that, look, it's not all hunky-dory. I understand there is liquidity flow from the investors, but that's not the real economy. The real economy in India for the last 10 years, nominal GDP is 10%, which is fine, but I don't think it meets the aspirations of the talent that India has. So that's a bit of a injustice to the youth expectations in India. I don't know. We'll see what happens here, but I think Nigel, if I have to just kind of summarize in a limited manner, China is sitting on such huge excess capacity, be it EVs, be it green energy, be it anything else. I doubt whether investment in India will pick up because everybody is waiting for imports from China, right? So the world is moving so fast, and I think we are stuck in a little bit of a bureaucratic tangles, and we're not moving fast enough. That's a hard reality check, a little bit, Nigel. I can't say anything more than that.
All right. Why don't you come here and say what you want to say? All right. Well, points taken, Anurag. Good points. And thank you very much for joining us with that. Appreciate it here on CNBC TV18 as always. Well, we'll take a quick commercial break here. We're going to come back and continue the conversation. But here are the quick preview of the interactions which are lined up on the program. 8:35. Tata Communications Management joins us for the third quarter earnings. 9 o'clock, you'll hear from the management of Hoodco. Came out yesterday. 9:20, Yogesh Patil of LIC Mutual Fund will be our market master. 9:30, we'll have Coforge talk to us about third quarter. Numbers were decent. 9:50, you'll hear from Aditya Vilekar of Axis Securities. We talk about expectations from the metals space, and towards the end, it's our special. The budget 2025, Lata in conversation with economists on what to expect.
All right, we'll slip into a snappy break. You come back, we'll go full throttle on all of the stocks that we're tracking for you. For the time being, I'll run you through the list. HDFC Bank, Persistent, Coforge, Pidilite, GoDigit. They'll all be reacting to positive news flow. Add to the list, you have Gravitas, Zydus, Hoodco. So 8 stocks that will be reacting to positive news flow, while HUL and BPCL could be trading off in the red kickstart trade. Slip into that break, come back, get into further detail on all of them.
That he is serious about tariffs, both from the perspective of raising revenues for the US so that he can cut taxes more, which he needs to. Also from the perspective that he really believes by putting tariffs on others, he can bring jobs back to the US. I'm skeptical that he'll raise much revenue. I'm skeptical that too many jobs will come back to the US because manufacturing has gotten so automated that, it's not going to happen in a big way.
Do you foresee the need to scale down hiring? Do you believe that you will continue at the pace that you are, or you may even have to look for more?
I think that you won't have to scale down at all. I do think that over time, and at least we've seen this in our software portfolio, that there is a certain non-linearity between number of people hired and actually growth. So I think that more and more not looking at them as, a direct correlation is something that will happen. But for example, in our engineering services in ERS, even though almost 80% of now, let's say, coding can be done through AI. But then what we are training our engineers is how to build applications on top of it and how to do a lot more of design around it.
We have a presidential memorandum that was issued that delays the imposition of tariffs, and in fact calls on each of the trade agencies to start a process to look at countries with which we have a trade deficit, unfair trade practices, looking at existing free trade agreements, looking at sectors that have national security implications. And those reports are due to the president on April.
Welcome back. So the cues have been very positive across the global backdrop. Not that it's helped our cause, but let's see. The implied open is suggesting that we'll actually start lower. And this is despite the fact that most of the major markets, you've got Japan, you've got Hong Kong, they're actually all positive if you look at it. But let's see. Bulls have had a tough hand over here. Now, let's boil it down to individual stocks. Lots of earnings have been coming through. So we've got our team standing by with the CNBC TV18 list of top stocks to watch. Hi, guys. Morning to all of you. Manglam, let's start with lever. Actually, I don't even want to ask about earnings. I could probably start with minimalist.
Let's start with minimalist, but earnings also can be clubbed as minimalist only, largely because the expectations itself were, so muted that the company reported muted set of numbers. So let's actually, drill down to numbers, and then I'll talk about minimalist in just a bit. Largely in line with very muted expectations, net profit boosted by a one-off of close to around 509 crores because of the gain on the sale of Pureit, and the management expects moderation in consumption sentiment to continue. This against expectations of gradual recovery coming by as well. Revenues 15,400 crores. The street was working with 15,600. EBITDA largely in line. Net profit boosted by that one-off. Volumes absolutely flat, 0%. And it was led by home care revenue, but all the other verticals of the company underperformed as against street expectations. The only, saving grace were the announcements that came by beyond the balance sheet. One was the acquisition of 90.5% stake in the business of Minimalist at a valuation of close to 3,000 odd crores. Annual revenue run rate of 500 crores doesn't move the revenue needle as much, but the important part is they are not buying a capability or the products of Minimalist. They are buying the customers of Minimalist, and they're buying the brand positioning of Minimalist. So that could do well in their beauty and wellness business going forward. So that's something we'll keep an eye out on. But on these numbers, does the stock fall or does the stock rise? It's anyone's guess, because it's fallen by about 22% from the highs, trades at around 46 times. There hasn't been any sequential recovery in earnings, but at the same time, the stock's already priced that in. So expect flatness in the stock to continue as well.
Okay, all right. Manglam, thanks a lot for that. Let's hop across to Abhishek. He's here to tell us about HDFC Bank. Abhishek, morning.
Morning, Nigel. So SDFC Bank in its con call yesterday did sound the same way that SBI told us, that the condition or macro environment is very tough. So very challenging macro environment is what MD of SDFC Bank said in the con call. He continued to say that, there is very tight liquidity conditions, signs of moderating urban demand with tepid private capex programs as well. There is huge volatility and depreciation of INR, which is hurting the economy. Capital outflows from equity and debt market is due to uncertainty around the new US administration. However, on the positive side, he did say that some of the demand of rural is picking up and government spending is also picking up. Strength in services exports and gradual moderation in inflation is seen. They have maintained tight leash with respect to cost of funds, which is helping them around in Q3 and going ahead as well. Back to you.
All right, Abhishek, thank you very much for that. So that's those are two big ones, right? Lever and HDFC Bank. But there are more. BPCL reported numbers as well. Sudarshan is here with details. So good morning.
Morning, Prashant. So headline is earnings are a miss in Q3 versus expectation of healthy set of earnings for Q3. So talking first about the factors that didn't work for the company. First is company had announced closure of 2 refineries for maintenance in October and November, and it's likely that the impact of that closure is more than the expectation. Second, company has reported higher inventory losses in marketing segment versus expectations of some gain. And third is LPG under recoveries has increased by another 3,000 crore. So in 9-month FY25, total LPG under recoveries are now at rupees 7,200 crore versus 4,000 crore that company had in H1 FY25. And the factors that have supported earnings are first, strong petrol and diesel retail sales, and second is crude was stable in Q3. So now talking about the numbers, EBITDA has missed estimates by nearly 9%. Margin has come in at 6.7%, that is 70 bips lower than estimates. GRM has improved 120 bips sequentially, but this is also 140 bips lower than the expectation of $7 per barrel. Brokerages though are largely positive. Citi says it maintains positive outlook. Q3 results were not good as expected, but outlook is positive and valuations are attractive. It also says any correction in the stock will be a buying opportunity, and budget will be an important event and it would be a key to monitor for OMCs, considering there is an expectation that government may announce that LPG under recoveries may be compensated, and that's the reason it will be seen closely.
Absolutely, Sudarshan. And looking at the BPCL numbers, we now know why they're talking about this compensation, right? 75% increase, I think, in the LPG under recoveries there. Thank you for that. Let's move on and talk about a couple of mid-cap IT companies that reported after market hours. We have Rima joining in to tell us how Persistent and Coforge did. Rima.
Well, Persistent and Coforge were the two outperformers in the mid-cap IT pack, and both have reported good numbers. Persistent is in line with street expectations on revenues. Margins were a slight beat. So top line growth for Persistent came in at 4.6%. Margins expanded by 90 basis points to 14.9% ahead of expectations, and that drove an increase in the company's profitability by 14%. Deal wins for the company have also been consistently moving up, and this quarter it's close to $600 billion. Now, the company reiterated its aspiration of achieving $2 billion by the end of FY27, but what is new is that the company has now introduced an FY31 aspiration of achieving $5 billion in revenue. So the quarter is good. The company continues to execute well. The stock was down 4% yesterday. Perhaps it could recover a bit. Coforge, on the other hand, has reported a very, very strong beat on the top line. The street expectations were for a 4.5-5% kind of a top line growth. The company has grown by 8.4%. That said, margins are slightly lower than street expectations. The way the company calculates margins, they are flat at 11.8%, lower than expectations. But look at the other internals. Second consecutive quarter of $500 million of an order intake. The signed order book is 40% higher on a year-on-year basis. And the company, remember I told us 3 months back that this is going to be a standout year? Well, this time they're saying that even the next year is going to see robust and sustained growth. So keeping the faith in Coforge. Back to you.
All right, Rima, thank you very much for that. I mean, as we said, these are companies we'll speak with. We'll have Sudhir Singh, CEO and Executive Director at Coforge, join us at 9:30 for a conversation on the numbers. Let's go across to Mangalam once again and talk about Pidilite, which reported as well. Mangalam, morning.
Good morning. So the consumer sentiment is weak in that Pidilite has actually reported in line with expectations, but there's a good set coming in, largely because, there's subdued demand across rural and urban geographies. The company's stepped up their ads and promotion spends as well. In light of that, a revenue growth of 7.5%, an EBITDA growth of 7.5%, and a net profit growth of 9% is something that the street would like. Revenue at 3369 crore. The street was working with a number of a little over 3300 crores as well. 800 crore of EBITDA, margins in the band of that 20 to 24% that the company keeps guiding for. Yes, on the bottom line, there has been, a miss versus expectations, but that's nothing really to worry about. The total volume growth has been around 9.7%. led by consumer business volume growth of 7% and business volume growth of close to around 21% as well. In this environment, these would go down as slightly better than expected. So see, no more than a mild green on Pidilite, though it'll be further boosted by the fact that oil is down to about $78 as well.
Okay, all right, got it. So Pidilite, hopefully some green over there. Mangalam, thank you for that. Let's go across to Vamakshi. Go Digit Insurance reported numbers yesterday. Vamakshi, tell us how they were.
Well, a good set coming in from Go Digit. When you look at the gross written premium, that saw an uptick of 10% coming in at 2,677 crores. The NEP growth, however, was rather slow, up only 5% on a year-on-year basis, coming in at 2,084 crores. Now, largely the slowdown in NEP growth is mainly on account of a couple of factors. The first one being change in the counting method for long-term premiums to 1 to N, 23% year-on-year decline in crop NEP and low single-digit growth in motor segment NEP, which was somewhere around 6% year-on-year. On the other hand, we saw that the claims ratio actually improved to 72.9% as compared to 74.5% year-on-year. The expense ratio also improved to 35.2% as compared to 35.8%, and resultantly, the combined ratio improved both on a quarter-on-quarter as well as year-on-year basis and stood at 108.1%. Resultantly, the profitability of the company saw a very good jump, almost up 74.1% at 118.5 crores. Overall, a good set coming in for Go Digit.
Okay, all right. Thanks a lot for that, Vamakshi. Well, Gravita is the stock that I'm looking at, and they came out with a set of numbers. Top line growth of more than 30%, and their other income, which for them, it's part of the operational performance as well. That was much higher, close to around 80%. That gave you the EBITDA, including the other income, at around 110 crores approximately. That's more or less in line with what MK put out. And the margins at around 10.7%, that's par for the course. Well, on a year-on-year basis, it's a little bit lower, but it's almost exactly what the street was anticipating. Profit number came in much higher though. That's because the effective tax rate was a little bit lower. So the stock, in fact, recovered in yesterday's trading session. Expect the stock to open up mildly in the green in today's trade as well. Well, let's move back to Vinny then. She's here to tell us about Zydus Life. Vinny.
Good morning. So, Sorry, we are keeping an eye out on Zydus Life today because an important announcement that came in was that the US FDA has now announced orphan drug designation for one of its drugs, that's Usnoflast, and this is mainly used for the treatment of ALS. Now, Usnoflast is a novel drug, which is a very what does this mean, orphan drug designation? It actually means that this is for the treatment of rare disease, and what US FDA wants to do is make this drug available for a lot of patients that are actually getting impacted by this. So it's a bit of a positive in terms of a sentiment that comes in for Zydus Life. Now, Usnoflast is also something that was studied for other treatments as well. Preclinical trials were done for neuroinflammation diseases, other types of diseases as well, and that already received orphan drug designation for Usnoflast for the CAPS disease previously from the US FDA, and now it's also come in for the ALS disease. So surely something that is positive coming in for Zydus Life, especially in terms of sentiment wise.
Okay, all right, got it. Vinny, we'll watch out for this one. Zydus Life on the radar as well. And finally, let's look at Hudco. Hudco seems to have come up with a really good performance. Abhishek, tell us the details.
Well, Hudco has signed an MOU. This is with Vadhan Port project, that is VPPL, which is a JV between JNPA, that is Government of India entity, and Maharashtra Maritime Board, which is an entity of Government of Maharashtra. So Hudco shall explore and provide funding of up to 25,000 crore for the development of new ports and PPP projects of VPPL. With respect to the numbers were really on the stronger side. Net interest margin expanded on a sequential basis to 3.19% versus 3%, and that is albeit on the fact that their yield actually increased massively on a sequential basis. So interest income was up 11 to 12% quarter on quarter versus 7% AUM growth that you saw on a sequential basis. Asset quality has improved. Gross NPA ratio is down to 1.9 versus 2% in the previous quarter. Disbursements are up 11% on a sequential basis, and that also drove the AUM by 7% on a sequential basis. Back to you.
Okay, all right, got it. Thank you for that, Abhishek. We'll be, in fact, touching base with the Hudco management, talk about this extremely strong performance in the third quarter and their tie-up in terms of funding port infrastructure with the government of Maharashtra. Discuss all of those details in a bit after, just around market opening. Okay, so let's keep it with earnings and numbers. The focus is now on Tata Communications. The company reported the Q3 print yesterday. The margins have expanded, data revenues up about 6%. This is, of course, year on year, and the company is saying that it's aiming to increase its data revenue to about 28,000 crore rupees by FY27. Well, let's discuss this further with Mr. Amur S. Lakshminarayanan, MD and Group CEO at Tata Communications. Mr. Lakshminarayanan, thanks very much for joining in. Good morning to you. So let's start with that one big headline, right? That you're looking to almost double your revenues by FY27. Now, our colleagues are pointing out that if you look at some of the brokerage chatter on the street, one wonders if this is a very tall order, whether the ask rate is too high, and whether you're also factoring in maybe some inorganic growth, some acquisitions to get to this level of 28,000. So tell us the details.
Yeah, hi, good morning. Yes, I think we have set up an ambition to double our revenues. We announced that last year to hit from 14,000 to 28,000 crores. I think the ambition was based on the transformations that we were carrying out within the company to shift us to a product and a platform story and the digital fabric. And those investments are yielding good results in the sense that across all fabrics, be it the network fabric, the cloud and security, the interaction fabric, and the IoT fabric, we are seeing good traction and reception from customers. Our relevance has increased. So those were the parameters based on which we said that we have to aspire now for a much greater acceleration on revenues. So the aspirations
is this entire, sir, but this target of 28,000, does this mean entirely organic growth, doubling your revenue via the inorganic organic route, or will it also include potential acquisitions?
Last year we had acquired Kalera and the Switch, right? So I think those are helping us to add the capabilities and fill some of the gaps in our fabric story. And those two acquisitions are great additions to our portfolio. And we will be looking for opportunities which will add to the capabilities and bring value to us and to our customers. So that is part of what we do. But when we said that we wanted to double, it is not, calculated based on that we will have to do inorganic to achieve these targets. So our goal is to continue to build ourselves where there are gaps, and when there is a good opportunity to acquire something, we will do so.
All right. So what you tried to reconfirm to us is 28,000 crores is on the cards by FY27. Is that correct? Even though we have some adverse, macroeconomic data that's coming out, you still say that that's on, right?
That is the aspiration. Yes, we are going to shoot for it.
Okay, all right. Because a couple of brokerage doors, they believe that you could be 2,000, 2,300 crores short, but we'll go with your word on that one. Let's focus on growth then. On a year-on-year basis, as you mentioned, you tucked in a couple of acquisitions. So that's why the base was higher on a year-on-year basis. You've grown by roughly around 6% or thereabouts. Do you think you get back to growing in double digit, say 10% plus in the coming quarters on a year-on-year growth?
This quarter is, Q3 is the first quarter this year where we haven't had the tailwinds of acquisition. And so the Kalera acquisition was in October last year. So, and this quarter, the digital revenues has grown by close to about 10% on a year-on-year YQ on Q basis. The core connectivity business has somewhat been stagnant because of the CapEx that we had. And that marginally pulled down some of the overall data revenues. And as it picks up, we believe that we can begin to hit the numbers that we are looking at, double-digit data growth.
Okay, all right. Let's get a couple of other data points then, from you. The net debt numbers at around 10,500 crores odd. You sold some land in Chennai as well. What should the net debt number look like going ahead? I recall you telling us that the net debt to EBITDA was at around 2.3, if I remember correctly, and the goal was to bring it down to 2x.
That's true.
Outlook on the net debt and net debt to EBITDA?
Yeah, I think that's still our aim is to bring it to 2 or just below 2 over the course of the next quarters. I think we are on track with that, maybe slightly behind by a quarter. But I think that's what you would aim at. So get the net debt to EBITDA ratio to 2x or below that is our goal. And that's the first goal post. And then, our ROCE, also we want to bring it back up, and you will see that improvement coming over the next few quarters on the ROCE front as well.
Okay. Sir, what can you guide on the margin profile? Some of the brokerages this morning, for instance, are pointing out that, adjusted EBITDA is slightly shy of some of the street estimates because of the core connectivity business not perhaps, performing at an optimal level this time. So overall, as we are exiting FY25, what can you guide in terms of EBITDA margins, and what's the profile, the trajectory ahead for the next couple of quarters?
All our digital businesses, as I've been saying, has a margin glide path, which will continuously increase and improve our digital portfolio margins. Just to go back and explain, from the levels of the margins that we had in 23, we had a decline. And it's more an engineered decline because of the acquisitions. The acquisitions that we did were EBITDA negative companies that we said we will turn around over the course of the 12 to 18 months post-acquisition. So if you take the acquisitions out, the core, the remaining data business margins are still holding up at around the 23% mark. The second area where there was a margin drag was because of the subsidiaries, and we said that we are going to initiate a strategic review of the subsidiaries. And we're very pleased with the progress that we have made on those. For a start, the TCPSL business, we divested that business and we announced that last quarter. And that should help that should reduce the drag that we had. And the second is the TCTS, the Transformation Services business.
Yes.
Again, by exiting some of the non-profitable contracts, again, that has turned around and is profitable in the last 2 quarters. And that has also helped in reducing the drag. And the third is the incubation that we were doing of NetFoundry was, we said that we will bring in external investors, so the cash burn from us will sort of reduce there. So these are one set of initiatives that we have done to improve the margin back. And the second is all of the digital portfolio, whether it's the next-gen connectivity, the cloud and security, and the IoT fabric, and the interaction fabric, which is where the Kalera sits. All of these digital portfolios have a margin glide path that's on an improving trend as we speak. And that should help us to get our margins back to the 23 to 25% that we have been saying that is.
By when? By when?
That should happen. I think it will continuously improve. We said in the medium term, we will hit the 23% margin, which is back to the where we were before the acquisition.
Got it. Mr. Lakshminarayan, we'll leave it there. There's a story this morning I wanted to touch upon. It's all about sort of AI and AI full stack. I think there's a newspaper story this morning saying that Telecom is gearing to compete with US hyperscalers and Indian infrastructure players like Reliance Group to offer full stack AI cloud platform. So maybe we'll touch upon that as well. But short of time, so we'll have to say thank you. Appreciate your time here on CNBC-TV18. What we'll do is we'll take a quick commercial break here. We'll come back. Deepan Mehta is going to be with us of Elixir Equities for some fundamental stock talk. Stay tuned.
So it appears that there could be some delay in imposition of tariffs, perhaps with the exception of Canada and Mexico. He did make specific reference to those two countries, and China is obviously an outlier as well. So we will see, but there is likely to be a delay in the imposition of tariffs.
Ladies and gentlemen, the President of the United States, the Honorable Donald John Trump, and Mrs. Trump.
Having witnessed another successful moment in the experiment that you have entrusted into the hands of the American people, we pray your blessing on our 47th President of these United States, Donald J. Trump, and Vice President James D. Vance.
And we are going to bring law and order back to our cities. This week, I will also end the government policy of trying to socially engineer race and gender into every aspect of public and private life.
Welcome back. Let's get some analysis going on all the stocks that we discussed earlier. Deepan Mehta, Director at Elixir Equities, joins us on the show. Hi, Deepan. Good morning, and hoping for a better trading session in comparison to what we have seen in the past. Let's talk about start off by HUL. The commentary was a little bit subdued. They're doing some inorganic growth, and the stock has been a big underperformer, down 20% from the recent peak. Your view on HUL?
Yeah, good morning, and thank you for having me on your show. I think these are very challenging times for the traditional FMCG companies. And they are one of the points for not being discussed is that the growing power of the quick commerce and the modern trade and its impact on FMCG as well. See, companies like Hindustan Unilever, Nestle, they had the advantage of a very large distribution network. But Kirana stores are closing left, right, and center, and a lot of businesses going to very solid quick commerce or modern trade companies, which have got higher bargaining power. And long term, I think that's not a good trend for FMCG companies. In any case, I think it's very clear that a lot of the categories they're operating are very, very mature. And these kind of slowdowns certainly take the growth rates even lower. Even at these levels, it is worth selling off HUL and the other similar FMCG companies to go to maybe some other growth companies or maybe some other growth industries as well.
No, I mean, absolutely. I was wondering actually when we were talking about the results, etc. I've looked at HUL whenever the numbers come out, not so much for what the stock will do, but just as a commentary on the overall sort of more macro-ish rather than micro-ish. as you know what to do with the stock, etc. Just, I mean, of course, very, very large business, and sometimes it acts against it, right? In terms of how fast it can move, and so much is giant, really. But markets have had it tough, Deepan. But although there's always going to be pickings, stock-specific activity, action. What have you done lately? Anything you've liked, fallen enough, good moat?
No, Prashant, we are trying to see how we can still raise cash levels. And I think that companies which have got trading at very high P multiples, and a few of them are in our portfolio as well, and numbers are disappointing, clearly scratching ahead whether we should exit those stocks. And this could be multi-year holdings, but a lot of thought process is required over there. Just to name a few, very disappointed with Tata Elxsi numbers. Even management commentary was pretty, I would say, subdued from our perspective. Another company, Supreme Industries, I think very, very disappointing set of numbers. Although management is very optimistic for Q4, but last 2-3 quarters have been very disappointing. So like that, I think we are evaluating companies where P multiples are high within our portfolio and the numbers have disappointed. So we need to take action. Really, that's a lot of thought process goes over there, but I'm really not looking at making any fresh investment. And I'm sure stock prices have corrected significantly. But I think what was super expensive has now become expensive. It's not in that zone of where it is reasonably valued also.
Although, that's the thing, right? We've had this very high P multiples for over a decade, right? I mean, it's not maybe super high recently, but high for a long, long time. So very hard to say what is. But do you think the market style has changed, definitely changed? I mean, from rewarding very high P stocks, you're now in a phase where that perhaps won't work, and you need to change if you're able to. You got to change with the market in that sense, Deepan.
Yeah, of course. I think you have to evolve with the market. I mean, and I saw your take on the channel's take on BPCL, and I was wondering, should I buy BPCL? I've never bought it my whole life. I mean, because clearly I think there is value in buying low PE stocks. Even a marginal upgrade in the PE multiple can make a big difference to the earnings and between the price and the returns. And even if the earnings start to move up, then stock price can move in line with the earnings. So I think some amount of rethink is definitely required, especially investors who were chasing growth at any PE multiple. I think this particular earnings season and the last one and the way stock prices are moved is really quite an awakening that you cannot just buy anything at any P multiple. The momentum will take you only so much higher. But then when reality sets in, then you are seeing a correction, steep correction, 30-40% or thereabout as well.
Okay, all right. Deepan, request you to stay with us. We'll slip into a short break. We'll come back. We'll get pre-opening rates. We'll also get in some technical trades.
We will forge a society that is colorblind and merit-based. As of today, it will henceforth be the official policy of the United States government that there are only two genders, male and female. This week, I will reinstate any service members who were unjustly expelled from our military for objecting to the COVID vaccine mandate with full back pay. And I will sign an order to stop our warriors from being subjected to radical political theories and social experiments while on duty. It's going to end immediately. Our armed forces will be freed to focus on their sole mission, defeating America's enemies. Like in 2017, we will again build the strongest military the world has ever seen. We will measure our success.
Okay, welcome back. There's 8 minutes to go for the pre-open session to kick off. Mitesh and Sudarshan are with us with what they'd want you to do this morning. Gentlemen, good to have both of you here. Mitesh, that bad, huh? You got your hand on your head. No, I'm just kidding. How are things looking, Mitesh? Yesterday the market bounced last 20 minutes and there was no follow-through selling. But what do you make of it?
Morning, Prashant. So it's nearly that bad, actually. Look at the intraday volatility last couple of weeks, and you will find that it's been very treacherous to trade unless until you come down to a situation when you try to trade with very small stop losses and try to make some money out of it. But then again, this is one of the phases. In the short term, I think, I would believe that I've been talking about a range of 23,100 to about 23,350. We can now modify it slightly to 23,000 to about 23,350. I still believe that we're not looking at expansion on the downside because there's none. In fact, most of the volatility indicators have started reverting to their mean. And that could mean that it will still be a choppy range between 23,000 to about 23,350. And only if we get a closing below 23,000, I would be looking at 22,650, 600 zones.
Okay, Sudarshan, good morning. What about you? How would you set things up? Okay, I think the frame is frozen with Sudarshan. We'll come back to him. But Mitesh, why don't you run us through your specific trades?
On the trading side, I have a few sell calls and a buy call. DMart or Avenue Supermarkets is a sell with a stop at 36.20. Look for targets of 34.50. Lodha Developers Macrotech, that's a sell with a stop above 1100 for targets of 1020. And InfoEdge is sell with a stop at 72.91 for a target of 7100. And on the buying side is Hindalco. If it starts trading about 620, buy with a stop at 609 for targets of 645.
Okay, so 3 sells and 1 buy, right? And
that's right.
We'll touch base in a bit. And of course, Sudarshan, once we fix that frame, will be with us as well. We'll take a quick commercial break here. We're back with that and more.
The battles we win, but also by the wars that we end, and perhaps most importantly, the wars we never get into. The golden age of America begins right now. From this day forward, our country will flourish and be respected again all over the world. We will be the envy of every nation, and we will not allow ourselves to be taken advantage of any longer. During every single day of the Trump administration, I will very simply put America first. Our sovereignty will be reclaimed. Our safety will be restored. The scales of justice will be rebalanced. The vicious, violent, and unfair weaponization of the Justice Department and our government will end. And our top priority will be to create a nation that is proud, prosperous, and free. America will soon be greater, stronger, and far more exceptional than ever before. I return to the presidency confident and optimistic that we are at the start of a thrilling new era of
All right, there's what, 16 minutes to go and 40 seconds to go for the market open and 2 minutes to go for the pre-open session. Sudarshan is with us. Sudarshan couldn't come to you, a bit of a technical issue, but how are you set up? And what's the perspective? Morning.
Good morning, Prashant. See, let me tell you the good news first. We do this twice a year when we sit down on this channel and say the markets are treacherous. They are doing things that they should not be doing. They open up, open down, do unusual gaps, and this happens twice a year. So what is happening now is not unusual. This is something part of the market action, and sometimes we simply have to accept it. So that's why I'm saying it's the good news. It's not the first time, and it won't be the last time either. Now the Nifty itself needs to stop falling for us to say, okay, things are getting better. That hasn't happened yet. We saw new lows yesterday. So we have to be patient and let the market find its feet and say, okay, I am not going down anymore. Till then, I don't think there is any trade in the Nifty.
Okay, all right. Fair point, Sudarshan. Understand, why you would say that because of this kind of market decline that we've been in. We'll get to stocks in just a bit. Let me also ask Mitesh what he's doing. Mitesh, beg your pardon, Sudarshan. So actually, let's get to stocks. Since you're saying you're not looking at the index, what about individual names? Any other trades?
Yeah, and that's the place where we want to focus on. Tata Elxsi is a buying opportunity with a stop under 6,060. UBL is a buy, and UBL has come in my list earlier also with a stop under 2020. Bajaj Finance, which has gone through a very deep correction, is now giving signs that perhaps it's building a base. Consider buying it with a stop under 7,320. And my only intraday short is Tata Motors. That's an intraday short with a stop above 755, but primarily focus on stocks. Let the Nifty be.
Okay, all right, Sudarshan, thank you very much for that. We'll have both Sudarshan and Mitesh come back with us and run us through some more trades. The pre-open is just about starting at this point in time. I just want to put out, Surabhi and Nigel, I don't know if you guys saw what they call tech bros fighting on Twitter.
On Stargate? He's saying you guys don't have the money. Yeah. Essentially, that's what he's saying, right? That they don't have $500 billion to put on this AI infrastructure?
Absolutely. The tweet, we should be able to put this up if we can. And this is the tweet. So, so there was an earlier tweet about Stargate, etc. And Musk tweeted saying, well, they don't actually have the money. There you go. That's the first one. And he said, well, SoftBank has well under $10 billion secured. I've got that in good authority. Remember the number which has been doing the rounds is $500 billion. So Musk is essentially saying, well, they don't have it. They don't have the money. And then Sam Altman replies, well, wrong as you surely know. And the last bit, I think, is spongy. He says, well, this is great for the country. And I realize what is great for the country isn't always what's optimal for your companies, but in your new role, I hope you'll mostly put America first. So, I mean, I think
War of the Tech Titans.
That's why I love Twitter. I mean, X, if you want to call it. You have to
wake up so much earlier now to catch up with all of that's been going on overnight, right?
Yeah.
On and off social media.
Yeah. No, I think we don't see. I mean, think about it, right? Even a few years ago, we didn't see any of this. I mean, really top of the game, people, billionaires talking to each other, fighting with each other on a social media platform. But there you have it. Of course, what this means, because Mr. Musk, of course, is extremely close to Trump and will this really lead to any actual consequences, or this is just an eyewash and it'll all pass? We don't know. But remember, Trump 1.0 was chaotic because lots of people, lots of early appointees were fired, new people were brought in. It was a constant sort of revolving door. This time, of course, it's expected to be much more stable, but this does, for the first time, give us a sense that maybe we need to be in that sense watchful as well. Deepan, I think, is with us. Deepan, any thoughts, any take here?
I thought we lived in interesting times, but I think we're living in even more interesting times, But, end of the day, Prashant, all this is just noise. And, this is a great time to, again, focus back on how we can churn the portfolio to improve the quality. There could be a few opportunities as well on the buy side, on the sell side. We have a nice earnings season in place and a lot of intraday volatility is there. So I think from an investor's perspective, all this Trump and is just pure noise, and it should not shift away from the focus of business of investing and trying to find good quality stocks at reasonable valuations wherever they are available and whenever they are available.
Okay, all right. Thanks a lot, Deepan, for joining in and helping us out with your comment on all those stocks. Let's focus on the next management, the Hoodco. It reported a set of numbers to help us with what went on in the past quarter and how are things shaping up. We're joined by Mr. Sanjay Kulshrestha, the chairman and MD at Hoodco. Hi, sir. Good morning, and thanks a lot for joining in. Well, the street seems to be liking your numbers. At least in pre-open, the stock is a little bit higher. Your AUM target, I think, for the year was around 1.2 lakh crore, but you're almost there. So what's the revised number you should be looking at for FY25 as well as FY26? And also give us a sense on NIMs from here on. How do you see it play out?
Thank you so much for inviting me. Results are out, and we are appreciative that the results and the books is showing to the market what was committed last year. We are still committing a 1.5 lakh crores loan book. However, you are right in your statement that we had already achieved 1.18 lakhs. So we have to work on some revisions. So that work is still in progress. At the same time, I can state that there are a lot of infrastructure opportunities in the country which are backed by the robust policy and the programs of the government of India. So finally, we have to revise our numbers. So that that work is still not completed. At the same time, we will not compromise on the NIMs. Our NIMs are very stable in the range of plus 3%, around 3.2% we will be maintaining, because we believe that infrastructure has to be created in a very viable and sustainable manner. That's why we are continually working towards cut down our own cost of funds through many financial engineering and other resources.
Mr. Kulshrestha, hi, good morning.
Good morning.
Morning, sir. So could you tell us what was the yield in the third quarter and how did it rise so sharply on a quarter-on-quarter basis? And of course, then is it sustainable?
Actually, if you see the figures of the disbursements and the loan book, you can see there is a very accelerated jump in the numbers of the disbursements. And a lot of disbursement has been done during the last month or last week of the last quarter. That's why it has not converted into the yield. But definitely we will be maintaining our yield at around 9.3, 9.4%. That's what we are maintaining also. So I think this is quite a good yield which we are maintaining, because finally the assets should work for your returns. So we are maintaining a very moderate kind of yield in the company.
Got it, sir, and which is why you're saying you're confident that the margins will sustain around 3.1, 3.2 thereabouts. I now just want to talk about where this stupendous growth is coming from. Your AUM in the quarter is up almost 41%, and the urban infrastructure segment, that's really firing for you, right? 72% growth in the AUM over there. And in that light, you've also announced this new project with the Maharashtra government at the Vadhan port, right? And here, I think you could be looking at a 25,000 crore rupee opportunity. So take us through urban infra, the trends, and specifically this project. What are the timelines and what is the kind of yield on a project of this magnitude, setting up ports and financing it? What would the yields be like on these kind of big mega projects?
So this is part of our transition. The company has transited from the housing finance company to infrastructure finance company. Now we are into the infrastructure. And if you see the urban infrastructure, Government of India has a big push on the urban infrastructure, be it the metro, be it the housing, be it the Amrit cities, rejuvenation programs for the water. So I think we need to work on the urban infrastructure, and there is an energy transition program, there is a mobility program. So everything, they are very capital intensive kind of programs. If you see, we had worked in the mobility starting from the metros, which is looked after by our own administrative ministry, that is Mahua. Then the ports we are working, then the airports we are working, then the roads we are working. So they are very, very high capital intensive projects. So we need to work with the entities which are good, which are very stable. So that's what we are doing, and there is good opportunities which are available. And regarding Badhavan Port, it's a part of the JNPT, most prestigious port of the country. So we are happy that Honorable Minister and the management of the JNPT has agreed to extend cooperation with the HUDCO. So I'm sure that within 2 years of the time, the disbursement will start. And since these are long gestation period projects, so it may take 3 to 4 years of the time.
3 to 4 years. So absolutely. So, as you complete this transition towards being an infrastructure financier, not being just a housing financier, just walk us through what you will end the AUM with. You're saying the long-term target is 1.5 lakh crores of the loan book. At the end of FY25, where will you be? What is the growth? And FY26, as you're financing more and more of these mega infrastructure projects, what is the AUM growth and the margin profile? Will it remain around 3.2%?
Margin will remain around 3.2%. Rather, we will try to improve the figures. But yes, these are the most favorable figure that we will be maintaining. If the cost of funds supports us, then I think we will be improving those numbers. Regarding the figures, I'm sure that we will be achieving 1.2 lakh. So that will not be a surprising figure. But yes, we have to revise our numbers. So still this work is not completed, but what I am looking at, it may be around 1.25 at the year, this fiscal, and by end of next fiscal, we may be plus 1.5 lakhs around.
Oh, nice. Mr. Kulshetra, just to last point, what was the yield this time, the quarter, and what was the yield last quarter, Q on Q?
On Q, the yields are around 9.34%. It has not changed significantly. But since the disbursement has been done in the projects which are more stable, that's why some few points it has reduced. But again, it will come back in this quarter. So we doesn't believe only in quarter to quarter kind of figures, but on year to year, if you can see, we have been able to sustain that kind of yields.
All right. Fair enough, Mr. Kulshetra. Thank you for your time. Appreciate it. And good speaking with you, sir. Good luck. And we'll have you back again to talk about some of those numbers you put out. 9:10. So let's get our calls out of the way. And Sudarshan is here and Mitesh is here as well. Sudarshan, what do you have?
Well, I consider buying Bajaj Finance. Buy Bajaj Finance with a stop under 73.20.
Bajaj Finance is the call for Sudarshan. And Mitesh, what about you?
I'll have a sell on macro tech developers for targets of 2020.
Okay, all right. Macro tech is a sell and stock's down about 1.5%. Actually, macro tech, Oberoi, actually more the Mumbai-based developers, they've all Godrej Properties, they've all kind of come off very sharply over the last couple of trading sessions now. Back to you later, gentlemen. Thank you very much, Mitesh and Sudarshan. Let's revisit HDFC Bank. Abhishek is here with exactly that. Abhishek, over to you.
What brokerages are making is that some of them are saying that YOY PBT growth of 12% now leaves them more confident with respect to mid-teens EPS growth return for HDFC Bank in the quarters ahead. So asset quality is largely stable. It remains the top pick in the sector. It's available at a discount of 15% to ICICI Bank with respect to valuations. However, some of the brokerages have cut their earnings estimate over the next couple of years anywhere between 2% to 5%. Largely, brokerages do remain bullish on the stock. They have a target price ranging from 1,785 to as high as 2,300 per share. The only brokerage to cut the target price this time around is HSBC. They have cut the target price to 1,980 from 2,130 that they had earlier. Back to you.
All right, Abhishek, thank you very much for that. That's HDFC Bank. Now, Vinny is joining in with what CLSA has got to say about Indian pharma. So there have been some upgrades and some preferences in that report. Vinny, morning.
Good morning. So just quickly talking about the Indian pharma space, they're saying that overall for Indian pharma companies, they're expecting them to grow in the range of around 8 to 9% in 2025 versus the US pharma market at 7 to 8%. So they expect Indian pharma companies to outperform on that front. They believe that export-oriented Indian companies will be dependent on only large drugs. If there is any launch that comes in of large drugs, then that will be supporting the growth of these companies. Also, do not forget key drugs like Revlimid, Albuterol, Ascol. All these are going to be seeing patent expiries coming in 2025, 2026. And that will be important to watch out for because it impacts a lot of companies like Dr. Reddy's, Cipla, Lupin in terms of impact coming in if this expiry comes into place. Now, other than that, what they're saying that they prefer top picks coming from the hospital as well as the diagnostic space. So they like Apollo Hospitals, Max Healthcare, Dr. Lal, Path Labs. And on the back of that, they have given an outperform rating for all these three with the target price for Dr. Lal at around 3,240, Apollo at 8,400 and Max at 1,170. Dr. Reddy's, they've actually revised the rating for the company. They've given from a hold rating to an underperform rating and also cut the target price to 1,090 rupees per share. Aurobindo, they've on the other hand upgraded the stock from a hold to an outperform rating. So interesting to watch out for these stocks in trade today.
All right, Vineek, thank you very much for that. Markets very quiet in the pre-open session, 27 points down on the Nifty. But probably the stock of the morning, talking about brighter things, could be Coforge. In the pre-open, it's up about 6%. Actually, even Persistent is higher, 2% higher. Let's revisit those numbers and the superb performance that Coforge has exhibited third quarter. Rima, remind us.
Well, so Coforge is much, much better than street expectation. The street was gunning for a 4.5%, 5% kind of a top-line growth. The company's delivered 8.4% revenue growth. Margins are flat sequentially at 11.8%, slightly lower than expectation. But if you strip out that metric, all others are looking good. Their verticals have done very well. The order inflow is at $500 million for the second consecutive quarter. Their order book is up 40% on a year-on-year basis. Cigniti, the company that they acquired, is performing very well. So the company is very bullish that even the next year, FY26, is going to see robust, sustained growth. So strong numbers coming in from Coforge. For Persistent, it's a good quarter. It's not a big beat, but they've managed to meet Street's elevated expectation. And remember, yesterday, the stock ended with a cut of more than about 4%, so there could be that reversal. Top-line growth of 4.6%, margin expansion of 90 basis points. The company is saying that they're confident of achieving their $2 billion revenue aspiration by FY27. And the new thing is they've introduced an FY31 aspiration of achieving $5 billion of a top line. Back to you.
All right, Rima, thank you very much for that. These were actually the only two companies where expectations were solid, that they will post a solid quarter. It's come through, but Coforge has managed to sort of, I think, do even better. We got a subdued start, so it's about 23,100 on the Nifty. And the Nifty Bank is starting at about 48,640. So about a 0.25% lower on both the Nifty and the Nifty Bank at this point. The Sensex is down about 0.17%. And the Nifty IT index is up 1% right now. Look at the advanced decline. It's very early, but 500 up, 500 down. So stocks are still opening up. So we'll have to give it some time. The Nifty heat map in view now, and more down than up. So 35, 37 names are down, and the rest are starting in the green at this point in time. So 50 points lower, but holding on to 23,100, which of course the Nifty managed to cross in the last 20 minutes of trade. Surbhi.
Okay, so 58 down, that's how we're starting. Let's look at what's taking it lower. Lever, the disappointment. There's no growth. It's so anemic. And even that minimalist acquisition is not enough to sort of, brighten up the light over here. 3% down. There's also a Nestle, which is lower. Some of the big heavyweights, the big boys are starting lower. SBI, L&T, ICICI Bank, even Axis Bank. So basically, banks are not doing too good this morning. Let's see what HDFC Bank is doing, because the numbers were in line to moderately positive. I mean, no hiccups in asset quality. Margins were steady. Stocks up about 0.7%. But otherwise, it's a weak morning for the banks to start off with, and a weak morning for consumers. More names on the downside: NTPC, ONGC, BEL. So, some of these names from the PSU pack also lower. What is holding up is Ultratech Cement. There is some buying on Infosys, Wipro, and TCS. So basically tech. And like I mentioned, HDFC Bank. Apart from this, there's not much to write home about right now. Nifty under pressure. 50 points gone, 23,100. Nigel?
Well, a few stocks actually are coming in for a hard knock. DAM Capital, I think it's corrected now all the way to that IPO price. So big correction from the recent peak is what we've seen on DAM Capital. That one's come in lower. You have KPI Green as well. That's down another 4.5% or thereabouts. Post that corporate action, the stock has only moved one way, which is down. Hoodco has given up those gains right now. What's doing well though? Go Digit. Well, that stock is flying away. That's up close to around 4% as we speak on a very, very good volume. So good going on that one. Your Forge is doing well and Signity as well, now owned by them. So that one as well is up close to around 5%. The one that's taking it on the chin is Puravankara. Big downtick is what we're seeing on that name. So just keep an eye out on that stock as well as we speak. Well, yes, now it's down close to around 8% and volumes as well. Well, not too large actually. So we'll have to wait by to see whether or not it's, it could see a bit of a recovery from year on. But flattish start with a mild negative bias. Mid-cap index is still in the green. And I think the bulls will like that. Pidilite is another stock I think that it opened up in the green with a gain of around 1.5% to 2%. Let's see what Pidilite is doing. I think the volume number was quite good. Now it's flying away, up close to around 5%. So big up move is what we're seeing on Pidilite.
No, absolutely, and it's actually 1:1 advanced to decline ratio, and 1,000 odd stocks with actually 900 up and about 1,100 lower, but broadly 1:1. So one space which got beaten up pretty badly recently is all the EMS companies. So this morning there is some recovery. Keynes is up 3%, 4%. So stocks at about 55.50. Amber is up about 3.5 odd %. And we should look at the leader, Dixon, as well, if there is anything there. So these are EMS names which have been under severe selling pressure. 0.5% on Dixon, not very much right now. I think the result reactions we all, I think, covered. Coforge, Persistent, and Pidilite are number 1, number 2, number 3 in terms of volume traded gainers right now. Go Digit, I think, is another one. Earnings 4% higher. And we mentioned that. Ultratech is coming up with some gains, 2% so far this morning. And decent sized volumes as well. Doesn't usually show up out there. Oracle Financial Services 2.5%, and it's got volumes right now. Another one which has gotten sold quite aggressively is Motilal Oswal. So that's up about 2%, and it's got decent sized volumes. Look at Indigo. Indigo again, I mean, huge selling from 4,700 to 4,000 very quickly last 15 days or so. So seeing some gains, 1.6 higher. And again, another name which got sold aggressively is Aurobindo. It's recovered quite nicely. The low today is about 11.97. It's recovered about 15 to 16 rupees already this morning. It's all a story of recoveries, right? K Fintech, for example, sold off from 1,600 to 1,000 rupees. It's coming up a little bit. KEI, we spoke with the management yesterday. The low yesterday was about 3,900. Stocks at about 4,250 now. So there is enough and more in terms of specific stock-specific action which is going on at this point. Tata.com, we spoke with the management. Stocks down about 2%, 2.25%. So that's another one. 50 points all told on the Nifty with about three minutes of trading behind us. Yogesh Patil is Chief Investment Officer, Equity at LIC Mutual Fund with his take, his perspective. Yogesh, good to have you back on the program. What has the investment team and you been doing at the fund during the course of this correction? How much cash are you on? Just give us the basics first.
Good morning, everyone. See, normally we don't keep higher cash because we're getting money to invest it. But considering the market opportunities and India's long-term story, we continue to believe India is a very attractive opportunity. But its opportunities available in raw form, and a lot of things has to be done by state government and central government. So there will be some lag in between whenever these capex program changes. But we continue to believe India is a long-term investment growth story, followed by again manufacturing and consumption. And if you see the last decade, the consumption played a bigger role and lesser investment. But we, at this point of, if you see the manufacturing GDP as a percentage of GDP is almost 14%, which is almost equal to commodity-driven countries like Brazil, Russia. And China is almost at 26, Korea is 24. So India need to increase gross block, and India need to spend more and focus on manufacturing to reduce imports and improve the infrastructure So they can, most of the companies in India can be compared with global players. So this is a decadal story, and especially gross capital fiscal formation till date is roughly 93 lakh crore, and we do see a major portion from private and government capex, basically through infrastructure investment like railway, defense, and new segments like data center, EMS. All these new things will continue to drive the India story in future, and followed by consumption parallelly, because consumption is suffering because of the poor real wages growth and salaries, and lack of new job creation. So we think we are near to close to bottom at this stage, and government is also focusing on the rural. So this will again start reflecting over next 2 quarters.
Okay. All right, Yogesh. So, how is the portfolio position as we move to the budget? Would you rather look at maybe bigger positioning in capex stocks and PSU, railway, defense, or even private sector capex names? Or would you rather look at staples, which have been beaten down quite badly, if indeed there is this hope for a rural push and a rural recovery?
Thank you. Our portfolio is completely aligned to our thought process. We continue to believe investment in infrastructure will continue to rise, and followed by capex from many private and PSUs, because this is a need of government is trying their level best, but unfortunately there would be some miscoordination between states, or maybe new segment of companies requires a different level of coordination. Like in previous cycle, we might seen a very high capex from, let's take a cement and thermal power plant or metals, but the new capex from private sector is completely different. Is more on asset turn side, like in capex from CDMO player, EMS or GCC centers are very, very different, and this will give a very similar impact of GDP compared to last 20 years. And as a house, we continue to believe capex, and our portfolio is fairly aligned with capex stories from completely driven by power sector, data centers, railways, defense, PLI schemes, and other auto sectors companies.
What about consumption theme, Yogesh? You're getting split verdict out there. Some of these high pedigree, traditionally trading at very high multiples, growth is not coming by, and commentary is rather subdued. At times, yes, this peak pessimism provides good entry opportunity. Has it reached that level?
I don't think valuations, we need to readjust the growth, because next 4 or 5 years the growth could be very limited, because it starts with manufacturing infrastructure and job creation. See, the job creation would be the trigger point for India for consumption, mass consumption especially.
Okay. That's the outlook on a couple of sectors. Just back to the market, it's still some of these mid-cap IT names which have had a better earnings performance. They're the ones that are looking better, but 6% up on Persistent, actually 7% now. And Oracle Financial, Coforge, these are the names that are rebounding. In the next couple of minutes, we'll also have the management of BPCL joining in.
Coforge first.
Coforge first and then BPCL. But before we get to the rest of our corporate commentary, Yogesh, on IT, I mean, it's been very, very mixed trends. Larger companies are still struggling to showcase big growth, but mid-cap names are doing, a lot better. Do you like anything here? Either, traditional IT, or let's expand that further. There are internet companies that have gone through a fair amount of price correction as well. Platform companies. Would you buy into the weakness?
See, definitely, we need to see the valuation and the growth prospects. As of now, if we see last 3 quarters, majority of the companies have not given any negative shock, and the commentary has been positive with a low cancellation of projects and fairly positive side on discretionary and BFSI. And after the President Trump, I think there is no major hurdle at this point of time. It's just a valuation where investors need to choose. And at the same time, AI, there are new themes in IT also, AI, but again, it is a company-specific stories. Even forget about IT, every sector is a completely different, company-specific, segment-specific. So we are very selected in IT firms, especially between large and mids. And where you see a disappointment from earning, definitely we need to relook that story. And coming back to your platform, see, platform business is very, very different and very highly competitive. And at this point of time, because of the too much of noise, we are avoiding those segments.
No, I take the point. Just a few other names which are moving around that we want to highlight. Yesterday was a big mover in Jana Small Finance, right? I think it ended up about 20% higher. It's down about 3% this morning. So 424 on JSFB. Oil India is down about 2%, and there is HPCL, which is down about 2.5–3% as well at this point in time. India Mart has been, of course, up and down, but it's down 3% now. So big decline after results for India Mart. Nestle is starting about 1.7% lower. KEC is down about 3%. Very sharp fall on KEC. Recently, last week, maybe end of the week before, was at about 1250. Stocks at about 860 now, KEC. So, a fair bit has moved around. PNB Housing, we had the management with us, 2%, 2.25% lower. And unfortunately, if you look at the market breadth, if you look at the NSE advanced decline ratio, it's now 2:1 in favor of declines. It was running 1:1 for the broader market, and it was looking like, it was a little better, but not anymore. Of course, on the flip side, you've got all these, you've got Kalyan Jewelers, which is up 2% or so after the battering it's gotten. So it's coming up with very large volumes this point in time. And I mentioned the EMS names, which are all looking a little better. Maybe put up Swiggy as well, 2.7, 2.8 higher. And I can't spot Zomato, at least not on this list with volumes, but that's got some action and activity as well. Yogesh, we leave it there for now this morning. Thank you very much. Really appreciate your time here on CNBC TV18. Thank you for being here. Well, let's talk about, HUL and Pidilite, the FMCG majors, and revisit the implications for the stocks. But also, of course, these are, in a way, they provide signal for their respective sectors. Mangalam is here. Mangalam.
Well, it's a tale of two cities, right? Both results were largely in line, but in HUL's case, the expectations were very muted. And in Pidilite's case, the expectations were slightly elevated as well. So if you look at HUL, the net profit was boosted by a 500 crore one-off that came in, but nothing really to write home about when it came to the numbers. The revenues grew just about 1%. The EBITDA grew by about 1.5%. That's what the street was anticipating. Margins largely between that 23 and 24% mark. 23.2% was the company reported, and the net profit boosted by the one-off gain on Pureit sale itself. Volumes were absolutely flat, and it's not that there was any unfavorable base or anything. Over the last 7 or 8 quarters, the volumes have been middling between 2 to 3% itself. And if you look at the segments out there as well, home care grew about 5.4%. The street was working with a number of 2 to 3%. But besides that, all the other segments, personal care, foods and refreshments, as well as beauty and wellness, all of them underperformed street's expectations. The company has made an announcement where they will acquire 90.5% stake in Minimalist for about 3,000 odd crores. It's an annual revenue run rate of over 500 crores. They're essentially buying the brand, the positioning and the customers of this business. But then again, the stock had corrected about 22% from its highs, trading at lower than historic valuations. But until growth does come by, it looks unlikely that the street is looking at HUL favorably. On the other hand, Pidilite, there is subdued demand across both urban and rural geographies. The company's stepped up ad spends, and amidst that, they've reported revenues slightly above street expectations at 3369 crores. EBITDA also around that 800 crores. Yes, the margins did come off, but the street's expectations here were slightly elevated. The company's own guidance has been between 20 to 24% itself. And as a result of which, in a weak environment, the company's reported revenue growth of 7.5%, EBITDA growth of a similar amount as well, and a net profit growth of 9%. The total volume growth this time around came in at 9.7%, led by 7% consumer volume growth and 21% B2B volume growth as well. The other thing that works in the favor of Pidilite is that those who want to play the building products theme, are now split between paints and Pidilite. The paint sector has challenges of its own with regards to competition, etc. So that gives a clear run to Pidilite for investor capital as well, as there is not as much competition in adhesives, and VAM prices are continuously lower as against crude prices as well.
All right, Mangalam, thank you very much for that. So that is the picture on FMCG. Taylor 2 series, as Mangalam said, for our viewers. Well, you know, we got the market, which is down about 40 points. 23,100 is where we are trading at now. Well, Coforge is the stock of the morning by far, right? I mean, it's reacting to very strong third quarter numbers. And remember, this is a beat on what were already stronger expectations. If you sort of compared expectations going into the earnings season, Coforge and Persistent were right on top in terms of the growth expectations. So both of, and of course, Coforge more so has beaten that. Let's talk to Sudhir Singh, CEO and Executive Director at Coforge, who's with us now to tell us what next. Sudhir, good morning. Great to have you with us here post every quarter as always. And you kind of told us after second quarter what next. You said you called it as a very strong F525. You said Q2 was an aberration. Q3 is going to be extremely strong. It's all panning out exactly like that. 9-month revenue growth is 27.1% dollar revenue growth. Just tell us a little bit what went into the mix. Just the most important two or three things. What went into the results and what should we expect now for 27? For FY25, beg your pardon. Go on.
I think the not just the quarter to come, but even the next year promises to be extremely solid because of a few things that have already been locked in through the year. You noted the YTD growth at 27+%. More importantly, from our vantage, in this quarter, which is a seasonally short quarter, we've already signed 4 large deals. Importantly, the order book, the signed order book over the next 12 months is already $1.37 billion. And that's more than 40% higher than where that metric was a year back. So going forward, given the pipeline that we have, given the large deals that we recently signed, given the signed order book, and given how the margins have been trending extremely positively and aggressively upwards, even sequentially, we continue to feel exactly in line with what I told you at the end of the second quarter. The year to come appears to be a year that will have sustained, robust, and very solid growth.
So they're so better than 25, just in terms of growth rates?
We don't give a guidance, unfortunately, so I can't share that number with you. But for now, I just qualify that as very robust growth, profitable growth. And for a firm that's now been growing for 8 years on a very sustained basis, sustained growth into the 9th year as well.
Sudhir, hi, morning. Can you just break up the trajectory in terms of how strong the organic growth is and how well the recent acquisitions are sort of playing along? Cignity, for instance, I know the margins have come in, I think, above 17% now. So what is the breakup? And going forward, while you're saying the next year is going to be bigger, I mean, just walk us through whether it will mean more in terms of margin expansion or whether it will be just sustained top line action. I think you're at 25% dollar revenue growth so far, 9 months in the current fiscal year. So just give us the breakup, organic, inorganic, and what to expect going forward.
Sure. Let me break the numbers down for you. The non-Cignity business sequentially in the quarter has grown 9.4%, and Cignity has grown 3.5%. They also had that business had a solid quarter. The non-Cignity business, which is the organic business that you're talking about, has grown 9.4%. So it's had an absolutely exceptional growth quarter from our vantage. Though that's the breakup of the numbers. And as I say, we would expect growth to be robust across the firm and across both the Cignity and the non-Cignity portfolios on a go-forward basis.
Hi, Sudhir. Congratulations. Solid set of numbers, and your commentary as well is pretty good. Give us an updated timeline then. I recall you telling us that you'll be going to $2 billion of revenues and margin expansion of 150 to around 200 basis points. By when?
We've never really put a hard quarter timeline to it, but the key metric that I would like to point out is that in 7 quarters, the revenue run rate of the firm has gone from 1 billion to 1.6 billion.
Right.
It's taken us just 7 quarters to grow 60%. I suspect 2 billion is not too far off, reflecting back on the trajectory that we've already plotted out, the pipeline that I referred to, the signed order book that we have. Can't put a quarter number to it, unfortunately, publicly at this point in time, but we have very clear plans. We have very aggressive plans, and our confidence, as I suspect you've seen from my tone, is sky high.
So, Sudhir, that run rate, could you hit it towards the end of FY26? You know, some were expecting it by FY27, but towards the end of FY26, you don't rule it out that you could get to the $2 billion run rate?
Our attempt will be to hit it at the earliest possible. Our track record, which I've talked about, 60% growth in 7 quarters would attest to the fact that we are hungry, we are capable, and we are just about as committed as any team can be. So the intent is to get to it at the fastest possible clip here on.
Oh, absolutely. Well, the market is definitely noting your tone, Sudhir. The stock's flying almost 10% higher, and it's not just the tone, it's the numbers that are absolutely matching up. So we've discussed a lot of the numbers. I just want to understand slightly qualitatively, maybe in 40 seconds, what are these new clients telling you? The sign-ons have been very, very strong as well in the past quarter. Which are the segments that are firing? Which are the geographies that are firing? Because you're definitely doing something very different in an environment where a lot of the bigger players are struggling with, anemic single-digit growth, of course, on a very large base. But just trying to understand, what is the niche that you will go after in the next couple of quarters to sustain the 60% sort of growth rate?
The 40-second clip would be as follows. Travel revenue passenger kilometers for airlines is expected to grow 7%, which is a huge demand outlook for the airline sector, given the nature of that sector. We therefore expect to ride the personalization wave. We expect to ride the digital mall creation out of airports wave. We expect to ride the AI-based customization wave. That's travel. Insurance, SMB space, the need for legacy modernization driven off platforms like a Duck Creek, Guidewire, Majesco is extremely strong. And the emerging trend is to ally that with no-code, low-code platforms. That's a sweet spot for us. We intend to ride that. Banking, operational resiliency, regulatory compliance are areas where spends continue to be strong. That's an area that we've always been very good at. And that's a third wave that we expect to rise. That would be the 40-second clip for you.
Okay, helps. Thank you.
It's like an arrow locked into the target. But jokes aside, I mean, it's executed extremely well. And of course, it's for everyone to see. This entire AI infrastructure boom that we're seeing in the US, I mean, do you kind of sort of play in some way into all of that? Or you don't need to, you're doing well without, but just asking you that.
No, we very much play into it, and that's one of the contributors to the kind of growth rates that you commented on right now. We are increasingly seeing that the conversations around AI are pivoting more towards data-first conversations. So the conversations are increasingly around scalable data pipeline creation, which is where we are helping our clients. They are increasingly around vectorization or infrastructure build for AI model training and deployment, which is again an area that we play in. And obviously, since AI operates as a diagonal and not a horizontal for us, it is straddling all the HPUs and every horizontal offering that we have. So AI clearly is a space that's of vital importance to us. We've been locked in it like an arrow, to use your words. And that's an area which we expect to infuse just about every solution that we construct for our clients on a go-forward basis.
Okay. I mean, you send the stock up 10%, Sudhir. So, I mean, not you, but the results. And of course, behind the results, you and your team. So, it is locked. The 9,050 on Coforge. We have more questions, but no time. Thank you very much for joining us this morning. Appreciate it on CNBC-TV18 as always, and look forward to our next chat. I think what we'll do is we'll take a quick commercial break here. We'll come back and we'll look at the market as well. So we were down 50, we are up 30. So there is a little bit of recovery which is set in on the index. We'll look at individual stocks, etc. The BPCL management conversation also coming up on the other side.
Welcome back. Well, the market is continuing to chug along. Right now, the Nifty is just about 26 points higher. The next company on our radar is BPCL. Let's look at how the stock is doing. It's actually sold off a little bit this morning, down about 0.7%. Now, BPCL, of course, reported Q3 numbers yesterday, and the earnings were slightly below estimates. The gross refining margin came in lower than expected, and there were some inventory losses as well, which the market wasn't expecting, and therefore the disappointment. Plus, there's the issue of under-recoveries in the LPG segment. So what's the way forward? Well, we have with us Mr. G. Krishna Kumar, Chairman and Managing Director at BPCL, joining in. Mr. Kumar, thank you so much for being with us this morning, sir. So before we dive into your performance and the earnings, I want to ask the other bigger question, the whole geopolitical question, which everyone's trying to understand. These sanctions on Russian entities, Russian ships, Russian oil companies, do they limit our capacity to buy oil from Russia in any way? And the minister, I think just yesterday, made the statement that yes, India's imports from US, crude oil imports, could perhaps increase. And that's, we're in a very dynamically changing world order when it comes to the oil markets. So that first, and whether this change in the mix is going to impact your operations in terms of crude between Russia, Saudi, and maybe more from the US now.
Thank you for having me on the show. It's very early days. Actually, we are assessing the situation on the impact of the Russian sanctions. But having said that, we can be very clear, there will be a slight short-term impact for about a month or two. But we are looking at rebalancing the whole crude purchase. We will look at more of Middle East crude and the US. And with Mr. Trump saying that he's going to free the energy and there's going to be a lot of drilling, I don't think there will be a shortage of crude in the near term. But there will be a slight premium we'll have to pay, and that we can always rebalance. And over the year, it will balance out. So and in the short term, yes, there will be some cargoes which will be there will be shortages of some cargoes because of the shipping. Shipping will be a problem. But over the next 2 months, I think that all that will be sorted out.
So when you say that eventually we'll have to move, we'll have to source more from Saudi Arabia in the short term and maybe more from the US, and you say that will come at a premium, can you just tell us, roughly speaking, what is the higher premium? Because, just logistics, right? The shipping costs, I'm imagining for starters, is going to be much higher, getting in that oil from the US.
There are two things, okay? One is that right now we are in the spot market. We don't have a term agreement as yet with any of these guys. So because there will be an upside because of the sanction, the premium will be around the range of, we hope, around the range of $2 or $3. But we are looking at also delivered supplies from different countries. So that should eventually eventually pan out the numbers. Initially, there will be a difference about $2, but I think that will pan out.
Okay. Hi, good morning, sir. If you could help us out with crude being sourced for Russia as a percentage of your mix, what is it roughly?
So far, it was about 35% of our mix was from Russia. And 35%. The rest, 35%.
Okay, all right, interesting. I ask you this in the backdrop that the last quarter's GRM was a little lower than what the street was working with. So could you give us a rationale behind that? Because it came in at around 5.6. The GRM, sir. The GRM came in.
If you look at the Q2 GRM, it was about 4.41, and Q3 Indeed. Actually we have done better. We have actually done better at 5.60. The whole situation was very volatile. If you look at, there were tightening of the Russian crude, tightening Correct. Of the discounts, and also we had our planned shutdown programs in Kochi and Bombay refineries. This Correct. Slightly, and moreover, the cracks were lower comparatively. So all put together, there was a tightness in the whole situation. But having said that, we've still done better than Q2. And Correct, going forward, we are very confident that our refineries will perform well. If you look at it, last whole year, our GRMs were best among the industries.
Yeah, that's right, sir. I'm taking that point on board, and you've given me rationale because the GRM improved on a quarter-to-quarter basis, which is good. But only in comparison to what the market was estimating, it was a little bit lower. But as you're putting those points, that because of a couple of reasons, it was lower. What's the trajectory with regard to GRM from here on? If you could help us out with the number.
We should end the year because the next 2 months are going to be a little tricky, because we don't know how the crude will actually pan out, though we feel that there won't be much of an impact. There will be an immediate rebalancing of crude. We hope to be around 6.5 barrel per barrel.
Okay, all right. And
that's our estimate.
All right, fair enough. So $6.50 per barrel is the GRM estimate for you, right, Mr. Kumar? Good morning, sir.
Yes.
With regards to these LPG under recoveries, Mr. Kumar, could you give us a sense of what would you expect on that front? What's the quantum for BPCL, and will this come in by March?
See, we are very hopeful. Last year, the government had supported us with a subsidy of about 5,000 crores. And we are very hopeful that this year too, they will support us in time. So we do not know exactly when it will come, but we are hopeful that it will come by March.
And what is the under recovery for BPCL so far?
It's about 7,200 odd crores, which you put also on the screen, but that's the kind of numbers for LPG just now.
And you think you would be compensated to the full extent, or I mean, any signal from the government in that sense?
I'm not sure it will be the full extent. As much as possible, I think they will give us. The rest we'll have to take it.
Sir, there is this talk about an IPO of an entity where you're one of the joint venture partners. This Maharashtra Natural Gas, and there are large distributor in Pune, I believe. Any updates on this? I mean, have the JV partners discussed this? What are the timelines?
See, we have a joint venture with GAIL India for MNGL. We have, as our board has approved the proposal, as you understand, that both the joint venture partners have to get their approvals in the board, and then we have to get the approval of DIPAM. That is the standard process for doing an IPO. So we've got our approval. We hope GAIL will also be done. So probably in the next 4 to 5 months, this should be through.
Okay.
Mr. Kumar, another point which some are a little worried about is what you've announced in terms of new projects, right? There is one Petchem 2 million ton plus Petchem project in Bina, another one in Kochi. Are all these on track, sir? And if you could just talk us through what are timelines looking like here?
Yeah, okay. So we have two projects. We've announced two projects. One is at a 2 million ethylene cracker plant at Bina, along with the expansion from 7.8 million metric ton of the refinery to 11 million metric tons. We have a project size of about 48,000 crore, that includes GST component. That's expected to be commissioned by May of 28, and that's on track so far. Okay, and we have just done a financial closure with SBI as the lead banker and a consortium of banks for about 31,800 crores. The financial closure is done, and we are very confident of this being on track. The feed and the engineering part of the component is over. The licenses have been selected. So we are now looking at a closure. Our execution is our strongest focus right now. Likewise, in Kochi, a 5,000 crore polypropylene plant is being commissioned. We are very confident of that project coming before time. We are expected that to be sometime in July of 27. We're expecting now closure around April of 27.
And finally, sir, I think the marketing side of the business has done really well, right? Marketing margins have been quite good. And we've seen crude oil prices come down, and now there's talk of lesser wars in the world and more crude oil, more drilling in the US. So maybe crude remains benign. Can you leave us with an expectation on the marketing side of the business? What level of margin are you at? Where will it sustain? And I don't know, I mean, as a consumer, we can only ask, if crude comes down further, would you be passing that on to the customer, or would you be retaining some of the margin cushion?
We'll have to look at it as and when the crude moves up or down. But we are very confident on marketing. We're one of the strongest networks in the country. We have about 22,000 stations outlet. We're coming out with a bouquet of energy stations where, apart from petrol and diesel, we'll also be offering CNG and EV chargings. And along with EV charging, we have come with a new proposition in few select outlets now, which was on a pilot basis called B Cafe, where we have created a very good experiential coffee station where when the person's charge the EV, which is about 20 to 25 minutes, even if a two-wheeler he'll have to charge for 20 to 25 minutes, he can be engaged in this coffee shop. And this coffee shop is entirely sourced by BPCL. We have not taken any outside help. So that's called branded as B Cafe. You can see on some of the highways. So this is, and we're very confident that marketing will do very well in the years to come.
I can't wait to try coffee at one of these bee cafes, sir. As a self-confessed coffee lover, sounds like a very interesting and exciting proposition. So we look forward to experiencing some of that. Thank you so much for joining us and giving us a well-rounded view on all parts of your business. Thanks very much for joining in.
Thank you so much.
Okay, thank you. Well, with that, let's quickly move on. It is time for our special segment, Quarter Se Quarter Tak, where we bring you earnings expectations from each sector. Today, we have Nigel on the wall because he is going to tell us about what the third quarter could mean for the metal sector and metal players. Nigel, over to you.
Well, quarter three FY25 is traditionally a stronger quarter, and normally we see that quarter three is better than quarter two for ferrous companies. We see normally a recovery in pricing as well as in volumes. That's what we normally see in the third quarter. However, this time around, we saw a recovery in volumes by approximately 1 to around 5%. But increased Chinese imports as well as falling global steel prices, they have impacted blended realizations by roughly around 1,000 to around 2,000, 2,500 or thereabouts. But there is a discrepancy because longs, they have performed better than flats. Average realizations have fallen by close to around 6%, while for longs, it's improved by roughly around 1.5% to around 2%. And this is the deciding factor for better profitability of long, heavy focus companies like JSPL. While other companies, well, they have higher flat exposure, and so the EBITDA per ton will be under pressure. But for JSPL, in fact, it'll actually be a little bit higher on a sequential basis. Now, the cost of production fall was insufficient to cover the realization hit. The coking coal cost will fall by roughly around $15 to around $20 per ton for most companies. But the iron ore cost is expected to increase by around 300 to around 350 rupees per ton. Higher iron ore cost means that the non-integrated players, they will relatively underperform. By the overall integrated players, they'll see a better performance on the iron ore front. Companies like Tata Steel and SAIL, they're fully backward integrated on iron ore. On the non-ferrous side, higher LME prices, they will uplift performance as aluminum and zinc prices, they've seen a sharp recovery on a sequential basis. Though lead as well as crude, they're a little bit lower on a sequential basis. What further supports them is the rupee is depreciated, and that's normally good for metal companies. Overall, margins for non-integrated players will improve as the cost of production is expected to remain flattish while the LME prices have moved up. Novelis, well, they may see the weakest performance due to the host of factors, but the street believes that maybe this bad news of Novelis will be a bottoming out process in quarter three, and from quarter four onwards, Novelis's EBITDA per ton will improve. Well, let's wind it down with the valuation snapshot. As we can see, SAIL, it's the cheapest among ferrous players, and that's been the case for very long. While from the non-ferrous names, Vedanta is going to be important to track. Valuation-wise, is cheaper, and also it has a demerger tailwind. So we'll keep an eye out on that one.
All right, Nigel, thank you very much for that. So that's the expectations from the metals space. We have Aditya Velekar, Senior Research Analyst, Metals at Axis Securities now, joining in with what he sort of would like, what he's expecting really from the sector and what the implications for stocks, etc. could be. Aditya, good morning. Good to have you with us here. Prashant this side. Thank you for your time. You heard Nigel put out expectations in detail. What stands out for you? Let's just first break it up between ferrous and non-ferrous, and what are broad thoughts on for both in the quarter?
Yeah, good morning, Prashant. So ferrous definitely, as Nigel pointed out, is slightly weaker than non-ferrous. So we expect EBITDA per ton contraction in this quarter by 1,000 to 2,000 rupees per ton for each of the players. But as Nigel pointed out, we expect some sequential recovery in EBITDA per ton for players which have higher long steel exposure like JSPL and SAIL. This is because HRC prices are impacted more in this quarter because of the Chinese cheaper imports. while long products which are used in construction activity, they are not impacted much. That is the reason why players like JSPL and SAIL will perform better. But if we take an overall view and look forward, going forward, the key triggers will be more important. So number one will be any announcement on the safeguard duty, 25% imposition of safeguard duty is expected. That is what steel players have demanded from the government. So that is one trigger. Next is any further stimulus from China. So as of now, the valuations are palatable for steel companies, but the growth triggers are lacking. So that is a view on ferrous. For non-ferrous, like aluminium companies, Hindalco, Nalco, and Vedanta, all the three are expected to do well in this quarter. EBITDA margin expansion is expected on a year-on-year basis. Sequentially, the margins might decline for Hindalco because of the weak show at Novelis, because of the scrap spreads falling in Novelis. Going forward, for non-ferrous metals, the aluminium outlook is still strong. Despite the dollar strengthening, the aluminium prices have sustained about $2,500 per ton. There are 2-3 reasons. Number one is that the demand in China has seen a slight uptick post September stimulus. Then with the export tax rebate which China has removed, that has found some support to aluminium prices. And there is some talks about that the EU will sanction Russian aluminium. So all these things are supporting aluminium prices. And going forward, we see non-ferrous as a pack is better than ferrous. And the growth drivers, if the aluminium prices sustain around this level, then with the kind of projects Hindalco and Vedanta have, these two companies will stand out in our, these two companies screens out based in our pecking order.
All right, between the two, Aditya, what do you like though? Because Hindalco, the problem is Novelis's numbers are going to be weak. But, you know, from the time they put out that provisional number, the stock in fact is higher. That's telling you that all of you all on the street, well, you all have already factored in the weak showing. And that's why the street is willing to look ahead. While Vedanta, that as well has not really performed, you know, anything that's special. Because we saw the stock run away and it's given dividend, yes, but it's not moved much. Now you have a special situation that's playing out there. So between Vedanta, Hindalco and Nalco, what is your preference?
Yeah, I think to answer your question straight, I guess Vedanta will be our first picking in the picking order, followed by Hindalco and then Nalco. Vedanta, I guess number one, TLBD is the demerger, and then their aluminium expansion is happening. The alumina prices which have peaked out will support them in Q4 onwards, and alumina prices are expected to slightly lower. Is expected to come down from this recent peak, which will be supportive for Vedanta. The rupee depreciation will also be helpful for Vedanta. Then the overall restructuring of the debt which they have done and the target of deleveraging, and of course this demerger. So from that perspective, the valuation is slightly better vis-a-vis Hindalco and Nalco. For Hindalco, the issue is with Novelis spreads. We really have to see how they manage this particular challenge, because Novelis is dependent on scrap, and if the China scrambles for scrap, then this tightness in the scrap market should continue. So apart from their Indian business, which is really strong, and the kind of projects they will plan in India, that is a very key positive for the stock. But Novelis is kind of where the visibility is slightly muted. So that is why we are placing Hindalco as a number 2. Nalco is also good. It has a good alumina exposure. But the smelter, the alumina refinery expansion, that should happen on time. That is one concern. And then the smelter capacity is slightly capped, and the smelter expansion is not really visible as of now. So that's why it is number 3 in our list.
Okay, all right, Aditya, thanks a lot for joining in and giving us all of those details. By the way, the Nifty has moved up. We're up close to around 40 points as we speak, holding at around 20,200. Slip into a short break. You come back, we'll get at some technical trades. Mitesh is waiting for us, and Manisha Gupta will give us an update in terms of what's going on the commodity space. Stay with us.
success. A tide of change is sweeping the country. Sunlight is pouring over the entire world. And America has the chance to seize this opportunity like never before. But first, we must be honest about the challenges we face. While they are plentiful, they will be annihilated by this great momentum that the world is now witnessing in the United States of America. As we gather today, our government confronts a crisis of trust. For many years, a radical and corrupt establishment has extracted power and wealth from our citizens while the pillars of our society lay broken and seemingly in complete disrepair. We now have a government that cannot manage even a simple crisis at home, while at the same time stumbling into a continuing catalog of catastrophic events abroad. It fails to protect our magnificent, law-abiding American citizens, but provides sanctuary and protection for dangerous criminals, many from prisons and mental institutions that have illegally entered our country from all over the world. We have a government that has given unlimited funding to the defense of foreign borders, but refuses to defend American borders or, more importantly, its own people. Our country can no longer deliver basic services in times of emergency, as recently shown by the wonderful people of North Carolina, been treated so badly. And other states who are still suffering from a hurricane that took place many months ago. Or more recently, Los Angeles, where we are watching fires still tragically burn from weeks ago without even a token of defense. They're raging through the houses and communities, even affecting some of the wealthiest and most powerful individuals in our country, some of whom are sitting here right now. They don't have a home any longer. That's interesting. But we can't let this happen. Everyone is unable to do anything about it. That's going to change. We have a public health system that does not deliver in times of disaster, yet more money is spent on.
Welcome back. Let's go back and revisit the market, which has managed to actually bounce up quite nicely. We've got some green even on the mid-cap screen now. The Nifty is at the morning high. So let's go across to Mitesh and discuss some trading ideas. Mitesh, just an advice on the index as well, in case you'll trade either Nifty, Bank Nifty, and of course stocks.
Yeah. So I think, the both the indices look good, though it's the Nifty IT, which is clearly, having more traction today. But I think the Bank Nifty 48,770, and we're about 40 points away from that. I think that's the pivot. Once we cross that, expect the Bank Nifty to head towards maybe 49,150, 200 zone. So I think maybe on the Bank Nifty above 48,780, 790 zones, you might want to take a long with a 150 point kind of a stop loss for another 400 point kind of rally. So that's the way we are approaching it. On the stock side, as I said, technology is looking good. So Tech Mahindra has come on my radar. Recommend a buy here. Keep a stop below levels of 1690. Look for a target of 1755 to about 1760. In a good case scenario, even 1780. And the other one which I have on my list is Pharma. Sun Pharma, I think, is looking good as well. Reversing after a good correction. So Sun Pharma is a buy with a stop below 1800 for targets of 1860.
All right, Mitesh, thank you very much for that. So those are specific trades. Well, Persistent is up sharply in trade in the back of very good numbers. You heard from the Coforge management earlier, but let's put this spotlight on Persistent as well with Rima. Rima, over to you.
Thanks so much for that. So Persistent stock surges on very strong growth prospects, strong delivery, good execution in Q3 despite high valuation. This is a stock which is up 50% in the last 1 year and 180% plus in the last 3 years. And it's also one of the most expensive IT stocks, trading at 50 times FY26 PE and more than 40 times FY27 PE. But investors continue to buy Persistent despite the high valuation because the company continues to deliver on growth. Look at the growth rates rates for the company over the past couple of quarters when things have been challenging for the rest of the industry. They've pretty much averaged a near 5% top-line growth in the last couple of quarters, and even in this quarter, which is seasonally a tough quarter. And this comes on the back of many good years for Persistent. So FY24, which you know for large cap IT companies, was like a low single-digit kind of a top-line growth for Persistent. They managed a 14.5% growth. The prior 2 years, which were the post-COVID boom, the digital transformation surge, this company saw a growth of about 35%. And not just that, the company is guiding that growth will continue. So they're holding on to their $2 billion revenue aspiration by FY27 with margin expansion of 200 to 300 basis points. But they're now also calling out a $5 billion top line by FY31. On the quick word on the brokerage views, many like it, some don't. They admit the growth is strong, but valuations are too rich for comfort. So Nomura has a neutral rating on the stock. Nuvama and JP Morgan are very bullish. JP Morgan has raised the target price to 7,200, scaling new heights. Buy on dips is how they titled their report. But Kotak and Citi, on the other hand, are not convinced given the rich premium valuations. Back to you.
Okay, all right, got it. Thanks very much. Rima's a good morning, actually, for a couple of these mid-cap IT stocks. Let's now shift focus to the commodity segment. We have Manisha joining in. Manisha, good morning. So what's grabbing your attention this morning?
Well, there's a couple of declines really in the commodity as a space. Remember, energy has continued to decline, and similar is the case with metals also, where we are headed for perhaps a week for this one. We are looking at dollar index stabilizing at around 108 now. It has seen a range of 107.5 to 110 on the higher side. The second factor to watch is tariff threats now coming in from the US president for various countries, not just Canada and Mexico, but also China and European Union, where there is also a trade deficit when you look at from US markets, and there have been statements to that effect. US Fed meeting on 29th of January is going to be on focus, not because there's going to be a rate change, but because there could be some guidance and statements that could come in from US Fed. And then apart from that, there also is a lot of caution in the international markets ahead of the Lunar New Year holiday in China. Whether or not there will be restocking ahead of that will tell you on where the metal prices are going. So when you look at the specifics here, we have seen the copper prices continue to decline. It has seen another decline of 1% in the overnight markets. Aluminum prices have come sharply off from its 2-month highs that we saw on 20th of January. And the steel rebar prices fell another 0.5% overnight. So whether you see it on a week-on-week basis, month-on-month basis, YTD, we are looking at decline in many of these ferrous metal prices. That's exactly what I want to put it on your screens right now. So when you look at this week, we are looking at most of these metals actually going in for a decline. Copper is down by 4%, aluminum 0.5% of a decline also coming in for zinc. But when you look at the YTD basis, we still are holding firm for many of these metals. That is, the street believes that you could be looking at strong demand going forward. The dollar will see a decline, and a tariff increase would actually mean more expensive metals going forward. So copper continues to outperform. We also are looking at stronger gains for aluminum, but the best of the gains clearly are coming in for gold and silver on a YTD basis, and gold has continued to gain on a weekly and on a YTD basis as well. So the safe haven buying clearly coming in for that one.
All right, Manisha, thank you very much for that. So that's commodities in focus. Well, we'll take a quick commercial break here. The market, I think, is recovered from the day's low. We're up about 70, which means it's almost about 150-odd point recovery from the day's low, the morning low, really. On the other side, it's budget countdown, budget 2025. What will it hold? Lata will be in conversation with Goldman Sachs and HSBC economists on exactly that. What will be the policy thrusts? Coming up in 2 minutes.
Any country, anywhere in the world, and we have an education system that teaches our children to be ashamed of themselves in many cases, to hate our country despite the love that we try so desperately to provide to them. All of this will change starting today, and it will change very quickly. My recent election is a mandate to completely and totally reverse a horrible betrayal and all of these many betrayals that have taken place, and to give the people back their faith, their wealth, their democracy, and indeed their freedom. From this moment on, America's decline is over. Our liberties and our nation's glorious destiny will no longer be denied, and we will immediately restore the integrity, competency, and loyalty of America's government.
Global growth, what's the outlook? What's going to be the outlook as far as inflation if President Trump follows through on his very aggressive plans as far as tariffs are concerned? What happens to you?
Welcome to our Budget Countdown special. Today we discuss the macros. The earnings so far, corporate earnings so far, especially FMCG companies, is casting fresh doubts on whether the economy really bounced back in the third quarter from the second quarter lows of, 5.4%. So should we expect a budget that will recognize this slowdown and indulge in more subsidies or income transfers? Will the trend of rising capex by the government plateau or even fall? What kind of nominal GDP growth and tax growth or tax buoyancy should we assume? And above all, will it continue to aggressively cut the fiscal deficit, the government that is? For all these questions, I'm joined by two top-of-the-rung economists, Shantanu Sengupta of Goldman Sachs and Pranjul Bhandari of HSBC. Pranjul, of course, joins me in the studio. Thank you very much, Pranjul and Shantanu, for joining. Okay, Shantanu, Pranjul, let me first start by asking your growth assumptions. Shantanu, your real and your nominal GDP assumptions, and whether lately you have brought them up or down.
Hi, Lata. So we have been almost at the bottom of consensus for a while now on growth. We are at 6.1% GDP growth for the current fiscal year. We're looking at 6.3 for the next fiscal year. Nominal GDP growth in the handle of around 10%, maybe a shade higher going into FY26. It'll be slightly lower in FY25. That's sort of the broad assumptions. I think the bigger picture is that India is in the midst of a cyclical slowdown, mainly policy-driven in our view. And we can discuss if there is any policy room to stimulate the economy at all.
Okay, that precisely will be my question, but let me get Pranjul's view as well. I didn't know 6.1, Shantanu, by the way. Okay, very quickly, what's your third quarter assumption in that case?
We're at 5.9 for the third quarter. Tracking estimates are pointing slightly higher, but there's an amount of liquidity tightness that is going on in the system right now, and therefore we are not super hopeful about the recovery, at least in the first half. The second half is possible going into this year.
Okay, and I take your point. The Reserve Bank's nowcast in the bulletin was 6.2 for the third quarter, but of course the nowcast is perhaps not a very sacred number. Your thoughts, Pranjul, what are you assuming for this year next, more important?
See, our sense is India's post-pandemic potential growth has been 6.5%. And eventually, if we get the right policy stimulus, we get there. But we may not get there in December, and we may not get there in March. Hopefully, by June, we get there. For FY26, we are assuming we get there, and we are assuming a 6.5% real GDP. But I think for the remaining 2 quarters of FY25, I think we'll probably stay in the 6.2% handle.
Okay, so for the full year, we are like 6.3 or something?
Somewhere there, yeah, 6.2, 6.3.
Okay, so between the two of you, not much, not very different as far as this year is concerned. Okay, Shantanu, because you're saying that next year, that is FY26, you're expecting only 6.3, not a big jump despite what should be a good base. You won't expect this budget to recognize that slowness and go in for more revenue expenditure rather than capital, more subsidies or transfers. Will that be a policy thrust at all?
I think there'll be recognition of the slowdown in certain pockets of the economy. We don't think this is the broad-based slowdown. Even if you look at consumption, there's an urban mass which is dragging the top end. What we are calling as affluent India is still driving growth. It's pretty good. We think that rural economy is recovering at the margin. In line with what you're saying, there are some fiscal transfers which are already happening at the subnational or the state government level. You're seeing that welfare payment, transfer payment, subsidies increase to the point of 0.5 to 0.6% of GDP over the last couple of years. Even if there's recognition, our bigger point is that you might want to shift around expenditure a little bit from capex towards welfare or transfers, but the net fiscal impulse on the economy is still going to be negative, or there's going to be a fiscal drag if you're going to consolidate the deficit. And I don't think there's any question, at least in our mind, of whether the government will be consolidating or not. I mean, there's no question of expanding deficits at this stage of the cycle.
So 4.7 or 4.8 is not at all on the cards, according to you.
Even if it is 4.7, for instance, Lata, from 4.9% of GDP this year, you're still going to have a fiscal drag because you're consolidating the deficit. So unless you go towards like 5+% of GDP, the net impulse on the economy is negative. Now, within that, we can think about the mix and whether you want to shave a little bit from capex, you want to allocate more towards welfare or transfer payments or subsidies. But overall, we think that the room to maneuver is relatively less.
Okay. Pranjal, I think you're also going with a 4.5% fiscal deficit, like many of the economists. So will there be a juggling? Will there be, letting go of this capex theme that has dominated the budget for the last 4 years? Just let go, let it fall to maybe 2.9% of the GDP or whatever, 3%, and, switch to stronger income transfers.
I hope not, actually, Lata. I do think that the government should and will stick to the fiscal consolidation path, bringing down the deficit from 4.8 to 4.4. And it's very important. Growth is slowing, but what India has right now is macro stability. Inflation is low, current account deficit is stable, and fiscal is on its way down. The deficit is on its way down. Let's not mess that up. The cost of that would be very, very high. But within the space that you have, which is limited space, how can you best, give money for growth? And my sense is what the government has done well in the last couple of years has been capex, and I think they should not change that at this point of time. States are giving a lot of current expenditure, a lot of cash transfers. Let states run with that. I think the central government should stick to capex. Couple of reasons. Central and state
capex. But they're not able to spend, no.
That was this year. It was FY25. It was an election year. We had important national elections, then a very important state election. I do think that public capex comes in cycle, and we are at that point where a new cycle can start. Now, I don't think they can raise it in a very big way, but I would go with a budget estimate for capex in FY26 of about 11 trillion. What they had hoped to do in FY25, I'm hoping they at least aim to do it in FY26. And one last word. Capex comes in, state and center move together. If center starts doing more capex, states will start doing more capex. Capex gets you the jobs, it gets you in construction industry to go up, it gets you a medium-term capacity to grow. Why leave all of that? It really served us well until we were doing it, which was FY24.
I could go on a tangent and make a debate out of some of these points. A lot of capex now is prefabricated structures. Some decades ago, when Mumbai had a bridge, there would be slums that would grow. Now it is all prefab. So I don't know how capital intensive it is, and I'm not qualified to talk about that. But also capex from the states, the manner in which it is getting distributed with so many conditions, the state governments pretty much often complain. But Shantanu, what's your sense? Will the capex amount be lower than the 11 trillion or 11.111 trillion?
So we are baking in 3.2% of GDP on capital expenditure, which means that you sort of remain flat year over year in terms of percentage of GDP, which effectively means you're growing at nominal GDP growth rates around 10%. But remember, the CAGR growth that you had in nominal expenditure on CapEx post-pandemic was about 25%. That gave you a fiscal boost from the CapEx side to the economy over the last 3 years. We've been flagging for the last year and a half that that pace of expenditure growth cannot continue. It's just a fiscal imperative or the fiscal reality that we are facing with 85% debt to GDP. And therefore, if the overall fiscal deficit consolidates and you're hitting sort of the lower bound in terms of your current expenditure, especially on subsidies, then CapEx will have to take a hit in terms of percentage growth rate. We still think that around 11 trillion, if they deliver, is a solid number. For India, it has multipliers. I would agree with Pranjul that this has positive multipliers for the economy, and the supply side needs to be strengthened. That's what ultimately pushes up your potential growth. But our bigger point is that in a consolidating environment to the tune of around 30 to 50 basis points on the fiscal deficit, the room to maneuver from a government is relatively less to provide a boost to the economy in terms of fiscal impulse.
Yeah, I think we all have to learn to accept that it's a very small terrain that they can really play around. But Pranjul, overall, what is the big thrust that the budget is likely to have? Will it be a big employment thrust, which was there last year? Or will it be a big housing thrust because of the multiplier that it can give? Will it be a PLI, grab this, the supply chain thrust?
I think, three broad things come to mind. I think number one, macro stability, stick to your fiscal consolidation path and hand over the growth job to RBI. And I think RBI has the space given inflation is coming down a lot. Our January inflation forecast is 4.2%, quite low compared to 6.4 just in September. The second one, I think, is manufacturing jobs. Great opportunity. Again, supply chains could be getting rejigged this year. In Trump 1, you did not become a magnet for mid-tech FDI. Try and do that. But that will want you to be, you have to dare to be different. When the world is getting protectionist, don't increase import tariffs, actually reduce some of them. Go sign FTAs with the US and other advanced economies and let the currency be flexible. And the third one is revival of CapEx, because over the long term, that's the only source you have of creating capacity and jobs. Okay. So I would say these three should be the main pillars of the fiscal on February 1.
Okay. Well, Shantanu, time permitting, I'll get to the big thrust from you also. But first of all, I wanted to ask you, you've assumed a fairly strong, tax growth. I think you're assuming that the income tax, for instance, from 3.9% of the GDP, which is the revised estimate for the current year, you're expecting it to rise to 4.1%, which means you're expecting income tax to continue to grow. But when you look at the urban consumption and the other signs of slowdown, are you still enthused to assume such a strong tax growth?
As I said, consumption is not a homogeneous slowdown. Consumption, in our view, has been very heterogeneous. You're having the urban mass, which is slowing down. Some of it is driven by the macroprudential tightening by the RBI on consumer loans. Their contribution, that section's contribution to income taxes, is relatively lower. I mean, we've shown this in our budget preview that the higher income earners are contributing more and more to income taxes, and that is the section of the population which is still delivering in terms of job growth as well as income growth. I mean, services exports is one number you should look at to understand, what the kind of growth is in that segment of the population, and therefore we are pretty hopeful that we can get to around 4% of GDP on income taxes, whereas our assumption on corporate taxes is lower given the cyclical slowdown in the economy and lower earnings growth possibly going into next year.
Okay, very quickly, 10 seconds, what will be the big thrust, Shantanu?
We think that rural housing program, some credit towards MSMEs for them to kickstart the cycle of investment. Okay. And we are hoping that financing of India's green energy and energy security versus transition needs get addressed in the budget, not just in terms of fiscal allocations, but in terms of setting up the framework or the structure to carry on that investment going forward.
Okay. I'm sorry, I've just whetted your appetite. Out of time, season of earnings, you see. Thank you very much, Shantanu and Pranjul, for giving us an idea of what we should expect in the budget in terms of macros. Wrap up on Bazaar on that note. Chartbusters coming.
What happens to the dollar? Those will, of course, be big questions. What happens to emerging market flows? Those will, of course, be the big questions here in Davos. It's been over 2 decades of tracking the global power shifts at the World Economic Forum. Starting from our first story reported 20 years ago to last year's groundbreaking coverage of the world's most important economic event. From discovering era-defining ideas to connecting you with the world's visionary thinkers and doers. From decoding blueprints for growth to driving collaboration to make a better future. We've been bringing you a wealth of information through 20 seasons. Tune in to Davos Diaries at Davos 2025, live and exclusive on India's most trusted business news platform, CNBC-TV18. From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 Budget Headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
Markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Hindustan Unilever under pressure after its third quarter numbers came largely in line with very muted expectations. The company's profit after tax was boosted by a one-off gain on Pureit sales. The management expects moderation in consumption sentiment to continue.
Coforge and Persistent, on the other hand, see gains of around 10% on the back of a very good showing in the third quarter. Coforge's constant currency revenue growth comes in much higher than what the street was working with at around 8.4%, while Persistent's strong growth leads the stock higher.
Shares of Pidilite surge in trade on the back of an inline set of numbers. Total volume growth coming in closer to 10%, beating street expectations. The company says they've ramped up ad and promotion spends.
Tata Communications is under pressure despite the company posting decent set of numbers in the third quarter. Kotak Institutional Equities puts a sell call on the stock on the back of slower deal closures due to macro headwinds.
Paras Defence surges more than 3%, now up 8% as the company signed an MOU with the Maharashtra government to invest nearly 12,000 crore rupees for an optics park project in Navi Mumbai.
Hello and welcome to Chartbusters. I'm Nigel. With me is Mangalam, and yesterday we saw good recovery in the later part of trade, and today we're seeing some kind of a follow-through out there as well. So Mangalam, green on the screen, the Nifty at the high point of the day. We have the weekly expiry factor as well that plays out. So the bulls will be hoping to ride on these gains.
Let's see how that goes, Nigel. You know, the ingredients were in place for some sort of recovery.
Yeah.
The gift Nifty also gave you a dip at the morning. And the good part is that the broader markets are doing a lot better.
Yes.
Yesterday, even as we saw a recovery in the frontline end of things, the mid-caps were still underperforming. And today we have the mid-cap index up by about 2%. So we'll most definitely keep an eye out on how business for markets pans out in the second half of trade, at the high point of trade for the mid-cap index as we speak. But let's talk about a few ideas for profit in a market like this. Anant Chaudhary of Money Control Pro joins in with a stock that he's been tracking. Anant.
Stock we will discuss is SP Apparels Limited, a leading exporter of kids wear garments, supplies to major retailers such as Tesco, Kmart, Mothercare, primarily in the UK markets. In its retail division, a company markets the Crocodile menswear brand, also Angel and Rocket, a premium UK kidswear brand. We are bullish on the company due to its presence into niche kidswear market, which has high entry barriers. Also, company is backward integrated, makes 75 to 80% of its yarn requirement in-house. Global brands are consolidating suppliers, favoring large backward integrated players, and also reducing reliance on politically unstable Bangladesh. FTA with UK and Europe, that could also boost the addressable market for the company. Last year, company acquired Young Brands Apparels Limited, a Tamil Nadu-based garment exporter, for 223 crore at 0.7 times FY23 sales. This expands the overall product portfolio for the company. This company serves to global brands like Jockey and Marks & Spencer across the UK, US, Japan and Canada. The acquisition offers cross-sell synergies for SP Apparel. It is also setting up a facility in Sri Lanka to reduce the labor cost. With all these strategies in place, revenue is expected to grow by 50 to 60% by FY26. Stock trades at 16 times on FY26 earnings.
All right, let's take note of the markets before we move on to the management on our show. The FMCG pack is in focus. Remember, HUL's muted set of numbers saw a stock decline, but thereafter the street believed that maybe, could this be the worst of the quarters coming ahead, and maybe things recover from here on as government spending ramps up, money is in the hands of people ramp up, and ahead of budget, is there any, sweetener coming in? As a result of which HUL, despite muted numbers, has recovered from the lows. Look at some other FMCG companies. Tata Consumer, for instance, has moved to the high point of trade. We're seeing some traction in Britannia as well. We have, a bunch of others as well. Nestle, for instance, opened lower, has now moved higher from the lows of today's trading session. And alongside that, we have Pidilite, which continues to do well, and a bunch of other consumer stocks which are doing a lot better as well. But let's talk about one stock which is on our radar, which is Polycab. The company's results for the third quarter came in fairly in line with street expectations on the revenue front, but the margins were a big beat at close to around 13.8%, and that was led by reduction in losses for the FMEG segment, along with better than expected margins for their cables and wires business as well. To discuss these numbers further and more importantly give us the outlook for the very near future, as the company has given us their 5-year guidance, we have Mr. Tongia, who is the Executive Director and CFO of the company. Alongside that, we have Mr. Inder Jaisinghani, who is the Chairman and Managing Director at Polycab as well. Gandharv, Mr. Jaisinghani, thank you so much for joining in. Let's start with the operational performance for the very near future. The margins were better than what the street anticipated, and that was because of one, reduced losses in FMEG and better than expected margin in cable and wires business itself. So on that front itself, if you could give us, what's the sustainable margin for the cable and wires business, and FMEG, when does that break even?
Sure. As you know, in our cable and wire business, in general, our guided range is between 11 to 13%. As far as the 9-month performance is concerned, our actual EBITDA margin is within that range. Third quarter was slightly better, as you rightly highlighted, it is around 13.8%. We believe over the next few years, we should be able to maintain this EBITDA margin of 11 to 13%. And on FMEG, though we have reduced our losses over the period, as you rightly highlighted, we believe in next 5 years, as part of Project Spring, we should be able to get to 8 to 10% EBITDA margin slowly and gradually.
When does the break-even happen? Sometime in the next financial year or the financial year after that? As in, what we are trying to understand is, for how long do you invest in it before it breaks even?
So it should happen in near future. If you see our current 9 months performance, every quarter we have been able to reduce our losses. And in near future, we should be able to get to break even and then to profit. In a time or frame of 5 years, certainly we are confident that we'll be able to get to the industry-leading margin of 8 to 10% in this business as well.
Okay, all right. Hi, gentlemen. Good morning and good to see you, Vin. Tell us a little bit about the cables and wire business. Out there, I'm looking at the growth. It's close to around 12%. Now, that's a little bit lower than actually what the street was working with. And it appears the volume growth could be in high single digit. Could you tell us, is demand slowing down? Is there competitive intensity that's ramping up as well? So what was the volume growth in the past quarter and how do you see the volume growth going ahead?
So in general, in 9 months time frame, our cable business has registered a double-digit growth. Wires is a single-digit growth. As you know, over the period of last 5 years under Project Leap, we have been able to increase our market share. It is now more in late 20s, whereas 5 years back it was in high teens. We believe in next 5 years as part of Project Spring, in cable and wire, we will grow at 1.5x of the industry growth rate. And in FMEG, perhaps we'll be able to achieve 2x of the growth rate. And profitability-wise, on cable and wire, we'll probably continue with 11 to 13%. And on FMEG, should be able to get to 8 to 10%.
What was the volume growth in the past quarter, though?
So it was in the 9 months, it was in a double digit for cables business.
Last quarter. 9 months is fine, we got that. But last quarter, what was it, Gandhar?
It was in high single digit.
High single digits. But is that because of competitive intensity ramping up or was there a broad-based slowdown?
I think combination of several such factors, including what you mentioned. I think there is a slowdown in the public capex, which is also impacting. And the private capex is probably taking perhaps more time than what it was initially anticipated. So it's a combination of all such factors. But in general, at the industry level as well as the company level, fourth quarter is comparatively better than the other 3 quarters of the year. So we are optimistic about fourth quarter performance.
All right, that 20,000 crores of guidance, you're being very conservative, I would say. Why do I say that? Because if you have to get to 20,000 crores, you'll actually have to degrow in the fourth quarter, which I don't think that's possible. So could you clarify, will it be in excess of 21,000 crores? Just plugging in the numbers, if you did what you did last year in quarter 4, it'll be more than 21,000 crores. So you want to give us a revised number?
You are right. And that is why we are not giving any guidance of 20,000 crore any longer. The 20,000 crore guidance was given in fiscal 21 when our top line was 9,000 crore rupees. And our ambition was to get to 20,000 crore rupees in 5 years time frame, which is 26. As you know, in the calendar year 2024 itself, we have achieved 21,000 crore rupees of revenue. And that is where we believe we have already met our expectation ahead of the timeline which we had committed to our stakeholders. Now, as part of Project Spring, in the next 5 years, between 26 and 2030, we believe we will be able to grow at a rate which is going to be significantly better than the industry growth rate, both on the cable and wire business as well as FMEG business.
We have that number. We have, how faster you will grow versus the industry. Do you have an aspirational revenue target here? Say 20,000 crores is what you've, easily managed to achieve. For the next 5 years, do you have an aspirational revenue target from here on? Say, maybe, should I put that number? Mr. Jaisinghani, how about 50,000 crores?
Yeah, we can think of that, but we are thinking very clearly that we will grow 1.5 times than the others. And demand is there. We have to build the capacities and we have to build all systems and everything. And we are on the job. I think so we'll reach at least by 40,000 crores.
All right, at least 40,000 crores. Aspiration would be 50,000 crores. Mr. Jaisinghani, just on the capex itself, you've in this plan also given a capex guidance of close to what 6,000 to 8,000 odd crores. What we want to understand is what would your annual cash generation be for you to be able to fund this capex along with the increased dividend payout that you have, close to 30% is what you've announced, because most on the street we're working with close to around 3,000 to 4,000 crores in terms of a capex over this period itself. So this increased capex guidance that you have has, the street wondering about the funding of this. Would it entirely be done internally?
We just attempt that. You're right. Our guidance of 3,000 crore rupees, but that was for a period of 2.5 to 3 years. And if we were to think of 5 years, we believe as an investment of between 6,000 to 8,000 crore rupees is required. As far as the sources of these expenditure is concerned, it will be through internal accruals. So we are already generating fair amount of cash. As you know, the profitability has improved over the period. And after factoring dividend payout and capex, we will be then also left with some additional cash in the books of the company.
All right. What about FMEG as a percentage of the mix? What would it look like? If you could move from 20,000 to 40,000 crores with an aspiration of going towards 50,000 crores, what will the FMEG part of the business look like?
So FMEG, as you know, even today is a comparatively small business for us. It is between 8 to 10%. If cable and wire business continues to grow at a rate which is going to be 1.5x of the industry growth rate, I don't believe that FMEG will become very, very meaningful, but certainly it will move up. I think these numbers are dependent on several factors. It will be difficult for us to put a number to it, but it has to be comparatively better than what we have today.
Since you just spoke about the capex plan, what is your current utilization levels in your businesses? If you could explain it to us vertical wise.
So in cable and wire, we are between 70 to 80%. In FMEG, utilization is between 40 to 70%, depending on particular product category we are talking about. And we believe that with the additional capex in the years to come, we should be able to improve utilization slowly and gradually.
And in FMEG itself, if you could give us a sense of what the product mix would look like, because your fan share is coming down, your switches share is coming up, high margin businesses are improving as well out there. From an aspiration standpoint, what should your product mix in FMEG look like? How much is fans? How much would be switch gears? How much would be newer categories that you would enter?
So as of now, we are not planning to enter into new product categories. We'll continue to have the same product in our portfolio: fans, lighting, switches, switchgear, and a small contribution from conduit pipes and solar inverter. As you know, switches and switchgear are slightly more profitable than the other products, and that is why we have made focus efforts over the last several quarters to increase the contribution of switches and switchgear to FMEG business. We believe that should improve meaningfully in times to come, followed by fans and lighting.
Okay, all right. Any inorganic growth plans?
Nothing as of now.
Pleasure talking to you all as always. Thanks a lot for fielding all those questions, and look forward to chatting up with you all. Don't let us wait till the next quarter. Maybe we could do one sometime during the fourth quarter itself. But thanks for joining in, gentlemen. Well, for the time being, we'll slip into a short break. Come back, we'll focus on markets and stock-specific action. Don't go anywhere.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits, and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour, live on YouTube at CNBC-TV18, weeknights at 7 p.m.
Welcome back. Let's bring you some news which is likely to be negative for L&T, and this is what we understand from government sources, that the MDL and Germany's ThyssenKrupp Marine are likely to qualify for the government's mega 70,000 crore submarine project. Parikshit joins in with the internal details that he's gotten exclusively. Parikshit, does it mean that L&T has lost this contract?
Well, it seems so. This was supposed to be one of the biggest defense deals in India in the year 2025. There were only two groups which had submitted bids for the program, L&T, along with Spain's Navantia, and Mazgaon Dock Limited, along with Germany's ThyssenKrupp Marine. We've been told by our sources in the government that a technical oversight committee of the Ministry of Defense has found only one bid responsive or qualifying the eligibility criteria, and that is the bid by Mazgaon Dock and Germany's ThyssenKrupp. So it seems at this stage that L&T has lost out as far as this mega P75I project is concerned, but a final decision has to be taken by the Defence Acquisition Council. So we'll have to wait for that, but we do expect the DAC to meet very soon to examine what the Technical Oversight Committee has said and take a decision. But for the moment, clearly it seems that Mazgaon Dock Limited and Germany's ThyssenKrupp are the front runners and are in the driver's seat as far as this P75 project goes.
All right, Parikshit, thanks a lot for stopping by and giving us these details. Negative for L&T, but the final word on this is not out yet. Let's bring in Sachidanand Uttekar of Trade Bulls for a quick technical check on the market. Sachi, there's a bounce back that we're seeing, but seems like at higher levels there is a lid which comes in from the FII selling as well. Do you think at any point in time that lid's going to go off and we'll see a bigger move, given the sort of up move that we're seeing in the mid-cap end after the big dropping?
Good morning, Mogalam. Good morning, Nigel. And clearly, I think yesterday's momentum has been very strong. In fact, if you look at today's setup, it clearly looks like the main level which Nifty has to negotiate on the higher side is 23,260. The moment we see it trending above this particular level, we will see a very strong short covering move unfolding on the higher side, which could push the index towards 23,350, 400 kind of a zone. So I think this overall trend momentum that we have been seeing since yesterday, it should continue on the higher side. We are seeing some fresh developments of a base somewhere close to around 23,140. So probably, even on a decline, some long positions can be added in Nifty. One can keep a stop loss at 23,120 on a closing basis and expect a move towards 23,400. When it comes to Bank Nifty, the base looks strong at around 48,600, but even here, I think the important level on the higher side is placed at 48,960. The moment we see this particular level getting breached, then probably we may see a very strong comeback even in Nifty Bank. But I think the focus would be on Nifty itself. We are having strong evidence of a fresh breakout, and probably we may see an extended rally towards 23,400.
Okay, all right. Extended rally, not ruling that out. Thanks, Sachi, for that. What about individual stocks? What's on your radar?
Good morning, Nigel. Nigel, two stocks. In fact, both the stocks have been displaying relative strength since last 2 weeks. One of them is Maruti. Now, if you look at the overall structure, the stock was consolidating for the last two trading sessions near that 12,000 mark. If you look at the overall, setup of its weekly ADX, it has started to trend above that 24-25 mark, which is a breakout zone. Plus, we have seen a very strong put writing action at around 11,800. So probably it looks like an elevated base, a bullish flag formation on the daily scale, which is exhibiting a price target close to around 12,580. And that's why we have also recommended it to our clients. We're expecting this particular move to unfold in two phases. The immediate target is placed somewhere close to around 12,240. The positional target is at 12,580, and we are recommending building long positions in Maruti one can keep a stop loss at 11,960 on a closing basis. The other stock which we just discussed right now is Mazgaon. Even here, if you look at the last 2 weeks, the stock was outperforming. It has shown a very strong stable price performance. The overall structure also looks like a bullish flag formation, but on the weekly scale itself, the breakout is established well. It has been holding on to above that 2300 mark. We are expecting this move to extend towards the 2830. Trading target is placed somewhere close to around 2650, and that's why even here we are recommending building fresh long positions, keeping a stop loss at 2330.
All right, we take that point. Thank you so much for joining in and giving us your views on the market as well as individual stocks. Take a short break, come back, get you more on the markets. They are buzzing, though we have seen a sharp fall in the Nifty Bank. Actually, the Nifty Bank has now moved into the red, so keep an eye out on that. It's just a swift decline that we've seen on the Nifty Bank. It's led by HDFC Bank. The intraday comes up for you, and as a result of which the Nifty too has given up some of its gains. We'll take a short break, come back, focus on the markets once again.
About India, we have them growing strong next year, consistent with what they grew this year. It's now moved to the 5th largest economy.
The Honeywell view on India, and how do you see the next few years?
Domestic business doing extremely well. Can't be more pleased in terms of opportunities in India.
It is, and there are lots of reasons for that. One is because he's in a much stronger position in the United States than he was in 2017.
They're working on AI. They're working on all the innovative capabilities that we want to input into our products. A lot of that's coming out from India.
If I were to say even heart and mind put together, India is an exciting story.
India is going to be the office of the world. You and I discussed about it.
Welcome back. Well, speaking to Shireen Ban at Davos 2025, EY India's Rajiv Memani says that relief on personal income tax for urban, lower and middle income groups will boost economic growth. Let's listen in to what he had to say.
The urban, lower income, middle class people have got really impacted.
because of inflation, and also if you want to get consumption back. I think income tax relief at those levels and meaningful income tax reliefs, I think will have a great impact on the consumption story and overall ability to spend.
So tweak the 30% slab and perhaps...
It starts at 15 lakhs, you can take it higher, then you have a rebate, you can take the rebate higher. So there are ways in which you can do so that benefit is given to people in the lower to middle income category, so that they can hopefully, and a lot of that money goes into consumption, doesn't go into savings. A lot of that comes back to government. A lot of them creates employment. So the mindset, and if you look at the tax buoyancy, personal tax buoyancy, even this year, the personal tax revenues have grown by 22-23%. So government has done a great job.
But they're short on GST.
They're short on GST, so the best way to get GST is to get consumption going.
Right, with that we'll wrap up on this edition of Chartbusters. The news that the Nifty Bank, which is top between Nigel and me, is in the red right now, and as a result of which the Nifty too has fallen off the highs. Keep an eye out on the market. Is there any recovery in sight or not, or whether this recovery has been sold into as well? We'll leave it to the team of Trading Art. Thank you for watching.
Trained. The last time we spoke here, you had given me a number. What does that number look like today in terms of the people that have been trained on AI within Infosys?
So within Infosys, it's a huge number because there are two types of training. One is what we call AI aware, and one is a deeper training where people are using it. The AI aware, which is a broad training, is over 270,000 out of about 320,000 people are in this AI training. And it's really across the board because there needs every discussion with client, every deal, every large deal, every medium deal, there's a lot of interaction on AI. So it's built into many things.
So clients are asking you now specifically for what the AI use case is going to be and how you can contribute to that?
Clients are interested in where generative AI can help them. And what we are seeing is through agents or through small language models, in the past through large language models, we have various ways in any large transaction or program where they can benefit from this AI. And so we are using it and they are quite happy with it.
So what is this going to... Let's talk about India. The outlook that the IMF has put out pegs growth at 6.5%. Still one of the fastest growing large economies in the world. What do you like about India today, and in the context of what we will hopefully see in the budget, what would your expectation be?
So firstly, just to emphasize what you said, which is, India remains the fastest growing large economy of the world. We do expect to see growth to recover in the second half of this fiscal year, which is how we get to 6.5% growth. So for us, potential growth for the US, for India is 6.5%. To get to much higher levels of growth will require structural reforms on many fronts. Also, it will require continued public infrastructure investment, which the government has been doing a lot of. But you're going to require that at the central government level, but at this and the state government level, and to be able to execute on a timely basis, that's going to be quite important. There's also the more long-standing issues in terms of the ease with which you can start a business, the ease of doing business, the ability to buy and sell land, labor reforms. All of those are required. And lastly, we're now in a world where companies are looking around for how to build their supply networks. And India is an attractive destination for them to do it. So this is an opportunity for India to be able to plug itself more firmly into global supply chains.
On India, we've got of course, 6 Indian states along with the central government.
Good morning. Welcome to Trading Hour. I'm Reema Tendulkar. With me is Vivek Iyer, and it's a much better looking screen, especially when you look at the broader markets. Because yesterday, while the frontline indices rebounded after Tuesday's brutal sell-off, the broader markets, the mid, the small cap stocks were under pressure, especially where you had earnings cuts and earnings misses. But today, the mid cap index has bounced back, so it's roaring higher with a gain of about 1.8% and a positive advanced decline ratio. Hi.
Good morning, Nima. You're absolutely right. So post HDFC Bank's last afternoon, there's been a bit of a positive sentiment as far as markets concerned. Yesterday also, you saw quite a bit of a recovery. Today we opened down gap down after the kind of weak cues that we see, but it's been a sharp recovery, like you mentioned, from there on. Couple of stocks on the radar, first on the list, L&T as well as Mazagon Dock, contrasting fortunes over there. Reports indicate, and even our sources from Delhi, Parikshit, tells us that the Defence Ministry actually has found L&T bid non-compliant. Now, this is for a large 70,000 crore submarine deal. So, Mazagon Dock up almost 3.5%. L&T has seen quite a bit of a sell-off today. The other stock in focus, and one from the consumer pack that's doing very well today, is actually Pidilite. Strong volume growth, results largely in line with expectations. The strong volume growth has led to a sharp move of almost 8% for Pidilite today. And on the other hand, the cement pack, remember, quite a few results have already come about. Dalma Bharat, despite a muted set of results, has actually continued its recovery. Yesterday, it opened gap down, saw a sharp recovery, ended in the green. Today, high by over 1%. On the other hand, Nuvoco, however, has slipped in trade. So overall, very mixed trends, but it's been a sharp recovery nevertheless, like you just pointed out, Rima.
Indeed, and in mid-cap IT, we've been talking about Persistent and Coforge, but look at Zensar Tech. That has moved up close to about 12% because in a weak quarter, the companies managed to grow, and they did in Q3 of last year and Q3 of the year before. It was a negative growth in December because of furlough seasonality. But this time, despite the challenges, they managed to grow, and the street is rewarding that. Zensar is the one that we're talking about. So far, the picture across mid-cap IT has been better. Persistent, Coforge, Zensar, all three trading with handsome gains. And today, we'll have numbers from Mphasis and Cyient. So the picture on the mid-cap IT will be complete. But let's begin our show with a corporate discussion. Chennai Petroleum reported an operationally weak Q3. Profits are down 97%. EBITDA is down nearly 65% on a year-on-year basis. Margins under pressure. Ed Shankar, Managing Director of Chennai Petro, is now with us on the show. Thank you very much, sir, for joining in. First, some details. How were the cracks in Q3 and what is the trend looking like in Q4?
Thank you very much for having me on this show. The cracks, if you look at it sequentially, there has been a huge difference from if you look at the Q3 of 23-24 versus the Q3 of 24-25, there has been a huge fall in the cracks in diesel and also in the MS and SK. Whereas if you look at the sequential benefits, the HSD cracks have improved slightly, whereas the MS and SK also, MS is a slight, it's almost same. Whereas the SK cracks, there's a slight improvement. But what I feel is that if you look at the overall scenario, with comparison of Q3 of last year, the cracks have significantly fallen this quarter.
Okay, sir. So could you give us a sense of how exactly GRMs panned out as far as Q3 was concerned? How do you expect it to pan out for Q4 and the trend that you expect going into FY26?
Yeah. See, actually, Chennai Petroleum Corporation has been going through a turnaround cycle of during the month of August, September, and October. So we have gone through this turnaround cycle, which is actually a natural phenomenon for all the refineries. So we went through this cycle and we have come on stream in mid of October. So if you look at our overall performance with respect to Q3 and Q2, you should appreciate the fact that the operational efficiency and operational efficiency has really gone up, and we have done quite well on the cycle at which the crude processing is concerned. So if you look at the cracks also, there has been a good improvement after November. October, November also, it was very sedate. There was not much of an improvement. However, in the month of December, it has slightly improved. And that is continuing in the month of January also.
Do you want to put a number to it, sir? What would the numbers look like in the subsequent quarter?
Subsequent quarter, it is too early to predict now because we are in the month of January. But as of now, the cracks have improved. You have seen that the diesel cracks are almost about $12 now. Although the MS cracks are not really very good, but diesel, which constitutes a significant portion of our product mix, it is quite good now. And at this rate, we can look forward to having a better performance in the coming quarter.
Give us an update, sir, on the Kaveri Basin refinery. We understand that you were in talks with banks to raise about 28,000 crore rupees. By when will the refinery go ahead, come on stream? And if you could give us just details of the status.
Yeah, the company, along with Indian Oil Corporation, our parent company, we are going in that CBRPL project on a joint venture basis. So we have approached the market for debt funding. At the same time, we have also approached the government for the equity infusion in the market. So we are looking at the approvals from the statutory bodies to come in, and based on that, we have fixed a timeline of about 30 months from the date of final statutory approvals.
Understood that, sir.
39 months, sorry. Yeah.
Got that. So 39 months is the number that you've given. So once the Kaveri Basin comes on stream, how do you expect that to aid GRMs? You also spoke to us about how GRM has been on a trajectory of recovery, but it continues to trail below the Singapore benchmark. So what is the reason for that, and when can you go at par or beat the benchmark?
Yeah, first on the GRMs, if you look at how CPCL has fared with respect to our earlier last quarter, you will see that although the Singapore GRM is at $5, we are roughly $4.2, $4.3 we have done. This is to be looked at from the perspective of the turnaround that we have done in the month of October, because around mid only we completed all our shutdowns, and then slowly the production has been ramped up. And now today, if you look at our current production capacity, we are doing more than 100% of the nameplate capacity. So if you look at our GRM with respect to Singapore GRM, which was $5 previous quarter, we were at 4.2 on a core GRM basis, and looking forward that it would be better. Now, if you look at how CBRPL will be focusing on this area, I should tell you that CBRPL, we have a higher petrochemical intensity index. So whatever we are talking about with respect to Chennai Petroleum, this should be close to at least $1 or $2 more it should add to the bottom line on the GRM.
Understood that, sir. Sir, give us a sense of this sourcing mix currently. Is there any impact that you can assess for us in terms of restrictions, if any, that come about on Russian oil? How do you see oil prices move on from here, and how does it impact your operations?
Yeah, oil prices, if you look at on a quarter-on-quarter basis, the oil prices have really changed a lot with respect to Q3 of last year. There was almost about $8 to $10 difference on the Brent and Dubai crude, which is considered to be the benchmark. And even if you consider it sequentially with respect to the previous quarter of this financial year, there has been almost a $5 of increase if you look at the decrease in this respect. So what I am trying to bring to your attention is that we as a standing refinery, we need to actually plan our crude in such a way that we have more than 50-60% of the crude which is fixed on term basis. Therefore, there is always the sustained supply available for the crude for the operations. We also focus on some opportunity crudes and also on the spot crude mix. So we were looking at the opportunity crudes of about 20 to 30% in the previous quarter, and now we are looking at the spot market also. So we are looking at the changes that are taking place in the international market with respect to the crude pricing, and accordingly we will take action for that. And as of now, we are quite insulated to what is happening in the coming quarter.
Thank you, sir, for joining in. Look forward to more conversations as the year progresses. Need to get into a short break, but before that, let's dive into the Growth Code, an initiative by Grow and CNBC-TV18, which offers valuable insights and strategies to help you make informed trading decisions. This week, Nigel interviewed pro trader Rajesh Baheti, Managing Director, Cross-Seas Capital Services, and asked him about the risk management practices for algo trading.
Well, what kind of risk management practices should retail investors adopt when using algo trading strategies?
So the main thing is, obviously, you've got to define what will be your capital risk at risk per trade. That's the fundamental core of any trading principle, that you don't put all your capital at risk at once. Because in trading, because it's a leveraged trade, there is a chance that your entire capital can get wiped out. We've seen options go from 100 to 0. And the lure of the option is that it can also go from 1 to 100 or 10 to 1,000. So that's the reason people get into it. But if you get into it at the wrong time, you don't use your capital wisely, that 100 can also, 1,000 can go to 0. So the first principle of algorithmic trading, or any trading, would be to allocate smaller bits of capital per strategy to make sure that you're still in the market, irrespective of what the outcome of that particular strategy is. So if you look at most algorithms, they will definitely be having a stop loss, which either a particular investor can set for himself, or these are preset. So in that sense, algorithmic trading actually makes trading safer for you because of these pre-coded stop losses, and beyond a certain point, you will just be stopped out and no more trades will take place. So from that point of view, it's a better risk management tool than, pure trading on your gut, because sometimes then you will get emotionally invested in a trade and not book losses when you ideally ought to be booking losses. So from that point of view, I think it's a good risk management tool.
Here in Davos, and we've only seen the India presence go up over the last few decades here in Davos. How do you see, especially in areas like manufacturing, foreign direct investment moving to India in this context of reshoring, which has now been the buzzword here in Davos through COVID?
Yeah, and you have also this notion of friendshoring.
Yes.
And the thing is that India is seen as a friend by many countries. So this Make in India initiative, getting more manufacturing in India, I think is going to happen and is already unfolding. We know that Apple didn't produce any iPhones in India a few years ago. No, I think it's like 25% of their production or something. Take the number with a pinch of salt. But India is developing also when it comes to manufacturing. But what really works for India, and also moving forward, where we do expect most growth in the decade to come, is on digital trade and on services. And these are two areas where India is very strong and has comparative advantages. And if it also can catch up on manufacturing, I think this can be a very good decade for India.
What are they talking to you about when they speak about India specifically? Are there any sectors in particular that they're most excited about? I mean, you bring the PwC Global Board to India in 2025. So what looks exciting to you?
What looks exciting to us is now India has always been a destination for talent, the global capability center for many of our clients, a great services industry, and talent in India is being leveraged around across the world, pretty much. Now what we're seeing is that the rest of the world is now looking at India as a manufacturing center, a center of production, which requires new skill sets, but manufacturing is now coming to India. So having an economy that is both a services economy and a product-based economy and manufacturing economy is going to be critical. And that is what our clients today are looking into India to understand that it is a big market where many clients are looking at India now as a new manufacturing center for the world.
There are reports suggesting at this point.
Welcome back to Trading Hour. Well, one particular set of stocks that are in focus, this is on the back of multiple news reports that indicate that Tata Sons may be looking to go ahead and list itself, this on the back of pressure from one of its partners, which is the Shapoorji Pallonji Group. This is still a developing story and there are no confirmations yet. But on the back of that particular reports that have come about, two stocks especially are in focus. The first one is Tata Chemical that you can see on your screen. The stock is up almost 1.3%. And the other stock, which is now trading near the day's highest point, is Tata Motors. And that stock too is in focus. The expectation is that these stocks which hold stake in Tata Sons could see some value unlocking come about. But we'll now move on and shift focus to the commodity space. Manisha joins in, and today we are focusing on soft commodities.
Well, yes, we are. 2024 was a stronger year for many of these soft commodities where we saw multi-year highs in sugar, all-time highs in cocoa and coffee. And that in some sense seems to be spilling over into 2025 as well, especially when it comes to the coffee prices. Arabica prices are now past $3.35 a pound. And this is a record closing that we saw into the markets yesterday. Well, the supply concerns in top producers has been a problematic thing. Brazil is the top producer, and we are looking at adverse weather there. Actually, the latest numbers that have been coming out of Brazil suggest that for 2024, the crop is down by 1.6% to almost 54.2 million bags. This, in turn, would continue to be supportive for prices going forward from here. But within softs, coffee is not just the only thing. Oilseed prices have been rising as well, and soybean futures overnight surged to a 6-month highs. Crop concerns in South America, a decline in dollar index, and of course, absence of any immediate tariffs led to prices gaining back yet again. So that is exactly what we are seeing. Actually, when you look at 2025, some of these soft commodities actually seem to be doing quite well. Coffee, for one, is up 3% in this year already. Soybean price is almost 7% of gains. So is the case with rice as well. Rapeseed price is up 4%, and corn also has gained up by 6%. So as you can see, inflation for many of these food commodities just about continues.
Okay, thank you very much for that. We will slip into a very short break on that note. On the other side, we'll talk technicals. We'll invite Vishal Malkan on the show.
About India, we have them growing strong next year, consistent with what they grew this year. It's now moved to the 5th largest economy.
The Honeywell view on India, and how do you see the next few years?
Domestic business doing extremely well. Can't be more pleased in terms of opportunities in India.
It is, and there are lots of reasons for that. One is because he's in a much stronger position in the United States than he was in 2017.
They're working on AI. They're working on all the innovative capabilities that we want to input into our products. A lot of that's coming out from India.
If I were to say even heart and mind put together, India is an exciting story.
India is going to be the office of the world. You and I discussed about it.
Review its policy to get manufacturers to actually make in India, especially as far as the EV side is concerned. And now, you have Elon Musk quite literally in the White House. What's the expectation in terms of possible changes? Are you hearing anything on that front?
We're not hearing any possible changes, but our stance has always been that we welcome competition. We feel that we will get better with competition. We have over many years. And from an electric vehicle standpoint, it will help grow the market as well. So the part that what we've seen the government always focus on is Make in India, because Make in India is essential. We have the ability today to make world-class vehicles. What we've done with our 2 vehicles is a testament to that. These are designed in India. The technology comes from India. Our Research Valley has really set them up. And that's something that we are starting to see as world-class products being made in India and being made for the world now. So that is in line with the vision that the Prime Minister has laid out on Vikasit Bharat and on India being a manufacturing hub for the world.
The government has also tried to draw in foreign direct investment under the Modi administration. Do you see more foreign investors like yourselves looking at the opportunities that present in India from a sourcing perspective, manufacturing perspective, and a retail perspective as well?
Of course. Can we agree that India is going to be better, brighter, safer, cleaner, healthier over the next 100 years? India is a growing market, is a growing population, but also has a fantastic base to develop with so many fantastic Indian people, and this is why we are committed to India. My advice to companies is that don't come here with shortcuts. Come to India with the long-term view, and this is what we are for. We did when we came to India initially. We went in depth what IKEA stands for and what Indian society stands for, and how can we connect. And we felt from the very beginning a lot of connecting points. That's why we are deeply committed to India.
Your heart is
Yeah.
with India and in
India, that's
as you
right.
pointed out.
I think, for example, on the trade front, I was pleasantly surprised that they didn't impose tariffs right off the bat, which seems
Welcome back to Trading Hour. Well, within the cable and wireless space, we've seen three large companies come out with their numbers. The first one was Havells. We saw KEI come out with results after that, and we saw Polycab come out with its results yesterday. Post that, Polycab, which saw a sharp fall yesterday, has recovered quite sharply today. But look at KEI Industries. It's an outperformer within that particular space in terms of top-line growth, and that stock today is up almost 10%. Now is a good time to speak to Vishal Malkan from malkansview.com, who joins in for a quick technical check on the market. Good morning, Vishal. Thank you so much for joining us. First up, what do you make of the rebound that we've seen in the market? It continues to remain very choppy. What is your view on the Nifty and the Bank Nifty?
Yeah, good morning. I think Nifty has been trying to find its feet around 23,100, 200. And the most important thing what happened is 22nd January, which is yesterday, it made a new low and closed higher, which forms a key reversal pattern on the daily chart on Nifty, which also happens to be an important date as per time cycle. So time and price, when they meet, there is a major reversal happening. So I think there's a kind of a medium-term bottom, an intermediate bottom in place, and we can look at a rally towards 23,500 to 700 in the next few trading sessions.
What about stocks? Are there any stocks where you do see a lot of upside?
Yes, the first stock which I'd go with is Concor, which is finding like a higher bottom at 770 levels. Bullish patterns on daily, momentum indicators at support. So I look at a buy with a stop of 760 for targets of 795 and 810. And the second one would be Indian Hotels, which is again finding double bottom at the levels of 755. And I'll go with a buy on that with a stop of 755 for targets of 790 and 820 in the next few trading sessions.
Okay, thank you so much, Vishal, for joining us, giving us a view on the markets as well as stock-specific action. Time now for a short break. Persistent Systems, Vineet Teredesai joins us on the other side to discuss their Q3 performance and the way forward.
That they will be a little more considerate about it, but
calibrating what rate they should impose,
calibrating what rate, and doing less damage more from the US perspective than from the other countries' perspective. But I think the announcement of External Revenue Service implies what I thought earlier, that he is serious about tariffs, both from the perspective of raising revenues for the US so that he can cut taxes more, which he needs to. Also from the perspective that he really believes by putting tariffs on others, he can bring jobs back to the US. I'm skeptical that he'll raise much revenue. I'm skeptical that too many jobs will come back to the US because manufacturing has gotten so automated that, it's not going to happen in a big way.
Do you foresee the need to scale down hiring? Do you believe that you will continue at the pace that you are, or you may even have to look for more?
I think that you won't have to scale down at all. I do think that over time, and at least we've seen this in our software portfolio, that there is a certain non-linearity between number of people hired and actually growth. So I think that more and more not looking at them as, a direct correlation is something that will happen. But for example, in our engineering services in ERS, even though almost 80% of now, let's say, coding can be done through AI. But then what we are training our engineers is how to build applications on top of it and how to do a lot more of design around it.
We have a presidential memorandum that was issued that delays the imposition of tariffs, and in fact calls on each of the trade agencies to start a process to look at countries with which we have a trade deficit, unfair trade practices, looking at existing free trade agreements, looking at sectors that have national security implications. And those reports are due to the president on April 1st. So it appears that there could be some delay in imposition of tariffs, perhaps with the exception of Canada and Mexico. He did make specific reference to those two countries, and China is obviously an outlier as well. So we will see, but there is likely to be a delay in the imposition of tariffs.
Welcome back. All the EMS companies are bouncing back after the drubbing that they got earlier. So Dixon is higher by 4%. Amber is leading with a double-digit up move. Strength seen in Keynes. It's moving up on pretty large volumes. PG Electroplast is another good mover. But these are stocks which have fallen about 10, 15, 20% since the beginning of the year. And today you are seeing a rebound. The other pocket of strength is IT, and especially mid-cap IT. So, of course, we spoke about Coforge, and Coforge, you should pull up a one-year chart. When they announced the Cigniti acquisition, there were a lot of concerns on the street. The stock had actually declined post the acquisition. It went down to levels, there you have it, 4,300. But once the company, integrated it and the numbers started to show, the management talk was upbeat, we've seen a one-way rally in Coforge, and in the last 1 year, it's up, 50-odd%. But outside of that, even the other IT companies, so Cigniti, of course, is also higher in trade. Redington has moved up close to about 13-14% this month, so it's outclassed many of the other peers. And Wipro in the large cap IT pack is up and about. Industars reports numbers today, and the stock is quite excited ahead of that. Industars numbers will be closely watched. Tata Communication, on the other hand, is a bit subdued in trade. But let's talk about IT, because we've got the management of Persistent joining us in just moments from now. So what's happening is that investors are backing IT companies where there is growth despite high valuations. So all the IT companies' numbers which are out so far, we've pulled up the constant currency revenue growth on a quarter-on-quarter basis. Right on top is Coforge, and the other one is Persistent. But if you strip that out, the growth rate for the rest of the IT pack has been fairly lackluster. For Wipro, it was flat. For TCS, it was no growth. HCL Tech, backed by seasonality, had a growth of about 3.8%. So it's Coforge and Coforge and Persistent, which are the big outperformers in the large cap IT stock, continue to deliver, and investors continue to back them. In fact, these are stocks which are up close to about 50% in the last 1 year. Coforge is up 80% in the last 3 years, while Persistent has moved up 187% in the last 3 years. And this is despite higher valuations. So Persistent is trading at 50 times FY26 PE and 40 times FY27 PE. But Coforge is trading at 45 times FY26 PE and 37 times. So despite very expensive valuation, a fantastic run-up in the stock, like Persistent, as we said, is up 187% in the last 3 years. Investors continue to back them. And it's not just the performance over the last couple of quarters, right? Even the future. Because Persistent is now talking about, reiterating the $2 billion revenue growth forecast by FY27. They've now introduced a $5 billion revenue growth guidance by FY31. Coforge is also very confident about sustained robust growth. So the prospects also for these companies are very strong.
And the results of Coforge, the results of Persistent, both of them, what they've done is, they've taken up the entire mid-cap IT pack. So look at names like Cyient, which was an underperformer till just a couple of days ago. Newgen Software, something that you mentioned. So overall, what's actually transpired is that the strong results of Persistent has ensured that the entire mid-cap IT pack today is doing very well. In fact, speaking about Persistent, we now have the company's CFO, Vinit Teradesai, to discuss their Q3 numbers. Let's get straight away to the new billion-dollar revenue aspiration by FY31 that you have set. Can you share the blueprint to achieve this particular goal?
See, when 5 years back, when Sandeep joined, initially, the company had set up a target of $1 billion. We achieved that in 2023. then we set up a target of $2 billion to be reached by FY27. If you look at it, looks to be pretty much on track. But as we get ready, we have to start thinking about how can we make this even more better and set our new target for 5 billion by FY31. And there are multiple pillars on it. So if you look at our verticals now, all the verticals are on a run rate of $100 million per quarter. So typically, if you sort of annualize them, they are $400 million. All of these verticals have a potential to grow up to $1 billion. Now, if you look within those verticals, there are sub-verticals. Taking an example of healthcare and life sciences, we have scientific instruments, medical devices, clinical research, diagnostic services, pharmaceutical companies, payers. If you look at the banking financial services, you have banking financial insurance put together. So within this, there are sub-verticals. So basically, we believe that as we focus now, these sub-verticals itself have a potential to grow and become like a $250 million sort of a sub-verticals itself. So that's our first strategy that we are trying to work on. The second one, obviously, is the Gen AI part of it. This is going to be a wave. If you look at in the past, some of our bigger peers, they got an advantage of a significant growth during certain waves. Initially, you can call it the Y2K, then the offshoring, then the digital wave. All these put together in that wave, the companies who had that unique advantage have been able to take an advantage of it and able to consolidate and grow that. So we do believe Gen AI potential could probably be our that way for Persistent to get into that fast growth phase. So that's the second part of it. The third part, it's going to be a completely non-linearity of revenue that can come in as Gen AI takes the main stage. We will get into more of outcome-based pricing, success-based pricing, license-based pricing. So multiple new models will come out over a period of time, and that can give an exponential growth in terms of revenue, and that can help us in terms of getting to that target. And last not the least, obviously, as you go on this journey, there will be certain capability-based tuck-in acquisitions you may do. For us, North America is the biggest market. Europe, if we get something good in terms of which can allow us to expand our current market share from 8-9% to around 12-15% by that time, that can be another good opportunity for us. So these are multiple sort of foundation layers. Obviously, we have to do a lot of work on it, but this is at least from a thinking perspective, mindset perspective, these are the pillars on which we have come to that 5 billion sort of a target by FY31.
Got that. Now, when revenues hit $5 billion in terms of an annual run rate, the operating leverage will be massive. Plus, we're talking about generative AI, outcome-driven pricing. What can margins look like? What is the potential for margin expansion?
So again, margin today, if you look at it, we are right now at 14.9. We are anticipating that we'll end the full year at 14.5. Our aspiration is to get 200 to 300 basis point improvement by FY27. So our hope is if the AI-led revolution helps us in terms of getting that growth, you'll see the revenue per employee significantly going up, but the cost per employee not necessarily growing up. As a result of that, you will see the margins expansion. At this point of time, it will be too early to call it out where that will be, but definitely it should be better than what our 16 to 17% FY27 target is. So that's where we'll land at.
Okay, let's get to the near term, right? How is Q4 shaping up? Can it be as good as Q3? And what about FY26? A lot of companies have expressed confidence that FY26 can be better than FY25. Where do you stand?
So, see, again, at this point of time, all our three verticals have started now firing. Our high-tech vertical, which was a little bit of a laggard, that has also sort of shown growth both on quarter-on-quarter as well as year-on-year. Healthcare has been doing extremely well for us. Banking financial services vertical has also started growing consistently for the last 2 quarters. Again, look at it, we have grown sequentially for 19 quarters. There was a period of post-COVID whereby everybody grew. We did well at that point of time. Last 2 years have been a period of uncertainty. Still, we have grown significantly in this period of time. So at this point of time, looking at what we have done in the last 3 quarters, looking at our order book position at this point of time, we are pretty much confident that the Q4 will be pretty good. I don't want to name, we don't give any forward-looking guidance, but it should be good and pretty much on the same lines as what you are seeing. The momentum should continue. On margins, we had said we'll get to 14.5 in FY25. So 14% was H1. We have come to 14.9. We should do somewhere in the 15% plus to get to that 14.5. And that's what, at this point of time, our confidence tells. Now, as you get into FY26, see, there are a lot of new equations changing. At this point of time, the order book is giving us a comfort that we should be able to grow pretty much on the same lines. That's what the aspiration, at least with our initial planning exercise. We just concluded our what we call as an annual exercise, what is called as a huddle, whereby we get 400 people across the board, lay down the foundation about what your short-term future looks like and what is the plan for FY26. The initial numbers are at least very encouraging. Now we have to go through a filtering exercise and see where we want to land. But I'm pretty much confident. Obviously, there are certain external headwinds which nobody knows. And as they come, we'll see what needs to be done about that.
Okay. And how much will generative AI contribute to your $5 billion goal? Can we put some numbers to it? What are the sizes of the generative AI deals? What percentage of your deal wins are linked to generative AI now? And more importantly, are customers asking you to pass on the productivity benefits linked to generative AI?
So see, generative AI has become like a hygiene factor now. In every deal that we go to a customer, basically what is the unique factor that is allowing us to sort of, win the deals or making us differentiated from the other players is going to be your Gen AI solution. So our SASVA platform that we have put in is one of the very unique one in a very advanced stage. If you look at one of the large hyperscaler who was in CEO who was in India, he did out of the many AI solutions every company has, he called out Persistence Contract Assist AI solution, and which has been collaborated with their AI platform, and we have been able to now take it to the customer. So today, if you look at it, it's a basic hygiene factor. Everybody is looking at efficiency, and that's the winning factor. I don't think so at this point of time, the customer is looking at to say how much of this benefit and you can pass on to me. The customer is more interested in saying, if I'm spending $100 today, can you do it at $80? And that itself is an indirect benefit that is getting passed on to us. How quickly can you do it is the premium that you get on it. Eventually, everybody will catch up and we'll see. But as our belief is, today it's an efficiency phase. Once the market sort of improves, it will be on the shift will happen in terms of saying how fast can you take my how fast can you take my market strategy, and that's where the second wave will start, and people will be right now interested in grabbing the market share rather than looking at the productivity benefits coming on to them.
Thank you very much for that, Vineet. What a mover Persistent Systems has been over the last couple of years. Best performing IT stock. Get into a break. On the other side, we'll discuss market fundamentals. Varun Lochab from HDFC Securities joins us next.
Ladies and gentlemen, the President of the United States, the Honorable Donald John Trump, and Mrs. Trump.
Having witnessed another successful moment in the experiment that you have entrusted into the hands of the American people, we pray your blessing on our 47th President of these United States, Donald J. Trump, and Vice President James D. Vance.
And we are going to bring law and order back to our cities. This week, I will also end the government policy of trying to socially engineer race and gender into every aspect of public and private life. We will forge a society that is colorblind and merit-based. As of today, it will henceforth be the official policy of the United States government that there are only two genders, male and female. This week, I will reinstate any service members who were unjustly expelled from our military for objecting to the COVID vaccine mandate with full back pay. And I will sign an order to stop our warriors from being subjected to radical political theories and social experiments while on duty. It's going to end immediately. Our armed forces will be freed to focus on their sole mission, defeating America's enemies. Like in 20.
Welcome back to Trading Hour. Well, Varun Lochap from HDFC Security joins us now to discuss market fundamentals and his top sectoral picks. Welcome, Varun. Thank you so much for joining us. First up, going into Q3, what were expectations, especially from the IT pack? Most of the results have come about. Mid-cap IT seems to have beat. What is your view as far as the entire IT space is concerned?
So IT space, we are overall, neutral in our model portfolio. I think the current context of domestic slowdown, IT looks like a good place to be in, at least in the first 6 months. But we believe valuations have already run up quite a bit in last 12 months, and therefore the absolute upsides from here on are not going to be, very high if I look at the entire year. So probably sometime during the middle of the year, one should switch back from IT to more domestic cyclicals like banks and consumer, especially on the discretionary side. So that's our overall view. We are, we continue to like some of the, mid-cap ideas and large-cap ideas in IT, but we are selective and slightly more valuation conscious.
Do you want to tell us about your mid-cap IT day? Because today is a full mid-cap IT day. Even Cyient and Emphasis are seeing buying ahead of their numbers later.
Yeah, so in mid-cap IT, our preferred picks, Persistent has been one of our top house picks for quite a few years now, and our analyst is still bullish on that. We have a positive rating on Persistent. Then in terms of Zensar and Mastech are the other two stocks among the mid to small cap IT where we are positive. And among the large caps, TCS is our preferred pick. So that's the overall sort of view on IT.
Understood that. Are you penciling in a strong recovery, especially from US BFSI space?
So BFSI is obviously seeing improvement across the board. All management commentaries have hinted towards that. But so there is a overall demand improvement expected in FY26, but the extent of improvement is still not more than 2 to 3%. So a 4% dollar growth will go to 6 to 7% at an aggregate level. Now, obviously, company specific is going to be different. So there is an acceleration led by BFSI and bottoming out in other verticals. But the extent of acceleration, we believe, is more or less also captured in the estimates by everyone. So unless there is a surprise on those estimates, the further upsides on stocks may be fairly limited. But in the current context of the market, they are a good place to be in from a relative perspective.
Right. Varun, the other set of stocks or the other sector that we want to discuss is actually the FMCG space. HUL has continued to disappoint investors, but on the other hand, some signs of recovery coming in as far as Pidilite is concerned. Where do you stand in FMCG? Which are your preferred picks and which are the ones that you will continue to avoid?
So again, overall FMCG, we are slightly underweight in our model portfolio. But if you look at, again, we are being very selective out there. There is a slowdown for sure, at least as far as urban FMCG demand goes. And it's a mix of multiple things. One is high inflation, which is impacting the urban mass and the urban poor. And also, typically for a large FMCG incumbent players, there is a quick commerce sort of a negative impact because of fragmentation of demand. So I think on FMCG, we are overall, I would say, mildly negative, with very few stock-specific ideas. Like we continue to like Marico in the FMCG space. Among the mid caps, we like Jyoti Labs in the FMCG space. Large cap, actually, we don't have much upside in either ITC or HUL. So we don't own them much in our model portfolios. So it's more mid cap, Marico, Jyoti, and to an extent Dabur, where we see some upside over a 12-month period. But again, it will take another 1 or 2 quarters for things to stabilize in terms of demand, and then from there on, you should see slightly better growth in second half of this calendar year.
In discretionary demand, I mean, actually more than that, if you could just tell us incrementally, where has your view changed in the last 1 or 2 months? Because some of these calls you've been holding on to for a while. Spot some trends for us, some changes that you've made in your thought process.
So, our thought process is that into this weakness, which has been there in the last couple of months and which will probably continue in the first half of this calendar year, we want to buy more on the domestic cyclicals, which is essentially banks and consumer discretionary. So these are the 2 areas where we have been adding weights through the stock price declines. So banks, again, from a valuation perspective, are starting to look attractive. I think it will again take another 1 or 2 quarters for things to stabilize on the loan growth side and on the credit cost side before you start to see uptick. But they are starting to look attractive from a 12 to 18 month point of view. Similarly, consumer, we believe both will bottom out in first half, but incrementally we are adding more positions in consumer discretionary, things like apparel, QSR, select consumer durables, as we expect second half to be better in this calendar year. And even some of the capex or the infra investment plays, given there has been a decent correction in some of those names as well. We believe, again, capex will pick up in the next financial year, and therefore, we are adding. So we are adding domestic cyclicals in this weakness.
Understood that. Thank you so much, Varun, for joining us. A slightly shorter conversation today, but we'll chat with you once again soon to get your thoughts on the channel once again. Time now for a short break. We'll get you more on the markets on the other side.
We will again build the strongest military the world has ever seen. We will measure our success not only by the battles we win, but also by the wars that we end, and perhaps most importantly, the wars we never get into. The golden age of America begins right now. From this day forward, our country will flourish and be respected again all over the world. We will be the envy of every nation, and we will not allow ourselves to be taken advantage of any longer. During every single day of the Trump administration, I will very simply put America first. Our sovereignty will be reclaimed. Our safety will be restored. The scales of justice will be rebalanced. The vicious, violent, and unfair weaponization of the Justice Department and our government will end. And our top priority will be to create a nation that is proud, prosperous, and free. America will soon be greater, stronger, and far more exceptional than ever before. I return to the presidency confident and optimistic that we are at the start of a thrilling new era of national success. A tide of change is sweeping the country, sunlight is pouring over the entire world, and America has the chance to seize this opportunity like never before. But first, we must be honest about the challenges we face. While they are plentiful, they will be annihilated by this great momentum that the world is now witnessing in the United States of America. As we gather today, our government confronts a crisis of trust. For many years,
Welcome back. We're getting lots of important voices from Davos, and Shireen, who is at the World Economic Forum, caught up with Bain & Company's CEO and worldwide managing partner. Listen in to excerpts from that conversation.
What a post-global world means in terms of opportunities. Here over the last few years, especially post-pandemic, everyone's been talking about reshoring, friendshoring, supply chain resilience and diversification. What will that now lead to? We've seen some of that happen already, but what will you expect on that front?
Yeah, so this is going to happen, and companies need to think about it. And you highlight some individual questions on topical points. The way we think about it is, as companies, you need to think of your portfolio strategy from a geopolitical point of view. Companies have learned in the past to think about their portfolio strategy in products, in markets, customer segments. Nowadays, you have to think about your portfolio strategy also from a geopolitical lens. Where I'm going to play, where I'm not going to play, where is it worth, where isn't it worth to play? And I think also for countries like India, for instance, what role can I play and should I play into that post-global world? And how do I take that realignment as an opportunity so that I can support my industrial base, my companies in my country, in order to tap into the opportunities that the post-global world will present?
So let's talk about India then in specific. Where do you believe India finds itself placed to take advantage of some of the opportunities that you spoke of in more generally and more specifically as far as Bain is concerned? It's also the country that is home to the largest talent base for you outside of the Home Office. So on both fronts, generally as well as specifically, what does India look like?
Yeah. I mean, India looks great. Like, if you want to be in a position where you still have favorable demographics in the world, where you have an economy that's growing, structurally above 5%, and where you can tap into the opportunities of a post-global world more than almost any nation in the world, I think every country would sign up to that portfolio of opportunities that India is sitting on. And so in that sense, I think it's also good for India then to say, now, how do we put ourselves on high alert around the opportunities so that we tap into the opportunities of AI, enable the energy transition, the energy availability, build the infrastructure to support our companies in the AI wave. And I think that is also something that we want to do together with our talent. As you say, after the US, it's our biggest talent pool. Our consulting staff, a capability center, our support staff. And what we want to ensure is that we will bring our consulting staff and our capability centers towards the future, enabling themselves to be centers of excellence in an AI world. And I think that will present great opportunities, not just for us, but also for our India teams as we look into the future. A great economy, a great country to be part of, to support the growth of the companies there, and great opportunities for all the talent that we have in the Indian market.
Well, Christoph, you've also very closely been looking at M&A at Bain and looking at private equity at Bain as well. So, from a 2025 perspective, what's the expectation, especially when we talk about AI? Do you believe that's going to lead to M&A and consolidation? Also private equity, where is the money going to be headed?
Yeah, so there's two trends there. On the corporate side, there's going to be M&A. And we will see an acceleration of M&A coming out of this cycle. Because if you would put a pause in 19 and look into 25, it's actually on certain dimensions more normal again, coming out of the big cycles of COVID. And so we will see a resurgence of M&A. I think we see it every day happening now. On the private equity side, private equity has gone through a similar cycle as the overall economy, with a peak and a slowdown. But if we look into a long-term trend making abstraction again of the COVID period, we see that 2024 was already a good year of growth again for the private equity. And we think that the industry is in a healthy base to continue that underlying trend line that we saw before COVID. And corporate deal making will be great because corporate deal making is typically a great exit route for private equity firms. And then the stock markets are healthy and IPOs are also a healthy exit route. And when the exit routes are good for private equity, we see private equity thrive.
Well, a very interesting conversation there, but at the bottom of your screen, just a few minutes ago, you saw a flash come about regarding HUDCO, and that particular company appears to have gone ahead and upgraded its loan growth guidance. We'll get you more on that particular development in a while. With that, it's a wrap on this edition of Trading Hour. Stay tuned. Halftime Report is up next.
Corrupt establishment has extracted power and wealth from our citizens while the pillars of our society lay broken and seemingly in complete disrepair. We now have a government that cannot manage even a simple crisis at home, while at the same time stumbling into a continuing catalog of catastrophic events abroad. It fails to protect our magnificent, law-abiding American citizens, but provides sanctuary and protection for dangerous criminals, many from prisons and mental institutions that have illegally entered our country from all over the world. We have a government that has given unlimited funding to the defense of foreign borders, but refuses to defend American borders or, more importantly, its own people. Our country can no longer deliver basic services in times of emergency, as recently shown by the wonderful people of North Carolina, been treated so badly. And other states who are still suffering from a hurricane that took place many months ago. Or more recently, Los Angeles, where we are watching fires still tragically burn. From weeks ago, without even a token of defense, they're raging through the houses and communities, even affecting some of the wealthiest and most powerful individuals in our country, some of whom are sitting here right now. They don't have a home any longer. That's interesting. But we can't let this happen. Everyone is unable to do anything about it. That's going to change. We have a public health system that does not deliver in times of disaster, yet more money is spent on it than any country anywhere in the world. And we have an education system that teaches our children to be ashamed of themselves in many cases, to hate our country despite the love that we try so desperately to provide to them. All of this will change starting today, and it will change very quickly. My recent election is a mandate to completely and totally reverse a horrible betrayal and all of these many betrayals that have taken place, and to give the people back their faith, their wealth, their democracy, and indeed their freedom. From this moment on, America's decline is over. Our liberties and our nation's glorious destiny will no longer be denied, and we will immediately restore the integrity, competency, and loyalty of America's government.
Stocks resume their climb after a shaky start with the mid-caps in the lead. Consumer durables and IT are the prominent gainers, while energy and financials drag.
Hindustan Unilever has a slow-moving quarter with no volume growth and moderation in consumption seen ahead, but Pidilite beats estimates on volume growth, riding on strong traction in its B2B business.
Coforge and Persistent Systems log in strong growth and guide for continued growth momentum in the foreseeable future on the back of a strong order pipeline. Both stocks jump.
L&T's JV with Spain's Navanisha has been disqualified from the 70,000 crore rupee P-75 submarine project for failing to meet technical criteria. Sources tell CNBC-TV18 that Masgao Dock and ThyssenKrupp Marine are the only qualifying bidders left, but a final decision is awaited.
Reliance Industries inks a memorandum of understanding with the Maharashtra government to invest over 3 lakh crore rupees in the state across sectors including new energy, retail, hospitality and high-tech manufacturing, with a potential to generate 3 lakh jobs. You're watching us here on Halftime Report on CNBC TV18. I'm Manglam Malu. Joining me today is Surabhi Upadhyay. We're seeing some sort of recovery from the lows, but there is a lid kept on the gains in the market. The good part is that the broader markets feeling a little better today. It's a Thursday, it's weekly options expiry. So who's to say where the market goes in the second half? Hi, Surabhi. Welcome to the show.
Hi, Manglam. Yeah, thank you for that. And I guess you just said the most important cue. Given that it's Thursday, this can swing anyway, right? But for the better part of this week, at least the market has protected the downside. I mean, that range hasn't broken around the 23,000, 46, 47 mark. And the bulls will hope that they can actually try and build on this. But let's see, we have that expiry to go over. Just very quickly, I mean, today's sort of trends, mid-caps are outperforming today, and we haven't seen that in a while. After the drubbing that they got yesterday, there's a good amount of recovery coming in. There are a couple of interesting result reactions, some positive cues, particularly on mid-cap IT, and we'll talk about that as we go forward. So stocks like Coforge, Persistent Systems, they've got some amount of enthusiasm and cheer going as far as the mid-cap screen is concerned. But on the large-cap screen, just to quickly round this up, 62 points higher. And the gainers are cutting across sectoral lines. I mean, you have some names from FMCG, you have some names from commodities like JSW Steel right now, shooting higher. There is Coal India, there's ITC, there's Cipla, there's IndusInd Bank, there's Tata Steel. So it's really across the board in terms of gainers. But yes, the caveat is the bank Nifty overall is still underperforming. There's still some red on that one index, Manglam.
And that is courtesy HDFC Bank. We'll just keep an eye out on that. Yesterday was HDFC Bank along with Infosys that led the recovery. Today, IT is keeping up its end of the bet, whereas banks have faltered. So HDFC has moved to the low point of trade, even as Infosys has moved higher. But a lot of earnings to track and a lot of earnings action to keep an eye out on as well. And first on our radar is Rosary Biotech. The first management on the show reported a mixed set of numbers despite softer domestic market conditions. So to discuss this and more, we are joined by Sunil Chari, who's the co-founder and managing director at Rosary Biotech. Thanks a lot, Sunil, for joining in. And, it was the quarter that it was. You also said that the EBITDA margins were also lower because of ongoing investments in future initiatives. If you could give us a sense on what those investments are, how much they amount to, and X of those investments, how did the performance do? What is the kind of growth that you anticipate in the future?
The new initiatives we have increased the team strength in our Rosary professional business, which is the cleaning, hygiene and disinfection, which we could say semi B2C kind of business. We have also increased the team substantially there. I think we have added about 100 people in sales there. We have increased the spend on exhibition expenses. Travel has increased a lot. And if you see our 9-month gross margin, it is 469 crores against 403 with the corresponding 9 months of the last year. Exports have done significantly well. We are at 156 crores. It is the highest ever exports. At 512 crores is the highest ever quarterly revenue ever in the history of Rosary Biotech. So I think we have done well. Even in the 9 months, if we compare exports, it's about 405 crores compared to 317 in the previous year 9 months. In terms of other initiatives, there is increase in R&D. The R&D team has been doubled. So we are going gung-ho on spending for the future, and we also have the new capex, which we think will come up in line in March end of this quarter or April in the first quarter of next year.
Okay, so Mr. Chari, let's break this down further and go step by step. We'll come to the expansion and the capex in a bit. But let's talk about, the demand trends that you've seen, because apparently in the domestic market, you've seen softness and the export market is doing better for you. How prolonged will this softer patch be? What can you expect? Because profitability is down year on year, and there's been a lot of pressure on your EBITDA margins as well. So let's talk about the domestic market. What's going on, and how prolonged will this weak patch be?
I think we are seeing a small pickup already in the domestic market. So this quarter we should see, better numbers in the domestic market. Export continues to be strong for us. In terms of, I would again reiterate that we should look at our gross margins now, which are 469 crores in this year compared to 403 crores last year. The fact that we spend more on growing for the future puts down the EBITDA a little.
Just to update us, what is your domestic versus exports mix right now in the revenue? And since exports are doing much better, those markets are growing much better, where will you be by the end of the year? And if you could tell us, what is the average growth rate across your export markets, across the main business verticals?
We were at 23%, averaging in the previous quarters and the previous year. And now we are nearly 30% of our sales is exports. So we believe in, earning in dollars and spending in rupees now.
And growing at what clip? I'm asking, these are different geographies, different product lines, but ballpark, what's the clip at which the export business is growing?
Export business, year on year, we were at 317 crores last year in the first 9 months, and now we are at 405 crores. If you see last quarter, quarter 2 of this financial year, we were at 130 crores, and now we are at 156 crores. So export is growing at a phenomenal rate.
All right, and you said you expect some recovery in the domestic business in the second quarter. Let's talk about not just the fourth quarter, which is coming by, but the next couple of years with the kind of investments that you are making. What is a sustainable growth path that you're looking at for the company in terms of revenue? What would the margins entail when the business grows at the clip it does? Because new capacities will be coming on stream. You will be increasing your utilization there as well. Do we see it growing above this 13% that you've guided for this year? What could the number be?
I would be cautiously optimistic for the coming quarters and the coming years. Let us see how it pans out. But we see good opportunities for us to grow, both in terms of EBITDA as amount, because we're focusing as EBITDA as amount instead of EBITDA as a percentage, and also the top line. We should see healthy growth in the coming quarters.
How do you define healthy? How do you define healthy, Mr. Chari?
I think if you see when we came during our IPO, we were a 600 crore company with an 80 crore EBITDA. Today, we are now, nearly 260 crores EBITDA. So we've grown well. In the next 4 years, 3-4 years, we should hope to emulate, what we've done or do better than was in the past 4 years.
All right, so we'll take you up on that as the business grows along. Just final question, animal health, that has been one of your pun unintended pet projects. How fast do you expect this to scale up, and are you looking at any sort of demerger here at some point?
No, we are bullish on our animal health nutrition prospects. There has been overcapacity in the Indian market, in the Indian poultry sector. But we have added new people in R&D. We have added new products in our R&D, and we are sure that this will grow very well in the future.
Okay, all right, Mr. Chari, we will leave it on that note. Thank you very much for joining in and giving us a heads up on the business trends and what you're expecting ahead in this year. We'll take a break right now, come back on the other side, and we'll focus on the F-Note trends at midday.
Global growth. What's the outlook? What's going to be the outlook as far as inflation if President Trump follows through on his very aggressive plans as far as tariffs are concerned? What happens to US inflation? What happens to the dollar? Those will, of course, be big questions. What happens to emerging market flows? Those will, of course, be the big questions here in Davos. It's been over 2 decades of tracking the global power shifts at the World Economic Forum. Starting from our first story reported 20 years ago to last year's groundbreaking coverage of the world's most important economic event. From discovering era-defining ideas to connecting you with the world's visionary thinkers and doers. From decoding blueprints for growth to driving collaboration to make a better future. We've been bringing you a wealth of information through 20 seasons. Tune in to Davos Diaries at Davos 2025, live and exclusive on India's most trusted business news platform, CNBC-TV18. From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 budget headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
Markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25.
Welcome back. Let's just take a look at the markets. It's in the higher end of the range today, but the highs of the Nifty have been curtailed to around that 23,250 odd mark itself. It's just 20 points away from there. The only fly in the ointment is the Nifty Bank. So if you just take a look at the FNO setup at midday, because it's a Thursday, all the more important. The Nifty is holding well. Nifty Bank is lower. It's actually the Nifty IT index which is supporting it with a gain of almost 2.5 odd %. And the broader market health is a lot better, and that typically is better when the street believes that, maybe we have seen some support at the lower levels itself. For the last 2 trading sessions, the Nifty has been bouncing off from levels just below that 23,000 mark. So if you look at the advanced decline, that tells you the story of at least today, after a big, gash that we saw in the mid-cap and the small-cap indices in the earlier part of the week. Now they're seeing some bit of a bounce back, and it's been led not just by IT. The sector of the day clearly has to be mid-cap IT. We have Coforge doing well, Persistent doing well, after having seen a big decline yesterday on Persistent itself. Oracle Financial, or even Birlasoft and Cyient, all of them pulling their weight for the mid-cap end of things. Now, at 23,200 is where, most of the straddles are placed, which is a call and a put together. So 23,200 call has a premium of 9 rupees. If you pull up, 23,200 put has a premium of 9 rupees. Pull up the 23,200 call, that has a premium of almost 44 odd rupees. You sell both of them, you are playing for a premium of 50 rupees and a range of 23,150 to 23,250 for expiry. If the market was to, stick around this range, these option writers would make a lot of money. Beyond and above this range, maybe we could see a move on either side in a big manner. Just keep an eye out on a couple of stocks. I'm watching out for NMDC with the kind of up move that we've seen and the open interest jump. It may enter FNO band today, so just watch out for that.
Okay, all right. So those are the cues and those are the interesting stocks to keep an eye out on. Now let's move on and dive into the Growth Code, an initiative by Grow and CNBC-TV18, which offers valuable insights and strategies to help you make well-informed trading decisions. This week, CNBC-TV18's Nigel D'Souza interviewed pro trader Rajesh Baheti, Managing Director, Cross Seas Capital Services, and asked him about risk management practices for algo trading.
Well, what kind of risk management practices should retail investors adopt when using algo trading strategies?
So the main thing is, obviously you've got to define what will be your capital risk at risk per trade. That's the fundamental core of any trading principle, that you don't put all your capital at risk at once, because in trading, because it's a leveraged trade, there is a chance that your entire capital can get wiped out. We've seen options go from 100 to 0, and the lure of the option is that it can also go from 1 to 100 or 10 to 1,000. So that's the reason people get into it. But if you get into it at the wrong time, you don't use your capital wisely, that 100 can also, 1,000 can go to 0. So the first principle of algorithmic trading, or any trading, would be to allocate smaller bits of capital per strategy to make sure that you're still in the market, irrespective of what the outcome of that particular strategy is. So if you look at most algorithms, they will definitely be having a stop loss, which either a particular investor can set for himself, or these are preset. So in that sense, algorithmic trading actually makes trading safer for you because of these pre-coded stop losses, and beyond a certain point, you will just be stopped out and no more trades will take place. So from that point of view, it's a better risk management tool than pure trading on your gut, because sometimes then you will get emotionally invested in a trade and not book losses when you ideally ought to be booking losses. So from that point of view, I think it's a good risk management tool.
CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m. decisions.
Welcome back. Look at the mid-cap market take off. It's a big move, almost 1,000 points on the mid-cap index. Now it's a near 2% increase, and it's a really healthy advance decline ratio that we're looking at after a long time. 1,600 stocks advancing, about 800 stocks declining. I just want to call out two spaces, where there's a full-on sector move. One is EMS. After the drubbing that EMS stocks got earlier this week, this is a day of a lot of recovery, and it's across the board. You can look at Dixon, Amber, PG Electroplast. Across the board moves coming in. Even Keynes is up about 4-5% higher. And the other is this pack, which is the mid-cap IT pack. Persistent, Coforge, Oracle, Birlasoft, you name it, Zensar, and all of these stocks are up and about. So EMS players as well as mid-cap IT players, that's where the bulk of the buying is. However, earnings as always. So let's talk about some more numbers that we're watching out for today. And United Spirits is going to be the one that's going to be on our radar as well. Mangalam, what are you expecting?
A good quarter. That's what the price is telling you. That's what the street is telling you. And that's what, the quarter is telling you as well. And by quarter, I mean the financial quarter and not the other
3
quarter.
months.
Yeah.
Ending.
Yes. So why is that? Because it is the festive and the wedding season. The stocks moved to the high point of trade. There was the policy boost that came from Andhra as well. So put all of these things together. What is it that you were expecting? You're expecting a 12.5% revenue growth. This is X of excise that we're looking at for United Spirits this time around. 3378 crores on the top line is what we are penciling in. This compares with around 3,000 crores the same time last year as well. EBITDA on the back of a better festive season, wedding season, and the policy boost in Andhra Pradesh that we alluded to grows 22%. We're looking at a number at 594 crores. Margins improve by about 140 basis points, and the net profit too increases in mid-teens itself. Why is it that the EBITDA moves faster than the revenue? Because Prestige and above, which is the business which the company is focusing on, is likely to do about 9 to 10% volume growth, 14 to 15% revenue growth. The 400-500 basis points push comes in from the policy, favorable policy in Andhra. Popular, not a business that the company's been focusing on as much, grows anywhere between 2 to 4% in terms of revenue and volumes put together. Margins, as a result of which, will improve on higher sales and improve product mix, and there's been moderation in glass and stability in ENA as well. The key to track would be, the commentary on fourth quarter demand, outlook on new categories, and more importantly, the reason why the stock fell 10% off its highs was because Hina Nagarajan announced her transition and she'll move into Diageo Global, whereas Praveen Someshwar will join in. So the leadership transition is something that the street will definitely keep an eye out on. But for now, the underlying macros favor United Spirits, and that explains why the street is expecting a good quarter.
Ending December on a high.
Ending December on a high.
Okay, that's United Spirits and stocks actually at the day's high as well. We'll take a break, come back with more on Halftime Report, including what powered Pidilite's numbers. Great numbers, stock is holding up. We get you snippets from the management commentary.
About India, we have them growing strong next year, consistent with what they grew this year. It's now moved to the 5th largest economy.
The Honeywell view on India, and how do you see the next few years?
Domestic business doing extremely well. Can't be more pleased in terms of opportunities in India.
It is, and there are lots of reasons for that. One is because he's in a much stronger position in the United States than he was in 2017.
They're working on AI. They're working on all the innovative capabilities that we want to input into our products. A lot of that's coming out from India.
If I were to say even heart and mind put together, India is an exciting story.
India is going to be the office of the world. You and I discussed about it.
about India, we have them growing strong next year, consistent with what they grew this year. It's now moved to the 5th largest economy.
The Honeywell view on India, and how do you see the next few years?
Domestic business doing extremely well. Can't be more pleased in terms of opportunities in India.
It is, and there are lots of reasons for that. One is because he's in a much stronger position in the United States than he was in 2017.
They're working on AI. They're working on all the innovative capabilities that we want to input into our products. A lot of that's coming out from India.
If I were to say even heart and mind put together, India is an exciting story.
India is going to be the office of the world. You and I discussed about it.
Trained. The last time we spoke here, you had given me a number. What does that number look like today in terms of the people that have been trained on AI within Infosys?
So within Infosys, it's a huge number because there are two types of training. One is what we call AI aware, and one is a deeper training where people are using it. The AI aware, which is a broad training, is over 270,000 out of about 320,000 people are in this AI training. And it's really across the board because there needs every discussion with client, every deal, every large deal, every medium deal, there's a lot of interaction on.
Welcome back. You're watching us here on Halftime Report on CNBC-TV18. What we're looking at right now is the stock of Pidilite holding well in today's trading session. Even though, the broader markets are doing a lot better in Pidilite, what was a tough quarter, the company went ahead and did about 7% volume growth in their consumer business and 21% in their business-to-business vertical as well. So we spoke with the management. I spoke with Sudhanshu Vats, who takes over as the MD in FY26. And the obvious question was, in a weak consumer environment, what is it that drove their double-digit revenue growth? The company spoke about the drivers and, more importantly, the outlook for the very near future as well. Hear him out.
We continued our investment behind brands and distribution. If you remember last quarter, I think we began the journey to consumerize our brand Roff, which is a tile adhesive brand, in a big way. You would have seen it on Kabaddi, you would have seen the advertisements otherwise as well, and they were very well received. Our investments on distribution continued, whether it is the width of distribution or depth of distribution. Our investments behind Pidilite Ki Duniya, which is our rural flagship stores, grew. We added close to 1,000 and 1,200 Pidilite Ki Duniya in last quarter. We therefore took the number over 16,000, and our unique build outlets, which is the width of our distribution, crossed the milestone of 600,000 outlets in the last quarter. Our investments behind our supply chain, our growing agility on digital, which is our digital app, which you are aware of, Genie, also crossed a milestone of above 35% of all our sales coming on Genie in the last quarter.
We take that point, and congratulations on being able to do that. But just to further on that point, you attributed a lot of the growth to your increase in distribution, in innovation, as well as some of the premiumization that we saw in Fevicol as well. If you could give us a sense of organically, what was the growth and how much was the incremental growth because of your increase in distribution? If you could break that number up for us. And also give us a sense of how much more did you spend on ads as against same time last quarter?
So we did pick up our spends on ad, Mangalam. But having said that, I think if you remember our ANSPs, if you look at our historic ANSPs, in the quarter that went by, we were at the higher end of our historic numbers, close to about 3.7%. Our ANSPs tend to be around 4, between 3 to 4%. So we've adequately spent on that. I think the incremental growth from what our expansion drive is and what our original pieces is, unfortunately, I will not be able to share the breakup of that, but I can assure you that the growth on core core business, which we've always maintained, was also good. The growth on core business was in middle to, strong middle single digit. But the growth on our growth businesses, if you remember, we classify our businesses into core, growth, and pioneer. On growth, we were able to deliver high teens to mid-teens growth in our growth business. And I think that's what has helped us as we move forward.
Have you seen a change in consumer sentiment from the third quarter up until now?
So the consumer demand, Mangalam, as you would hear from multiple people, tends to remain a little soft. Having said that, I think what we need to do as companies and what Pidilite is doing is to identify pockets and segments and continue to build and strengthen the portfolio to be able to address all of India. And the good news is that there are pockets where there is enough growth still. There are pockets where there is an issue with growth. So I think what we continue to do is to continue to strengthen our portfolio, build areas of pockets where we could grow faster. And also the good news for us as a company is we've got a balance between B2C and B2B. And as you would have seen from our numbers, our B2B segment delivered a 21.7% underlying volume growth in this quarter.
And that was what my next question was on B2B business, because consumer sentiment weak, you did about 7% in weak sentiment, where your target is close to around double digit, but B2B made up for that with a 21% growth. How sustainable is this growth that you're seeing in B2B?
So B2B growths have been good. Actually, so if you were to look at our last 6 to 8 quarters on B2B growth, we've been delivering strong double-digit, arguably high teens growth in B2B. As the momentum on infrastructure continues, we continue to remain very positive on B2B growths moving ahead.
So high teens is what one can expect. At what point do you expect the consumer sentiment to turn? Because, everyone we've been speaking to is medium to long-term bullish on India, but near-term is relatively soft. No one's been able to pinpoint, the key drivers for consumer sentiment in the very near term. If you could give us a sense on when do you expect it to turn? And once that turns, with all the work that you've done, how much higher can you grow from what you're already doing?
So Mangalam, I think it is difficult to predict at specific time. But what I can tell you is what we are very eagerly looking forward to is therefore how the monsoon which went by, which is a good monsoon, begins to play out in rural demand in a positive way. There is a little bit of uptick already coming. So will that be growing further? I think that's one piece. The second piece is as the new budget comes in, we are very hopeful of the finance minister giving more money in the hands of Indian consumer. And I think if that happens, I think there could be a ripple effect of that onto growth in consumer sentiment and consumer demand. So I think these two are positive factors we are watching out for and seeing how they play out as we go forward.
The paint business, you guys have been pretty mum about that. Could you give us an update here?
Mangalam, we've always maintained, and Bharat has maintained that categorically, that I think we've got to give it a little bit more time. We will come back to you with how we are doing. Because in the initial period, with the strength of our distribution and the initial trials which will happen, there could be an unusual exuberance which we don't want to share. All I can tell you is we are making steady progress. We have expanded from 3 states to 5 states. We continue to make good progress, and we will share a lot more in detail in the next 3 to 6 months.
Sudhanshu, AkzoNobel is on the block. Are you interested?
See, Mangalam, we keep looking at opportunities from time to time. Pidilite is a company which has always been looking at opportunities. So we will continue to look at opportunities. On this specific case, there is nothing for me to share at this moment.
You've looked at it, I'm sure.
No, we keep looking at opportunities from time to time. So I think, so therefore, but there is nothing for me to share at this moment.
Do you like the asset?
So as I always maintain, we keep looking at opportunities. We will evaluate how they fit into our portfolio, what is the right price at which we should look at that opportunity, and therefore what is in it for us. So like any other opportunity, we will continue to look at this opportunity as well, but there is nothing for us to share.
All right, I hope that at some point you will. But just off the cuff, do you like the price at which it is right now?
It is difficult for me to comment, I don't want to be speculative on this, Mangalam.
built into many things.
So clients are asking you now specifically for what the AI use case is going to be and how you can contribute to that?
Clients are interested in where generative AI can help them. And what we are seeing is through agents or through small language models, in the past through large language models, we have various ways in any large transaction or program where they can benefit from this AI. And so we are using it, and they are quite happy with it.
So what is this going to... Let's talk about India. The outlook that the IMF has put out pegs growth at 6.5%. Still one of the fastest growing large economies in the world. What do you like about India today? And in the context of what we will hopefully see in the budget, what would your expectation be?
So firstly, just to emphasize what you said, which is, I mean, India remains the fastest growing large economy of the world. We do expect to see growth to recover in the second half of this fiscal year, which is how we get to 6.5% growth. So for us, potential growth for the US, for India is 6.5%. To get to much higher levels of growth will require structural reforms on many fronts. Also, it will require continued public infrastructure investment, which the government has been doing a lot of, but you're going to require that at the central government level, but at this and the state government level, and to be able to execute on a timely basis, that's going to be quite important. There's also the more long-standing issues in terms of how, the ease with which you can start a business, the ease of doing business, the ability to buy and sell land, labor reforms. I mean, all of those are required. And lastly, you know, we're now in a world where companies are looking around for how to build their supply networks. And India is an attractive destination for them to do it. So this is an opportunity for India to be able to plug itself more firmly into global supply chains.
You know, on India, we've got of course, 6 Indian states, along with the central government being represented here in Davos. And we've only seen the India presence go up over the last few decades here in Davos. How do you see, especially in areas like manufacturing, foreign direct investment moving to India in this context of reshoring, which has now been the buzzword here in Davos through COVID?
Yeah, and you have also this notion of friendshoring.
Yes.
And the thing is that India is seen as a friend by many countries. So this Make in India initiative, getting more manufacturing in India, I think is going to happen and is already unfolding. We know that Apple didn't produce any iPhones in India a few years ago. No, I think it's like 25% of their production or something. Take the number with a pinch of salt. But India is developing also when it comes.
Welcome back. The conversations continue here in Davos. We are speaking with global leaders as well as those focused on India, on what the year ahead looks like in terms of investments, deals, and of course, exit options. Joining me now is Kedar Capital's Manish Kejriwal. Manish, always a pleasure. Many thanks for joining us here in Davos. We were just having a conversation with Rishi Kapoor, the CIO at InvestCorp. And of course, they've been in India only 6 years. You've been around much longer. The investment thesis for 2025, given the macros as well as the micros and how they plan out?
Firstly, great being back, Sharon. Always, and the difference this year, as you know, is with the way we both are dressed. It doesn't feel like Davos. We should be in Mexico. But
I wouldn't go that far.
But on a more serious note, I think as we look at India, I mean, the secular growth story remains. Of course, there are going to be challenges off and on, like there is recently with a slowdown of growth. Many factors driving that, such as people buying larger houses after COVID, interest rates going up. That's a double whammy for a guy who buys a house and pays mortgage. EMIs have increased, so the amount of money left to buy everything else is much lesser, etc., etc. But these are cycles. You worry about it if you're a short-term trader. We can't make money in these sort of trends. So we are a believer in the secular story, which has, in the last 10 years, grown even faster. We love those sectors, and we're very vertically focused. and our thinking is very top-down and bottom-up. So we look at it thematically. What do we like in financial services? We've done a lot of lending businesses.
Yeah.
There's a bit of stress there. We're looking at more non-lending, maybe insurance, maybe asset management. Consumer, you know, it was a very small part of the portfolio earlier. Today, it's actually larger than FIG, partly because of the recent investments we've made. And we've actually stepped up on some of those valuations 4 or 5 years ago. But at today's valuations, I'm a seller in many of those companies. And then the two other sectors, Sharon, is broadly healthcare and pharma as one. And the second is tech and tech services. Given where the world is in terms of valuations, our ability to underwrite any new deals, you have to be really careful on what sort of risk you undertake. So our capability, you need to almost have a zero error. So your due diligence are that much more deeper. They always were deep.
Yeah.
But your ability to make a mistake is even more curtailed given the valuations you're coming in at. So essentially, in the current thing, you do both always as a private equity guy, but you're more on balance a seller than a buyer.
So sitting on the fence at this point in time?
No, not at all. Not at all. I'm not saying sitting on the fence. I'm saying the amount of resources we have, which is a large team now, what do you deploy on new investments versus what do you deploy in terms of making sure you get your exits, whether it's through an IPO or through exits. So absolutely not sitting on the fence, being very thoughtful on where we want to invest and so in terms of exits, we're shooting all barrels. We've already had a couple of successful IPOs. We have a couple more coming up this year. On new investments, we're just being very thoughtful. Given the valuations, what risk do we want to underwrite?
Sure.
But we've still deployed close to $700 million in the last 18 months. So it's not that we're keeping quiet or on the fences.
Well, you know, speaking about the IPOs and, of course, Vishal Mega Mart, that was the big one for you. What, realized and unrealized gains north of $1.5 billion? I mean, did that take you by surprise?
You're understating it, but I'm glad you are. We'd rather not be known for that. No, listen, this was, if I look at it from a 4-year window, definitely a surprise. I think when we came in, the valuations were about $1 billion, give or take a bit. We've taken a majority control along with the Partners Group. This was at that time probably the most expensive deal and the largest check we were able to write. So it was a big risk to undertake. The guys who led this, both Anant and Nishant, did a phenomenal job getting the deal on the table. But should we undertake, and we were buying it from TPG, which is not, it wasn't any other normal deal. We took it on. We had a superb management team under GK. It's grown phenomenally, both same-store growth, and we've increased the footprint all over the country. What was surprising in retrospect, we were scared to pay an NT multiple of 15 or 16 times EBITDA. I don't even want to see where it's trading at right now. It's scary, right? So I think the growth, revenue, and EBITDA was very well done by the team, and we drove it to that level. The other side of it, which we'll never complain about, the multiple expansion, who would have thought in 2018? But yes, the last 18 months as we were preparing for the IPO, it was no surprise, right? Of course, we're thrilled where we are. We've only sold about 20% of our holding because we are the promoter. But I think the market is aware that, like we did in Navas, over 3 or 4, we still see significant growth. So all we can underwrite is revenue and EBITDA growth. What multiples do tomorrow, I don't know. But at current multiples, I mean, it's going to take some money off the table and be disciplined.
So
eventually,
you are looking at that, taking more money off the table?
Not now, but I'm saying eventually, I keep reminding our friends and our people inside, this is not our money. We're a fiduciary, very humbly, of some of the most respected global investors. Our job is to make sure we deploy that in a manner, on a risk-adjusted basis, we give them returns for which more than compensate them for the India risk, emerging market risk, and liquidity risk. So we're looking for a 20-25% return. And we have to keep remembering that's there. So we have to remember, no matter what our personal perspectives are, this is not a deal you can fall in love with. Eventually, you need to sell it and give the money back to who it belongs.
Well, speaking of falling in love with deals, anything at this point in time that has caught the attention?
No, I think a lot. I think, again, if I look at it sectorally, the couple of things we're looking at, well, some in the on a balance sheet side also, but a lot of it, as I said, which is non-fund-based financial services companies. 2 very exciting consumer companies which are making use of the consumer tech. But, we're not early stage. We're much later stage. So sort of a defined business model, but the risk we're taking is how is the world going to move given AI and all the other great stuff. And then in tech and tech services, what we've done, Sharon, we've been a bit slower on that sector, even though we've had someone like a Pramod Bhasin since our very inception. That, I think we've, given where relative valuations are, we put a ton of focus. We've just taken out, and I've spoken to Rashad about this in previous davos, we took on a guy called Abid, who was the ex-CEO of Wipro. Outstanding guy. We've added on one or two other individuals as operating advisors in the US. That deal flow has gone to the roof, and the valuations are much more realistic. So you may not have caught, but again, we did just last week announced a $350 million deal, control deal again, in the tech services space, where it's a great company, US-India corridor, doing both data migration and AI implementation. So again, willing to take the bets, but the level of conviction has to be that much higher. We always up relative, we spend a lot of time. It's taken 6 to 8 months to get there. But this company we're in love with. And anyone that we see crossing the threshold, especially today on where the risk is, given the valuations, we'll be in love with those. But again, not to get emotive, so we will have to sell the bride at some time.
I would imagine, and that's part of what you do, Manish. But you talked about valuations and how valuations are looking better, but on the IT services side, relatively better. But
not historically to IT services.
Sure, but this AI bet, and I mean anything linked to AI, even remotely, the valuation skyrocketing there. Is that a space that you're looking at as part of this?
So we did do something, but remember, okay, if I just step back and make it simple for our viewers. What we go after in situations like AI is not the gold mine. It's more the shovels that help make the gold mines. What I'm saying is, I don't claim to understand, despite sitting in 20 sectors, on taking a bet on a product. Because I really think in AI, the incumbents have a huge advantage. We were with Rob Smith yesterday, who runs Vista, in our governor's meeting for investors. He has 89 companies. They're all, these guys are massive. Or a Microsoft or a Meta. They can deploy the capital. They know the customer side. We can't invest in those. We're investing in startups. Firstly, capital. You'll get the amount of money going after this. You're going to get drowned. Second, promoter risk. Are these the right guys you want to back? I really believe the money will be made by the incumbents. I think a lot of the money going towards startups, it's a bit like the dot-com age. It blew up in 2000. Are we in 95 or 98? I don't know. But I can see 2000 coming. Value will be made. But you've got to make the right bet. And if we're not, this is very early stage. If we're not in that, we can't pretend to jump onto that bandwagon. What would we rather do? Is work around companies which offer that as a service, not try to build a product, which is what I mean by the shovels. Same thing we did when we started Kadara. Consumer companies are really expensive. We got the confidence to do Vishal 3 or 4 years later. But remember, the first 2 deals we did were both proxies to the consumer space. So we did Parkinson's Packaging, which made boxes. We did Manjushri, which made but these were proxies for growth in consumer expenditure. So while Unilever at that time was trading at 40 times EBITDA, we bought these companies at single times EBITDA. So, we've got to be, and it's not that we expect a single EBITDA to go to 40 times. It'll remain, hopefully it'll be a little bit higher. But the problem in investing in very high multiples in a faddish environment with AI is, as there's a correction in those multiples, no level of growth, which is what we undertake. We can't undertake the market. No amount of growth, both revenue, top line, and EBITDA, can ever compensate you for a deal you've overpaid for. So that's the situation.
So 2025 likely to continue to be a seller's market?
I think the first half would definitely be that way. But, our team, and you know me well enough, Shri, to know that I'm normally understated. The team that we've built up in the last 2 years, second to none in the country today. We've managed to now attract talent from the global majors. Our last 3 hires, a senior person at Apex, EQT, and Golden PI. Normally people lose, the local firms lose talent. We've been attracting that talent. We now have 2 co-heads for every sector. And each of them are amongst the best around the industry. So the pipeline today has never looked stronger. It's just the overlay of risk control. Look at it as 20 deals in the pipeline where there used to be 4 or 5. The bar is the same in terms of quality. It's a little bit higher because of relative valuations. So I think the question is, I have no way of knowing how many, and because we raised the $1.75 billion fund last year, we're sitting on a huge amount of capital base, so that's not an issue. So the trick, and also we don't want to be pressurized to deploy capital when we're not ready to. So I think of these pipeline, which is the biggest it's ever been, the question is, as the IC and as you overlay risk on top of it, what will go through the funnel? There's no way of knowing, but I would hope at least 2 or 3 deals and maybe some more evaluations correct, which is, I mean, you'll know that better. You know the public markets better than I do, sure.
Well, Manish, it's been an absolute pleasure. Appreciate you joining us here in Davos. We wish you the very best of luck with the year ahead and with the deals that you hope will end up being inked in 2025. Thanks very much for joining us here on CNBC-TV18. Well, with that, it is time for us to wrap up this CNBC-TV18 conversation. We will, of course, continue to bring you more views and insights from Davos. Quick break and back in a moment with more. Stay tuned.
But what really works for India and also moving forward, where we do expect most growth in the decade to come, is on digital trade and on services. And these are 2 areas where India is very strong and has comparative advantages. And if it also can catch up on manufacturing, I think this can be a very good decade for India.
What are they talking to you about when they speak about India specifically? Are there any sectors in particular that they're most excited about? I mean, you bring the PwC Global Board to India in 2025. So what looks exciting to you?
What looks exciting to us is now India has always been a destination for talent, the global capability center for many of our clients, a great services industry, and talent in India is being leveraged across the world, pretty much. Now what we're seeing is that the rest of the world is now looking at India as a manufacturing center, a center of production, which requires new skill sets, but manufacturing is now coming to India. So having an economy that is both a services economy and a product-based economy and manufacturing economy is going to be critical. And that is what our clients today are looking into India to understand that it is a big market where many clients are looking at India now as a new manufacturing center for the world.
You know, there are reports suggesting at this point in time that the government may review its policy to get manufacturers to actually make in India, especially as far as the EV side is concerned. And now, you know, you have Elon Musk quite literally in the White House. You know, what's the expectation in terms of possible changes? Are you hearing anything on that front?
We're not hearing any possible changes, but our stance has always been that we welcome competition. We feel that we will get better with competition. We have over many years. And from an electric vehicle standpoint, it will help grow the market as well. So the part that what we've seen the government always focus on is Make in India, because Make in India is essential. We have the ability today to make world-class vehicles. What we've done with our 2 vehicles is a testament to that. These are designed in India. The technology.
Welcome back. It's still steady as far as the market is concerned. 90 points higher on the Nifty, and the mid-cap index continues to sit with a gain of almost 2% right now. So it's a good day for the broader markets. Top gainers, some of the excitement in mid-cap IT is actually rubbing off on large-cap names as well. Look at Wipro for that matter. Wipro is the top Nifty gainer right now, gain of about 3.5% on that stock. There's Tech Mahindra, which is keeping it company. So looking good overall. And there's a bit of a consumer play, both discretionary and staples. Consumer stocks like Britannia, Trent, then Eicher Motors and Hero, if you consider them an extension of consumer, they're also doing well. So not too bad. Screen is looking good. And with that, it's curtains on this edition of Halftime Report. Thank you very much for watching. Stay tuned. Business Lunch takes the action forward.
Research Valley has really set them up. And that's something that we are starting to see as world-class products being made in India and being made for the world now. So that is in line with the vision that the Prime Minister has laid out on Vikasit Bharat and on India being a manufacturing hub for the world.
The government has also tried to draw in foreign direct investment under the Modi administration. Do you see more foreign investors like yourselves looking at the opportunities that present in India from a sourcing perspective, manufacturing perspective, and a retail perspective as well?
Of course. Can we agree that India is going to be better, brighter, safer, cleaner, healthier over the next 100 years? India is a growing market, is a growing population, but also has a fantastic base to develop with so many fantastic Indian people, and this is why we are committed to India. My advice to companies is that don't come here with shortcuts. Come to India with the long-term view, and this is what we are for. We did when we came to India initially. We went in depth what IKEA stands for and what Indian society stands for and how can we connect. And we felt from the very beginning, a lot of connecting points. That's why we are deeply committed to India.
Your heart is
Yeah.
with India and in
India, that's
as you
right.
pointed out.
I think, for example, on the trade front, I was pleasantly surprised that they didn't impose tariffs right off the bat, which seems, suggestive that they will be a little more considerate about it. But
Calibrating what rate they should impose?
Calibrating what rate and doing less damage, more from the US perspective than from the other countries' perspective. But I think the announcement of External Revenue Service implies what I thought earlier, that he is serious about tariffs, both from the perspective of raising revenues for the US so that he can cut taxes more, which he needs to. Also from the perspective that he really believes by putting tariffs on others.
Stocks resumed their climb after the shaky start with mid-caps in the lead. Consumer durables and IT are the prominent gainers, while energy and financials drag. Hindustan Unilever has a slow-moving quarter with no volume growth and moderation in consumption seen ahead. But Pidilite beats estimates on volume growth, riding on a strong traction in the B2B business. Coforge and Persistent Systems log in a strong growth and guide for continued growth momentum in the foreseeable future on the back of a strong order pipeline. Both stocks jump. L&T's JV with Spain's Navantia has been disqualified from the rupees 70,000 crore P75I submarine project for failing to meet the technical criteria. Sources tell CNBC-TV18. Mascot Dock and ThyssenKrupp Marine are the only qualifying bidders left, but a final decision is awaited. Reliance Industries inks an MOU with the Maharashtra government to invest over rupees 3 lakh crores in the state across sectors including new energy, retail, hospitality and high-tech manufacturing, with a potential to create 3 lakh jobs. Hello, good afternoon. You've tuned into CNBC-TV18. You're watching Business Lunch with me, Vinny Motiwala. A quick look at what the markets are doing today. The markets are managing to hold on to gains as of now is what we saw coming in. So yes, Nifty holding on to decent gains of around 0.4% of trade, almost near the day's highest point. Started in the red and then we saw the jump up coming in. Hope this sustains in the second half of the trading session as well. Top contributors that are coming in, we have names coming in like M&M, Infosys, ITC as well as Sun Pharma in the top move. movers, drags a bit coming in from the private banking side. So we have HDFC Bank, Axis Bank, Kotak Bank as well as Reliance also, which is under pressure. So that is why a bit of a pressure coming in on that front. Mid and small cap are managing to hold on to good gains. That is outperforming the benchmark indices. So clearly, both of them holding on to gains of almost 1 to 2% in trade. Now, a Nifty Bank, let's pull that up, right? We saw all those contributors in the Nifty 50 were coming in from the private bank side, which are the top drags today in terms of top contributor drags. So that is what the pressure is coming in on, and that is why Nifty Bank is down 0.1% in trade as well. IT and pharma, those are the top sectoral gainers. We had Infosys among the top Nifty 50 gainers, so Nifty IT also overall. Plus, do not forget, a lot of IT companies have reported their numbers. Mid-cap IT names, when you look at it, Coforge, Persistent, they're managing to hold on to good gains in terms of earnings movers that are coming in. So Persistent, Coforge. Other than that, in other sectors, we have Zensar Tech, Go Digits, Pidilite among these movers. These are all earning movers, and they are managing to see very strong gains in today's trading session. But yes, those were individual names in terms of stocks. That's how the market setup is looking like. But let's start the show and shift focus on HDFC Bank. Now, they reported a steady set of numbers in Q3. Yesterday, we saw them coming in during market hours. Net profits grew by around 2% on a year-on-year basis. Net interest margins came in at a 4-quarter low, with slippages up by 12% on a quarterly basis. Let's listen into what the management actually had to say in terms of the company's earnings and what they highlighted in the conference call.
We are in the midst of a very challenging macro environment. With tight liquidity conditions, signs of moderating urban demand, a tepid private capital expenditure programs, volatility and depreciation of the Indian rupee, capital outflows from equity and debt markets due to uncertainty around the new U.S. administration. We are seeing some amount of rural demand picking up. The government spending is picking up after a slow momentum in the H1, the first half of the year. We see continued strength in services exports and a gradual moderation in inflation. But we've been able to maintain a very tight leash on the cost. Our cost growth has grown 7% year on year, which means that we have gained some amount of productivity gains there.
And moving on, Reliance Industries had inked an MOU with the Maharashtra government to invest over 3 lakh crore rupees in the state across different sectors, which will include new energy, retail, hospitality and high-tech manufacturing, with the potential to create 3 lakh jobs. Now, here is what Anand Ambani and Maharashtra CM Devendra Fadnavis had to say about this.
It is an extreme honor and a moment of pride for me and for RIL as we embark on this remarkable MOU with the government of Maharashtra. RIL has always been deeply committed to the idea of New India under the visionary leadership of our Honorable Prime Minister Shri Narendra Bhai Modi ji. As the largest business group in India, we are spread across the country, furthering our commitment to build a great nation. In this regard, our 3,05,000 crore MOU spread across new energy, retail, hospitality, green power, high-tech manufacturing is the step in that direction.
विशेष रूप से इसमें से एक बड़ी इन्वेस्टमेंट ये चूंकि सेवा क्षेत्र में जा रही है, तो इसके कारण बहुत बड़े पैमाने पर इससे नौकरियों का सृजन होगा, जॉब्स का क्रिएशन होगा और करीब-करीब 3 लाख जॉब्स का क्रिएशन ये इन्वेस्टमेंट करेगी, ऐसा एक प्राथमिक अनुमान है.
And with a little bit more than a week left for the union budget, sources have told CNBC-TV18 that the budget will look to front-load capex with focus on infrastructure development, healthcare and EV sectors. Timsi Jaipuria is joining you with us to give us the expectations and what is she picking up from her sources. Timsi.
Well, that's right. What sources indicate that the upcoming budget is likely to front-load capex with focus on infrastructure development, healthcare and EV sectors. Government believes that front-loading of capex will create jobs and thus boost consumption. Not just this, sources further added that budget is likely to boost road and highway construction, rural road construction. It is also going to allocate resources to accelerate railway track expansion. More funds will be allocated towards primary and secondary schools, colleges. Budget is also likely to enhance funding for creating and expanding AIIMS health clinics. Also, there will be a focus on funding for battery charging stations, building AI infrastructure. The budget is also likely to focus on funding capacities which need expansion in terms of semiconductor manufacturing, and the budget is also likely to support domestic shipbuilding operations. So now what we have to see is what Finance Minister Nirmala Sitharaman announces when she reads her 8th budget speech in the Parliament on 1st of February. Back to you.
And out of the budget on the Feb 1st, we spoke to Shantanu Sengupta of Goldman Sachs as well as Pranjal Bhandari of HSBC. Sengupta spoke about the fiscal drag in the deficit rising, while Bhandari spoke about the 3 main areas that the government must focus on in the upcoming budget. Listen in.
Bigger point is that you might want to shift around expenditure a little bit from capex towards welfare or transfers, but the net fiscal impulse on the economy is still going to be negative, or there's going to be a fiscal drag if you're going to consolidate the deficit. And I don't think there's any question, at least in our mind, of whether the government will be consolidating or not. I mean, there's no question of expanding deficits at this stage of the cycle. Even if it is 4.7, for instance, Lata, from 4.9% of GDP this year, you're still going to have a fiscal drag because you're consolidating the deficit. So unless you go towards like 5+ percent of GDP, the net impulse on the economy is negative.
One, macro stability, stick to your fiscal consolidation path and hand over the growth job to RBI. And I think RBI has the space given inflation is coming down a lot. Our January inflation forecast is 4.2%, quite low compared to 6.4 just in September. The second one, I think, is manufacturing jobs. Great opportunity. Again, supply chains could be getting rejigged this year. In Trump 1, you did not become a magnet for mid-tech FDI. Try and do that. But that will want you to be, you'll have to dare to be different. When the world is getting protectionist, don't increase import tariffs, actually reduce some of them. Go sign FTAs with the US and other advanced economies and let the currency be flexible. And the third one is revival of capex, because over the long term, that's the only source you have of creating capacity and jobs. Okay. So I would say these 3 should be the main pillars of the fiscal on February 1.
And in a big relief for WhatsApp, the National Company Law Appellate Tribunal has stayed an order by the Competition Commission of India to halt the user data transfer to parent firm Meta. Ashmit is joining with us to give us more details on this one. Ashmit?
Well, at the heart of this issue is WhatsApp's 2021 privacy policy. That is something that the CCI had taken an exception to, and importantly had passed an order whereby a penalty had been slapped of about 213 crore rupees, as well as a very pertinent and important direction for WhatsApp to stop sharing user data with its parent company, Meta. Now, this is at the core of the WhatsApp privacy policy. This is at the core of their business model here in India. This is what they had argued before the NCLAT as well, that this privacy policy has been in effect since 2021, that there has been no stay granted by any court in India, either by the Delhi High Court or by the Supreme Court, that there is already a framework in place for governing privacy regulations, that is by way of the DPDP Act, and therefore there is no reason for the CCI to pass such orders. Now, it is taking that order into consideration that the NCLAT has granted a partial stay, and this comes as a huge relief. The NCLAT has stayed the CCI direction, which had barred WhatsApp from sharing user data with Meta. What this essentially means is that WhatsApp will be at liberty to continue sharing user data, to continue monetizing user data in one of its largest markets, India, especially with its parent company, Meta. Also, meanwhile, the NCLAT has held that there is no stay, that the DPDP Act is in place, and therefore there is enough grounds, there are enough protections in place as far as the users are concerned. Having said that, the NCLAT has not stayed the penalty component. WhatsApp has been directed to pay 50% of the 213 crore rupee penalty within 2 weeks' time. So that's the sum and substance. The big relief, of course, is that WhatsApp can continue to monetize Indian user data and continue to share it with its parent, Meta. Back to you.
Okay, Ashmit, thank you so much for that. On that note, we're going to take a very short break, and after the break, we'll tell you how Stargate project is leading the friction between two top tech honchos.
Can bring jobs back to the US. I'm skeptical that he'll raise much revenue. I'm skeptical that too many jobs will come back to the US because manufacturing has gotten so automated that, you know, it's not going to happen in a big way.
Do you foresee the need to scale down hiring? Do you believe that you will continue at the pace that you are, or you may even have to look for more?
I think that you won't have to scale down at all. I do think that over time, and at least we've seen this in our software portfolio, that there is a certain non-linearity between number of people hired and actually growth. So I think that more and more not looking at them as, you know, a direct correlation is something that will happen. But for example, in our engineering services in ERS, like even though almost 80% of now, let's say, coding can be done through AI. But then what we are training our engineers is how to build applications on top of it and how to do a lot more of design around it.
We have a presidential memorandum that was issued that delays the imposition of tariffs, and in fact calls on each of the trade agencies to start a process to look at countries with which we have a trade deficit, unfair trade practices, looking at existing free trade agreements, looking at sectors that have national security implications. And those reports are due to the president on April 1st. So it appears that there could be some delay in imposition of tariffs, perhaps with the exception of Canada and Mexico. He did make specific reference to those two countries, and China is obviously an outlier as well. So we will see, but there is likely to be a delay in the imposition of tariffs.
Ladies and gentlemen, the President of the United States, the Honorable Donald John Trump, and Mrs. Trump.
Having witnessed another successful moment in the experiment that you have entrusted into the hands of the American people, we pray your blessing on our 47th President of these United States, Donald J. Trump, and Vice President James D. Vance.
Welcome back and thanks for staying tuned into Business Lunch on CNBC-TV18. Let's move on. Microsoft CEO Satya Nadella spoke about his investments in the Stargate project through OpenAI and also clarified his position on the tug-of-war between AI and job cuts. Listen in.
Microsoft
Meanwhile, Elon Musk too has jumped into the Stargate bandwagon a day after Donald Trump announced a $500 billion investment into AI. Billionaire Elon Musk has claimed on X that the tech giants like OpenAI don't have enough money to invest in an artificial intelligence infrastructure. The new plan, dubbed the Stargate project, aims to turn the US into an AI hub. Later on, we had OpenAI CEO Sam Altman, who replied to Elon Musk, asking him to put America first over his personal concerns regarding the plans impacting on his company. And on that note, we're going to slip into a short break. But as we slip into the break, here's some good news coming in for our viewers. India's business news leader is now a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen.
And we are going to bring law and order back to our cities. This week, I will also end the government policy of trying to socially engineer race and gender into every aspect of public and private life. We will forge a society that is colorblind and merit-based. As of today, it will henceforth be the official policy of the United States government that there are only two genders, male and female. This week, I will reinstate any service members who were unjustly expelled from our military for objecting to the COVID vaccine mandate with full back pay. And I will sign an order to stop our warriors from being subjected to radical political theories and social experiments while on duty. It's going to end immediately. Our armed forces will be freed to focus on their sole mission, defeating America's enemies. Like in 2017, we will again build the strongest military the world has ever seen. We will measure our success not only by the battles we win, but also by the wars that we end, and perhaps most importantly, the wars we never get into. The golden age of America begins right now. From this day forward, our country will flourish and be respected again all over the world. We will be the envy of every nation, and we will not allow ourselves to be taken advantage of any longer. during every single day of.
Welcome back and thanks for staying tuned into Business Lunch on CNBC TV18. Now let's move on. And speaking to Shulin Pan, the CII panel members spoke about India's growth story and the country's economic growth at Davos. Listen in to what they had to say.
This is the first time that because they want to replace, build newer infrastructure because of new technologies, what have you, it's a global capital investment cycle. And that, it's a question of how we as in India can take advantage of. In addition to the capital investment cycle, there is a huge supply chain opportunity of making in India and exporting to the world. And really the question is, how can we, I don't think we are doing enough as a country. We can do more. And the kind of growth which we are showing today can be much better. And the opportunity available, which we can hear every day, and it's really up to us to see how we can take advantage of that.
The testaments to India's infrastructure of people strength is the GCCs. Look at that. We have almost 2,000 GCCs. When I spoke to people, CEOs from the US, they said 20% of their workforce is in India. And it's not for grunt work. It's for really good capability, so innovation. So more of that happening, then we'll get those data centers. We'll need them. So I think India also has that. While we're picking up the challenges of consumption, we're picking up the story of this, we do have huge opportunity in showing the world that we have the most skilled people.
India and the US have now, with this CEPT agreement, moved closer to working strategically in defense. So as the US is going to realign its position with NATO, whatever that may be, I see a huge opportunity for India and Indian companies to also be a player in the supply chain to these geographies in NATO. Obviously, being an Indian company, we have to, be cognizant that it cannot be to the detriment of some of our long-standing partners, but the capability exists and that we can be a player globally.
And in other news, the government sources have revealed to CNBC TV18 that India is examining the impact on bilateral trade between the countries on the back of President Trump's America First policy. Abhimanyu is bringing us more updates on this front.
India is examining the America First trade policy for any impact on bilateral trade and would assess if something needs to be done in case of any negative outcome. Government sources have indicated that the White House directive to the US trade representative is a positive development for countries like India, where the USTR can identify countries for negotiating agreements on a bilateral or a sector-specific basis. Sources informed that talks with each ministry are underway to ensure they are informed about the situation, adding that a country may withdraw from the Paris Accord but still participate in green energy initiatives. The government is also awaiting confirmation of appointment of key trade officials in the US, post which discussions between both the sides would take place. The US is India's largest trading partner, and India has already indicated that there are no plans for use of any BRICS currency, though the use of rupee is being strengthened in bilateral trade with several countries to reduce exchange rate risks.
Moving on to some updates coming in on the domestic front, at least 13 people were killed after being run over by the Karnataka Express in Maharashtra's Jalgaon on Wednesday. The incident occurred when passengers of the Pushpak Express who had stepped onto the tracks following a rumor of a fire were hit by the Karnataka Express. Maharashtra CM Devendra Fadnavis and Prime Minister Narendra Modi condoled the death tolls and said that the authorities are providing all possible help to the injured. Okay, and with that, we're absolutely out of time on this edition of Business Lunch on CNBC TV18. Thank you so much for tuning in. Up next, your Mid-Cap Radar.
I will very simply put America first. Our sovereignty will be reclaimed. Our safety will be restored. The scales of justice will be rebalanced. the vicious, violent, and unfair weaponization of the Justice Department and our government will end. And our top priority will be to create a nation that is proud, prosperous, and free. America will soon be greater, stronger, and far more exceptional than ever before. I return to the presidency confident and optimistic that we are at the start of a thrilling new era of national success. A tide of change is sweeping the country, sunlight is pouring over the entire world, and America has the chance to seize this opportunity like never before. But first, we must be honest about the challenges we face. While they are plentiful, they will be annihilated by this great momentum that the world is now witnessing in the United States of America. As we gather today, our government confronts a crisis of trust. For many years, a radical and corrupt establishment has extracted power and wealth from our citizens while the pillars of our society lay broken and seemingly in complete disrepair. We now have a government that cannot manage even a simple crisis at home, while at the same time stumbling into a continuing catalog of catastrophic events abroad. It fails to protect our magnificent, law-abiding American citizens, but provides sanctuary and protection for dangerous criminals, many from prisons and mental institutions that have illegally entered our country from all over the world. We have a government that has given unlimited funding to the defense of foreign borders, but refuses to defend American borders or, more importantly, its own people. Our country can no longer deliver basic services in times of emergency, as recently shown by the wonderful people of North Carolina, been treated so badly. And other states who are still suffering from a hurricane that took place many months ago. Or more recently, Los Angeles, where we are watching fires still tragically burn from weeks ago without even a token of defense. They're raging through the houses and communities, even affecting some of the wealthiest and most powerful individuals in our country, some of whom are sitting here right now. They don't have a home any longer. That's interesting. But we can't let this happen. Everyone is unable to do anything about it. That's going to change. We have a public health system that does not deliver in times of disaster, yet more money is spent on it than any country anywhere in the world. And we have an education system that teaches our children to be ashamed of themselves in many cases, to hate our country despite the love that we try so desperately.
Good afternoon and welcome to Midcap Radar. I'm Vivek Iyer and with me today is Mangalam. Good afternoon, Mangalam. You know, as you can see on the top of your screen, a sharp recovery from what was essentially a very sharp sell-off yesterday. The Nifty Bank is the only index that's actually sulking in the session today.
Absolutely. You know, it's the Nifty IT stocks which are doing extremely well for the frontline indices, though it is the weekly options expiry and there are a lot of calls which are written at 23,250. So whether we cross past that hump or not is something that we'll keep an eye out on. News at the bottom of your screen, but we'll keep an eye out on all the top stories that we're tracking this afternoon. Stocks resume their climb after a shaky start with the mid-caps in the lead. Consumer durables, IT, the prominent gainers, while oil and gas along with private banks are the draggers.
Pidilite beats estimates on volume growth, riding on strong traction in the B2B business. Stock gains over 6.5% in the session.
Midcap IT, the theme of the day, Coforge and Persistent Systems log in strong growth and guide for continued growth momentum in the foreseeable future on the back of their strong order pipeline. Both stocks jump.
Citi opens a 90-day positive catalyst watch on PB Fintech with a buy call and a target price of 2,000 rupees a share. Sales, they expect the company's new business growth to sustain in retail protection, retail health and the savings business.
Oil marketing stocks under pressure after BPCL misses estimates after reporting lower than expected gross refining margins and higher marketing inventory losses. Management tells CNBC-TV18 they are assessing the impact of Russian sanctions. Right, so as promised, we have a bunch of mid-caps which are buzzing around today, but right now we are seeing some traction in the metal space as well. JSW Steel, for instance, has moved to the high point of trade. After a lot of drubbing that we've seen in the earlier part of the week, Trent too is attempting a bit of a recovery. Trent, remember, is down 8% this week, currently has moved higher, but it's the mid-caps where all the action is. Nearly 2 stocks advancing for every stock which is declining. Among that, the biggest gainers are the mid-cap IT stocks. If you look at the top gainers in the F&O space, 7 out of the top 15 have to be all from the mid-cap IT pack itself. And then you have all of these, EMS players, the likes of Amberent, etc., picking up some pace as well. Keynes Tech up another 6%. So let's get you the mid-cap movers. We have Upasna, Vamakshi, as always, to join in and tell us about all the mid-caps that are moving around in trade today. Vamakshi.
Well, good afternoon, Mangalam. Like you rightly said, it's a good day for the mid-cap index. When you look at some of the top gainers today, that includes Amber Enterprises. KEI is another counter that is a buzz in trade today. Oracle Financial Services, that stock is also seeing a good uptick of almost 5%. Bharat Dynamics started at a very low point, but then it has moved up. It's up nearly 5%. Keynes Tech has been declining over the last couple of sessions. Now that stock is also seeing a strong jump. Earnings reaction. Let's look at stocks that are reacting to a good set of numbers. Go Digit, that is up nearly 17%. Zensar Technology is the one that we're talking about. That is also seeing a strong surge on the back of its numbers. Coforge and Persistent also up and away in trade today. But apart from that, we also have a couple of IT stocks that are reacting. Sonata Software, Birlasoft, Cyient, as well as Emphasis. All of these counters are seeing gains anywhere between 4 to 6%. On the flip side, there are some stocks that are declining in trade today. That includes Hutco. The company reported its numbers. That stock is down nearly 2.7%. Tata Communications also down and out after the company reported its numbers. EIH as well as Inox Wind are some of the other counters that are down in trade. Lastly, let's take a look at all the counters that are moving on the back of strong volumes as well. Rainbow Medicare, Polycab and Timken India are gaining on the back of strong volumes, and Nuvoco and Alembic Pharma are down and up in trade.
Thank you so much, Vamakshi, for joining us and taking us through all of the mid-caps that are moving around the session. But now moving on to the Karnataka mineral bill, we understand that the Karnataka governor has returned the bill. Sudarshan, who earlier too got us these exclusive details, joins us with more details on this latest development.
So if you remember, last month we had reported that Karnataka Legislative Assembly had passed the mineral tax bill, raising 2 major points. First one was retrospective tax, and this tax was as per the Supreme Court order, and second, increasing the duty on mining. Now what I have been communicated from Karnataka Governor's office, that Karnataka Governor has decided to return the bill to Karnataka government seeking certain clarification. And Karnataka Governor is seeking clarification after some of the mining associations have approached Governor saying that associations have certain concerns related to certain clauses that government has mentioned in the bill, and those concerns are related to not only retrospective tax but also increase in the duty. And some of the stocks that will be in focus, first one is NMDC, because Karnataka forms nearly 35% to the total mix. Second is JSW Steel, because JSW Steel sources major quantities of iron ore from NMDC. And last, Vedanta and Sandur Manganese, they are major iron ore producers in Karnataka. One thing, recently Union Steel Minister S.D. Kumaraswamy had met Law Minister and NMDC discussing these issues and what are the issues that mining associations in Karnataka are facing and how to approach the state government and convince them to take the bill back. Now, last thing that has to be in focus, because in the case of state, this is a normal process for the passage of any bill. If governor has certain concerns, he or she does write back to government saying that these concerns have to be addressed. It should not be taken that this bill will not be passed. This is the normal process that governor is following.
All right, we take that point. Thank you so much for bringing that to us, Sudarshan. As a result of which, we are seeing a big move in NMDC as well. We'll watch out for that stock along the stocks that Sudarshan has also mentioned. JSW Steel moving to the high point of trade. The Karnataka governor has sought clarifications on the bill itself. A big up move is what we've seen. But let's move on. Let's take a short break. And as we do that, some good news coming in for all you viewers. India's business news leaders is now a click away, introducing CNBC-TV18's all-new app. You can get instant access to breaking news, in-depth analysis, and financial world updates at your fingertip. All you have to do is download this CNBC-TV18 app. Looks something like this that you can see. You can either download it from the Apple Store or the Google Play Store, or the QR code which is there on your screen. You can go ahead, scan that, and you will get the link to download the app, and then you have all the business world updates at your fingertips. Take a short break, come back.
Provide to them. All of this will change starting today, and it will change very quickly. My recent election is a mandate to completely and totally reverse a horrible betrayal and all of these many betrayals that have taken place, and to give the people back their faith, their wealth, their democracy, and indeed their freedom. From this moment on, America's decline is over. Our liberties and our nation's glorious destiny will no longer be denied, and we will immediately restore the integrity, competency, and loyalty of America's government.
Global growth. What's the outlook? What's going to be the outlook as far as inflation if President Trump follows through on his very aggressive plans as far as tariffs are concerned? What happens to US inflation? What happens to the dollar? Those will, of course, be big questions. What happens to emerging market flows? Those will, of course, be the big questions here in Davos. It's been over 2 decades of tracking the global power shifts at the World Economic Forum. Starting from our first story reported 20 years ago to last year's groundbreaking coverage of the world's most important economic event. From discovering era-defining ideas to connecting you with the world's visionary thinkers and doers. From decoding blueprints for growth to driving collaboration to make a better future. We've been bringing you a wealth of information through 20 seasons. Tune in to Davos Diaries at Davos 2025, live and exclusive on India's most trusted business news platform, CNBC-TV18. From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 Budget Headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
Markets are betting big on affordable housing. You look at the kind of stock.
Welcome back to Midcap Radar. Well, a few PSU banks are rebounding in trade. Have a look at names like PNB, Bank of Baroda, also a few NBFC stocks, housing finance names like LIC Housing Finance. These are some of the stocks that have managed to scale to the day's highest point. On the other hand, some of the cable and wireless stocks, some of them who have taken quite a bit of a beating in the last couple of trading sessions, doing very well in today's trading session. Havells now near the day's highest point. KEI Industries is another name that's doing quite well. And Polycab, after the over 6% fall which it saw yesterday, today too has rebounded quite smartly. On the other hand, one particular stock that's seen a very sharp sell-off suddenly is actually AU Small Finance Bank. Now, this particular stock is down over 3.5% in the session at the day's lowest point. That's AU Small Finance Bank seeing an accelerated sell-off in the last 15-20 minutes of the session. But moving on, let's now dive into the Growth Code, an initiative by Grow and CNBC-TV18, which offers valuable insights and strategies to help you make well-informed trading decisions. This week, CNBC-TV18's Nigel D'Souza interviewed pro trader Rajesh Baheti, Managing Director, Crossius Capital Services, and asked him about risk management practices for algo trading.
Well, what kind of risk management practices should retail investors adopt when using algo trading strategies?
So the main thing is, obviously, you've got to define what will be your capital risk at risk per trade. That's the fundamental core of any trading principle, that you don't put all your capital at risk at once. Because in trading, because it's a leverage trade, there is a chance that your entire capital can get wiped out. We've seen options go from 100 to 0. And the lure of the option is that it can also go from 1 to 100 or 10 to 1,000. So that's the reason people get into it. But if you get into it at the wrong time, you don't use your capital wisely, that 100 can also, 1,000 can go to 0. So the first principle of algorithmic trading or any trading would be to allocate smaller bits of capital per strategy to make sure that you're still in the market, irrespective of what the outcome of that particular strategy is. So if you look at most algorithms, they will definitely be having a stop loss, which either a particular investor can set for himself, or these are preset. So in that sense, algorithmic trading actually makes trading safer for you because of these pre-coded stop losses, and beyond a certain point, you will just be stopped out and no more trades will take place. So from that point of view, it's a better risk management tool than, pure trading on your gut, because sometimes then you will get emotionally invested in a trade and not book losses when you ideally ought to be booking losses. So from that point of view, I think it's a good risk management tool.
Stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7.
Welcome back. It's very interesting what's taking place in the market right now. The Nifty is up 100 points. How is that? Because the Nifty Bank, which was underperforming at the start of trade, is now begun to pick pace, and that's because HDFC Bank is the one which is recovering from the lows. If you pull up the intraday chart of HDFC Bank, you'll see that it's lending its weight to the Nifty Bank. But what's pressurizing the Nifty right now is Reliance, which is currently at the low point of trade. So this battle of heavyweights continues on the frontline index. Reliance has moved to the low point of trade. So let's see where it goes from here on. Remember, it is weekly options expiry today. But one stock which is buzzing in trade today is Paras Defence. It's signed a memorandum of understanding with the Maharashtra government to develop a 12,000 crore rupee optics park project in Navi Mumbai. To discuss this and more, we have Amit Mahajan, who's the Director Technical and R&D at Paras Defence with us. Amit, thank you so much for joining in. You know, the street is excited about the prospect, but you know, MOUs are known to typically fizzle out over a period of time. What we want to understand from you is, one, how hard is your commitment here? What is the timeline of the commitment? And this 12,000 crore rupees, does this entire amount go from your kitty? And if yes, how do you raise this?
So firstly, thank you for having me on this show. If I want to take you back to the last announcement about Optics Park, is when the chairman of ISRO came to our facility and we announced that we want to do something like this. At the back end, we already started planning for an Optics Park, and hence this MOU comes as a part of that. Now, when I have to talk about Optics Park, if you look at 12,000 crores, this will be phased in, say, approximately a span of 10 years. And this need not come directly a part of Paras Defence, but can be done using capital markets. It can be done using investor outreach that we have. It can be done using funding. It can be done using FDI. there are very many instruments which will fuel this particular optics park. Paras Defense will be the flag bearer of this particular project. Now,
can you, yeah, sorry, I'm sorry, I had to interject here, because when you say capital markets, FDI, etc., can you tell us over 10 years whether this investment will be front-loaded, back-ended? What is the annual investment program here? And when you mean capital, raising, does this mean that you will have to raise funds from the capital markets, or 12,000 crores? We're just trying to understand here. Yeah.
So I see, because 12,000 crores is a very big figure, and maybe everybody, the common man, will not be able to understand. So let me try and break it down for you. We look at semiconductor as a technology, and today the whole world, or especially India, is buzzing with semiconductor technology. Now, when we look at semiconductor technology, a part of semiconductor, or maybe a large part of semiconductor, is also optical technology. What we today see as optics is India is absolutely not self-sufficient when it comes to optics. Even a single small security camera which is put up in your office is not made in India. Now, when we are talking about this is, although they claim, everybody claims that it is manufactured in India, a lot of internal components are still outsourced. And outsourced, when I'm saying, they are imported. Now, when I'm trying to build an optics park, the vision that Paras has is to bring, including the optics, bring the sensor technology, bring a lot of semiconductor technology associated with it, a lot of academia we want to establish, so that
we understood that. Yeah, the press release and the graphics that are going on the screen, explain that quite clearly. What we want to understand from the shareholders' point of view is, out of the 12,000 crore that you have committed over a period of the next 10 years, what is it that Paras Defense will be spending? What is it that you will be spending from the internal accruals that you already have? How much will you be raising from the capital markets? And will you be taking on any debt to fund this particular commitment?
We would be not doing it. It will be partially ramping up as and when required, depending upon the internal accruals that we have. Optics becomes our biggest business. So yes, I do not want to put a percentage on internal accrual that we will be spending on, but we will use internal accruals. We will use our customers' fundings. We will be using funding from institutions. We will be using fundings from foreign direct investments. We'll be using also raising, raising, say, a QIP through capital markets. So
Mr.
there are
Mahajan,
very many instruments which will fuel the.
We understand the very many instruments which are there, but what we don't understand is internal accruals. How are you going to conjure up this money? Because I'm looking at your cash from operating activity. Last year it was negative 46 crores. Your annual revenue is just around 250 crores. Your entire market cap, given the sort of defense push that we've seen, is close to 4,000 crores. 12,000 crores is 3 times your market cap. So, just to understand the magnitude of funding which is required, we want to understand better how much will you fund immediately? What is the proportion of money which goes out of your books immediately to this? And how do you intend to get this money back as well in terms of business opportunity?
That is the insight which I was trying to give you. Today, when you look at Paras, you're looking at Paras only as a defense and space manufacturing company. If you look at optics as in general as a technology, I want you to look at optics from defense, from space, definitely, and we are the leaders there. You look at optics from automotive, you look at optics from medical, you look at optics from commercial. It is a huge, huge market. Now, when we're looking at such a huge market, when you have vision which is set up to this level, then the whole planning happens as per the vision. You do not have to restrict your growth depending upon what you are doing today, rather than looking at what you should bring our nation to the self-reliance of optical technology. You have to look at a larger vision. You cannot look at what I'm trying to do right now, only defense and space. Optics is a very, very relatively smaller market. If you look at all these agriculture, medical, automotive, industrial, commercial markets, then it's a billions of dollars industry. We are looking at that.
Understood that. Understood. Thank you so much, sir, for joining us, giving us a sense. We would have liked some more details in terms of the exact commitment Paras is doing, but we do understand the kind of vision that you're trying to explain to the market. But with that, it's all the time we have on this edition of Midcap Radar Mutual Fund Corner. When we return.
about India, we have them growing strong next year, consistent with what they grew this year. It's now moved to the 5th largest economy.
The Honeywell view on India, and how do you see the next few years?
Domestic business doing extremely well. Can't be more pleased in terms of opportunities in India.
It is, and there are lots of reasons for that. One is because he's in a much stronger position in the United States than he was in 2017.
They're working on AI. They're working on all the innovative capabilities that we want to input into our products. A lot of that's coming out from India.
If I were to say even heart and mind put together, India is an exciting story.
India is going to be the office of the world. You and I discussed about it.
Trained. The last time we spoke here, you had given me a number. What does that number look like today in terms of the people that have been trained on AI within Infosys?
So within Infosys, it's a huge number because there are two types of training. One is what we call AI aware, and one is a deeper training where people are using it. The AI aware, which is a broad training, is over 270,000 out of about 320,000 people are in this AI training. And it's really across the board because there needs every discussion with client, every deal, every large deal, every medium deal, there's a lot of interaction on AI. So it's built into many things.
So clients are asking you now specifically for what the AI use case is going to be and how you can contribute to that?
Clients are interested in where generative AI can help them. And what we are seeing is through AI.
Welcome back. You're watching CNBC TV18. As you can see on the bottom of your screen, cement major Ultratech has come out with its results. Nigel is standing by. Nigel, have you had a chance to look at the results? How do they look?
Well, Vivek, for prima facie, these numbers look good. And I'll give you quick reasoning because of that. On the top line, in fact, there is a mild growth out there. And I'm going through the release that they have put out. The domestic sales volume has grown by close to around 10%. Now, that would mean that they have gained market share because the industry would have grown at around 7%, roughly, very, very roughly, 6 to 7%. So domestic sales volume has been at the upper end of what the street mentioned. Now, the EBITDA number itself is a beat by close to 100 crores in comparison to what we were working with. So the operating leverage has played out, point number one. The second factor is that they have mentioned the energy costs have been lower by close to 13% on a year-on-year basis and close to 4% quarter-on-quarter because of the decrease that we're seeing in fuel costs. So these numbers actually look good. The street, I think, was sensing them a short while back, and that's why we saw a bit of a fillip on the stock. So top line beat by close to around 170 crores. If you look at the operating profit as well, it's a beat of close to around 100 crores, which equates to around 4.5% or thereabouts. And the key reason out there is operating leverage, as well as you have lower input costs. Just trying to pull up, the finance cost has gone up a little bit because I think they've done that acquisition with regard to India Cements. And also they've gone on to state, the expansion program is going as per schedule, and they're looking to achieve the milestone of 200 million tons capacity by the end of FY27. So these numbers look good. Just trying to pull out in case there is any kind of commentary we have got. As of now, I can't find that, but going forward, they're giving some commentary out here. Going forward, the government's focus on infrastructure as well as housing projects, together with increased rural and urban demand, is expected to generate sustainable volume growth of 7 to 8%. So there's some confidence that's coming out of there as well. These numbers look good. The street likes it, and they'll want to stick to the big boy because it's been growing better than what the industry is growing. The focus on cost as well is something that the street likes, and I think the kind of capacity that's building on is good. Prakash Thiwan joins in. Hi, Prakash. Good afternoon. Good to see you in. Positive surprise coming in from Ultratech Cement, as far as the numbers that they've delivered in comparison to what my poll threw up. Go ahead, Prakash.
Oh, absolutely, Nigel. And remember, this is at a time where there's been no price hikes. There's not been much of volume increases, which were kind of expected. So from that perspective, getting these kind of numbers, and especially it's not, if you see the EBITDA beat, the numbers are definitely a beat, and there's no one-off contributing to that, which very clearly says it's pure organic growth, so quite positive. And, the interesting part is we've been worried about overcapacity in certain pockets. Fortunately, that has not impacted most of the larger players. And if the budget were to come up with something related to capex which spurs housing or growth in the infrastructure side, then you have a very virtuous cycle starting off from here. So well poised, and I think it's quite attractive in terms of the levels that you're getting it at now.
Okay, all right, bang on. Prakash, stay with us. Jyoti Gupta as well, Senior Research Analyst at Nirmal Bang Institutional Equity, joins us on the show. Hi, Jyoti, good to see you, and thanks a lot for joining in. What do you make of these numbers? Volume growth at 10%. They're saying that sustainable volume growth as well will be a high single digits. And the EBITDA number that they've delivered is better than what we threw up by close to around 4.5%. Your initial comment?
Yeah, hi. Thank you so much for having me on the call. In fact, I anticipated something like that. While I had built in something like a 7% growth, but a 10% number YOY growth is definitely good. And yeah, I mean, like we did have price increases. Third quarter exit would be something around 150, and because of higher volumes, you do expect, the lower fixed cost absorption. So obviously, I anticipated some improvement of something like a 150 to 100 for Ultratech. So I think broadly it's in the range what I'd anticipated. So good numbers, and it augurs well for the entire industry.
All right, but I don't know whether, Jyoti, we can take it as a read-through, because Ultratech has proved that it's in another league, right, in terms of the cost parameters, in terms of their branding as well. But would you read it as a positive for the industry on the whole? If yes, any particular geography?
I think I would look at more because North, if you see there, I think this growth has primarily come from North region, where the North region itself has grown by almost like 12%. And I think South gradually would pick up. So, and North continues to grow at a decent level, even in the fourth quarter. So, yeah.
Got it. All right.
The brand is quite strong in the North region as well.
Brilliant. So you're happy with those numbers as well. Uttam Kumar as well joins us, Senior Research Analyst at Axis Securities. Hi, Uttam. Good afternoon. Numbers look good, isn't it? That's what the consensus is stating right now. The stock is flying away. Remember, it's come off, I think, close to around 10% from the recent peak. And that's given you that additional booster shot that, the street was looking forward to. Your take on the numbers?
Yeah, number is in line with our estimate, and it's above consensus estimates. So we had assumed a 9% volume growth, and the company has come up with a 10% volume growth, and it's a beat on all parameters, primarily sales, EBITDA, and PAT. So numbers are good, and I hope it's a good time for cement space, and with the Ultratech leading from the front. So it's a good number, very good number.
Okay, all right. What's your official call on the stock as of now, and in terms of preference, where does it come?
It's Ultratech remains buy from our end, and with the good result, and fourth quarter will definitely be better for the cement space also, because we know fourth quarter is a time when most of the construction activities take place. So as company has also mentioned that they will be continuing with 7 to 8% volume growth moving ahead. So we believe that with pricing moving into positive territory, demand coming back, and costs are in control. So cement space looks attractive from here now.
Okay, all right. Thanks a lot, Jyoti, Uttam, as well as Prakash for joining in. So that's the numbers for you. Ultratech Cement delivers a good set of numbers, solid volume growth, guiding for good times ahead as well in terms of the volume growth. The focus on cost bodes well for them and explains why the EBITDA number is a beat of close to around 4.5%. So a thumbs up from Ultratech Cement as of now. We'll wait by for the management commentary, but you can't follow these numbers. They're a very, very good set of numbers, considering the kind of volatility that we had in the past quarter, and quarter 4 could be much better. So that's why the street likes it. I'll tell you what, we'll slip in a short break. You come back, more news and updates on the other side.
Small language models in the past through large language models, we have various ways in any large transaction or program where they can benefit from this AI. And so we are using it, and they are quite happy with it.
So what is this going to let's talk about India. The outlook that the IMF has put out pegs growth at 6.5%. Still one of the fastest growing large economies in the world. What do you like about India today? And in the context of what we will hopefully see in the budget, what would your expectation be?
So firstly, just to emphasize what you said, which is, I mean, India remains the fastest growing large economy of the world. We do expect to see growth to recover in the second half of this fiscal year, which is how we get to 6.5% growth. So for us, potential growth for the US, for India is 6.5%. To get to much higher levels of growth will require structural reforms on many fronts. Also, it will require continued public infrastructure investment, which the government has been doing a lot of, but you're going to require that at the central government level, but at this and the state government level, and to be able to execute on a timely basis, that's going to be quite important. There's also the more long-standing issues in terms of the ease with which you can start a business, the ease of doing business, the ability to buy and sell land, labor reforms. I mean, all of those are required. And lastly, you know, we're now in a world where companies are looking around for how to build their supply networks. And India is an attractive destination for them to do it. So this is an opportunity for India to be able to plug itself more firmly into global supply chains.
You know, on India, we've got of course, 6 Indian states along with the central government being represented here in Davos. And we've only seen the India presence go up over the last few decades here in Davos. How do you see, especially in areas like manufacturing, foreign direct investment moving to India in this context of reshoring, which has now been the buzzword here in Davos through COVID?
Yeah, and you have also this notion of friendshoring.
Yes.
And the thing is that India is seen as a friend by many countries. So this Make in India initiative, getting more manufacturing in India, I think is going to happen and is already unfolding. We know that Apple didn't produce any iPhones in India a few years ago. No, I think it's like 25% of their production or something. Take the number with a pinch of salt. But India is developing also when it comes to manufacturing. But what really works for India and also moving forward, where we do expect most growth in the decade to come, is on digital trade and on services. And these are 2 areas where India is very strong and has a competition.
Welcome back. You're watching our continuing coverage here from Davos 2025. I'm Shireen Bhan. As we've been telling you, India is being represented here by her states. One of the states attempting a turnaround but also a comeback is the state of Andhra Pradesh. The original Davos man from an Indian state's perspective, Chandrababu Naidu, is back here in Davos. He started his Davos journey in '97 and he has returned in 2025 to try and make a sales pitch to draw in investments to the state. Joining us now to talk about not just the Davos plan, but also the state's turnaround strategy is Nara Lokesh. Many thanks for joining us here in Davos. Before I move any further, a very happy birthday to you.
Thank you, Shireen. Really appreciate it. Thanks for having me.
Let me start by asking you about the Davos sales pitch. And we've got 6 states here representing India, and each one of them is doing a hard sell to investors. As I said, there's a turnaround plan that you are working towards, but there's also a comeback strategy here to draw in investments from investors here in Davos. Take me through what you've been able to suss out so far.
I mean, Andhra Pradesh's turnout plan started 7 months back when the new government was formed. If you look at it in the last 7 months, we make amazing progress. We have had great investments from a steel city to a data city to all the larger IT companies now coming to invest in Visakhapatnam. See, Davos for us was to send a clear message that Andhra is back. We're willing to do business all over again. Last 5 years have been very tough for Andhra Pradesh. So it's very important to give that confidence to the investors. And I see amazing energy, and people are now looking at Andhra Pradesh to make it part of their growth strategy.
You know, you said Andhra is back, open for business, and that's the message that you want to send out. You had a slew of meetings, including the likes of Bill Gates, the leadership team at Foxconn, and many other companies. But Specifically, are there areas of interest? Are there areas where you will prioritize investments? Because as I pointed out, I mean, you know, everyone's going after everybody here, including your peers. So will you focus on some specific sectors to build those out as part of the sunrise sector's aspirations for growth?
We are the sunrise state of India. Andhra Pradesh, if you look at it, has a very diverse geography. So we are able to focus each district for a specific sector. So we have an automotive district, renewable energy district, CBG district, then we have the entire data city, the steel city coming up in North Andhra, which is Visakhapatnam. So all the sectors are open. But what I'm promising everyone is that Andhra Pradesh will deliver on speed of doing business. We're no longer competing with other states, but we want to compete with other countries like Singapore and the Middle East in terms of speed of doing business. And with that agenda, we've gone to the investors. Because if you look at it today, all the investments are a few $1 billion. And even a 6 months delay throws the entire business plan out of shape. So it's very important that governments deliver on the speed of doing business, and Andhra will lead it from the front.
Let's talk about the turnaround strategy, because, you know, we've just seen the budget, and of course there is a revenue deficit as well, and there is a fiscal deficit in excess of 4%, a revenue deficit in excess of 2%. How do you chart a turnaround from here?
Well, Mr. Naidu always loves crisis. He says that's where opportunities are. We're exactly where the erstwhile Andhra Pradesh was in '95, and we did a turnaround. I mean, look at where Telangana is today. I think Andhra Pradesh is exactly positioned there. Thanks to the Honorable Prime Minister, he's held our hand very well. He's given us amazing support on the budget and even subsequently on various other issues. That is enabling us to come out of all the rut that we were in the last 5 years. And we, you know, in about a 5-10 year time, we will contribute back to the nation building.
And there's a very ambitious target for growth as well as per capita rise that the Chief Minister has put in place by 2047. 15% growth that's being targeted, and $44,000 in per capita. That's the aspiration as well. How do you get there?
And $2.4 trillion economy from where we are today, which is 188 billion. So, I mean, we have a clear trajectory. All the ministers and ministries have been given clear targets on what they have to deliver. So in education, which is my Bharat portfolio, as I call it, there are very specific goals that we need to deliver. So we are very focused, all of us together. I'm confident that we can deliver on it. And I believe if all states work together, we can make India number one.
But how doable is that, to get all states to work together? Because what we are seeing happen here is that, you know, everyone's essentially going after the same pie, isn't it?
Not necessarily. The pie is big enough. The world is ready to do business with India. They see India as a very strategic country for them. And one of the major reasons for that is our consistency in leadership. You know, the Honorable Prime Minister is in his third term. NDA government is in its third term. So the policies are very consistent, and they see that as a clear trajectory. I mean, geopolitically, there's so much of disturbance across the globe. Now, Andhra is the only country, India is the only country that's standing up bright. And in India, Andhra Pradesh is again going to be ahead of everyone else.
You know, you talked about the strength of the India story and the India advantage and opportunity at this point in time. But what we're also seeing happen as far as global events and developments go, it's President Trump back in the White House and telling people to do business in the US, to make in America, to make America great again. Do you believe that that is going to perhaps put a speed breaker of sorts, especially as far as manufacturing plans are concerned?
No, I mean, to be fair, the President of the US, Donald Trump, has also been very kind with India. The Honorable Prime Minister and Mr. Trump have an amazing relationship. I'm sure all this will fructify and will lead to investments even in India. So I believe that we live in a global economy, and India has an important role to play. And yesterday, if you look at it, you know, even states that didn't have India governments were well represented with a clear message of India first. And I think that shows a clear message to the world that India is ready to do business.
It's not just India first, it's also AI first here in Davos. What's the plan on that front as far as Andhra Pradesh is concerned?
See, in my department, which is HRD, Human Resource Development, we're going to be using AI extensively to assess students, to give prescriptive homework. So it's not going to be one homework for every child, a common homework. It's going to be very unique to them. And AI in governance is nothing new for Mr. Naidu. So real-time governance was there. Now, again, that's now under me. Once we return from Davos, we'll see a lot of activities again starting in AI in healthcare, AI in agriculture, So you'll see a lot of technology being used.
What we saw happen with Hyderabad, and of course, when in my conversation with the Chief Minister, he was talking about what he was able to deliver there with the promise and how that is helping the state of Telangana today. As far as Andhra Pradesh is concerned, the IT aspiration, the GCC aspiration, what will you leverage to try and ensure that you can replicate that success?
I mean, 20% of the global IT workforce is from the 2 Telugu-speaking states. And in that, majority of them are from my state. So we have amazing education institutions, and they're ready to come back. And we are adding more workforce every year. So I think there's an amazing combination now with the Chief Minister and with the Honorable Prime Minister working together in Andhra's interest. I think there's an amazing and lethal combination.
Lethal combination.
Double engine Sarkar. So I think or 2 engines for the jet plane. So I think we have amazing combination, and we can deliver on this. And you will be hearing a lot of announcements in the next 3 months coming into Visakhapatnam, which is going to be our IT destination.
Okay. Give us a sneak peek into what kind of announcements we should expect for Visakhapatnam and for the state in general.
Well, a data city. It will be one of the world's largest. We're going to be making a lot of announcements in that direction.
So data centers there?
Yes, data centers, and not just stopping at data centers, but building out the entire ecosystem around it. And parallelly, you will see a lot of GCC announcements, and of course, our homegrown biggies also now coming to Visakhapatnam in big numbers.
So, if I could ask you to give me a number in terms of the quantum that you are likely to stitch together for investments for this year, for 2025, for instance.
See, our target is to create 20 million jobs. 20 lakh jobs in the next 5 years. And that's a clear agenda for us. With that agenda, we're working now. If you've seen, already we have ArcelorMittal committing India's largest steel plant. And we're going to build a steel city, which is 14 million metric tons. Right, and we're working with Google on the Data City project. Then we're working with BPCL to do a refinery in South Andhra. So all these projects are just about taking off.
And big aspirations on the port side of the business as well.
Absolutely.
Are you drawing in investments there?
Absolutely. And we are talking to the larger ocean liners to have Andhra Pradesh as the port of call. And we had a conversation with the largest ocean liner to actually give us a maritime strategy for Andhra Pradesh. And they're going to come back in 45 days with that strategy.
Aspiration of shipbuilding as well. Is that something that you're considering? Are you talking to global players today?
Absolutely, shipbuilding. We're talking to the Koreans. They're the biggies in the shipbuilding sector.
Yes.
And we're busy scouting out for partners in India. So we're going to marry both, and we'll do it in Andhra Pradesh. And we're also talking to the larger, logistics chains like DHL to figure out, and even FedEx to figure out how Andhra can be part of their strategy in India.
So the conversations with the Koreans on shipbuilding, how far have they progressed so far?
Well, they're really excited. They see India as the next place. From the growth strategy perspective. So you'll hear good announcements in the shipbuilding probably in 6 months.
In 6 months on shipbuilding specifically. Let's talk about Amravati, because speaking of a comeback, that's making a comeback as well, and plans have been revived there. Of course, you've got some multilateral support coming in for Amravati as well. From here to what you hope to actually be able to deliver and achieve, what's the timeline? What's the plan?
3 years.
3 years?
3 years, the core capital region will be ready. Because yes, last 5 years, Amravati was on a pause. Thanks to the support of Government of India, now we're able to restart the entire project. Everyone's charged up, ready. All the tendering is completed. And we're going to start work from 1st of Feb.
So tendering is done at this point, and work starts from the 1st of Feb. So who are, in terms of real estate and the other aspiration of housing for all, which the Chief Minister has also promised, give me some nuts and bolts of how all of this is going to play out.
Specifically in Amravati, Amravati is our knowledge society, is what we're building out there. So a lot of education institutions have already come. In the past life, which is 14 to 19, we've done this amazing project, which is a G+3 for low-cost housing for LIG families. And it's been a huge success. We were able to build about 600,000 houses back then. And now we have a clear mandate to do it better. So we have to do about 1 million houses. And of course, there's funds coming in from Government of India in this direction. And of course, state will also put its own funds and build this out in Amravati and also across the state.
So one of the other priority areas for your government is also bringing back clean energy and green energy. And of course, we've seen what happened on the solar front. But do you expect to be able to rebuild trust and confidence, given the fact that there was a fair degree of policy discontinuity?
I mean, there were challenges, and we are still fighting or swimming against the tide in that sense. But at RE Invest Summit, the Honorable CM made a commitment to India that 72 gigawatts of renewable energy assets will be built in the next 5 years. So that's across solar, wind, and pump storage hydro projects. And we are heading in that direction, because if I have to build a data city of tomorrow, I need 24/7 renewable energy. A steel city of tomorrow needs green energy. So green energy is an integral component of India's growth story, and more so of Andhra's growth story. And green hydrogen project that the Honorable Prime Minister has laid foundation to in Visakhapatnam, I think is the first project, and you'll see a slew of more projects coming in that area.
Well, it's already snowing here in Davos. I guess it's a white birthday for you. But Narendra Lokesh, one of the challenges that governments across the world, but more particularly state governments in India, are also faced with is balancing revenue generation with the needs of the people. I mean, welfare schemes, including by governments like yours, are being given out at this point in time, and you require certain safety and social security nets to be provided. But the challenge of being able to fund those, I already pointed out, fiscal deficit over 4%, revenue deficit of over 2% at this point in time. How do you meet this challenge?
That's why we want to grow at 15% year on year. And we want to grow the pie of services and manufacturing in Andhra's economy, while we protect agriculture, and we'll have specialized agriculture coming in. So only then I can sustain my, my needs in terms of balancing both welfare and development. So that's why we need to grow at 15%. Anything less is unacceptable.
Anything unacceptable, but is it doable is the question.
We've done it in the past. We've come close to 13.5%. But I think with the kind of energy that India is able to now draw at the global front, I think 15% is possible. And we will deliver. I think Andhra will show the way.
Andhra will.
And if it also can catch up on manufacturing, I think this can be a very good decade for India.
What are they talking to you about when they speak about India specifically? Are there any sectors in particular that they're most excited about? I mean, you bring the PwC Global Board to India in 2025. So what looks exciting to you?
What looks exciting to us is now India has always been a destination for talent, the global capability center for many of our clients, a great services industry, and talent in India is being leveraged around across the world, pretty much. Now what we're seeing is that the rest of the world is now looking at India as a manufacturing center, a center of production, which requires new skill sets, but manufacturing is now coming to India. So having an economy that is both a services economy and a product-based economy and manufacturing economy is going to be critical. And that is what our clients today are looking into India to understand that it is a big market where many clients are looking at India now as a new manufacturing center for the world.
There are reports suggesting at this point in time that the government may review its policy to get manufacturers to actually make in India, especially as far as the EV side is concerned. And now, you have Elon Musk quite literally in the White House. What's the expectation in terms of possible changes? Are you hearing anything on that front?
We're not hearing any possible changes, but our stance has always been that we welcome competition. We feel that we will get better with competition. We have over many years. And from an electric vehicle standpoint, it will help grow the market as well. So the part that what we've seen the government always focus on is Make in India, because Make in India is essential. We have the ability today to make world-class vehicles. What we've done with our two vehicles is a testament to that. These are designed in India. The technology comes from India. Our research valley has really set them up. And that's something that we are starting to see as world-class products being made in India and being made for the world now. So that is in line with the vision that the Prime Minister has laid out on Vikasit Bharat and on India being a manufacturing hub for the world.
the government has also tried to draw in foreign direct investment under the Modi administration. Do you see more foreign investors like yourselves looking at the opportunities that present in India from a sourcing perspective, manufacturing perspective, and a retail perspective as well?
Of course. Can we agree that India is going to be better, brighter, safer, cleaner, healthier over the next 100 years? India is a growing market, is a growing population, but also has a fantastic base to develop with so many fantastic Indian people, and this is why we are committed to India. My advice to companies is that don't come here with shortcuts. Come to India with the long-term view, and this is what we are for. We did when we came to India initially. We went in depth what IKEA stands for and what Indian society stands for, and how can we connect. And we felt from the very beginning, a lot of connect.
Shanghai also managing to hold on to decent gains of more than 1.5%.
The budget is also likely to support domestic shipbuilding operations.
23,200 level is very, very close by. We left off at 23,155.
The interaction fabric and the IoT fabric, we are seeing good traction and reception from customers.
We got a subdued start, so it's about 23,100 on the Nifty.
Year to come appears to be a year that will have sustained, robust, and very solid growth.
We hope to be around 6.5 barrel per barrel.
One bid responsive or qualifying the eligibility criteria.
And it's a much better looking screen, especially when you look at the broader markets.
So we do believe GenAI potential could probably be our that way for persistent.
I really think in AI the incumbents have a huge advantage.
Sharp recovery from what was essentially a very sharp sell-off yesterday.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Okay, well, the bounce back continues, and it's been a decent day for the Nifty Bank, but especially for the broader markets. And, mid caps and small caps, it had been one way pitai, if I can call it that. But today, I think there is a little bit of bounce which is coming through. Mid cap IT is surging, but it's not just that. So much more going on. This is Closing Bell. Last hour coming up. I'm Prashant. With me, my colleagues Rima and Surabhi here in the studios. Nigel is joining in from the studio. Guys, hi.
Hi, afternoon, and not doing bad, right? I mean, there's been green, it's been fairly steady, and I think the mid-cap comeback after yesterday is dropping. Actually, the comeback started yesterday, and it's continued this, this afternoon. So it's looking good.
It is looking good, and I was just wondering, pitai is such a better word than rubbing, no?
More impact.
It just captures the essence of what has happened. But yeah, I mean, it's been the market had sold off. It was looking oversold. Actually, for the last couple of days, it's just that, I mean, it turns when it turns. Is everyone confident that this is the turn? And I mean, this is going to take us higher sustainably? I don't think that confidence is back yet. But, people are starting to buy, pick and choose in individual names. So, I mean, some repair, some recovery. And that's essentially the story for today. Now, broader market is also seeing a decent bounce. The last I checked, I think about 2% of the small and mid-cap indices. IT index, 2%. Rima will tell us more. I mean, Coforge set the tone, and it's just been one way across. But, Persistent and Zensar and Emphasis and so many more. Just two levels. Nifty needs to cross nothing but the swing high, recent swing high, which is Tuesday's high. 23,426 is that level, 200 points from where we are. And Bank Nifty for the swing high, similar number, is 49,650. The high of the Tuesday. So you need to basically get above that, and then I think we'll talk more repair and recovery. But it's day by day, and you'll have to take it as such. Rima.
Well, in the mid-cap space, it's IT, so Coforge, Zensar and Persistent, all three up more than 10%. But even in Emphasis and Cyient, both report numbers later in the day, and Emphasis is up close to about 5.5%. So across the board, there is a rub-off impact on IT names. Birlasoft on large volumes is up close to about 4%. The other pack where there is a bounce back are the EMS companies after yesterday's drubbing or pitai. So you have a Dixon Tech up nearly 4%, Amber Enterprises up 8%, Keynes is up close to about 5%, PG Electroplast also higher. So that's another smart-looking space for our markets today. And then you've got the likes of Swiggy, Go Digit, some of these new listings, new age companies higher in trade. But on the way down in the frontline pack, what's hurting is Reliance Industries. That's down nearly 1%, so that's weak. BPCL, Axis, HUL under pressure. But look at Ultratech, and I think we're going to leave it to Nigel to tell us more. 6%.
Absolutely. I was like, for me, I think this is the result of the season so far, because you can argue on IT, I mean, the positioning here and there, but on Ultratech, this kind of a performance, Nigel, wow. I mean, I think you'd be happy on all counts here.
Well, that's right. Before we get to that, I just want to make one quick point that these bounce backs that you're seeing in stocks, it's earnings-led reactions. And I like that. Today it's been that sort of a day, and I'm wondering whether or not these past few earnings surprises that we got, it can help Nifty go ahead and keep its record intact. What is that record? We haven't seen 4 negative months in the last 24 years or so. Because as of now, January we're still down close to around 2%. In the last 3 months, we have been lower. So the bulls will want to keep this record intact and will like to avoid, 4 straight months on the losing streak. So as I said, it's been 24 years since we saw that. The last time around, we saw it between June to September 2021. The Nifty ended lower for the 4th straight month that time around. So what's the number you have to track from here on? The 23,645, it's the crucial mark. The bulls will want to take the Nifty in the next 6-7 trading sessions above this by the time we end this mark. So hopefully we can do that, and we'll keep that record intact, because for the last many years we have seen 3 sessions the Nifty has been on a losing streak. We have witnessed that, but it's not managed to get to that 4th straight session. So hopefully the record's intact, and the bulls can claw back. I think we have to require around 300 points from here on. So I just thought I'll put that data point on the board. We're trying to look at some positives. Positive earnings reactions is what we've seen, and maybe that could take Nifty over that line of around 23,645 odd. So that's about the data point. We'll get to Ultratech in just a bit. For the time being, let's get in Mitesh. Mitesh, I just thought I'll put out that data point. What's your take? The Nifty has more to go from here on, or do you think it's showing signs of tiring a little bit?
Well, I think the good thing is that the expansion on the negative side has stopped. That would mean that we might not decline as much, and therefore a choppy base building activity between 23,370 and 23,370 and 23,000 could happen. I think once this base building is complete and we get some signs of reversal, then I'll go long. Otherwise, still waiting it out on the index. But as you rightly highlighted, it's the IT names, which are showing good traction, and that's where the up move is coming from. So I have a buy on Wipro with the stop at 312. Look at targets of 330 here. And also a buy on Grasim, which I would recommend buying with a stop at 24.25 for targets of 25.10.
Okay. All right. Got that, Mitesh. Thanks very much for it. Well, let's kickstart the show then with a really important story that impacts, a lot of the mining companies and obviously the listed mining stocks as well. And this relates to Karnataka. Remember, Karnataka, just I think a couple of weeks back, came out with a ruling. There was a ruling that said that the state has the right to levy higher taxes on the minerals that are being mined in the state, and this could be retrospective. Now it seems there's a twist to that story. So let's go across to Sudarshan to understand what's the latest. Sudarshan, help us, get through this.
So it was last month that we had reported that Karnataka Legislative Assembly had passed mineral tax bill, and this bill had 2 major clauses. The first, it would tax retrospectively on the mineral tax, and it would be as per Supreme Court order. Second was, it would look to increase the duty on mining. Now what I have been communicated from Karnataka Governor Office, that Karnataka Governor has decided to return the bill to Karnataka government seeking certain clarifications. And the Governor is seeking clarifications after some of the mining associations have approached Governor raising concerns majorly related to these 2 issues. First one is retrospective, but it's as per Supreme Court order, so it should not be a major issue there. But second, the major issue is that Karnataka government is looking to raise the duty, and that remains the major concern for mining associations. Recently, even Union Steel Minister S.D. Kumaraswamy had a meeting with Law Minister and NMDC on the same issue, that how to approach the state government and convince them to take the bill back. Now, which of stocks will be in focus? First one is NMDC, for which Karnataka formed 35% to the total mix. Second, JSW sources major quantities of iron ore from NMDC. And third, two major stocks that will be in focus are Vedanta and Sandur Manganese because they are the major producers of iron ore in Karnataka. But also needs to remember that this is the normal process for any bill to be passed. If a government in the center, if a government passes the bill, it goes to president for the nod. In the state, if government passes the bill, it goes to governor. So it's a normal process that's being followed. But this bill is important. That's the reason we are highlighting it.
No, absolutely fair point, and that's a very valid caveat as well that you've put in there, Sudarshan. Absolutely, this is just a part of the legislative process, but the governor has asked some questions. Now, when he sends the bill back, will the government make any tweaks and water down some of these provisions or not? That's what we have to see. But there's some green on these mining stocks today. Let's discuss this and more with Devin Choksi, who's with us on the show this afternoon. Devin, always a pleasure to have you on. Let's actually start there. I don't know if you have any interest in some of these mining and mineral and metal stocks, but your thoughts, Vedanta, NMDC, especially the ones that have a lot of dependency on the state of Karnataka.
Yes, good afternoon. Well, I think there are a few thoughts immediately coming up. Definitely, I think India is on the capital expansion mode, creating large-size infrastructure. And I think the natural minerals are the ones I think which are definitely we are blessed with. However, I think what is most regrettable about this entire activity is that time and again, the regulations keeps on changing. And as a result of which, the businesses, I think, do not find this particular activity anywhere close to ease of this business kind of a slogan that we are promoting. I think that's the only challenge that we see. But otherwise, in my viewpoint, I think suppose if this particular bill is required to be revisited in the context of, I think, whatever the adversity it is creating on respective companies, I guess I think it would be more than welcome step as far as the market participants are concerned, and also by the corporates per se. Should that happen, in my viewpoint, I think it would be win-win, because I think those kind of retrospective taxes which they have levied in this bill is not heard anywhere in the world. So frankly, I think it is better and wisdom prevails that these particular bills be taken care of in totality.
Okay, that's the view on metals. Let's talk about IT. Midcap IT is leading from the front today. Look at Zensar, a stock we don't often talk about. The company reported growth in Q3, which came in as a positive surprise. So for the last 2 years in Q3, because of seasonality, furloughs and challenging times, the company was reporting a degrowth in the December quarter. But this time they managed to report a growth, and that itself was a positive surprise. Also, the other internal about deal wins, the highest ever order book at $205 million, positively surprised the street, and the stock is on a tear. But Coforge and Persistent deserve mention because these are two outperformers, not just this year, but for the last couple of years, these stocks have been outperforming. Persistent, for instance, is up 180% in the last 3 years. In the last 1 year, 12 months, it's up nearly 50%. And the reason is these two companies, both Persistent and Coforge, continue to deliver on growth quarter after quarter. This quarter, while frontline large-cap IT stocks struggled to deliver growth, TCS was flat, Wipro was rewarded for a 0.1% kind of revenue growth. A Coforge had a growth of 8.4%, while a Persistent was up 4.6%. So despite high valuations, because these are stocks on account of the re-rating they've seen, are now trading at 35-40 times FY27 PE. So significantly more expensive than the rest of the IT pack. But still, buying is very much, investors are latching on to these. Also, what helps is the growth prospects. These are companies which are confident about the future. Persistent is talking about a $5 billion revenue target for FY 2031. So that's, 6 years down the line. They're laying out the blueprint to achieve that kind of a revenue growth. Coforge not committing to any numbers, but very confident after the 40% jump in their order book. They're saying that it's going to be a robust, sustained growth. And we're seeing some big moves. But Devin, is the euphoria in these stocks justified? They've given a handsome return to investors, but a 10% pop on these numbers today?
Well, Rima, I believe that the valuations are always required to be looked at. And I think all these companies which you mentioned, they are priced, I think, a respectable valuation. In fact, I think in near term, I think they are expensive. So from a perspective of buying this company afresh, unless I think the correction in the market price takes place, doesn't arise, maybe I think one can argue that going forward, they may have faster growth compared to what I think they have had in the past. That will be one thing which one will be looking at, I think, in coming times. But as of now, I think from our side, we believe that engineering R&D space within the IT is looking relatively more safer because of, I think, the higher amount of visibility that they have created for the group. Though in some of the cases, they are expensive too. So unless the price correction is meaningful, I think one would not be immediately buying into some of these companies.
Okay, all right. That's mid-cap IT, and that's been a really, really strong part of the market. Devin, the other, hallmark of trade this week has been the severe punishment that was first given to EMS stocks, and today is the reversal. Today there's a lot of buying that's happening. The debate is now that obviously they're trading at very elevated valuations, so the margin for error is very, very limited. What would your approach be? Would you advise some profit taking at these levels if someone has them in the portfolio? Would you say that no, just hold on and in fact add at every low?
No, I think the valuation wise, everything is fully priced. I think so. Question of, I think, buying them at current levels doesn't arise. Maybe I think the market gives a significantly large amount of correction, if at all. Or maybe I think if it is a time correction after which you buy. That is the way to, I think, add into some of these companies. But I think currently everything is into price. I don't think that I think immediately one would buy into any of these stocks, even though they offer fairly good amount of runway as far as their growth is concerned. Still, I think the valuation matters.
Okay, all right, Devin, stay with us. I wanted to focus on UltraTech Cement, and that's the big mover in the last 30 minutes or so. The street was sensing a positive surprise, and boy, oh boy, don't these numbers look good. Toad-Ford numbers, so to call it. The revenue number, well, that was better by close to around 150 crores in comparison to what we were working with. The EBITDA number, that was a pleasant surprise. It was up by close to around 100 crores in comparison to what we were working with, and that's why margins were better. A better operational performance has led to a net profit beat as well. A few factors I wanted to highlight. One is on the volumes parameter. We were expecting 8 to 10% volume growth. Well, they have grown by 10%. So at the upper end, which means that they've gone ahead and they've captured market share because the industry would have grown at around 5, 6, 7% very, very roughly. So they've outpaced the industry growth. Point number one. Utilization levels are around 73% because they've expanded capacity as well. Realizations on a year-on-year basis was expected to be down. It is down by close to around 10%. On realizations, they've recovered by close to around 1.5% on a quarter-to-quarter basis. And January, February should be better in terms of realization. So that's the other lever they have in store. So the operating profit, operational benefit is what they've got. And the other factor is the energy costs are lower by close to around 13% on a year-on-year basis, which has led the EBITDA per ton to improve by roughly around 230, 250 rupees on a quarter-to-quarter basis. And that's heartening. The street was expecting something around 200 rupees. It's improved by more than 250 rupees and the street likes it. Additionally, the management commentary is positive. They're talking about rural as well as urban demand coming back. And they're saying that if that's the case, then 7 to 8% could be the volume growth going ahead. Devin, the numbers look good. The street likes it. If you want to be, in the cement pack, it appears UltraTech is saying people can, argue about valuations and the likes, but it's enjoying premium valuations and maybe rightly so, just going by these numbers. Your take?
So Nigel, the commodities, whenever they have the larger amount of capacity utilization, I think they promise you for higher amount of volume-led growth. That's what we are expecting from UltraTech. I think the 73% capacity utilization that one has seen in the last quarter, in my viewpoint, I think in the fourth quarter, as well as I think in the next year's first quarter, financial year first quarter, the capacity utilization would probably remain on a higher side. That's the first point. Realization has been relatively better compared to previous quarters in the previous year as well, largely because of the strong demand impact, I think, which is coming from the market. And last but not the least, I think very important point out here, the margin protection, because the energy cost is remaining under control. It is remaining lower. Probably, I think you are getting the advantage of higher volume, higher capacity utilization on one side, and higher prices on the one side. And at the same time, I think the lower energy cost, input cost on the other side. So it's a good combination. I would say that I think the business condition looks absolutely clear for me as far as I think the large size cement players are concerned, the pan-India cement players are concerned. And they could possibly surprise in the fourth quarter as well as in the first quarter of the next financial year by their performance.
Okay, so cement could be the dark horse as we move along this year. Got that point, Devin. Finally, before we let you go, we've had a flurry of earnings over the last 3-4 days so far this week, and some outsized reactions, whether it is Zomato, Swiggy, and then we've discussed obviously stocks like Dixon. Leave us with one stock, where you found the commentary, the earnings and the prospects and even the valuations adding up. which you would look to buy maybe on dips, where the story is still intact, irrespective of the market mood?
So, Surbhi, from within the list of stocks which have come up with the earnings, I would think that I think within the BFSI space, particularly in the corporate banking space, Kotak could be one, I think, where you could possibly, I think, put bet on. The stock has underperformed historically in the last 3-4 years. And I think having got the corrective strategy in place with the better numbers that we have seen in the last quarter, in my viewpoint, I think this stock offers the opportunity to, I think, give you 15 to 20% upside from current levels. So any corrective downside in the market, I think, is a bigger opportunity for buying likes of Kotak into your portfolio.
Okay, all right. Got that, Deven. Thank you very much for joining in and taking our questions today. You have a good rest of the afternoon. We do have to take a very quick break. And as we take that break, here's some good news coming in for our viewers. India's business news leader is now just a click away. Introducing the CNBC-TV18 all-new app. You can get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. You can download the app and, you can go to either Apple Store or Google Play, or you can actually even scan the QR code on your screen.
That's why we are deeply committed to India.
Your heart is
Yeah.
with India and in
India, that's
as you
right.
pointed out.
I think, for example, on the trade front, I was pleasantly surprised that they didn't impose tariffs right off the bat, which seems, suggestive that they will be a little more considerate about it. But
Calibrating what rate they should impose.
Calibrating what rate and doing less damage, more from the US perspective than from the other countries' perspective. But I think the announcement of External Revenue Service implies what I thought earlier, that he is serious about tariffs, both from the perspective of raising revenues for the US so that he can cut taxes more, which he needs to. Also from the perspective that he really believes by putting tariffs on others, he can bring jobs back to the US. I'm skeptical that he'll raise much revenue. I'm skeptical that too many jobs will come back to the US because manufacturing has gotten so automated that, it's not going to happen in a big way.
Do you foresee the need to scale down hiring? Do you believe that you will continue at the pace that you are, or you may even have to look for more?
I think that you won't have to scale down at all. I do think that over time, and at least we've seen this in our software portfolio, that there is a certain non-linearity between number of people hired and actually growth. So I think that more and more not looking at them as, a direct correlation is something that will happen. But for example, in our engineering services in ERS, even though almost 80% of now, let's say, coding can be done through AI. But then what we are training our engineers is how to build applications on top of it and how to do a lot more of design around it.
We have a presidential memorandum that was issued that delays the imposition of tariffs, and in fact calls on each of the trade agencies to start a process to look at countries with which we have a trade deficit, unfair trade practices, looking at existing free trade agreements, looking at sectors that have national security implications, and those reports are due to the president.
Okay, welcome back. Rajesh Bhatia is now joining us on the program, a CIO at ITI AMC. Rajesh, good afternoon. Good to have you with us here. Thanks very much for your time. You know, you in terms of sort of the size of the fund, I think is done very, very well. I think returns have been pretty good as well. And you yourself are someone who looks at slightly top-down macro, larger trends, etc. closely. And this looks like that kind of a year with a lot going on. But let's just start slightly micro, start from the market, and then we can broaden out. What's your sense? There's been a fair bit of damage which has already happened. Do you think it is enough? Somebody put it nicely that very high prices become high-priced. But my argument to that is things have been high-priced for about 10 years now. I mean, it's not, you got to go back a long time to find sort of cheap or whatever. Auto companies trading at 20 times, you have to go back to 2006, 2007, or for that matter, other sectors. So what's your sense? Has enough damage happened?
So Prashant, you're absolutely right. The markets have become far more macro-oriented, at least in the last 4 odd months. And that's really where the inflection points, at least on the drawdown lower, takes place. So it has become a macro-oriented kind of a market. But coming to that point of the micro, as you point out, I think, actually we have hardly corrected. We've corrected, 12% from the top, including mid-cap and small cap. Just that the mid-caps and small caps have corrected far more just this month. But otherwise, mid-caps and small caps have also just corrected 12% from the top. Even if I look at the last 2 years, my sense is that the Nifty should be up 35, 38%, and the mid-cap and small-cap indexes for the last 2 years should be up 65+%. So in that context, the 12% decline is hardly any decline. And as far as Indian equities is concerned, I think you're absolutely right. Look, the opportunity and the growth rate and the ROE that India offers, right? So it's a high ROE. Why has India done so well over the last 43 years? Because apart from the growth rate, which is it is the fastest growing GDP nation in the world, the ROEs have been 16 to 18%, and long-term stock prices follow ROEs. So this is a very, very profitable market for businesses. And so it's very unlikely that if you're going to get something which is fast growing, over the next 10 years, we are saying that India is going to be one of the fastest growing and the most predictable, fastest growing nation in the world. The ROEs are going to be 16 or 18%. You're not going to get this very, very cheap unless a COVID kind of an event takes place. So this is going to be slightly an expensive market. But you're absolutely right. It's gone from extremely expensive to slightly expensive. It's not become cheap, but that's the nature of the beast we'll have to deal with. You will not be able to buy this very, very cheap.
So what does one do then, Rajesh? If things are still expensive after a 12% correction, what are investors doing? What should retail shareholders be doing?
So the challenge is not only the valuation. The challenge also is that we are experiencing a slowdown in the economy, right? And this is partly on the back of the fiscal consolidation that we've been seeing since the COVID times. And even next year, I mean, the fiscal deficit will go from 4.9, which is this financial year, and the government plans to make it 4.4. So fiscal will be a drag even next year, and which means that's not going to trigger your upturn. Now, given what's happened globally as well, with the dollar going up, with the interest rates globally going up, that has led to your Fed not being able to cut rates, and also that has implications for monetary policy, which means we'll not be able to cut rates as well. So you don't have a fiscal lever to drive up growth. You don't have a monetary lever to drive up growth. So the challenge is that we are into a slowing economy and the valuations are still high. So chances are very high that actually you'll go into a bit of a sideways correction, lower your expectations for this year at least, I mean the calendar year, as far as the equity returns are concerned. So that's really where we are.
Rajesh, hi, good afternoon. So given that markets have been in this funk, I don't know, maybe people are expecting some magic to happen on the 1st of February. I don't know if it can be delivered or not, but what do you say? I mean, realistically speaking, would you want, want is fine, would you rather expect and pencil in some sort of a bigger announcement, whether it's on capex, infra or tax, or do you think it'll come and go? We have to deal with our own events here in the market.
So my sense is that this government has put macro stability ahead of growth, and it's always been conscious of macro stability. The fact that you have to bring your fiscal deficit down, because at 85% debt to GDP, we are among the highest or higher emerging market debt countries. So we will need to consolidate our fiscal deficit. So don't expect your fiscal deficit to rise and be a tailwind to growth. So I'm not expecting that. But you bring an interesting point. Look, what has happened is that capex story of India was certainly abetted by the central government, which was at 3.2% of GDP or thereabouts. And of course, since the COVID, the capital expenditure from the central government was accelerating at 20+%. Last year, which is this financial year, it's gone down because we have underspent. And next year, even if you take a nominal GDP growth rate, which will mean that that tailwind from the government capex is definitely slowing down. What does it mean? And that's a question that we are also asking. What does it mean for order book growth for capital good companies, for instance? So those are the challenges that I think we will have to kind of navigate. Expect a lower fiscal deficit. Expect no tailwind from that. And that means that we will continue to be in a bit of a challenging environment for the next 12 months at least.
All right. Hi, Rajesh. Good afternoon and good to see you. When I recall you were pointing this out that in terms of sectorial churn, I think you were liking tech as well as pharma towards the end of the last quarter. And you were saying a lot of these cap goods, railways, defense plays, they seem to have run its course. Now, these stocks have corrected. Post the correction, would you have a relook at it?
So, as Prashant said in the beginning, these have gone from extremely overvalued to overvalued companies. They're still not cheap. And given the headwind that you were expecting some of these businesses means that, you have to curtail your enthusiasm, as far as those sectors are concerned. But we still continue to like IT, pharma, telecom, private banks. I don't think they'll make too much money for you, but it'll be a good place to be in. Insurance, again, these are very well-valued companies. You'll have to watch for some risk in the budget that may come. But I think these are the places where there's value, private banks and insurance companies, but don't expect too much in terms of returns either.
Okay, don't expect too much. So basically, curb your enthusiasm, right? As the title of that old show goes.
Yeah, curb your enthusiasm.
But single stocks, there will always be opportunities, right? In any kind of market, there is stuff which is. And do you think broadly, Rajesh, the market has changed in terms of what it will reward? So high PE, for example, did very well through the last couple of years, but maybe it has already changed, right? We're already, and it'll slowly start to show up everywhere. But which means that you've got to start to look at some ideas in the value space. Domestic-oriented companies, not too much dependence on China or the US, available at decent P multiples. And I'm sure there are those kind of opportunities as well. You'd like to take us through where to look?
Yeah, so no, you're absolutely right. Professionals like us will be telling you a lot more now that it's a stock-specific market. And again, I think this is a market which is getting derated. So the derating means that the companies with the highest PE, those are the ones that become risky. Even if they're delivering, they become the riskiest to own because, you'll have a drawdown in terms of price earnings as well. So now when you say stock specific, what does it mean? It means that, you should have some downside protection in terms of valuation. You should have greater predictability of execution. And that's really what it means, that you need to be a little more stock specific. And like I pointed out, I think telecom, IT, private banks, insurance. Of course, I have some digital commerce companies as well.
Right.
They add to my growth rate as well.
Okay, we'll have to leave the conversation here. But IT, telecom, insurance on your buy list and some digital commerce companies. But it's over to Shireen now. She's at the World Economic Forum at Davos. She's in conversation with Fateh Barot, the Executive Director of the International Energy Agency.
Welcome back. Greetings from a very, very cold Davos this morning, and it is snowing as you can see. Joining me now for a perspective on the energy and commodity markets is Fatih Birol of the IEA. Mr. Birol, always a pleasure. Many, many thanks. It's snowing here in Davos. But what's the outlook now as far as the energy markets are concerned in 2025, given all the developments that have taken place?
Yeah. No, huge geopolitical tensions around the world, but when we look at the markets, the market fundamentals, supply, demand, and price, normally we should expect a comfortable year, 2025. In terms of oil, for example, demand of oil is getting weaker because of Chinese economy slowing down mainly, and a lot of electric cars coming in the picture. And in terms of the production, we see huge amount of oil coming from US, Canada, Brazil, from the Americas, American continent. And as a result, we expect, as we said also last year when we were here, a more comfortable market. And as you know, in the Middle East there is a war, and oil prices are still $70 in the past. Remember, when there was 1/10 of this tension or conflict, oil prices rocketed up, and therefore comfortable oil markets, and same for natural gas markets, especially starting from 2026 and beyond, because again, huge amount of LNG coming from US and Qatar, 2026, 27, 28, and the countries like India, major LNG importers, should make their calculations according to the new wave of LNG supply coming from these countries.
Well, I'll talk to you about the LNG supply in just a second, but let's talk about the implications and the impact of what's happening with sanctions on Russia and how that's expected to play out as far as the energy markets are concerned.
So the sanctions on Russia, how far it will go and how long it is going to last is still not clear. And it's also not clear if there will be additional sanctions and at which level to Iran. This can have an implication for the oil picture I have highlighted. But leave aside these geopolitical issues, when we look at the market fundamentals, I expect 2025 would be a rather comfortable market.
A comfortable market as far as oil prices are concerned in 2025, given the supply-demand dynamics.
Like 2024 last year.
Like 2024, absolutely. But let's talk about the promise that President Trump is making now and how that could potentially impact the energy markets as well.
So these are very new announcements coming from the United States. We need time to see how these are going to affect the markets. One needs to look at it and study the impacts.
Absolutely. Assessment required at this point in time. India. Let's talk about India. We've got the India Energy Week coming up in February as well, both in terms of the market, also in terms of renewable capacity and the aspirations that India has. How are you looking at the story today?
India's economy needs to grow, continue to grow at a good pace. India is a very important member of the international community and has obligations for addressing the environmental issues as a developing nation. But in that context, I expect India Energy Week will be very important, especially highlighting the growing role of clean energy playing in India. According to our numbers, the clean energy investments in India 2024 last year increased by 40%, 40%. As such, India is one of the global leaders of clean energy investments around the world, especially for renewables. But my expectation from India is hopefully India will soon give an even more serious look at the electric cars.
More serious look at electric cars, but you also believe that 2025 is going to be a breakout year as far as nuclear energy is concerned. In fact, you put out a report saying exactly that. What's the case there?
Yeah. I mean, after the Fukushima accident in Japan, the appetite for nuclear around the world a bit died down. But 3 years ago, we said nuclear may make a comeback. And now, as of this year, 2025, I can confirm you that nuclear is making a comeback and a strong comeback. I give a couple of reasons for it. 2025, this year, the amount of electricity produced from nuclear power will be the highest in the history.
Okay.
We have never seen such a big growth. Second, there are, as we speak now, more than 60 nuclear power plants are under construction around the world, the highest number since 30 years, 3 decades. And the third one is small modular reactors are, according to our analysis, they are going to hit the market around 2030. So these, when I put all of them together, nuclear being a secure and clean electricity source, I see bright prospects for nuclear power.
And a breakout here in 2025, as you point out. But, let's look at some of the risks as well at this point in time overall, as far as the markets are concerned. You talked about electric mobility. You also talked about data centers and, of course, what AI is doing. What is that going to mean in terms of consumption and also meeting needs of some of these growing areas?
Now, AI will have two different roles in the energy system. On one hand, for the AI, for the data centers, to run them, you need electricity 24/7. So it will be another driver of global electricity consumption in many countries where there is AI. I work very closely with, for example, Infosys.
Yes.
We look at these issues very closely. This is one role. The second role is AI, the artificial intelligence, can help us to run our electricity systems in the most optimal way. AI can help us to find the most cost-effective way of battery chemistry, so then bring the price down. So, two roles for AI. On one hand, a real consumer of energy, and at the same time, on the other side, making energy use much more efficiently and energy production much more efficient and much more smart.
About India, we have them growing strong next year, consistent with what they grew this year. It's now moved to the 5th largest economy.
The Honeywell view on India, and how do you see the next few years?
Domestic business doing extremely well. Can't be more pleased in terms of opportunities in India.
It is, and there are lots of reasons for that. One is because he's in a much stronger position in the United States than he was in 2017.
They're working on AI. They're working on all the innovative capabilities that we want to input into our products. A lot of that's coming out from India.
If I were to say even heart and mind put together, India is an exciting story.
India is going to be the office of the world. You and I discussed about it.
First. So it appears that there could be some delay in imposition of tariffs, perhaps with the exception of Canada and Mexico. He did make specific reference to those two countries, and China is obviously an outlier as well. So we will see, but there is likely to be a delay in the imposition of tariffs.
Ladies and gentlemen, the President of the United States, the Honorable Donald John Trump, and Mrs. Trump.
Having witnessed another successful moment in the experiment that you have entrusted into the hands of the American people, we pray your blessing on our 47th President of these United States, Donald J. Trump, and Vice President James D. Vance.
and we are going to bring law and order back to our cities. This week, I will also end the government policy of trying to socially engineer race and gender into every aspect of public and private life. We will forge a society that is colorblind and merit-based. As of today, it will henceforth be the official policy of the United States government that there are only two genders, male and female. This week, I will reinstate any service members who were unjustly expelled from our military for objecting to the COVID vaccine mandate with full back pay.
Welcome back. You know what's happened in the last few minutes? A few stocks have come in for profit taking. So very quickly, let's pull up HCL Tech. That's moved lower. You have Nestle India as well. Now, these are stocks that are in the green. They have moved into the red. Even Hindalco has slipped a little bit. So a few of these names, they have come in for some profit taking. I think the IT index itself that was holding with strong gains, it's come off a wee bit from the top. And the Nifty Bank is down 120 points. Midesh Thakkar is back with us. Midesh, if you want to give a comment on the index and also a couple of trades.
The index has become very quiet. The weaker index is the bank Nifty. If it remains below 48,670, expect more declines to possibly 48,400, 250 zones. And therefore, I think, negative on banks. But a couple of IT names are quite positive and a couple of other cement names as well. So I have a BTST on UPL with a stop at about 553 for targets of 566. And the other one is a BTST on Wipro with a stop at 314.5 for targets of 324.
All right, Mitesh, thanks very much for that. Well, look at the market. It's actually come off about 50 points or so from the high point, maybe a little more, right? Just about 40 points left now on the index. The high today is 23,270, and we're about 70 points off the highest point. Market breadth is still positive, but 1,600 stocks are higher and about 1,130 odd stocks are lower right now. Well, let's talk about more stocks, right? Strides, the last I checked, was up some 7-8%. And this is ahead of OneSource's listing on the exchanges tomorrow. OneSource is the demerged business of Strides Pharma. Let's break it down a little bit with Vinny, who's standing by to tell us more. Vinny, over to you.
Yes, absolutely. Strides has spoken about, demerging its CDMO business. It's going to be spinning off of its demerger, this business of the company. And OneSource will be listing tomorrow. That's January 24, 2025 on BSE as well as NSE. Now, in terms of calculation, what had also happened previously, OneSource, for every one share that you're holding in Strides, you would get 2 shares of OneSource Limited. So yes, that is the swap ratio that was there. According to analysts, OneSource stake is worth around 638 rupees, which is for each share. And the value for the continuing business would be 850 rupees. So for OneSource, we'll be expecting somewhere around 600 rupees, while for Strides, it would be at around adjusted price of 850 rupees. That's according to what analysts highlight is coming in. So let's keep an eye out on both Strides as well as the listing of OneSource tomorrow.
Okay, all right, got that. Vinny, will watch out for this listing. We also want to get a quick heads up going on Dr. Reddy's. How is the performance expected to be in the third quarter?
watching out for this time, this is the first Nifty company that is coming in on, I beg your pardon, pharma company that is coming in with their numbers. Now, revenue, we are expecting a 16% growth in terms of revenue this time, EBITDA around 11% growth, while margins, some bit of a contraction is what we're expecting for margins. US sales expected to see a 10% growth YOY, but sequentially, the US sales are expected to be subdued overall for pharma as well as for Dr. Reddy's. So, US sales expected at $441 million this time. Top line growth, what will be driving it? That this time is the first quarter that they are going to be reporting numbers, including the acquisition that they had made of Nicotinell. So yes, including those numbers, we're expecting a growth of around 16%. Revlimid sales, that is what we'll watch out for because they're starting to now taper off, given that there's going to be a patent expiry that we're watching out for in 2026. So now the sales will start reducing for Dr. Reddy. So that's some bit of an impact of that. Now, other than that, domestic business is expected to do well, and that will be something that will be supporting the company's growth. So Sanofi vaccine licensing deal will support the growth in the domestic side, as well as the JV with Nestle is something that is expected to support the growth for the company. Watching out for commentaries coming in from the management. A launch timeline, especially for semaglutide in Canada, is something that is a key driver for the company going forward. And other than that, one or two large products that the company had indicated that they want to launch. So when is that going to be happening is something that we should watch out for.
Thank you very much for that. Zee Entertainment, which reports numbers later today, is seeing some big swings on either side. It rallied, then it fell. It's moved up again, 3.5% up on Zee Entertainment. And watch for Industars. That's another one that the street will be tracking in terms of numbers. Amrish Balika is now with us on the show. Amrish, before we get to the big movers of the day, tell us why Hindustan Zinc is on your buy list.
See, Hindustan Zinc is the largest and only integrated producer of zinc, lead and silver in India. Last quarter, in fact, they had the highest ever second quarter and half year for mined and refined metal production. The current capacity is about 1.2 million tons. EBITDA has been stable at around 50%, and they achieved the lowest cost of production in the last 4 years of US dollars 1,071 per metric ton. Now, silver segment contributes about 40% of the overall profitability, and now with the rupee depreciation, they'll again benefit further. From an ESG perspective and net zero commitment perspective, renewable power is about 70% of their total power requirement. And the new roaster should be commissioned this quarter, January-March quarter, and that should, in fact, increase the refined metal capacity further. They are also setting up a 510,000 ton fertilizer plant, which will be commissioned within a year, expected to be in Q3 FY26, and that should generate another EBITDA of about 450 to 500 crores. A great dividend yield company, it's paid about 1,10,000 crores of dividend in the last 10 years. So expected EPS for FY27 is about 31, and my price target is 650, which works out about 11 times EV by EBITDA. And again, we have seen a decent correction in the last month and a half. So I think it's a great level to start buying.
Okay, all right. Amrish got that. Stay on. We'll come back with more questions. We do have to take a very quick break. Back with more market talk in just a bit.
To stop our warriors from being subjected to radical political theories and social experiments while on duty. It's going to end immediately. Our armed forces will be freed to focus on their sole mission, defeating America's enemies. Like in 2017, we will again build the strongest military the world has ever seen. We will measure our success not only by the battles we win, but also by the wars that we end, and perhaps most importantly, the wars we never get into. The golden age of America begins right now. From this day forward, our country will flourish and be respected again all over the world. We will be the envy of every nation, and we will not allow ourselves to be taken advantage of any longer. During every single day of the Trump administration, I will very simply put America first. Our sovereignty will be reclaimed. Our safety will be restored. The scales of justice will be rebalanced. The vicious, violent, and unfair weaponization of the Justice Department and our government will end. And our top priority will be to create a nation that is proud, prosperous, and free. America will soon be greater, stronger, and far more exceptional than ever before. I return to the presidency confident and optimistic that we are at the start.
Welcome back. Well, Amrish Baliga is still with us. Amrish, I wanted to ask you if you're tracking Syngene. It came out of the set of numbers. The stock has seen a sharp up move. Your take?
Nigel, I don't track Syngene, so a bit difficult for me to give a comment on that.
No worries. What about RBL Bank? You know, it came out of the set of numbers that looked rather disappointing, and, you know, they're scaling back in what they promised earlier as well. But the stock hasn't cracked. Maybe because it's been such a big underperformer, but it's not fallen below the price, you know, ahead of its numbers. It was at around 155, 160 odd. It's holding in that band. How much of the bad news is in the price? Would you look to buy it, or would you just stay away?
No, in fact, we've seen a major underperformance from RBL, and I mean, it was correctly so, because sort of a performance which we have seen, the asset quality issues. But then it seems that they're trying to put the house in order, and they really can't do that within a quarter or two. So I think we need to give them at least another quarter more. So at these levels, I would keep a close watch, no doubt, and it would be on my buying list. But then I would still wait for a quarter more and then decide. But then from these levels, I really don't see a major downside, unless, of course, there is a major negative surprise in the next 1 or 2 quarters, which I don't expect. So clearly, I'll keep that on the buying list, but not buy right now.
Okay. Amrish, hi, good afternoon. Ultratech, what a performance, right? Do you think this is something individual and specific to Ultratech that they've pulled off this fantastic show? Or do you think it could be a sign of things to come for other major cement players as well? And would you position for it? Would you buy anything right now, either Ultratech or any other stock?
No, see, as of now, it seems it is only as far as Ultratech is concerned that they've actually pulled out such a decent performance. Because overall, if you look at cement, I think most of them are under pressure as far as the margins are concerned. I mean, again, if you see the sort of execution which had happened as far as the infra was concerned, like last year, it was much below expectations. And again, this year we will have at least 8 to 10% sort of a rise in the budgeted outlay. That's what my expectation is. But more importantly, I think the execution will actually take off this year, and that's going to help all the cement companies going ahead. So with a sort of, a performance which Ultratech has shown, clearly I think it's going to outperform going ahead. But at the same time, I would also look to buy other cement companies. I mean, again, something like a Nuoco, which came out with pathetic earnings, it again corrected today. I think that's a buying opportunity.
Midcap IT, would you go out there and buy a Zensar, Coforge or Persistent, or avoid?
With the sort of a move which we've seen in Coforge, possibly I'll wait for some time to buy. But yes, I think IT space overall, should be bought because again, when you look at what President Trump has been saying, that they need to make America great again, but they can't make America great again without Indian IT personnel and the companies. So they can't afford to ignore us. So going ahead, at least the next foreseeable, 2 to 3 years, I see things like improving much better for the IT space. And we've seen underperformance from most of the stocks. So I think it's a great buying opportunity. So, if you're looking at the large caps, I would still go with Infosys, TCS, and HCL Tech. And yes, among the mid caps, yes, something like a Coforge, but again, after a correction.
Any view on hospitals, Ambrish? Name like Yatharth, which is sort of the flagship hospital, I think is in Thane, Rainbow, based out of Hyderabad. They've all corrected steeply, and generally the idea seems good. I mean, in terms of if you look at healthcare costs and spending, etc. But have you looked at these businesses?
That's true. Yeah, in fact, I had given a buy on Yatharth, but after, whatever we've been hearing now in the market, I would be a bit cautious as far as this company is concerned. But overall, if you're talking of the hospital space, overall, clearly the spends are going up. Indians are able to afford more thanks possibly to the healthcare insurance which is there. So overall, the spends are going to increase because if you look at the sort of inflation which has happened in the healthcare space, that's at 2x to 2.5x of the normal inflation. And the way I see it is that's going to continue at least in the foreseeable future. So hospital space is clearly the place to be in.
Okay. When you said hearing things in the market about Yatharth, what do you mean, Ambrish?
There were certain controversies. Again, I won't like to elaborate on that. But then since there are rumors as far as those controversies are concerned, I would prefer to possibly stay on the sidelines for the time being.
I see. That's important. We'll look up, Ambrish. Thank you for that. But, stay with us as well. And we'll continue this conversation on the other side. Just want to wrap up things. We're down 50 points on the Nifty, 23,200. Decent kind of close. Yesterday it was about 23,100 and today 23,200. So slow and steady, but not falling anymore. The Nifty Bank down about 1/3% by close and 1 3/4 in the mid-cap index, small-cap index about 1% higher is essentially what we saw.
Well, in the large cap space, Ultratech Cement, top gainer, up nearly 7%. Grasim, Wipro, Shriram Finance, Eicher Motors, Sun Pharma, these stocks were up anywhere between 2 to 2.5%. On the whole, autos had a decent day because it wasn't just M&M, but even an Eicher Motors ended up in the green. Tata Motors had a gain of 1.5% and Hero Motor closing up more than 1%. On the way down, BPCL post numbers under pressure. HCL Tech has been the weakest large cap IT earnings so far, and that continues to come under pressure. Kotak Mahindra Bank, weak. SBI, Reliance Industries, that heavyweight tanked in trade, and HUL. Also on the red, ending in the red but off the high lows.
Yeah, and it's a good day of recovery for the mid-cap. Second day running, we've seen that recovery continue. Pidilite on the back of decent numbers, 5.5% higher. Swiggy managed to make a comeback as well, 6% higher. Zomato was up about 2% as well. These are areas where there's been a lot of price damage this week. Today was a day of recovery, and you can count in the entire EMS space in that light as well. So whether it's stocks like Amber or Dixon or a PG Electroplast, largely speaking, there were gains for most of these companies, Canes, etc. Most were up and about in positive territory. But the day has to belong to mid-cap IT, thanks to some sparkling numbers that we've seen from the likes of Coforge. That stock's ending up about 11.5% on the higher side. The Zensar, 12% up. It took the entire pack up with it, actually. Sonata Software, 6% higher. So big day of gains for many of these companies. And finally, another trend, there's some buying re-emerging in PSUs and on decent volumes as well. So your NMDC, SJVN, RVNL, SAIL, BEL, some sparks of green on most of these stocks as well. Good day of recovery for mid-caps, almost 1,000 points up on the mid-cap index. Well, with that, it's curtains on this edition of Closing Bell. Thank you for being with us, but don't go anywhere else because we have Markets Forward coming up next in just a bit.
Era of national success. A tide of change is sweeping the country. Sunlight is pouring over the entire world, and America has the chance to seize this opportunity like never before. But first, we must be honest about the challenges we face. While they are plentiful, they will be annihilated by this great momentum that the world is now witnessing in the United States of America. As we gather today, our government confronts a crisis of trust. For many years, a radical and corrupt establishment has extracted power and wealth from our citizens while the pillars of our society lay broken and seemingly in complete disrepair. We now have a government that cannot manage even a simple crisis at home, while at the same time stumbling into a continuing catalog of catastrophic events abroad. It fails to protect our magnificent, law-abiding American citizens, but provides sanctuary and protection for dangerous criminals, many from prisons and mental institutions that have illegally entered our country from all over the world. We have a government that has given unlimited funding to the defense of foreign borders, but refuses to defend American borders or, more importantly, its own people. Our country can no longer deliver basic services in times of emergency, as recently shown by the wonderful people of North Carolina, been treated so badly. And other states who are still suffering from a hurricane that took place many months ago. Or more recently, Los Angeles, where we are watching fires still tragically burn from weeks ago without even a token of defense. They're raging through the houses and communities, even affecting some of the wealthiest and most powerful individuals in our country, some of whom are sitting here right now. They don't have a home any longer. That's interesting. But we can't let this happen. Everyone is unable to do anything about it. That's going to change. We have a public health system that does not deliver in times of disaster, yet more money is spent on it than any country anywhere in the world. And we have an education system that teaches our children to be ashamed of themselves in many cases, to hate our country despite the love that we try so desperately to provide to them. All of this will change starting today, and it will change very quickly.
Sensex Nifty end a range-bound session with moderate gains. Mid-caps lead with the index gaining close to 2%. IT and consumer stocks gain while financials lag during the day.
Ultratech Cement climbs after reporting a good Q3. Net profit, however, declines, but higher than street expectations.
Coforge, Persistent Systems and Zensar soar over 10% each in trade after reporting third quarter numbers. Other IT stocks like Wipro, Tech Mahindra also climbed. TCS slipped in trade. Hello and welcome to a fresh new edition of Markets Forward, your go-to program where we aim to get you everything you need as we prepare you for the next trading session. Today has been a day for repair and some recovery. I'm Prashant, with me, my colleague Rima. Rima, hi.
Hi, especially in the broader markets, right? Because yesterday, frontline indices did well, it recovered, but the broader markets were still struggling.
And I think you just see the bunch which has done a little better, EMS, for example, right? I mean, those have been the poster child on the way up and on the way down as well. And I mean, Dixon, Amber, Keynes, everything came up. But these are small recoveries, 4-5% after the falls that we've seen lately. But I mean, it's, but it's good because we just had a one-way kind of a free fall and that kind of got arrested. So yesterday on the Nifty, at least we crossed 23,100. Today we ended above the 23,200 mark. Again, it's slow, it's tentative. I mean, everyone kind of looking over their shoulder whether there is another wave of selling. And generally, I mean, if you to speak with market technicians and those who look at price charts and that kind of thing, the consensus is that, well, the broader trend is still down. It's not turned up. And eventually around 23,400 or so, you'll see another wave down. But, consensus and markets typically don't go that way and they find a way to do something else. But having said all of that, I think generally a better session, much better session. Broader market breadth was much better as well. So lots of groups of stocks which saw some recovery. But I would still say you've got to just take it day by day because, it looked very, very precarious and looked like we would go straight, break 23,000. We did break 23,000 and go and sort of made a new low. But so far over the last 2 days, actually today and the last 1 hour or so, we've managed a slightly better showing. So 23,205 the close on Nifty today. Rima.
The Nifty ending above the 23,200 mark. On the way up, it's Ultratech Cement, Grasim, IT names like Wipro, Tech Mahindra seeing buying, and then auto names like Aisha and M&M. On the way down, BPCL and HUL ending lower post their numbers. Kotak Mahindra Bank and Axis Bank. The Nifty Bank also ending with a cut of more than 100 points, 135 points lower, and Reliance Industries fell nearly 1%, exerting its pressure. Let's tell you what we have for you on our show today. We start with the top movers and shakers of the day with Vivek. IT stocks in focus, particularly mid-cap IT names. Zensar, Coforge, Persistent taking the spotlight on the back of Q3 numbers, and Ultratech Cement was the big winner today. We'll get you the key snapshot of all the earnings, and then we'll tell you the key events to watch tomorrow. But first up, it's over to Vivek now. He's at the big wall with the top stock movers.
Well, thank you so much for that. A much better day compared to the kind of sell-off that you saw yesterday, and the breadth too very strong. First in the list of gainers has to be the entire cement pack after the very strong set of numbers that came in from Ultratech Cement, up over 6.5%. All of the cement stocks today managing to end with strong gains. Grasim, Ramco, Shree Cement, all of them moving higher in the session. The next set of stocks, something that you alluded to earlier, is the entire mid-cap IT space. A lot of these stocks doing very well in the session. Persistent Systems, Coforge, Zensar Technology, the one that we're discussing, Birlasoft, Emphasis, all of these stocks ending with very, very sharp gains. From the cable and wireless, wired companies, a lot of these companies that actually saw a bit of a sell-off today saw a sharp rebound. KEI Industries, this particular name, a relative outperformer versus peers, ended higher by over 8.5%. From the insurance pack, Go Digit, very strong set of numbers. Non-motor insurance growth growing significantly over there, and that stock, at one point of time, was pushed at the upper circuit, cooled off a little bit towards the last hour of the session, but over 12% higher. And lastly, Pidilite, inline set of numbers, underlying volume growth, very strong over there. Stock ended higher by over 5%, but quite a long list of losers as well. BPCL, the top Nifty laggard, expectations were that it would be a good quarter for the company, but very high LPG under recoveries and earnings disappointed the street. From the cement pack, while most of the stocks did quite well, Nuvoco Vistas, this particular stock, kind of disappointed and spent most of the day under pressure today. And Tata Communications, one of the top laggards as far as the F&O space was concerned, and this particular stock too cooled off quite significantly in the session. Tata Communications is the one that we're discussing.
Let's get in Ambrish Baliga and Richard Jain of Motilal Oswal Financial Services joining us on the show. And Vivek, thank you very much for that. Richard, do you expect this recovery to continue in the, at least in tomorrow's trading session? What's the price action telling you?
Hi, everyone. Well, if you look at last 3.5 months, our markets had primarily collected when the US 10-year government bond yields have gone up along with the dollar index. But in last 3 or 4 trading sessions, we have seen a cool off from the highs in 10-year bond yield as well as in the dollar index. Now, if you look at the Nifty chart, the Nifty is trading around its trendline support, which is around 23,000 to 22,900. So I think from a risk-reward ratio perspective, the downside seems to be very limited from a near-term perspective. At the most, this 200, 300 points down move could be there. But the kind of positioning that even FIs have, with about 83% positions on the short side, and with some cool-offs in the bond yield and the dollar index, we are of the opinion that the markets are set in for a pullback move before the budget. So the downside, I think 23,000 would become a good support base, at least for timing. Too early to call it as a bottom, but at least a relief rally could be seen in the near term. So we are advising traders to look for buying opportunities now from a short-term perspective, maybe till the event, at least for next 1 week's perspective, where we could see a rally first towards 23,500, followed by 23,800.
Okay, and Ruchit, quickly just list out the names. We'll talk about those in greater detail, but what's the best way to play this move that you were expecting?
Also, I think large or mid and large cap names would take the leadership. And amongst these, if I just have to choose some, then Bajaj Twins looks quite possible, quite positive, because in the recent corrective phase, we have seen a good relative outperformance where the market was falling, but Bajaj Finance, Bajaj Finserv have not seen any price-wise correction. The up moves have also been supported by good volume. So Bajaj Finance can be bought over here. We expect target somewhere around 7,800 on the higher side. Apart from that, IT names have already been doing well. So I think IT would continue its leadership on the higher side.
Okay, Bajaj Twins, IT maybe. We'll come back, Ruchit, in a bit. Now, Ultratech was turned out to be the stock of the day, and it started late but ran ahead and quickly so, reporting a good set of third quarter results. Nigel is here with details. Nigel.
Well, Ultratech's numbers were blockbuster, actually. It came out in late trade and it surprised the street positively. So, give you a few numbers on the top line itself, there was a beat of close to around 150 crores. The encouraging part, though, was on the EBITDA performance, and that beat estimates were close to around 100 crores, better than expected margins and profitability as well. How come they came about this beat? Couple of factors. One is on volumes. The growth was close to around 10%. The street was bracing for a number of around 8 to around 10%. So that came in at the upper end of what the street was working with. Next up, in terms of realizations, it is expected to be a bit softish. Quarter on quarter, it was, on a year-on-year basis. And on a year-on-year basis, it was down by close to around 10%. While on a sequential basis, well, it was down close to, it was up by close to around 1.5%. So that was par for the course. The reason for the beat was better than expected volumes, and energy costs did cool off for them. And that's why, in fact, the street liked it very much. In addition to this, management was quite confident. They said that urban as well as rural demand will come back. Government's focus on capex as well will help. And that's why they're talking about a 7 to around 8% volume growth going ahead. So put everything together. Big beat in terms of profitability. EBITDA per ton improves by close to around 250 rupees per ton. The street liked those numbers. Send the stock flying higher. Back to you.
It's 6% higher, 7% higher on Ultratech. Ambarish, a quick word on Ultratech and the rest of the cement pack from here.
I mean, like I was talking a bit earlier on the same subject, I think it's a great time to look to buy cement companies because going ahead, at least the next foreseeable next 4 quarters, I really see the execution taking off as far as the infra projects are concerned. So I think there'll be a decent volume growth for the cement companies. But then more importantly, I think we'll also see margins like coming back to normal. So that should be a big booster across. And other than Ultratech, I would surely look at Nuvoco, which again had come out with decently bad results. So it has disappointed, but I think it's an opportunity because going ahead, I think the next 3 to 4 quarters should look better for Nuvoco.
Let's get to the mid-cap IT sector. Stole the show, names like Zensar, Coforge, Persistent, and here it's on the back of numbers. So let's get to them. Zensar reported growth in Q3 versus expectation of a revenue decline because for the last 2 years in Q3, the company has been reporting negative revenue growth on account of furlough seasonality. So this quarter, 0.7% sequential revenue growth, 7.5% on a year-on-year basis, and the highest ever order book. The street rewarded Zensar. But the other two names, Persistent and Coforge, deserve mention because these are outperformers not just in the last 1 year where stocks have risen nearly 50%, but over the last 3 years where names like Persistent have gone up by nearly 180%. And the reason is quarter after quarter, these companies continue to deliver on growth. So while the rest of the large cap and even some of the largest mid-cap IT companies have reported growth rates which are flat, 0.1%, 0.2%, Coforge tops the chart with an 8.4% revenue growth. Their organic revenue growth was more than 9%. And you have Persistent in a difficult quarter reporting a 4.6% revenue growth. The sustainability, the fact that these companies quarter after quarter continue to give you robust, sustainable growth is why they're trading also at very expensive valuations compared to the rest of the pack at about 40 to 50 times PE, much higher than the rest of the IT pack, which is at 20 to 28 times. Also, the prospects for these companies are very strong. Coforge is confident of sustained robust growth. Persistent is now calling out a $5 billion revenue target by FY31. So they're laying the roadmap for continued growth, at least for the next 5 to 6 years. In fact, let's listen in to one of the managements, the CEO of Coforge, Sudhir Singh.
ये परफॉर्मेंस जैसे आपने शुरू में भी बोला था सिर्फ इस क्वार्टर में सॉलिड नहीं रही है पिछले 7 साल का रिकॉर्ड हमारा बड़ा रोबस्ट है ग्रोथ डिलीवर करने का पहली चीज हमने इस क्वार्टर में 4 लार्ज डील साइन करी दूसरी चीज हमारा नेक्स्ट 12 मंथ साइंड ऑर्डर बुक आज इस क्वार्टर के एंड पे 1.37 बिलियन डॉलर्स है जो कि इसी क्वार्टर लास्ट ईयर के मुकाबले 40% से ज्यादा ऊपर है.
That's the Coforge CEO saying the order book for the next 12 months is up 40% on a year-on-year basis. But Ruchit, a quick word on the charts of these IT companies, mid-cap IT, anything that you like?
I think all 3 companies have very strong price volume action today. And in fact, even if you look at the medium-term trend, then the trend seems to be quite strong. So I think that Coforge is the strongest one because if you look at the recent past as well, the price up moves had good volumes. On corrections, we don't see any volume-based sell-off in the stock. So I think it's just a continuation of the uptrend that we can see. And if one can see it from a bit mid-term perspective, maybe next 1 quarter or so, then we can expect levels around 10,300 to 10,500 on Coforge.
So Coforge is the best placed because you were saying IT is maybe a hunting ground for ideas. Rujit?
Yes, I think IT, if you look at the entire IT pack, then there has been a good relative outperformance when the other segments in the market were in a corrective phase. And what we can see that when the results are good, the price volume action is quite strong over there. So this clearly indicates a good buying interest over there. So yes, this outperformance is likely to continue in the IT space.
Okay, Ambrish, anything interesting out of the space? IT?
Yeah, I think both these stocks are quite interesting, Coforge as well as Persistent. And I mean, clearly they're getting that premium due to the sustainable growth which they have shown. And now with the things looking up for the IT space overall, at least the foreseeable 4 to 6 quarters are looking extremely good. I think these are the ones which will lead. But then something like a Coforge, the way it has moved up today, I would possibly wait for some correction before I get in.
Okay, all right. Now, another story. Karnataka's governor has returned a minerals rights tax bill to the state government, seeking clarification from the state. Sudarshan is here to tell us why this is important for names like NMDC, JSW, even Vedanta. So take it away.
So last month we had reported that Karnataka government has passed mineral tax bill mentioning 2 major clauses. First one was retrospective tax on mineral land and mineral rights, and that would be implemented retrospectively as per Supreme Court order. And second, Karnataka government's plan to increase the duty on mining. Now we have been communicated from Karnataka governor's office that Karnataka governor has returned the bill to government asking certain clarifications, and these clarifications have been sought after some of the mining associations have approached governor raising certain concerns on these 2 major clauses, that was retrospective tax and increase in duty. And after this, governor has sought clarification. Remember, few weeks ago, even Union Steel Minister S.T. Kumaraswamy had met Law Minister and NMDC discussing this issue and how to convince the state government to take this bill back, because as per Steel Minister, if Karnataka government goes ahead and increases the duty, it will impact both mining companies and steel companies. Stocks that will be in focus, first one is NMDC, because of total mix, 35% is formed by Karnataka. Second, JSW sources major quantities of iron ore indirectly from NMDC. And third, Vedanta and Sandur Manganese are 2 major producers. But lastly, keep this thing in mind. It's a normal process for any governor to send the bill back if he or she needs certain clarifications from the government. The only reason we have been highlighting this because this bill is very important for these mining companies.
All right. So thank you very much for that. It's the center. Governor one side, state, of course, on the other side, different governments as well, the center and, of course, the state of Karnataka at this point in time. Ambrish, any quick thoughts on the story?
Yeah, see, I mean, the tax on mineral rights was a major negative, and because of which we've already seen most of these stocks correct, including NMDC, which was affected decently badly. So if there's a rethink or a dilution on that, I think that should be positive. So I really don't see much of a downside from here. But in case there's a dilution, I think we can see a decent bounce back.
Okay, all right. Stocks actually, I mean, names like NMDC, etc., have come off pretty sharply. High was $100, 70 odd rupees now. So yeah, I mean, have taken a bit of a knock, even names like Vedanta, etc. Well, Ambrish and Rujit, thank you very much for joining us. A quick chat there on a variety of stocks and sectors. We take a break. We are back after a quick break. We'll tell you the corporate voices that you heard through the course of the day here. We'll tell you the events to watch tomorrow as well. Stay tuned.
My recent election is a mandate to completely and totally reverse a horrible betrayal and all of these many betrayals that have taken place, and to give the people back their faith, their wealth, their democracy, and indeed their freedom. From this moment on, America's decline is our liberties and our nation's glorious destiny will no longer be denied, and we will immediately restore the integrity, competency, and loyalty of America's government.
Welcome back. You're watching Markets Forward, and in our corporate corner today, first up is BPCL. The management anticipates a slight premium for crude due to the Russian sanctions, and they could have to pay an extra $2 to $3 per barrel. The company did see an improvement in gross refining margins despite volatility and refinery shutdown, which they expect to end this fiscal year with gross refining margins of $6.50 per barrel. Further, they are also hopeful of LPG under recoveries being compensated by March.
Okay, well, next is Polycab. The management says that Q4 is typically better than the other 3 quarters. The switch gear segments are more profitable compared to others. They've also guided for between 11 and 13% EBITDA margins for FY25.
And before we wrap, we'll bring you the key market events to watch for tomorrow. Abhishek is here with that.
Well, Rima, to begin with, RBI will be giving out data with respect to momentum of business for banks. So bank loan growth and deposit growth data will come out. Deposit growth last time was around 9.9%, while credit growth was around 11.2% last time around. Forex reserve data will also come out. Last time it was around the $626 billion mark. Watch out for USA existing home sales. That is estimated to come out at 4.19 million versus 4.15 million last time around. Stock that will go ex-dividend, DCM Shriram interim dividend of rupees 3.6, and stock that will see its face value get splitted is Insulation Energy from rupees 10 to rupee 1. Results season is going on, so watch out for key results tomorrow. Shriram Finance, JSW Steel, Godrej Consumer, AU Small Finance Bank, Torrent Pharma and Credit Access Grameen. Watch out for results on Saturday, the big one being ICICI Bank, IDFC First Bank, Yes Bank, SBFC Finance, as well as JK Cement and Macrotech Developers. Back to you.
All right, Abhishek, thank you very much for that. So it's going to be another sort of, it's going to be a packed Friday, let me put it that way, although it's the last day of the week. Well, it's a wrap on this edition of Markets Forward. But as we go, let me leave you with Growth Code, a collaborative initiative by Grow and CNBC-TV18. Our mission is to equip you with valuable insights and strategies to navigate the markets and make informed investment decisions. Today, we help traders understand the difference between high-frequency trading and algorithmic trading.
Algorithmic trading and high-frequency trading, or HFT as we know it, they're often confused, but they're different. They use computer algorithms, both of them, to execute trades, but the key difference between the two is in speed and strategy. On the one hand, algorithmic trading uses algorithms to automatically execute trades based on set rules like price, there could be volume, time. It aims to trade efficiently to reduce human error and improve the accuracy of those trades. Now, this can involve various strategies such as order routing, market making, or even arbitrage. It's commonly used by institutional investors, hedge funds, and some individual traders as well. High-frequency trading, on the other hand, is a subset of algorithmic trading, focused on executing trades at incredibly fast speeds, sometimes making millions of trades in fractions of a second. The goal here is to capitalize on any tiny price movements that last just nanoseconds or microseconds. The main difference here is speed. Algorithmic trading can execute trades at various speeds, but HFT is all about speed, processing thousands of trades every day. HFT targets short-term gains by exploiting small price changes, whereas algorithmic trading may involve fewer, slightly longer-term trades. Is it suitable for retail investors? Well, for algorithmic trading, it is accessible by various platforms offering automated trading tools, making it useful for individual traders. However, HFT typically requires massive investments in technology and resources, making it out of reach for most retail traders. In short, HFT is a fast-paced subset of algorithmic trading, which encompasses both short and long-term strategies. In short, all HFT is algorithmic trading, but not all algorithmic trading are HFT.
Global growth. What's the outlook? What's going to be the outlook as far as inflation if President Trump follows through on his very aggressive plans as far as tariffs are concerned? What happens to U.S. inflation? What happens to the dollar? Those will, of course, be big questions. What happens to emerging market flows? Those will, of course, be the big questions here in Davos. It's been over 2 decades of tracking the global power shifts at the World Economic Forum. Starting from our first story reported 20 years ago to last year's groundbreaking coverage of the world's most important economic event. From discovering era-defining ideas to connecting you with the world's visionary thinkers and doers. From decoding blueprints for growth to driving collaboration to make a better future. We've been bringing you a wealth of information through 20 seasons. Tune in to Davos Diaries at Davos 2025, live and exclusive on India's most trusted business news platform, CNBC-TV18. From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 Budget Headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
Markets are betting big on affordable housing. You look at the kind of stocks that have risen.
Hello and welcome to Business 360. I'm Arundhati Ramnan and these are the top headlines that we're tracking for you this evening. Sensex and Nifty end with minor gains after a shaky start. Mid-caps and small-caps outperform, regaining lost ground after the recent sell-off. Crude oil prices remain on a tight leash as investors await Trump's proposed tariff measures. The head of the International Energy Agency says the energy market will be comfortable in 2025. Ultratech Cement beats estimates in the third quarter, even as profits declined 16%. Management promises sustainable volume growth of over 7%. Stock rallies in trade. A joint bid by Mazgaon Dock and Germany's ThyssenKrupp likely to qualify for the Indian government's 70,000 crore rupee submarine project. Sources say a defense ministry panel has rejected the bid by L&T and Spain's Navantia. A final decision is yet to be taken. Karnataka governor returns a bill to the state government which proposes additional taxes on mining companies. Governor's office seeks clarifications from the Congress government. Union Steel Minister had also flagged concerns about the new taxes along with the industry. Legal reprieve for WhatsApp company law appellate tribunal stays competition watchdog's order, halting the company from sharing data with its parent Meta, but the tribunal orders WhatsApp to cough up 50% of the 213 crore rupee penalty within 2 weeks. India's consumer protection watchdog issues a notice to Apple over alleged iPhone performance issues after the latest software update. Minister Prahlad Joshi says the notice was issued after examining consumer grievances. India is open to the legitimate return of undocumented Indian nationals from the United States, says External Affairs Minister Jaishankar in Washington as Trump administration gears up for immigration crackdown, but also calls on the U.S. to expedite visa approvals, saying a delay of 400 does not serve the relationship well.
OpenAI co-founders and now bitter rivals Elon Musk and Sam Altman clash on social media after Donald Trump announces a $500 billion AI joint venture. Musk says SoftBank doesn't have the money power to fund the project, calls Altman a swindler. Altman takes a dig at Musk, says what is great for America isn't always what's optimal for Musk's companies.
Welcome back. The conversations continue here on a very cold Davos. We've literally been caught in the middle of a snowstorm over the last hour or so. And joining us now here is Parth Jindal to take us through what the outlook looks like for the cement and the paints business, and more importantly, their plans on the EV side as well. As you heard from Mr. Sajjan Jindal here on CNBC-TV18 in Davos, they hope to put their first car out in the market in 18 months from now. Parth, many thanks for joining us here in Davos. Let's start by talking to you about the outlook as far as cement is concerned. In terms of demand and consumption, what's the story looking like at this point in time? Because there has been some softness.
Yeah, no, it's been a very tough year, I would say. The first 9 months of the year, due to, I guess, the general elections and a lot of state elections and the change of, ministries and all, the infrastructure spending that was supposed to happen has not happened. Government had allocated 11 lakh crores for infrastructure, and as per November end, only 46% of that had been spent. So we do think that the government is going to try and make up in the fourth quarter. But even then, it's going to be well short of the 11 lakh crores. Now, with everything having settled down, we are seeing the demand coming back to normal. December as a month was strong, and we do believe fourth quarter will be strong from a demand point of view. Obviously, from a competition standpoint, things cannot get more intense as they are right now. So because of competition intensity, there's a lot of jostling of market share.
Yes.
It doesn't really move the needle much, but everyone thinks that they're moving the needle. And that's keeping prices at a very subdued levels.
So, let's talk about competition, and let's also talk about consolidation. Don't you want to be a part of any of the deal making that's going on?
No, of course. I mean, we were in the race for Wholesome.
Yes.
We tried very hard, and it went somewhere else. But for our company, which is a relatively young company, we've just got the approval to IPO the business. We are, I would say, the 9th or 10th largest cement player in the country at around 21 million tons now. I think the trade-off is buying versus building. And, because of the competition intensity, people are paying a very high price or I would say, more than replacement cost for acquisitions. And also in some geographies which are not really value accretive. If you look at South, it's already oversupplied and there's been so much consolidation and there's more going to happen. So we as a company want to become a pan-India player. And if I spend resources in acquiring something, then my own organic plans will take a back seat because I don't have the balance sheet to really go for both. So we're going to IPO. Once we IPO, then I think with the liquidity we'll get, we could look at entering the competition for these assets.
So, as and when you IPO and you look at possibly picking up assets at a price that makes sense to you and that is economically viable as well, any specific geographies that you intend to focus on? Because as you pointed out, the South is already oversupplied.
Yeah, I think there's a lot of excitement and a lot of interest in the Northeast. I think with the announcements that have been made by the Honorable Prime Minister and the kind of infrastructure work that's going to happen, I think that's a very attractive market. I think the North remains very attractive in general, with the demand-supply situation being the closest in terms of there is not much overcapacity there. So North remains exciting, and Central. So as an organization, as a company, we are today present in the South, the West and the East. Now we're looking at entering the North, the Northeast and Central. I think these three areas, we expect growth to outpace the rest of the country.
Yeah, and anything there on the radar as far as possible targets are concerned?
I'm not sure. I think we all saw the news with Star Cement and
Yes.
what's happening there. There are some other companies in the Northeast as well, I think, looking at solutions. In the North, I think everyone is doing really well. So unless you overpay, you're not going to get something. So I think you have to build. And there could be some residual assets of JP available. There could be others as well. So in Central. So we are studying everything, and as soon as our IPO is done, we'll look at that.
So let's talk about the IPO. What's the debt at this point in time as you move forward with hitting the market?
We are at about 4,000 crores of net debt as a company, and once we IPO, some of the proceeds will go towards paring down the debt, but most of the proceeds are going towards our greenfield project in Rajasthan, where we're building a 5 million ton plant in Nagaur, where work has already begun.
Okay, so what will that 21 million tons be over the next few years, since you are talking about betting on building yourself?
Yeah, so over the next 3 years, we have a plan to get to 40 million, and then after that to get to 60. So currently, with the limestone mines and deposits that we have acquired through the e-auction process and all the brownfield and greenfield sites that we have in place, we have a roadmap to get to 60 million. The ambition is to be a 100 million ton player, but that's more medium term. And in order to go from 60 to 100, we will need to look at inorganic opportunities as well.
So 260, you'll be able to do it by yourself?
Yes.
Organically?
Organically.
And 60 to 100 is when you will possibly look at inorganic opportunities as and when they present themselves at the right price.
Absolutely. No, I think during the journey of going from 20 to 60, we can get to 60 on our own. But during that journey, I'm sure some inorganic opportunities will come up. And then we will have to, take that on and pause a little bit of our organic plans. Unless the balance sheet can support both, then we'll do both.
You talked about prices. Mr. Gadkari is back again making his comments as far as cement cartelization is concerned. He's been saying this for the last several years now, in fact, going back at least a few years. How do you respond to the charge that there is cartelization within the cement sector? And this is something that the Competition Commission has not just looked at, but has also delivered a verdict on previously.
So I can't comment on what's happened in the past, but right now I can tell you that the cement industry has been given a very bad image for no reason. If you look at the CAGR of price growth in the Indian cement industry over the last 10 years, it's less than 1%. In fact, cement is cheaper in India than potatoes are, right? And I think we need to ask the question as to why this image is there. When large companies are making losses in the cement industry. You look at India Cement, just announced a loss. You look at Nuvoco, they've just announced a loss. Profitability is at an all-time low. EBITDA margins are at an all-time low. And competition intensity is at an all-time high. So I really don't understand these comments that are coming in for cement. Steel as well. I saw the comment on steel as well. And you've spoken to my father. We are talking to the government on dumping, safeguard duties. And, profitability in steel is also at an all-time low. Very large businesses in India are making losses in steel. So I think there is some sort of a misconception here. And I can say it, very confidently and with a lot of sincerity that there is absolutely no truth in these claims.
Well, the government will perhaps go back again to the CCI, and I understand that the CCI is currently also looking at a previous complaint. But as I pointed out, this is not something new that Mr. Gadkari said. But, given what you said, that competition at an all-time high, profitability at an all-time low at this point in time, how does that then back up the kind of expansion plans that you have?
No, I think in terms of India as a growth story, there's no doubt that the cement demand, the steel demand in India is only going to grow. This is a temporary phenomena where people are in a quest to consolidate, keeping prices, according to me, in a quest to consolidate, the large players are keeping prices artificially low in order to squeeze out the marginal players and consolidate the industry. And we're seeing almost like a telecom-like phenomenon in cement. And I think that's led to a lot of consolidation. Last year was probably the highest number of acquisitions that ever happened in the cement industry. And I think this trend is going to continue for a few years. Now, when you come to expansion, I think if you look at this year would be an aberration where cement demand would grow at maybe 3 to 4% for the whole year. But we expect cement demand to grow in lockstep with GDP growth and maybe slightly faster than that. So we're looking at 7 to 8% growth in cement in the medium term. And that means about 35 to 50 million tons of incremental cement demand is going to be coming every single year. And the other thing is, if you want to remain relevant in cement, you've got to have at least a 10% market share. Otherwise, there's going to be a threat of consolidation even on your company. So if I don't get there, I'm a very big target for the bigger guys. So I think it's a balance that one needs to create. And also, if you look at our expansion plans, we are expanding only in those geographies where we're seeing a supply-demand equilibrium. And we're seeing that, we can enter that space. Now, if I were to add more capacity in the south or more capacity in the east, I think that's not really required because there is an excess capacity. But in markets like central, north, northeast, if you expand there, I think it'll get consumed.
So what is the current market share, even though that you said that the needle isn't moving too much at this point in time, even with all the competitive intensity, but what is your current market share?
Oh, it's very small. We would be about 3.5% on a pan-India level. So if Indian cement demand, we would be about 3.5%, and our ambition is to get to 10%, and that's going to be happening over the next few years.
5?
By 2030, we should be 10%.
By 2030 is the expectation. Let's also talk about the paints business then. Similar story, I would imagine, that's playing out for cement is also impacting the paint sector today. Where do you stand on that front? Because again, that's also gotten fiercely competitive.
Yeah, I think with JSW first and then Birla's entering, I think the industry has definitely heated up, and it's led to the first bout of consolidation with AkzoNobel putting its India assets on the block. So I think today, we are a 5.
Did you consider looking at that?
We just submitted our bid.
Okay.
We submitted a non-binding bid. The first round's bids were submitted on the 22nd of January. So we are very much looking at that asset. So we are today, 2,500 crore company, 5th largest in the paint space. And we are a 5-year-old company. Obviously, there's been a lot of noise with the entry of Birla's and the kind of investments that they have made. And we've all seen what's happened to the market share of the larger players. We'd like to think we played a small role in that, and Mr. Birla played a bigger role in that. But overall, I think my true belief is that the paint industry is not a winner-take-all market. It's not a capacity-driven market. You can't just build plants and expect the consumer to choose your paint. I think there's a lot of brand equity that has been created over the years by the incumbents. And this is an industry where you need to win the micro battles. You need to win over the influencers, whether it's the contractors, the painters, the interior designers, the architects, and finally the end consumer needs to select your paint. So it's been an interesting journey. It's completely B2C, and it's the first time JSW Group had gone into B2C. Now with automobiles, that's the second one. But it's exciting, and I think the AkzoNobel opportunity is a really exciting one. And whoever gets it will really have a shot at being in the top 3 for a long time.
We don't know how that will pan out, but of course, as you pointed out, you've already put your bid in. But the synergies between the cement and the paints business, as you kind of grow both these out, what do you see happening on that front?
So the synergy is not much on the grey cement business and the paint business. There is synergies on the white cement business and the paint business, because the putty, which is made to prepare the wall surface, is made out of white cement. So hence you have players like Birla's and JK entering paint, because they had the distribution network of the white cement.
Right.
They being the largest players. Now you have Asian Paints entering white cement. You have JSW entering white cement as well, more as a defense mechanism to protect our network. So I don't see much of a synergy from a network point of view for our cement and paint business. However, from a real estate point of view, from a B2B point of view, today we are selling our steel, our cement, our paint as one offering to all the large contractors and large real estate players. That's resulted in a lot of success for the group, because we can offer it as one suite. And if they do a certain volume, if they do a certain value, they get a discount on the whole basket of products. And we heard a lot from our real estate players that, dealing with separate companies is such a pain. Why can't you just be creating a one-stop shop solution? We've also launched JSW One in order to offer this online. So this is helping us grow faster than the market.
You know, coming back to valuations, is it a much more reasonable race in the paint side of the business as opposed to the cement side of the business, since you're looking at AkzoNobel today?
So I think the thing with paint is valuations have definitely gone off their highs. You know, what they were when I started this company and what they are today, they've almost halved in terms of value. The second thing is it's a very similar story to the Holcim story. That kind of asset is never going to be available again in this country. It's a generational asset. It's going to take me 18 years from the time I started JSW Cement to build 60 million tons of capacity if everything goes well. And that was a 70 million ton asset which got sold. Similarly with AkzoNobel, it's taken me 5 years to get to 2,500 crores. It'll probably take me another 2 years to get to 4,000 crores. So it's taken 7 years to get to 4,000, and you can buy something which is 4,000 overnight. So it's that type of asset, and hence I do think is going to be fiercely competed for. We will again look at value versus buying versus building, but having lost out on Holcim.
Are you willing to take a bigger bite? Do you have more risk appetite this time around?
I think there's no choice. If JSW and the ambitions we've shown that we want to be a top 3 player in whichever sector we play in, if I have to do that, then I have to give it everything that I've got for Akzo.
How will you fund it?
It's going to be a mix of the family investing, and private equity.
And you've tied up the private equity already?
Yeah, we have interest from a few players, but we are still in discussions. We've put in our bid at JSW Paints. Once we know that things are progressing, we'll
Is there any indication of the timeline?
I would assume it will happen within the first half of this calendar year.
Okay, first half of 2025. Let's talk about the new B2C business, and which is the automobile business. And, you know, I was speaking with your father, and he said in 18 months, that's the target, that you hope to have the car on Indian roads. But the technology partner, I am given to understand that you're talking to Chinese players at this point in time. How close are you to be able to close those conversations and actually result in a deal?
I think it's almost at the verge of finalization. I would like to say that within this quarter, the announcements will be made on who the technology partner is, what kind of agreement it is.
And it is Chinese?
It is a Chinese global player who has successfully demonstrated in China and as well as abroad. So there will be bits and pieces coming from China, bits and pieces coming from their global alliances. And that's the way we've structured it, and that's the way they've also wanted to structure it. We have a different partner for the passenger vehicle segment and a different partner for the bus and truck segment. The bus and truck segment is a little bit further along, and I would expect a JSW bus and a JSW truck to be on the roads in 15 months.
Okay.
And the passenger vehicle...
In 15 months?
In 15 months, yeah. And the passenger vehicle one, which my father mentioned, 18 months, I think... He gives us all very good targets, but I think
It'll probably take longer.
I think 2027 is
2027
is when we'll first have a JSW car on the road.
Okay, so that's interesting that we'll probably see a bus from the JSW stable on the electric side in the next 15 months, as you point out. But the agreement that you have potentially with this Chinese player, global Chinese player, no equity involvement, or will there be some equity involvement?
No equity involvement. The only equity partner for us will be Shanghai Auto in MG. This is a pure licensing and royalty deal.
Okay, so you know, as you look at some very large businesses that you're managing at this point in time, and you know, there's a lot of room for you potentially to grow, but it's also fiercely competitive. What's the big constraint that you're faced with? What is the big challenge that you deal with?
I think building the organizations, building the teams in order to scale is definitely something that we spend a lot of time on, because we have ambitious plans across all our businesses, whether it's steel, whether it's energy, whether it's infrastructure, cement, paint, automobile. We are also entering new ventures. We're looking at getting into the copper side as well. We're looking at real estate. My sister's driving that. So there's a lot going on at the group, and I think there's such an unbelievable opportunity in India when India is going to grow from 4 trillion to 10 trillion. We're just incredibly fortunate that we are living in India at this point of time. So I think we want to seize that, and I think every state is now becoming more and more supportive, more and more open, and more competitive with each other to draw investment. Like when we announced the 3 lakh crore investment in Maharashtra, and we then went to the Tamil Nadu delegation, they were almost upset. They were like, why have you come here with whatever 10,000 crores when you're investing 3 lakh crores in Maharashtra? What can we do? And it's so incredible to see each state trying to lure industry to them. And this is something that, I think is intuitive, but when I speak to my father, he's like, the country has changed so dramatically, you won't believe how it was and what it's become. So I think we just hope that, the geopolitical risks ease a bit with truce in the Middle East. We hope that is behind us. We hope that President Trump does something in the Russia-Ukraine side as well. And we also hope that, this whole era of protectionism becomes a little bit more consistent, because you can't have one regime saying something and then 4 years later somebody coming and doing the exact opposite. It really makes it very difficult to invest and know whether you're investing in the right thing. Like we in the US were investing big time into our Baytown plate mill for offshore wind. And one of the first tweets put out by the president was that offshore wind is a disaster and it's dependent on government subsidy, and which they're no longer going to pay. So that makes it a bit difficult to predict. But at the same time, we know that with President Trump, he's going to protect the steel industry, so that augurs well overall for our US business. So, but yeah, it's just exciting. I wish you had more hours in the day.
Well, we wish we had more hours to talk to you, but thanks very much, Parth, for a very insightful conversation across each of your businesses, but more importantly also the road ahead and the priorities that you're going to be working with. We wish you the very best of luck.
Thank you.
Thanks very much for joining us here in Davos. Well, that's plenty coming in from Parth Jindal for the cement business, for the paints business, where they are hoping that they can finally get their hands on Akzo Nobel, unlike in the cement side where they lost out. And of course, on the electric mobility side, it's going to be a bus before there's a car from the JSW stable, and that's expected in the next 15 months or so, and a close a deal with a Chinese partner is likely to be inked very, very shortly. We will take a break here, but the conversations will continue. We're back in a moment with more. Stay tuned. You're watching CNBC TV18.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Jamie Dimon.
Think about India, if we have them growing strong next year, consistent with what they grew this year, it's now moved to the 5th largest economy.
The Honeywell view on India, and how do you see the next few years?
Domestic business doing extremely well. Can't be more pleased in terms of opportunities in India.
It is, and there are lots of reasons for that. One is because he's in a much stronger position in the United States than he was in 2017.
They're working on AI. They're working on all the innovative capabilities that we want to input into our products. A lot of that's coming out from India.
If I were to say even heart and mind put together, India is an exciting story.
India is going to be the office of the world. You and I discussed about it.
trained? The last time we spoke here, you had given me a number. What does that number look like today in terms of the people that have been trained on AI within Infosys?
So within Infosys, it's a huge number because there are two types of training. One is what we call AI aware, and one is a deeper training where people are using it. The AI aware, which is a broad training, is over 270,000 out of about 320,000 people are in this AI training. And it's really across the board because there needs every discussion with client, every deal, every large deal, every medium deal, there's a lot of interaction on AI. So it's built into many things.
So clients are asking you now specifically for what the AI use case is going to be and how you can contribute to that?
Clients are interested in where generative AI can help them. And what we are seeing is through agents or through small language models, in the past through large language models, we have various ways in any large transaction or program where they can benefit from this AI. And so we are using it and they are quite happy with it.
So what is this going to Let's talk about India. The outlook that the IMF has put out pegs growth at 6.5%. Still one of the fastest growing large economies in the world. What do you like about India today? And in the context of what we will hopefully see in the budget, what would your expectation be?
So firstly, just to emphasize what you said, which is, I mean, India remains the fastest growing large economy of the world. We do expect to see growth to recover in the second half of this fiscal year, which is how we get to 6.5% growth. So for us, potential growth for the US, for India is 6.5%. To get to much higher levels of growth will require structural reforms on many fronts. Also, it will require continued public infrastructure investment, which the government has been doing a lot of, but you're going to require that at the central government level, but at this and the state government level, and to be able to execute on a timely basis, that's going to be quite important.
We're talking capital.
Long-standing issues in terms of how the ease with which you can start a business, the ease of doing business, the ability to buy and sell land, labor reforms. I mean, all of those are required. And lastly, you know, we're now in a world where companies are looking around for how to build their supply networks. And India is an attractive destination for them to do it. So this is an opportunity for India to be able to plug itself more firmly into global supply chains.
You know, on India, we've got of course, 6 Indian states, along with the central government being represented here in Davos. And we've only seen the India presence go up over the last few decades here in Davos. How do you see, especially in areas like manufacturing, foreign direct investment moving to India in this context of reshoring, which has now been the buzzword here in Davos through COVID?
Yeah, and you have also this notion of friendshoring.
Yes.
And the thing is that India is seen as a friend by many countries. So this Make in India initiative, getting more manufacturing in India, I think is going to happen and is already unfolding. We know that Apple didn't produce any iPhones in India a few years ago. No, I think it's like 25% of their production or something. Take the number with a pinch of salt. But India is developing also when it comes to manufacturing. But what really works for India and also moving forward, where we do expect most growth in the decade to come, is on digital trade and on services. And these are two areas where India is very strong and has comparative advantages. And if it also can catch up on manufacturing, I think this can be a very good decade for India.
What are they talking to you about when they speak about India specifically? Are there any sectors in particular that they're most excited about? I mean, you bring the PwC Global Board to India in 2025. So what looks exciting to you?
What's looks exciting to us is now India has always been a destination for talent, the global capability center for many of our clients, a great services industry, and talent in India is being leveraged across the world, pretty much. Now what we're seeing is that the rest of the world is now looking at India as a manufacturing center, a center of production, which requires new skill sets, but manufacturing is now coming to India. So having an economy that is both a services economy and a product-based economy and manufacturing economy is going to be critical. And that is what our clients today are looking into India to understand that it is a big market where many clients are looking at India now as a new manufacturing center for the world.
You know, there are reports suggesting at this point in time that the government may review its policy to get manufacturers to actually make in India, especially as far as the EV side is concerned. And now, you know, you have Elon Musk quite literally in the White House. You know, what's the expectation in terms of possible changes? Are you hearing anything on that front?
We are not hearing any possible changes, but our stance has always been that we welcome competition. We feel that we will get better with competition. We have.
Welcome back. The conversations continue here at Davos 2025. As I've been telling you, it is an India-first approach that has been taken here with, of course, the central government and the states coming together quite literally under two roofs, presenting the India story to the world here in Davos. Joining me now is the Chief Minister of Maharashtra, Mr. Devendra Fadnavis. Sir, thank you very much for joining us here on CNBC-TV18. You know, that's magnetic Maharashtra and bullish Tamil Nadu in the same space at this point in time, and that's the approach that India has decided to take. In fact, you've just come away from a session where the three Indian chief ministers present in Davos were presenting the India story. So there's cooperation and competition playing out at the same time.
Yeah, absolutely. First of all, thank you for having me here. And I must tell you that this was a real example of One India, how our Prime Minister contemplates. Because we are here with a cooperative federalism as well as competitive federalism. All of us were pitching our own states for investment, but at the same time on the forums, we were talking about India. And I think at Davos, people, we could see people were talking about only two states, two countries. One was America and other was India. So I think the Indian story is well told in Davos. And we tried our best to pitch our own state stories as well.
Well, so let's talk about that pitch. So what has the Maha pitch resulted in terms of MOUs? The last count I had was about 50 plus. Where are you now?
Yeah. So it's 60 plus and around $200 billion. Okay. So it's huge investment that is coming, and it is coming in diverse sectors. We could actually we had MOUs with, giants like Amazon, Microsoft into data centers. We had a lot of MOUs into manufacturing. We had a lot of MOUs into new technologies. We have a lot of MOUs into manufacturing. Manufacturing is, of course, our own forte.
Yes.
So a lot of MOUs have gone into manufacturing. And I think, I mean, you name the sector and we have got the investment there.
Yes, including on the logistics side, the warehousing side as well. I know that there's stuff that's happened there, and on the chip side as well.
Yes.
So if you can give us a little more detail and a little more color on some of those investments.
It's like VIT, we had a MOU with VIT, who are working on chip side. I've told you about data centers. We have investment in steel manufacturing, we have investment in defense manufacturing, we have investment in, let's say, education. So foreign universities are coming to Maharashtra. We have, we are actually creating a EduCity in New Mumbai.
Okay.
And we aspire to host at least 10 rated foreign universities there. So we have already are in active talk with 4, and I think all the 4 have said yes. 2 of them have already come. So I think it's a good going.
It's a good going, but you talked about the manufacturing sector, and you also said that the focus here in Davos is either on what's happening in America or what's happening in India.
Yes.
But what could the impact be of what's happening in America in light of President Trump saying, look, we have to make America great again, which means that you have to make in America at this point in time. Is that coloring or weighing on sentiment as people look at expansion, global expansion, particularly in countries like India?
See, I don't think that will have too much impact on India. You see, India is in a position where the world cannot ignore us. And, the way the supply chain was disrupted during COVID, now world over the manufacturing understands that new supply chains are to be created. And for them, the new supply chain destination can be India, because we have democracy, we have demography, we have demand. And now I think we are in a position to supply to the world. So as a chief minister, I am actually interacting with a foreign investor every single day. And huge interests are there from Europe, from Japan, from Korea, from you name the country, and they are coming.
You've reclaimed the #1 spot on the FDI list.
Yes, we did. And I'm very happy to share that cumulatively now we are 35%, but in last 6 months, we have garnered 40% of the FDI that came to India.
When foreign investors are looking at investing in a state, in a country, and then of course in a state like Maharashtra, what are they asking you? Approvals, speedy approvals, land. I mean, these are of course the obvious ones.
Yes.
What are they asking you today?
See, I would say that first of all, investors see the history of the state, how the governments have performed, and I think they have seen our government from 14 to 19, and again last 2 years. So they know that we are business-friendly people. They know that we have a system in place which gives fast approvals. We understand that ease of doing business and cost of doing business are two parameters on which if the government doesn't work, then investment won't come. So we have worked more on that. And having said that, one more thing is very important, that is human resource, because they scout for human resource, and Maharashtra is one place where a lot of human resources available. Maharashtra has always been at the forefront of technology revolution. So we are fintech capital. Now we are startup capital as well, because in the recent startup report, Startup India report, we have claimed the #1 position in terms of numbers as well as in terms of investment. So now the startup capital of India is Maharashtra. So we have startup, we actually host 60% of the data center capacity of India. So I think they see our industrial parks, which are well developed industrial parks. We have our one portal which serves everything for a new investor, and I think our approachability is also very easy. So investors are coming.
Well, speaking about funding growth as well as driving growth, the infrastructure build-out has been a big part of the story. And of course, you've been driving that for the state of Maharashtra as well. CapEx, and that has been the single biggest growth driver over the last few years, both at the level of the center as well as at the state's end. What is the plan as far as CapEx is concerned, especially for the year? Will you be able to meet the targets that have been set out?
Yeah, I think we'll be able to meet the targets, because right now in the state like Maharashtra, there are so many different ways through which you can raise the capital and you can invest the capital. So if you look at now the different ways through which we are creating our infrastructure, we are investing into our industrial parks, we are investing into our technology startups. I think a lot of capital investment is going on, and I'm absolutely sure that Maharashtra is one state where even the bankers believe that this state never falters. So banks are also ready to give us, multilateral funding agencies are ready to give us, and now for the first time the private equity funds or private debt funds, they also believe that they can invest into government projects, or they can also invest into the private sector. So a lot of investment is coming from funding agencies or private funds.
I want to ask you about the current balance sheet position, fiscal deficit on the higher side, above that 3% ceiling. What do you do now in terms of being able to raise resources, raise revenues? What will the plan be on that front?
So first of all, yes, our balance sheet is little stressed than how it used to be because of certain of schemes. But having said that, I must tell you that we are still below 3%. So we'll present our budget next month, and in the budget you will see the figures that we were able to maintain our deficit less than 3%. But I think our main main thing which we want to do is that although we don't want to close our schemes, we want to make them more vibrant, make them more popular. At the same time, we don't want to lower down on our ability to deploy capital investment. And for that, we have an approach whereby we are deciding that this year at least this much should be the capital investment, and we are working reverse. And we are actually getting that investment from different avenues so that the fiscal spirit goes on, and the growth is not affected. So I don't think that the growth will be affected. We'll have enough capital investment, and will set the ball rolling.
How much of an increase should we realistically expect? I know you can't give us a number, but realistically, what should we expect in terms of the kind of budget-to-budget outlay increase on capital expenditure?
So I think at least it should be 20%.
At least 20%.
Yes.
But you also talked about the balance that needs to be done to fund the welfare schemes, and that is a challenge for all state governments at this point in time. So are you looking at reviewing any of those schemes? I mean, the big one for you through the course of the elections, the Ladki Behan scheme, do you foresee the need to review that scheme in any form or fashion?
No, we are not reviewing the scheme, but when the scheme was announced, there were certain parameters set for the beneficiaries, like the beneficiary should not be income tax payee, they should not own a four-wheeler, they should not have income more than 2,50,000 per annum. So we have encountered cases where this is breached, and people have taken disadvantage. Only those cases which are not fit, which do not fall in the parameters, we'll work on those cases only. Otherwise, the scheme will go on.
Is there a large number of ineligible, people who have been able to access the scheme?
Yeah, there's a large number. Not very large, but still it's a large number.
And by when do you hope to be able to rectify this?
We have already started. So by various means, first we are working on data. We are not verifying home to home, case to case. We are first working on data, and the four-wheeler records, the income tax records, we are working on that. So once we collate the data, we'll get the number, and then it will be based on certain other parameters that we'll verify, and those who are ineligible, we'll tell them that, look, it's not for you.
Can you give us a quantum of what the quantity could be of those who have accessed the scheme that are not
Initially,
eligible?
I feel that it should be 20 lakh.
20 lakh people who are not eligible have been able to access the scheme, and that verification process is ongoing at this point in time. Additional measures to be able to raise resources, monetization plans of any kind at this point?
Yes. We are trying to monetize our assets. We are trying to use many instruments like securitization. We have so many roads which we have built, the Samruddhi Expressway which we have built. So we actually incurred a cost of 55,000 crores, but we estimate that once we securitize it, we can get more than 60,000 crores. So these are certain things which we want to monetize. We have recently monetized one of our plot in Bandra, where we could get more than 2,000 crores. We recently also monetized one plot of Metro, where the plot was created because of Metro. And I'm very happy to share that although we expected that we will get 2,000 crore, but RBI offered us 2,600 crores, and they want to build their main office there. So I think it's going.
So real estate monetization underway at this point in time. In terms of accelerating growth further, any additional measures at this point in time that you're looking at? And I would imagine perhaps the budget may have some more announcements, but
I would say that right now we want to invest more in infrastructure. So creating ports, airports, roads, it's on card. We are creating a grid of access control roads. So what we are essentially doing is we are looking at either equity partners or debt partners to acquire the land.
Okay.
Because land acquisition is the only thing which requires money. Once you acquire the land, all banks are ready to finance. So now we have decided that from various instruments and various sources, we'll acquire the land and then we'll build the roads on either PPP or BOOT or hybrid method. So I think whether it is road, ports or airports, our investment will not go down. It will go up and up.
How many more airports? I mean, Navi Mumbai is yet to be operationalized.
Yes.
On track?
It's on track. On 17th April, the domestic terminal will be opened. By end of June, the international terminal will be open. Now we'll be building one more port at Vadhavan, because at Vadhavan we are creating India's largest port. And I requested the Honorable Prime Minister that since we are creating a port here, we also have our high-speed railway there. So let us have an airport there. So Prime Minister has announced that we'll have an airport there. So third airport for Mumbai will be built there. We are building an airport at Pune, new airport at Pune. We are building a brownfield airport at Nagpur. We are expanding at Shirdi. So many airports we are building now.
So a lot of focus there as far as airports are concerned. There's also been a lot of speculation on the possibility of a new policy coming in place to try and decongest Mumbai specifically, that only if you have available parking spots will you be able to purchase a car. Is that correct?
Yeah, that's correct. We are thinking of that because you see, ultimately we have to decongest and in Mumbai we have actually created so many spaces for public parking, and now we are bringing all the parking spaces on app. So there is a possibility that if you don't have a parking space, you can buy a parking space or you can rent a parking space from the municipal corporation. But buying a car without a parking space and parking it on the road, that congests the city, and also there are so many traffic jams because of that.
Yeah.
So this is one of the policies which we are thinking of.
So likely to be out anytime soon?
Yeah, very soon.
So what will you prioritize? I mean, you've given us a very clear focus on infrastructure, which continues to be the number one priority. Outside of that, what will you prioritize for 2025?
So I think our now biggest priority is also water issues, because I think water sustainability is something which is very important. We are doing 4 river linking projects. Maharashtra is one state where 52% of our area is drought prone. For this area, these 4 projects will provide water, will be almost drought free because of these projects. With the help of central government, we will be doing that. And apart from that, we are into energy transition. So by 2022, until 2022, our energy basket was just, let's say 13% renewable. By 26, it will be 25% renewable. By 2030, it will be 52% renewable. So huge investments are going on into renewables. And we are also transforming all our public transport into electric, and we are going green. We have already placed an order for 5,000 electric buses for Mumbai, 5,000 buses for rest of Maharashtra. We already have 1,000 buses fleet in Pune. We have fleet in Mumbai, in Nagpur. So I think we want to transform entire public transport and we want it to go green. So a lot of work is going around sustainability as well. And of course, I've told you that we are building an innovation city near Mumbai. This innovation city will host all the innovations and it will be powered by AI. So we want to be the first in the space of AI and innovation.
Okay, and have you spoken with tech companies who's decided to come on board for that?
Many tech companies are coming, and right now we are at a stage where a master plan is being done. And I'm happy to tell you that Mr. N. Chandra of Tata Sons, they have volunteered to do the master plan. They have good resources, they have good connect in the technology world. So I think they will do the master plan. Already when we announced, many tech companies have approached us and they want to be part of it. So we'll create an ecosystem for innovation, and that will be one of its kind city.
You know, you said that sustainable development is going to be a key priority as far as your government is concerned. sustainability as far as your finances are concerned? How much will you prioritize there? You just gave us an indication that you will be under the 3% ceiling as far as fiscal deficit is concerned. But do you have a glide path that you're moving towards on where you would like the state finances to be?
So I'll tell you, we have actually created a long-term strategy because, bringing sustainability in finances is not a short-term measure.
Yes.
It is a long-term measure, but we have a plan in place, which is a long-term plan. I think our finances or our fiscal space will be at ease by next 5 to 7 years.
Next 5 to 7 years. So that's what you're working towards.
Yes.
Well, Mr. Fadnavis, it's been a pleasure. Thank you very much. We wish you the very best of luck with converting those 60+ MOUs into investments back home in Maharashtra. But appreciate your time, and we hope that you probably by the time you leave here get more more done.
Hope so. Thank you so much.
That is the Chief Minister of Maharashtra there, taking us through many of the MOUs that have been inked here across a whole range of different sectors, from manufacturing to technology, and of course the plans that they have on furthering the infrastructure build out for the state of Maharashtra, which of course is a work in progress already. But we will take a break here. The conversations continue. Don't go anywhere. We'll be right back with you on CNBC-TV18 with Davos 2025.
And from an electric vehicle standpoint, it will help grow the market as well. So the part that what we've seen the government always focus on is Make in India, because Make in India is essential. We have the ability today to make world-class vehicles. What we've done with our 2 vehicles is a testament to that. These are designed in India. The technology comes from India. Our Research Valley has really set them up. And that's something that we are starting to see as world-class products being made in India and being made for the world now. So that is in line with the vision that the Prime Minister has laid out on Vikasit Bharat and on India being a manufacturing hub for the world.
The government has also tried to draw in foreign direct investment under the Modi administration. Do you see more foreign investors like yourselves looking at the opportunities that present in India from a sourcing perspective, manufacturing perspective, and a retail perspective as well?
Of course. Can we agree that India is going to be better, brighter, safer, cleaner, healthier over the next 100 years? India is a growing market, is a growing population, but also has a fantastic base to develop with so many fantastic Indian people, and this is why we are committed to India. My advice to companies is that don't come here with shortcuts. Come to India with the long-term view, and this is what we are for. We did when we came to India initially. We went in depth what IKEA stands for and what Indian society stands for, and how can we connect. And we felt from the very beginning, a lot of connecting points. That's why we are deeply committed to India.
Your heart is
Yeah.
with India and in
India,
as
that's
you
right.
pointed out.
I think, for example, on the trade front, I was pleasantly surprised that they didn't impose tariffs right off the bat, which seems suggestive that they will be a little more considerate about it. But
Calibrating what rate they should impose?
Calibrating what rate and doing less damage, more from the US perspective than from the other countries' perspective. But I think the announcement of External Revenue Service implies what I thought earlier, that he is serious about tariffs, both from the perspective of raising revenues for the US so that he can cut taxes more, which he needs to. Also from the perspective that he really believes by putting tariffs on others, he can bring jobs back to the US. I'm skeptical that he'll raise much revenue. I'm skeptical that too many jobs will come back to the US because manufacturing has gotten so automated that, it's not going to happen in a big way.
Do you foresee the need to scale down hiring? Do you believe that you will continue at the pace that you are, or you may even have to look for more?
I think that you won't have to scale down at all. I do think that over time.
Welcome back. You're watching our continuing coverage here from Davos 2025. I'm Shireen Bhan. As we've been telling you, India is being represented here by her states. One of the states attempting a turnaround but also a comeback is the state of Andhra Pradesh. The original Davos man from an Indian state's perspective, Chandrababu Naidu, is back here in Davos. He started his Davos journey in '97 and he has returned in 2025 to try and make a sales pitch to draw in investments to the state. Joining us now to talk about not just the Davos plan but also the state's turnaround strategy is Nara Lokesh. Many thanks for joining us here in Davos. Before I move any further, a very happy birthday to you.
Thank you, Shireen. Really appreciate it. Thanks for having me.
Let me start by asking you about the Davos sales pitch. And we've got 6 states here representing India, and each one of them is doing a hard sell to investors. As I said, there's a turnaround plan that you are working towards, but there's also a comeback strategy here to draw in investments from investors here in Davos. Take me through what you've been able to suss out so far.
I mean, Andhra Pradesh's turnout plan started 7 months back when the new government was formed. If you look at it in the last 7 months, we make amazing progress. We have had great investments from a steel city to a data city to all the larger IT companies now coming to invest in Visakhapatnam. See, Davos for us was to send a clear message that Andhra is back. We're willing to do business all over again. Last 5 years have been very tough for Andhra Pradesh. So it's very important to give that confidence to the investors. And I see amazing energy, and people are now looking at Andhra Pradesh to make it part of their growth strategy.
You know, you said Andhra is back, open for business, and that's the message that you want to send out. You had a slew of meetings, including the likes of Bill Gates, the leadership team at Foxconn, and many other companies. But specifically, are there areas of interest? Are there areas where you will prioritize investments? Because as I pointed out, I mean, you know, everyone's going after everybody here, including your peers. So will you focus on some specific sectors to build those out as part of the Sunrise sector's aspirations for growth?
We are the Sunrise state of India. Andhra Pradesh, if you look at it, has a very diverse geography. So we are able to focus each district for a specific sector. So we have an automotive district, renewable energy district, CBG district, then we have the entire data city, the steel city coming up in North Andhra, which is Visakhapatnam. So all the sectors are open. But what I'm promising everyone is that Andhra Pradesh will deliver on speed of doing business. We're no longer competing with other states, but we want to compete with other countries like Singapore and the Middle East in terms of speed of doing business. And with that agenda, we've gone to the investors. Because if you look at it today, all the investments are a few $1 billion. And even a 6 months delay throws the entire business plan out of shape. So it's very important that governments deliver on the speed of doing business, and Andhra will lead it from the front.
Let's talk about the turnaround strategy, because, you know, we've just seen the budget, and of course there is a revenue deficit as well, and there is a fiscal deficit in excess of 4%, a revenue deficit in excess of 2%. How do you chart a turnaround from here?
Well, Mr. Naidu always loves crisis. He says that's where opportunities are. We're exactly where the erstwhile Andhra Pradesh was in '95, and we did a turnaround. I mean, look at where Telangana is today. I think Andhra Pradesh is exactly positioned there. Thanks to the Honorable Prime Minister, he's held our hand very well. He's given us amazing support on the budget and even subsequently on various other issues. That is enabling us to come out of all the rut that we were in the last 5 years. And we, you know, in about a 5-10 year time, we will contribute back to the nation building.
And there's a very ambitious target for growth as well as per capita rise that the Chief Minister has put in place by 2047. 15% growth that's being targeted, and $44,000 in per capita. That's the aspiration as well. How do you get there?
And $2.4 trillion economy from where we are today, which is $188 billion. So, I mean, we have a clear trajectory. All the ministers and ministries have been given clear targets on what they have to deliver. So in education, which is my Bharat portfolio, as I call it, there are very specific goals that we need to deliver. So we are very focused, all of us together. I'm confident that we can deliver on it. And I believe if all states work together, we can make India number one.
But how doable is that, to get all states to work together? Because what we are seeing happen here is that, you know, everyone's essentially going after the same pie, isn't it?
Not necessarily. The pie is big enough. The world is ready to do business with India. They see India as a very strategic country for them. And one of the major reasons for that is our consistency in leadership. You know, the Honorable Prime Minister is in his third term. NDA government is in its third term. So the policies are very consistent and they see that as a clear trajectory. I mean, geopolitically, there's so much of disturbance across the globe. Now, Andhra is the only country, India is the only country that's standing up bright. And in India, Andhra Pradesh is again going to be ahead of everyone else.
You know, you talked about the strength of the India story and the India advantage and opportunity at this point in time. But what we're also seeing happen as far as global events and developments go, it's President Trump back in the White House and telling people to do business in the US, to make in America, to make America great again. Do you believe that that is going to perhaps put a speed breaker of sorts, especially as far as manufacturing plans are concerned?
No, I mean, to be fair, the President of the US, Donald Trump, has also been very kind with India. The Honorable Prime Minister and Mr. Trump have an amazing relationship. I'm sure all this will fructify and will lead to investments even in India. So I believe that we live in a global economy and India has an important role to play. And yesterday, if you look at it, you know, even states that didn't have NDA governments were well represented with a clear message of India first. And I think that shows a clear message to the world that India is ready to do business.
It's not just India first, it's also AI first here in Davos. What's the plan on that front as far as Andhra Pradesh is concerned?
See, in my department, which is HRD, Human Resource Development, we're going to be using AI extensively to assess students, to give prescriptive homework. So it's not going to be one homework for every child, a common homework. It's going to be very unique to them. And AI in governance is nothing new for Mr. Naidu.
No.
So real-time governance was there. Now, again, that's now under me. Once we return from Davos, you'll see a lot of activities again starting in AI in healthcare, AI in agriculture. So you'll see a lot of technology being used.
You know, what we saw happen with Hyderabad, and of course, when in my conversation with the Chief Minister, he was talking about what he was able to deliver there with the promise and how that is helping the state of Telangana today. As far as Andhra Pradesh is concerned, the IT aspiration, the GCC aspiration, what will you leverage to try and ensure that you can replicate that success?
I mean, 20% of the global IT workforce is from the 2 Telugu-speaking states. And in that, majority of them are from my state. So we have amazing education institutions and they're ready to come back. And we are adding more workforce every year. So I think there's an amazing combination now with the Chief Minister and with the Honorable Prime Minister working together in Andhra's interest. I think there's an amazing and lethal combination. As you call
combination.
Double engine Sarkar. So I think, or 2 engines for the jet plane. So I think we have amazing combination and we can deliver on this. And you will be hearing a lot of announcements in the next 3 months coming into Visakhapatnam, which is going to be our IT destination.
Okay, give us a sneak peek into what kind of announcements we should expect for Visakhapatnam and for the state in general.
Well, a data city. It'll be one of the world's largest. We're going to be making a lot of announcements in that
data
direction.
centers there?
Yes, data centers, and not just stopping at data centers, but building out the entire ecosystem around it. And parallelly, you will see a lot of GCC announcements, and of course, our homegrown biggies also now coming to Visakhapatnam in big numbers.
So, if I could ask you to give me a number in terms of the quantum that you are likely to stitch together for investments for this year, for 2025, for instance.
See, our target is to create 20 million jobs. 20 lakh jobs in the next 5 years, and that's a clear agenda for us. With that agenda, we're working now. If you've seen, already we have ArcelorMittal committing India's largest steel plant, and we're going to build a steel city, which is 14 million metric tons. Right, and we're working with Google on the Data City project. Then we're working with BPCL to do a refinery in South Andhra. So all these projects are just about taking off.
And big aspirations on the port side of the business as well.
Absolutely.
Are you drawing in investments there?
Absolutely, and we are talking to the larger ocean liners to have Andhra Pradesh as the port of call. And we had a conversation with the largest ocean liner to actually give us a maritime strategy for Andhra Pradesh. And they're going to come back in 45 days with that strategy.
Aspiration of shipbuilding as well, is that something that you're considering? Are you talking to global players today?
Absolutely, shipbuilding. We're talking to the Koreans. They're the biggies in the shipbuilding sector. And we're busy now scouting out for partners in India. So we're going to marry both, and we'll do it in Andhra Pradesh. And we're also talking to the larger, logistics chains like DHL to to figure out, and even FedEx, to figure out how Andhra can be part of their strategy in India.
So the conversations with the Koreans on shipbuilding, how far have they progressed so far?
Well, they're really excited. They see India as the next place from the growth strategy perspective. So you'll hear good announcements in the shipbuilding probably in 6 months.
In 6 months on shipbuilding specifically. Let's talk about Amravati, because speaking of a comeback, that's making a comeback as well, and plans have been revived there. Of course, you've got some multilateral support coming in for Amravati as well. You know, from here to what you hope to actually be able to deliver and achieve, what's the timeline? What's the plan?
3 years.
3 years?
3 years, the core capital region will be ready. Because yes, last 5 years, Amravati was on a pause. Thanks to the support of Government of India, now we're able to restart the entire project. Everyone's charged up, ready. All the tendering is completed. And we're going to start work from 1st of Feb.
So tendering is done at this point, and work starts from the 1st of Feb. So who are, you know, in terms of real estate and the other aspiration of housing for all, which the Chief Minister has also promised, I mean, give me some nuts and bolts of how all of this is going to play out.
I mean, specifically in Amravati, Amravati is our knowledge society, is what we're building out there. So a lot of education institutions have already come. Two, you know, in the past life, which is 14 to 19, we've done this amazing project, which is a G+3 for low-cost housing for LIG families. And it's been a huge success. We were able to build about 600,000 houses back then. And now we have a clear mandate to do it better. So we have to do about 1 million houses. And of course, there's funds coming in from Government of India in this direction. Of course, state will also put its own funds and build this out in Amravati and also across the state.
Bold and ambitious targets that you've set for yourself. And of course, we do hope that you realize the kind of numbers that you've just given us here on CNBC-TV18. We look forward to having a conversation with you to get a status check and an update as the year progresses. But many, many thanks for joining us here in Davos, and we appreciate your time. We wish you the very best of luck. Well, that is the state of Andhra Pradesh. As I said, it is a comeback and a turnaround of sorts at this point in time. The state government is hoping to draw in investments to bolster growth rates and deliver on the ambitious targets that Chief Minister Chandrababu Naidu has laid out. We're going to take a break, a lethal combination of Prime Minister Modi and Chandrababu Naidu in Nara Lokesh's words. Back in a moment with more. Don't go anywhere. You're watching CNBC-TV18. We're live from Davos in a bit.
We've seen this in our software portfolio, that there is a certain non-linearity between number of people hired and actually growth. So I think that more and more not looking at them as, you know, a direct correlation is something that will happen. But for example, in our engineering services in ERS, like even though almost 80% of now, let's say, coding can be done through AI. But then what we are training our engineers is how to build applications on top of it and how to do a lot more of design around it.
We have a presidential memorandum that was issued that delays the imposition of tariffs, and in fact calls on each of the trade agencies to start a process to look at countries with which we have a trade deficit, unfair trade practices, looking at existing free trade agreements, looking at sectors that have national security implications. And those reports are due to the president on April 1st. So it appears that there could be some delay in imposition of tariffs, perhaps with the exception of Canada and Mexico. He did make specific reference to those two countries, and China is obviously an outlier as well. So we will see, but there is likely to be a delay in the imposition of tariffs.
Ladies and gentlemen, the President of the United States, the Honorable Donald John Trump, and Mrs. Trump.
Having witnessed a
another successful moment in the experiment that you have entrusted into the hands of the American people. We pray your blessing on our 47th President of these United States, Donald J. Trump, and Vice President James D. Vance.
And we are going to bring law and order back to our cities. This week, I will also end the government policy of trying to socially engineer race and gender into every aspect of public and private life. We will forge a society that is colorblind and merit-based. As of today, it will henceforth be the official policy of the United States government that there are only two genders, male and female.
Hello and welcome to the CNBC-TV18 special. I'm Shireen Bhan. As I said, Davos 2025 is either about Donald Trump or about AI and its transformational impact. Joining me now are two IT services veterans here inside Cognizant to take us through what 2025 looks like, but more importantly, what will be the moats that every company in this space will need to figure out as it gets even more fiercely competitive. Surya and Jatin, thanks very much for joining us here on CNBC-TV18. Let me start by asking you about the overall environment at this point in time. All the conversations that I've had with people from the tech world today seem to suggest that 2025 is going to look better than the last year, and all eyes now on what deregulation in the US could potentially mean in terms of opening up more opportunities for the IT sector. Surya, let's start with you.
Thank you, Shireen. First of all, thank you for having us, and welcome to Cognizant Chalet in Davos. The entire conversation of this event is all about AI, AI and the pivot from experimentation to scale. That has been the theme of the event here, and throughout 2024, majority of our clients were in the experimentation phase. So we expect a change in that, and in the back half of I think we mentioned that in the last quarter earnings too. In the back half of last year, we started sensing cautious optimism in our clients. And we had four variables at play throughout last year: the US elections, inflation, interest rates, and geopolitical tensions. Some of those variables are leveling out. So that gives us a sense of optimism. And this event, there is a discussion on that in this event too. So overall, I think it's all about AI and the pivot of AI from experimentation to scale.
I'll get to AI in just a second, but Jatin, as we heard there from Surya, the mood is changing, but has it moved to optimism, or is it still in the cautiously optimistic space?
I would say it's still cautiously optimistic space, and the reason for that is especially the economic factors are far from settled. So if you see the latest inflation report in US, it was the third month in row where the inflation came higher. So far we were expecting that there will be 4 cuts. Now people are predicting 1 or 2.
Or none.
Or maybe none, who knows. So there is this still a sense of what's 2025 is going to look like. That question mark still lingers on. Having said that, there is definitely a stronger note of confidence that we see from overall corporate world, be it in US or be it in Europe, and which is a good sign to have as you start a new financial year.
But is it particularly in the BFSI space that you're sensing this confidence?
It is. And the reason for that is the performance of the companies themselves. So if you really see the recent results, the results have been quite spectacular. Also, in sectors like BFSI, there is always discretionary and what I'll call time discretionary.
Yeah.
The time discretionary can only be sort of deferred, but has to sort of caught up from compliance and other angles. So I think some of that time discretionary is coming back. It is reflected in Cognizant's third quarter numbers as we reflected. Two of our largest segments, which is BFSI and health, both have sort of really done quite well. So overall, yes, it is reflected in the performance of the companies and their beginning of the spends with us on what are time discretionary elements are.
Health, you know, what are you sensing from your health clients at this point in time as well, on the hope of perhaps deregulation, more deregulation as and when it is announced?
Yeah, there is sense of optimism in the healthcare industry. And as you know, Shireen, we are very deep in healthcare industry. We work across payers, providers, biopharma and medical devices. And we do have our own platforms in healthcare too. And roughly 2/3 of United States insured population is on our platform. We are confident of our healthcare business, and the dynamics in the market are also, giving sense of optimism, for our health business.
Well, now let's talk about AI, which is, of course, the big buzzword. But the buzzword has changed from generative AI, which everybody was talking about last year, to agentic AI. Now, I was lucky to get a little bit of a crash course from Babak earlier. And, I now at least get a sense of how it works. But everyone on this street is talking about agentic AI. Everyone is talking about a solution that they will offer to their customers for agentic AI. What will the differentiators be?
That's a very good question. Actually, the differentiation for Cognizant is our deep domain expertise. The technology prowess for building agents probably is common across, but the differentiation comes in our deep domain expertise across the industries. We have deep domain expertise in healthcare, we have deep domain expertise in financial services. And the fact that we know our clients' business processes in and out, and we have been serving those clients for a very long time, gives us, that permission and expertise to, invoke our domain expertise and domain strength into building of agents. That's where the differentiation comes. That's what Babak probably explained to you earlier.
Yes, no, that's true. But, Jatin, just to take that forward, that is going to be one of the key strengths that you leverage on, the domain expertise that you have in two of the sectors that are very close to what Cognizant does. But it is getting fiercely competitive as well. So, what will be the additional sort of strengths that you bring to the table in order for you to be able to take this from pilots and experiments to scale with your clients?
So I think in addition to the domain expertise, which helps us sort of leverage the agentic AI workforce that all applications or SaaS applications are building for our customers' use cases. So that's one which Surya talked about. But I think one other thing that companies like Cognizant can do much better is that we have an enterprise view of our customer. So we can go and create an enterprise version of that agentic AI, which goes and talks to the whole ecosystem of agentic workforces. For example, if the question is, when this sale will convert into cash, maybe you will need to go to 4 applications to answer that. And it is the expertise of companies like Cognizant, which comes to 4, where you have a sort of a central agent, which is speaking with 4 agents to get an answer out for the consumer. And that's where, so it's akin to system integration, but in a very, very different and a sophisticated form that Cognizant can deploy with its domain expertise that Surya spoke about. So that's where our differentiation comes.
So it's also de-siloizing the business, so to speak.
Absolutely.
So, let's continue the conversation on what and how much people are willing to adopt at this point in time, how much are people willing to spend at this point in time, whether the appetite to scale is there. Surya, what are you sensing?
So actually, Shireen, I look at it in 3 vectors. I think the first wave is addressing the productivity and efficiency part. The second wave is infusing AI across applications. Third is infusing it across the value chain or at the enterprise scale. For the first vector, I think the clients have adopted it really well to drive the effectiveness and efficiency, leveraging AI, call it tech for tech, using AI to write the code, or for contact centers to drive the productivity, the customer experience part.
How much of that are you doing at Cognizant yourself?
I mean, we are doing across all these three vectors.
No, but on writing code.
Oh, we are. In fact, I think we said it in the last earnings call. About 2 million lines of code was generated by AI for Cognizant. Roughly about 20 to 30% of code. Yeah. So I think we are doing that. So our clients have adapted the first vector really well, which is efficiency and productivity. The next vector is infusing AI in the applications layer, building agents, building the orchestration platforms. That is where the pivot needs to happen, and the expectation is that 2025 is going to be that year where the clients would migrate from experimentation to scale in the second vector. Once that is done, it moves to the enterprise.
So what are we talking about? At the enterprise level, are we still maybe 2 to 5 years out, depending on which sector, which industry, what size of industry, etc. as well, Jatin?
I wouldn't say 2 to 5 years out. I think we are probably looking maybe 18 to 24 months.
Yeah,
because this is progressing fast. I think the first question which customers were asking is this real? An answer, I think, is vehemently yes. There is nobody who is...
So that debate is settled.
Correct. Now the second question is, can I take it to the scale?
Yeah.
And I think there are more use cases which are feeding to more use cases, and therefore it's becoming a snowball. For example, somebody in HR creates an application which touches, let's say, 300,000 employees. The next question to CFO would be, what have you done to do a similar impact to, let's say, all your vendor payments? And so on and so forth. So it's not 2 to 5 years. I mean, it is maybe 18 to 24 months, if not earlier.
If not earlier.
That's how the customers see it.
But the next question that I would imagine that customers are also asking is, what is the return on investment? And, what is the expectation on that front? Productivity gains we've talked about, but in terms of cost savings and in terms of what it actually means at the enterprise level, what are we talking about?
I mean, again, you'll have to look at it in 2 or 3 dimensions. Productivity, it's established that the productivity unlocking could be in the range of 20 to 40%, depending on who you speak to or depending on the circumstances. Then when it comes to infusing AI across the enterprise scale, no one has an answer as to what it would mean. But everyone expects that it's going to boost, it's going to impact the revenue growth eventually.
Because we don't have the answer yet, are people still a little nervous about sort of going all in at this point in time?
I mean, could be yes and no. Because unless it's like chicken and egg, unless you really go forward and experiment, or unless you take the leap of faith.
Exactly.
Correct. So there is a bit of that too, but I think it has to progress across those 3 vectors that I outlined earlier. So I think we are in the second vector, and eventually we get to the enterprise scale.
This week, I will reinstate any service members who were unjustly expelled from our military for objecting to the COVID vaccine mandate with full back pay. And I will sign an order to stop our warriors from being subjected to radical political theories and social experiments while on duty. It's going to end immediately. Our armed forces will be freed to focus on their sole mission, defeating America's enemies. Like in 2017, we will again build the strongest military the world has ever seen. We will measure our success not only by the battles we win, but also by the wars that we end, and perhaps most importantly, the wars we never get into. golden age of America begins right now. From this day forward, our country will flourish and be respected again all over the world. We will be the envy of every nation, and we will not allow ourselves to be taken advantage of any longer. During every single day of the Trump administration, I will very simply put America first. Our sovereignty will be reclaimed. Our safety will be restored. The scales of justice will be rebalanced. The vicious, violent, and unfair weaponization of the Justice Department and our government will end. And our top priority will be to create a nation that is proud, prosperous, and free. America will soon be greater, stronger, and far more exceptional than ever before. I return to the presidency confident and optimistic that we are at the start of a thrilling
I go back to the conversations that I've been having with the tech CEOs, and they're saying, look, we're not looking at headcount reduction. We're in fact looking at a net addition at this point in time, but skills will have to be very different. Training programs will have to be run very differently. Jatin, what's your take, and how are you dealing with that?
So absolutely, and if you're okay, I'll just add to an ROI point because it's close to me.
Yes, of course, please. Yes, as a CFO, yes, of course.
Okay. So, I wrote an article a few weeks back where I sort of said that don't worry too much about ROI. I know as CFO, we just love to ask that question, what's the ROI?
Yeah.
But, ROI is a very effective tool when you know R, which is your return.
Yeah.
Because investment is fixed, but return is also fixed. Now, technology such as AI or Gen AI is in the stage where you really don't know the return. I mean, you are investing $5, are you going to get only 15 back, or 20 or 25 or 50? You don't know that. So you have to remain more agile, fungible, in terms of thinking, even as CFO, and say, I bet on the technology and what it can do. Let me not get very fixated on R, because when you get fixated on R, you put boundaries to what it can do. And I think we are at a stage where it can do a lot more than all of us can think today is possible in terms of its capability. And that's what we have seen since first time ChatGPT came out, right? Now on therefore, it also, if you just extrapolate that a little laterally, it also means to an employee that every one of our employees will have to be in a very different stage of mental hunger of learning for next 3 years, because this technology is going to go forward. It's going to impact everything that we do, be it coding, be it testing, be it engineering, be it implementation of large-scale system integration projects, and so on and so forth. So we have done a tremendous job of doing, I think, 101, 102, 103s. But as I said, as there is no box on R, there is no box on what that 103 can look like. It could be 150, 160 in some amount of time. So I think organization will have to remain agile to keep on putting that in front of employees, and employees on their side will have to be very agile to run with it. I think it's relearning of every knowledge stream that we know of. It's not just that.
So linked to that is one of the issues that is being spoken about is also the skills gap and the skills shortage in being able to leverage on this opportunity. And there, companies like yours, the private sector, will perhaps need to do the heavy lifting.
Correct. I think, as someone said, adoption of AI is led by consumer, more of consumer and less of the business.
Yes.
So you're absolutely right on that. So I think even at Cognizant, we have we are in process of training 200,000 of our associates in the AI and Gen AI technologies. And we have, we have the Synapse initiative where we have committed that we're going to train 1 million folks in the AI and Gen AI technologies, and we are well underway on that. So we are calibrating our talent strategy, which includes recruitment, skilling, upskilling, training, and everything on those lines to address those skill gaps that you just spoke about. And we have defined our curriculum for our training. We are partnering with some external agencies to take their help to impart the training. So I think we are well underway on that.
Yes, and I would imagine that will be critical to meet the needs as demand grows. But both of you have been around for over 2 decades now in the IT services space. Competition, and let me ask both of you, do you remember it being this fiercely competitive? When was the last time that you saw it being this fiercely competitive?
Probably 2 decades ago, maybe.
Really?
Yeah. I mean,
does it feel different? It certainly feels different to us from the outside.
Yeah, I think this is a very natural reaction when you are able to see an opportunity in front of you. Everybody wants to go grab that.
Yeah.
And therefore you see that everybody is trying to run fast because they can see finish line. And I think it was not visible maybe 18 months back, especially in Gen AI opportunity. But now people can see it. And therefore everybody wants to sprint. And therefore it's competitive.
And this is the technology disruption that we are seeing after a long time.
Yeah.
Probably after the internet, after the .com era. So, we had digital in between.
Yes.
But then this seems to be much bigger than that.
Much bigger, and everyone is going all in at this point in time. And I guess a litigious Indian IT services space is also something that we have to get used to. Is that going to be now the business as usual aspect of things?
I mean, I would let you comment on that, but I would say yes. To some extent, to a great extent, that's going to be the reality.
That is going to be the reality. Yes,
Yeah.
Jatin, I'm sure you have plenty more to say about that.
No, I just want to say that I think it's an incredible opportunity for all of us, and it's not for one firm. So I think we all have to work together to capture it well for our customers. That's what I'll leave it with.
Yeah.
I think some of these phases will come and go.
Yes, absolutely. These phases come and go. But again, since we're talking about pivots, the pivot that the IT services industry is going to have to make, and again, loosely, what I am gathering is that the focus has largely been on being able to do efficiency on scale, but now you're going to have to move a lot more on innovation.
Yeah.
So, how do you see that transition playing out for the industry, but also specifically for Cognizant in the context of having to be adaptable, more agile, and so on and so forth? How do you change the needle from efficiency at scale to innovation at scale?
I mean, Shireen, we have done that to some extent in the digital era, in the transition to digital era. So we'll have to do that, at scale again right now. So we, most of it is driven by client needs in many ways. We align to the client strategy on the innovation, and then within Cognizant we make sure that we are tailored and we are ready to adapt that, and we are training our resources in line with that. So that we are ready for this.
You're ready for the challenges, but also the opportunities.
Correct.
Jatin, this transition from efficiency to innovation.
Yeah. So Surya summarized it. I think that there are 2 axes that we are razor focused on. One is, are we at the forefront of innovation on this, right? And you met Babak, so that's one axis.
Yeah.
Second is how we scale it, and that's what Surya spoke about it, right? Every morning we have a dashboard which covers the accounts, the projects, the ecosystems where this has been penetrated and where it has not been, for a variety of reasons, right? I mean, every technology takes its time. So, in fact, we also look at what are our impediments to declog that and get technology or AI in. So long as we remain very, very focused and not get carried away in one of the two, we will be okay. Because it's important to be ahead and also important to make it at scale available to our company.
So how much has life changed for you? You talked about how generative AI has really, at the consumer end, has been the big breakout story post ChatGPT. How much of, of this stuff are you playing around with yourself personally in your everyday life?
I mean, I use this technology a lot, to be honest with you. I mean, I use this technology a lot for organizing my meetings, for, even sometimes to know more about a client. So even before I go to the client meetings, I use this technology to understand what's going on in their world. So it has been great.
So would you say that this is one of perhaps the biggest transformation, the disruption that everybody's been talking about that we've seen in the last 20, 30 years in the tech world?
I would definitely say that, and after internet, package implementation, some of these were very, very defining, and you don't even remember how you did things before that. I think AI is one such thing. I think, like somebody told me, your grandson will never learn how to drive a car, and I think that will apply to many, many more things. With Gen AI. So that's how I see it.
Maybe we'll have to reimagine the way that we teach students in school as well, because technology is all pervasive, and yes, I would imagine a lot of that reimagination across different sectors is going to be work in progress. Well, Surya, Jatin, thank you very much for joining us and giving us a glimpse into what's happening inside Cognizant, and we wish you the very best of luck. Appreciate you joining us here in Davos.
Thank you
very much. Thank you for having us.
With that, it is time for us to wrap up this CNBC-TV18 special from all of us here from Davos 2025. For now, goodbye and many thanks for watching.
National success. A tide of change is sweeping the country. Sunlight is pouring over the entire world. And America has the chance to seize this opportunity like never before. But first, we must be honest about the challenges we face. While they are plentiful, they will be annihilated by this great momentum that the world is now witnessing in the United States of America. As we gather today, our government confronts a crisis of trust. For many years, a radical and corrupt establishment has extracted power and wealth from our citizens while the pillars of our society lay broken and seemingly in complete disrepair. We now have a government that cannot manage even a simple crisis at home, while at the same time stumbling into a continuing catalog of catastrophic events abroad. It fails to protect our magnificent, law-abiding American citizens, but provides sanctuary and protection for dangerous criminals, many from prisons and mental institutions that have illegally entered our country from all over the world. We have a government that has given unlimited funding to the defense of foreign borders, but refuses to defend American borders or, more importantly, its own people. Our country can no longer deliver basic services in times of emergency, as recently shown by the wonderful people of North Carolina, been treated so badly. And other states who are still suffering from a hurricane that took place many months ago. Or more recently, Los Angeles, where we are watching fires still tragically burn from weeks ago without even a token of defense. They're raging through the houses and communities, even affecting some of the wealthiest and most powerful individuals in our country, some of whom are sitting here right now. They don't have a home any longer. That's interesting. But we can't let this happen. Everyone is unable to do anything about it. That's going to change. We have a public health system that does not deliver in times of disaster, yet more money is spent on it than any country anywhere in the world. And we have an education system that teaches our children to be ashamed of themselves in many cases, to hate our country despite the love that we try so desperately to provide to them. All of this will change starting today, and it will change very quickly. My recent election is a mandate to completely and totally reverse a horrible betrayal and all of these many betrayals that have taken place, and to give the people back their faith, their wealth, their democracy, and indeed their freedom. From this moment on, America's decline is over. Our liberties and our nation's glorious destiny will no longer be denied, and we will immediately restore the integrity, competency, and loyalty of America's government.
Hello and welcome to the CNBC-TV18 special. We're coming to you from Davos 2025. Themes change here at Davos. This year, it's all about Trump, and of course, it continues to be about AI. But there's one constant, and that is the hunt for chai and hot samosas. And that is where you will find all of India Inc. And we brought them together here for chai and samosas and some charcha as well. Gentlemen, thank you very, very much for joining us here. Before I talk about the outlook for India and the outlook on the budget, very quickly, let me sum up the mood that you've picked up here in Davos. And Rajiv, let me start by asking you, on the back of the conversations that you've had so far, the mood as far as the global economy is concerned and the mood on India.
I've never seen so much of positivity, especially from the US companies, US CEOs. They're very bullish. They feel there will be a lot of thrust to make investments in the US, and also a lot of simplification in laws, lots of opportunities. So the focus is just on growth right now. So the questions that everyone is asking, okay, how do we grow faster? Or in some cases, how do we start growing back again? So I think that's the one big change.
So the unleashing of animal spirits is happening in America, or it's expected to happen in America?
Definitely it's happening in America. I think in India, this story has been going on for the last many years, but I would say more from a global context. I think that theme is very, very strong. As far as India is concerned, I would say there are, I can bracket this into maybe 2 or 3 different kinds of conversations. One are people who have global capability centers.
Yeah.
I think they are very excited.
Yeah.
They continue to grow. They're very happy with the output, and they want to continue to accelerate the growth there. The second, to me, which was really interesting, is when I talked to the companies who have set up manufacturing in India.
Right.
It has taken them more time to set up, more than what they anticipated, but once they have set up, I think, and once they've gone through the skill challenge,
right,
the output, the productivity, the cost curves, and they're looking at scaling up more and more and more. So I think that's been, to me, that was everyone who has set up manufacturing is actually quite positive and wants to do more.
Okay.
I think there is some worry that, is the growth going to come back in the way everyone estimated? Because in the last 2 quarters, it slowed down. Will the 7.5% come back or not? And I think that's a conversation that on India. I think that's one conversation for people who are much more deeper already and deeper into India. For those who are not in India, I think it's a big opportunity. They're looking at that.
Okay, so that's interesting. Once into Indian manufacturing, they want to, of course, continue to accelerate their spends there. And joining us now is also Shobna Kamineni. How are you, Shobna? Good to see you here in Davos. But and importantly, as you pointed out, that the GCC story continues to be a very strong story, and India's integration into the knowledge economy globally, of course, continues. I've been talking to global CEOs, and everyone has specifically called out India for the fact that their headcount outside of the home headquarters is the highest in India, when we talk about GCCs. But CB, let me come to you now. Davos, the mood on the global economy and India.
So I think let me take it in the reverse order from what Rajiv did. So India, I think, upbeat, and there is an understanding that India is a story which is of states of India.
Yeah.
The next story of India is the states of India, and I think that pitch, as you are seeing in Davos, is becoming stronger. The other part is, of course, if you see, I mean, it continues to be, a place where in fact, in side conversations when we were discussing Trump, as you mentioned, there is a lot of individual companies I saw around the globe talking very positively, and it was surprising to see individual companies even from Europe being very, very upbeat about U.S. economy picking up, which would lead. And there, the conversations was really U.S. economy picking up and the emerging economies like India, Indonesia, and attracting, that it would continue to attract capital. So I think these critical features, and India being not only just the demand in India, but also Indian companies, both Indian and foreign, operating in India and operating out of India, and which is being able to connect with the world. I think that's many such stories coming out, and things like digitization, those platforms which has benefited a large number of people in India, inclusivity, which India has actually benefited from, and which has triggered Indian economy. I think these dialogues are pretty much strong in this year's Davos.
Yeah, and Amit, I want to come to you with one of the other aspects that is part of the conversations here in Davos, and that has to do with trust. And people want to do business with trusted partners, whether it is manufacturing or defense. Now, from your point of view, and you have a foot in both, manufacturing as well as the defense sectors, what are you picking up on? What is the kind of progress that you see? What's the kind of momentum build up on both these?
So let's talk about manufacturing first. And I want to elaborate on what Rajiv said. The US focus of the Trump presidency is going to be on build back better and build back stronger. He wants to fix the infrastructure, build a tomorrow ready infrastructure. So if you look at the figures of energy, they want to almost double the energy production, including coal, including gas, including nuclear. They want, and to do that, and to build all or renew all their bridges, airports, put in rail systems, all that will spur construction equipment companies, energy companies like Cummins, Caterpillar, and many others. And these are companies which have global supply networks. They will have a huge cascading effect to companies in India, companies like ours, which are big suppliers to them. And this is going to be a big, like a virtuous cycle that's going to take place. That is one. Second is, India and the US have now, with this CEPT agreement, moved closer to working strategically in defense. So as the US is going to realign its position with NATO, whatever that may be, I see a huge opportunity for India and Indian companies to also be a player in the supply chain to these geographies in NATO.
Yeah.
Obviously, being an Indian company, we have to, be cognizant that it cannot be to the detriment of some of our long-standing partners, but the capability exists and that we can be a player globally. So I think these are both opportunities, going beyond just Europe. Africa is an opportunity, South America is an opportunity, and Southeast Asia is an opportunity.
The theme here also as part of the CII pitch to Davos is that partner with us to be able to steer your future through a land of opportunity, which of course is India. You want to make a point?
I just want to make one more point, that the connect that India and especially through the Prime Minister have made with the Global South especially is very instrumental in promoting our strategic businesses outside of India. Yeah. That's really a big positive.
That's a big positive. Prashant, let me come to you now with what you'd like to add in terms of the opportunities as well as the potential for nurturing and furthering future partnerships.
Yeah, I just look at it slightly differently. And obviously we've covered the points about America, the growth in America because of Trump and the impact Trump's is going to have on the rest of the world, including Europe, which is quite worried, and China and all of that. But if you think about the capital cycle happening right now, this is about the first time in the history that whether it's the US, whether it is Europe, whether it is Asia, whether it is China, we are all investing at the same time. In the past, it was 70s and 80s when most of the infrastructure and most of the capability investment happened for building out the country. It was 70s and 80s, 60s, 70s, 80s when Europe and the US was building, and then in the last 20 years it's been more the developing nations. But this is the first time that because they want to replace, build newer infrastructure because of new technologies, what have you, it's a global capital investment cycle. And that, it's a question of how we as in India can take advantage of.
And how can the Indian private sector take advantage of it? Because
Exactly.
the heavy lifting as far as capex is concerned is largely government.
Exactly. So how can we take advantage? We also have the China plus one factor. So in addition to the capital investment cycle, there is a huge supply chain opportunity of making in India and exporting to the world. And really the question is, how can we, I don't think we are doing enough as a country. We can do more. And the kind of growth which we are showing today can be much better. And the opportunity available, which we can hear every day.
Yeah.
I mean, the US is spending $200 billion on data centers every year. I mean, just one number. They're spending, so the kind of money being spent on energy transition, electric vehicles, just you can name it. Replacing all the infrastructure which has got built in the last 40, 50 years is massive. And it's really up to us to see how we can take advantage of it.
I'll come back to what more we can do in just a second, but Jaidev, let me come to you with the point that CB made, that India will be driven by growth in its states. We have 6 states being represented here, and they're competing for investments. And, the fact of the matter is that everyone's positioned slightly differently. But what do you foresee as the possibilities arising from this competitive federalism, this cooperative federalism, which is on display here in Davos, and what it could potentially mean as far as growth is concerned? I mean, Revant Reddy telling me that he wants to add $1 trillion, to the overall aspiration that the Prime Minister has. Chandrababu Naidu saying the same thing as well. What will this open up and unlock as an opportunity?
I think it's a very important point, because actually, I was on the Commerce Committee when we decided that the ease of doing business should be opened up to the states and make the states compete with each other. And it seemed like a good idea, and now we know that it was a good idea, because once you open up that competition, healthy competition among the states to make ease of doing business much easier, they're able to attract a lot of investments. I think the states that have been able to do it well, including both the Telugu states and quite a few other industrialized states as well, have all done an excellent job. I was just on watching a panel with Revant Reddy Garu, Chandrababu Naidu Garu, and the Maharashtra CM Fadnavis Garu, all 3 of them sitting in the same panel. And one interesting comment was they not only share borders, but they share rivers. The rivers Krishna and Godavari starts in Maharashtra, goes through Telangana, and then lands into the ocean in Andhra Pradesh. So they're talking about how do we utilize those resources in a cooperative manner, not just competing with each other. But we have this, huge water resources that we're sharing, many other resources that we're sharing. They started talking about how do we actually cooperate on all of these things. So that's very good dialogue to hear from the states. So it's cooperative, competitive, and it's going to take the country forward.
Global growth. What's the outlook? What's going to be the outlook as far as inflation if President Trump follows through on his very aggressive plans as far as tariffs are concerned? What happens to US inflation? What happens to the dollar? Those will, of course, be big questions. What happens to emerging market flows? Those will, of course, be the big questions here in Davos. It's been over 2 decades of tracking the global power shifts at the World Economic Forum. Starting from our first story reported 20 years ago to last year's groundbreaking coverage of the world's most important economic event. From discovering era-defining ideas to connecting you with the world's visionary thinkers and doers. From decoding blueprints for growth to driving collaboration to make a better future. We've been bringing you a wealth of information through 20 seasons. Tune in to Davos Diaries at Davos 2025, live and exclusive on India's most trusted business news platform, CNBC-TV18. From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 budget headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live.
Shobna, let me come to you and ask you to one, tell us about what's happening here in Davos, what you're picking up in terms of the global mood, but also importantly, the areas for future partnership. And, you know, I've been hearing a lot from people who are working in the healthcare space about the progress that India is making on digital health. And you've, of course, been part of the World Economic Forum's committee that's looking at that. I mean, a global pathfinder is what Shyam Bishen, articulated the digital health story from India. What are the possibilities that you see as we move forward?
Really, there's so much focus on AI here because they think that's going to be, that unless a forum like this that brings together people from all over the world, all walks of life, from the NGOs to the social sector to large businesses, they realize that AI is the single factor in the next decade that's going to make a huge exponential change. If we think that AI is just better one-step procedure, not happening. It's really it's going to be the biggest transformation. So how everybody does business, how infrastructure gets spent, built, people get this thing. So what's India's opportunity in this? I think the good thing is that that our governments, the state governments, the private sector, all of them recognize this early. And one of the good things the testaments to India's infrastructure of people strength is the GCCs. Look at that. We have almost 2,000 GCCs. When I spoke to people, innovation, so more of that happening, then we'll get those data centers, we'll need them. So I think India also has that. While we're picking up the challenges of consumption, we're picking up the story of this, we do have huge opportunity in showing the world that we have the most skilled people, the talent, and they should come here. So I think that's a big one, AI talent. And the third one I want to leave you with, because I see so many of my fellow family businesses here with this, For us, it's a compounding story, guys. Don't you think that India, when I was in a strategy meeting, I said, we've been growing 20 years, we've been growing at 20%. With that, I think in India, my kids also will be 20% growth. Which country in the world can actually talk about it with that strength? That is our road. And how we make it happen, it's for all of us that we have to be. The only thing I want to say is, we can't leave it as being exclusive, that 4 of us in the room. We need to really make it, how can 1 billion people, how do we lift all boats? So that's the story that the government is actually playing well. And so I feel good about it. Look at Ayushman Bharat, look at the way that we're doing, the systems, the government, UPI. These are the great stories.
So that's the message coming in from Shobna to the entire panel here. Pull up your socks, gentlemen. That's the message there.
I'm going to pull up this up.
and very nice blue and white. Very nice blue and white. But Tapan, let me come to you now. And when we spoke, you said insurance, for instance, is a huge area of opportunity. You expect in the next 10 years, maybe there should be 1,000 insurance companies in India. But realistically, on the back of the conversations that you've had so far, are there any apprehensions that people have in terms of what needs to be addressed before they put their money in?
So if you look at it, when I said 1,000, it's a very simple calculation. US has 6,000. No? Even a small country like Singapore would have about 500 insurance companies. India has 70. So there's a huge disparity. There will be. And you heard our corporate leaders talk about that the expansion, the enthusiasm about India, the build happening. So insurance has to happen. It follows the economy. If India becomes the third largest economy, insurance industry in India has to become the third largest over time. If that be the case, then obviously you require much more insurance companies than you have currently. We're hearing about the budget presentation in terms of hopefully the insurance reforms happening, the 100% FDI coming, and we're hearing about in terms of opening of distribution coming, and we already have the product simplification happening. So quite a lot of activities happening in the insurance space, which propels this movement of more insurance coming up. But more than that, I think the issue broadly is when we talk of budget, we talk of country, we mostly talk about what has to be done more to propel the growth of the economy. But we rarely talk about what is the leaking bucket. What are the losses because of which the growth is coming down? And how do you plug that? I think there should be a serious discussion on the leaking bucket also. Okay. Because in my view, India's growth is over 10%. But because leaking bucket, you actually see it at 6-7%. And how do you plug that? So it reaches much more.
Where do you see the leaks at this point in time?
So if you see, and there are a lot of studies from WHO and other parts, a simple thing like universal health in India would actually propel the GDP growth by 1.5%. A simple thing like covering all SME, MSME in India, again, all these catastrophic losses. And we see this big issue now across the globe. It has a 2% impact on GDP, actually. So you just put on these points, then actually India should be growing over 10 comfortably even now,
And that is actually not just the aspiration, but that's also the need for us to be able to get to a very high, single digit, or at least get to that double digit number. What does ChatGPT have to say about what budget 2025 may hold, Tapan? What is it saying?
you want to try that?
Yeah, let's try it. He's wearing smart glasses, and so he's exactly. So which is why I said Tapan should do this.
Let me try this. It should be fun. Should have given me some early warning.
I should have given you an early warning, but you, as Rajiv, are you on ChatGPT or in something else?
No, I'm ChatGPT.
Okay, so let's see. We'll give 2 different prompts and let's see what ChatGPT comes up with in terms of what budget 2025 is likely to hold, and then that will be a confirmation of sorts once the 1st of February is here on how much ChatGPT can actually.
Whether it has a seat at the table.
Seat at the table or not.
Let's try this.
Okay.
Here, ChatGPT.
Hey there. How can I help you today?
Yeah, ChatGPT, I'm in Davos, and people are asking about the budget in India. What are the expectations? What should I answer them?
You can highlight that the Indian budget is expected to focus on economic growth,
infrastructure development, and social welfare. You might also mention the emphasis on digital innovation, sustainability, and policies that aim to support both urban and rural communities. This approach will help convey a balanced and forward-looking perspective.
Yeah, but what are the 3 top things that the corporate India should ask the government for the budget?
Corporate India might focus on 3 key areas: tax relief and incentives, requesting reductions in corporate tax rates and more incentive for investments in innovation and infrastructure. Ease of doing business, advocating for streamlined regulations, faster clearances, and simplified compliance to encourage growth. Infrastructure and digital transformation, seeking more government investment in physical and digital infrastructure to enhance connectivity and productivity.
You should have done this at the beginning. Phoebe, what are you going to do now? Phoebe, your job is to outsource to ChatGPT.
Thank him first. Thank you, ChatGPT, for answering.
Well, with that, I'm afraid we are out of time here in Davos, not out of ideas by a long shot or a wish list. And of course, the wish list only gets longer every year. But the hope is that there will be measures in the budget to spur and accelerate growth and, of course, also provide some relief at this point in time. And, of course, the hope is that the MPC will deliver with a rate cut as well as a CRR cut that CB pointed out because liquidity continues to be tight. The message, the overarching message that India Inc. is sending out is one of confidence and also one of being open not just to invest in areas where they believe that there could potentially be opportunities, but also to partner with global companies, to partner with global partners to look at the global opportunities that post-Trump era opens up. Many thanks to all of my panelists for joining us here on the Samosa and Chai Pe Charcha. But thank you very much. Have a great rest of the week here in Davos, and we will see you on the 1st of February to see what the budget delivers. Thanks very much for your time. From all of us here at CNBC-TV18, it's goodbye from Davos for now. We'll see you again after a very short break. Welcome back. The conversations continue here at Davos 2025. We're celebrating 2 milestones, 25 years of CNBC-TV18 and 20 years of covering the World Economic Forum's annual meeting. And joining us now is a man who's also celebrating a very significant milestone. HCL Tech has turned 25 since the time that it listed, and what a journey it has been as far as the company is concerned. In fact, I was just taking a look at the numbers, a CAGR growth of 20.5% over the last 25 years. CVK, congratulations and many thanks for joining us here on CNBC-TV18. Thanks very much for your time. Let me start by asking you about the last 25 and the many milestones that you've been able to achieve in terms of both revenue, profitability, the returns to shareholders, and then I'll talk to you about the next 25.
Yes, it's been an amazing journey for the company, and of course it's trust of our clients and the dedication and passion of so many HCLites and so many leaders who shaped the journey of the company. And we've delivered industry-leading TSR, 20.6% CAGR TSR over the 25 years, even beats Warren Buffett's record. So we couldn't be in a better place, and we are very happy about that.
Well, speaking about Warren Buffett, let's talk about the future, CVK. And at this point in time, it certainly seems like the mood is better. There is more optimism, specifically with respect to the US market. That's the mother market as far as you're concerned. Yes. What are you picking up on?
Yes, certainly there was a lot of uncertainty and lack of clarity when we met here last year. But this time, even though some of the things are not clear yet, but at least people are, most decision makers seem to know that this is the direction things are going to go, because everybody's positions are clear and they want to plan. I think the biggest theme everyone is talking about is how do you become very adaptable? Adaptability to any changes, whether it is regulations or geopolitics. I think that seems to be the biggest theme. And I think people have also prepared to some extent because none of this is new, whether it is tariffs or geopolitics. So I think we are better, leadership seems to be better prepared to deal with the change that could be coming up.
And in terms of business confidence and that translating into perhaps higher spends?
I think so. There was a holding pattern when we met last time. And I think over the last 2 quarters, we already see the discretionary spend picking up. Financial services, we saw a good pickup in the last 2 quarters. Last quarter, even the technology and all other verticals, we see some good pickup. And I'm really hoping that this momentum will continue. And given all the conversations, I feel more confident
Well,
now.
speaking of the conversations here are all about AI in its different facets. You're going all in as far as agentic AI is concerned, and that seems to be the big theme for you here in Davos this year.
Yes. So, Shireen, the way we are looking at AI is, first and foremost, every service that we deliver needs to really benefit from generative AI. And that means we are proactively talking to our clients as to what is the art of the possible. If we believe we can provide maybe 25% more efficiency, we are not shying away from it. We are talking to them saying, this is the art of the possible. We need you to walk this journey with us. We have an amazing platform, AI Force, which leverages all the best of breed language models, small language model, large language model, agentic, all of that. And we are proactively implementing it. We already have a very good success for 6 large clients. And we want to roll out to 100 clients by financial year 26, which is March of 26. And that journey is going well. That's on the service transformation side. There is another very big area, which is the value stream innovation. Like if you're working for a bank, there is an opportunity. We built a solution for trade surveillance. We are working for a very large hospital for the physician assistants. So these solutions are what we're calling as industry-focused repeatable solutions. We have come up with about 70 solutions. All of them have at least 1 or 2 clients who are already using it. They're seeing the value. And we want to kind of build on it, right? Eventually, our business is a big part of our business is services. The way it will evolve is it's going to be more solutions. It's a combination of IP and services. That's the way we believe the industry will evolve, and we are just walking that path.
And that's exactly the conversation that I've been having here in Davos with your peers as well on making this transition from being services to being services and IP driven and IP led. But you know, the 6 success stories that you spoke to us about, can you give me some color on the kinds of impact you've been able to drive on account of the adoption?
Yeah. So I'll give you an example. A very large financial services firm headquartered out of US, where we are one of the largest service providers for them. They have a modernization program. It's a 5-year modernization program, and they're spending roughly $1 billion a year. We believe through all the interventions, we can finish that in 4 years, which is $1 billion saving. And we have created proof points in a certain segment of the program to demonstrate this. So, and they're very happy to adopt it and really walk the journey with us.
So would you say that it's largely the BFSI side that is the early adopter at this point in time?
It's BFSI. This is really how do you use generative AI to accelerate a modernization journey. But there are other use cases, like for a very large technology company, we are using generative AI to significantly reduce the test cycles, and also the number of test cases are significantly higher, which increases the quality of the end outcome. And there is a big healthcare company where we piloted the physician assistants. Conservatively, it's expected to save at least $100 million a year. But the challenge there is how do you drive adoption across all the doctors who are part of that healthcare ecosystem. And that's a journey that's just begun.
Well, speaking of the journey now, let's talk about your own journey with respect to your people and being able to adapt to the future and the future needs of your clients. How many have you already been able to train to deal with an AI world, and what's the outlook on that front?
So I think we have 2 programs. One is really it's the users of AI, right? They're not the developers in AI, which pretty much everybody in the company needs to be a user of AI. Very large percentage of our teams are already trained as to use some aspects of AI, whether it is GitHub Copilot or other M365, many other things. Now, there is also a set of people who are building new applications, fine-tuning, LLM ops, all of that. I think we have about 4,000 people who are very capable to build, engage with clients and completely, who are architects and things like that. And they're also significantly deployed in the 8 labs that we have built over the last maybe a year or so.
So in terms of driving efficiency within HCL, what have you been able to unleash and unlock?
So HR is a big topic, right? Because we are constantly skilling people, redeploying people. So we have built a solution for people deployment because the skill matrix that we have is very complex. So I think just by all the data that we have, the projects that people have done, we're able to precisely kind of identify the person for the role. What used to take maybe a few days, we are able to even do it within hours. So I think that's a significant thing. That's something we are trying to scale up internally significantly.
Let's now talk about the bread and butter stuff. You've done the quarter, so I won't go back to the numbers, but essentially I want to understand from you, the margin trajectory from here on. You've seen 20% kind of margins. You're below that at this point in time. When do you anticipate being able to get back to that?
So we have a program called Project Ascent, which is really geared towards improving margins. And this quarter, we almost had a 100 basis points benefit. But Shireen, while we are significantly gaining from those programs, we are also investing a lot more in AI. So we are more focused on making all the right investments than necessarily delivering maybe a 1% higher margin. And we are also we're not covering the entire market. We also need to invest in sales. So that's another area of investment. So definitely a lot of improvements are happening, but we are investing for the future. And even on the other front, right, it's not about just everybody is chasing growth, but the most important thing we are focused on is to client relevance. Because the world is changing so much, technology is changing so much. The existing operating model is not going to take us to the next few years.
So what will have to change? And that brings me to the very important question. 25 done. Let's look at the future over the next 25. What is no longer relevant, or what is sell past its date? Past its sell date at this point in time, as far as the next 25 is concerned. Where will you need to make changes as far as the operating model is concerned?
I think the model that has been extremely successful, I think the time has come for it to be disrupted. IT services as a business, I think we are at the cusp of a very big inflection point.
You've been one of the brave people who've been saying this for a while, haven't you?
That is the reality, because we've always had this linear growth of people and revenue. And I think definitely if anybody is very successful in leveraging AI within their organization for their service delivery, we should definitely see a decoupling of headcount growth and revenue growth. At least a company should be able to deliver 5 to 10% growth without having to increase the number of people. You may end up paying more, your wage bill may go up, but headcount cannot have a linear growth. Because the biggest benefit of generative AI is to how much more efficient you can in whether software development or in operations, everything, right? Product development. And that has to reflect in the business model. And we're continuously driving how can we get more value, because every program unlocks some human capital. Now, how can that human capital be converted into growing the business? So that's really the journey. It's a tough journey, but we are at it.
I would imagine it's a tough journey, but since you're talking about this decoupling, what does it mean in terms of the numbers that you will have to hire? Because this has, of course, been an industry that has been driving employment of a certain kind of people. Now, what happens as far as headcount is concerned as you look at this decoupling that you spoke of?
I think the headcount growth would not be in the same proportion as revenue growth. We will continue to hire because with some more uptick in the external environment, there will be good growth. And maybe if growth was X, headcount growth will be X minus 5% or something.
Okay, so that's as far as headcount and revenue and that being decoupled over the next 25 years as you change your operating model.
That's not even 25 years. That's here and now in the next 3 to 5 years.
Next 3 to 5 years, you believe that that's likely to happen?
We should start seeing signs of that. I mean, we're already seeing, like this year we've grown, we've given a guidance of 4.5 to 5%, but our headcount would be more or less flat. So that's really the beginning of a new wave. That's what I would
So the other transformative changes that you believe that you will need to make, the industry will need to make as well over the next 25 years?
Its services are, you need to have a platform-based approach. I think there is definitely a lot of emphasis on, when we've heard of software as a service, but service as a software, that's another trend which is evolving. And it's about using the right instrumentation and right tools and platforms. And also, it's not just selling services. You combine it with some of the IP and the solution and the software products that we have to really deliver an end outcome. I think it's a combination. I think more and more the services business model will start looking like a software business model.
Well, you delivered a very strong quarter, but the market is now, of course, worried whether you will be able to do better than what you've been able to deliver, and whether there is likely to see some degree of underperformance. What would you have to say to that?
I think we have delivered the industry-leading growth both in the upcycle and the downcycle. I think that is the biggest proof point. Over the last 4 years, 2 years of upcycle, we delivered industry-leading growth in services, and 2 years of downcycle, we're leading the industry in growth. And I think that's a proof point for what is to come.
In terms of deals, the pipeline, of course, is looking very, very strong, at a record high at this point in time. As you look at unexplored markets, as you look at unexplored verticals, how different do you believe that you're likely to be as an organization in terms of both those areas over the next 25 years?
Yeah, I'll start with the verticals. I think we are quite well diversified in the private sector. It's only the public sector is where we have very little presence. So we've created a new team and a leadership to drive the business in the public sector, especially starting with state and local governments and also the federal government. We think some very good opportunities will evolve, especially which is led by our software and the services around it. So that's a big play, public sector. And in terms of geographies...
And public sector, you're talking about globally, or...?
Yeah, it's globally, but we're really taking a big shot in the US to start with. We're already present in Australia in the public sector, but US is the next, UK will be the third. And India, we're already present for our software business. We pretty much serve almost all the departments. In terms of geographies, I think... we had a footprint to grow Germany, France, Australia, Canada, and Japan. I think that's already it's in good motion. We are
YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknight.
Welcome back. You're watching CNBC TV18. Conversations continue here at Davos 2025. And joining us now is the Minister for Skills Development, Jayant Chaudhary. Mr. Chaudhary, many thanks for joining us here in Davos. I would imagine it's been a busy last few days for you, meeting people both on the government side as well as the private sector. You know, the big story from an India point of view continues to be its people, the talent capital, the talent pool that is being leveraged not just by domestic companies, but more so by global companies. What's the big takeaway? What's the big read that you take away from here?
Well, I think at Davos, over the years, and you've been here, you've seen the progress. The brand India is being respected, recognized world over. And of course, the largest component of brand India is not the companies and not the governments and not the leaders as much as it's the people. They are well accepted in the communities where they reside. They are providing leadership. And India's role in the community, larger community of nations, the way they've taken up the leadership role, whether it's climate change or the finesse with which we organize the G20 track, and on various issues of global importance. Our positions are well reasoned and respected. So I think first time for me coming to Davos, but it was resounding. The way the respect for India, the interest in India, the curiosity, the desire to come to India and invest in India and invest in our people.
Yes. Well, and that has been something that has been playing out through the Global Capability Center story, where India clearly is at the forefront at this point in time. But, you know, speaking about skills development in the context of a high-tech world, in the context of an AI-led and an AI-driven world, a lot of the heavy lifting, of course, the private sector will have to do, but it will also have to be in conjunction with the government. So what's the plan now as far as being able to address some of these new sectors, some of these sunrise sectors, so to speak, from a skills point of view?
So I think Indian government has been doing the right things. Some of these new innovations, when they first come in, you have to give it time to grow, for every sector to understand the full potential, to be able to research, innovate, tinker. And I think that's the ground setting has been done by government. We have a national strategy for AI. We're trying to do the institutional building. There was some catching up to do. Our capacity to compute, our approach on open system versus proprietary, and our usage of digital technologies, the way we've utilized them for providing a social good, for dissemination and delivery of social welfare schemes, is also part of that story. We know that 90 million plus mobile users, lowest data costs, there's adaptability of Indian consumers to accessing and using technology. So that is a kind of readiness that people can tap into. That's an open market. And I think even some of the AI story emerging, the innovation, the way government of India is saying that we don't need to have regulation, oversight, law as much as we need to have standardization, create resource centers, enable research. And let's have unleash a new wave of private sector in India and let them take leadership on the global stage. We already have capacities. We have programmers, we have coders, technically minded people on STEM. 43% of women in higher education in STEM. So even the gender issue, because some concerns on AI, ethical AI, and what it means is if the algorithms are not designed by people who are diverse, then the end product will not represent the world.
Absolutely, the biases will.
So the biases will continue. So that there, India's position on data sovereignty, our continuation of trust, and the values that we represent, I think that is also important. And we're building all of that into the structures that we are creating for tomorrow. Even on AI, 16% of the global workforce on AI with AI skills is India. And recently QS on the Future Skills Index ranked India second. Stanford has said on AI penetration, they've released an index and they put us ahead of even USA. These are all encouraging signs.
No, encouraging signs for certain, but what will you be focused on? What will you prioritize, especially when we talk about, ensuring that we have the requisite skills for our people to continue to make good of this advantage? What is the government looking at specifically from an AI perspective today?
I think right now we have to prepare. There is going to be some amount of disruption. There's a lot of fear and hype also being created. There's some jobs that are going to be taken away. If you break down a job into a series of tasks, and that is what Skill Ministry has been advocating for, and we're working towards standardization. NCVT, which are the regulators, created occupation standards, nano credentials, micro credentials. You break down any job into a series of tasks, and you compare that and benchmark it to the global standard. So that's the whole exercise. And if you look at it that way, then AI is about complementarity. It's about augmentation. Jobs may not go away as much as they might make people in those jobs more effective and efficient. So that's good for everyone, but we have to prepare for that. So AI readiness, foundational AI courses are something we're going to push out. I'm also Minister for Schools, and you know that schools across our network, even central schools, Kendriya Vidyalaya schools, Navodaya Vidyalaya schools, those students are already learning that foundational AI. There's a program with METI and private sector, Intel, big companies have come on board, IBM, Microsoft. They're helping us design those shorter term courses so that we can certify that a large percentage of our population is AI ready. But I would still urge corporate India, because CNBC, everyone watches, all the business leaders watch, tune in. I think every sector needs to have a dedicated AI team to ideate. And when you say AI, don't think you just need engineers and coders. You need thinkers, you need philosophers, you need people who understand market, you need non-technical people to talk to the technical people and create the products, create the layers. So I think every Indian enterprise must have dedicated AI teams to understand, analyze, and disseminate.
There was also efforts underway to try and ensure that there is more of an alignment between the needs of industry and the skills that we are imparting at this point in time. And I know that this has been work in progress over the last several years.
It will always be.
I would imagine. But where are we at this point in time? Because, what you hear from a lot of industry players also is that, look, we have the jobs, but you don't find the people with the requisite skills. And then you have people saying, where are the jobs?
So the thing is, in countries like India, there's a context to this, which are young, where labor is in mass supply, where there's a large informal sector. There's a natural progression to how things happen. We've seen that in other countries, development of countries. So our goal is to formalize the sector, creditize learning, create an appreciation for that, an aspiration for skilling, weave it into and integrate it to our formal education systems. so that students don't feel that degree nahi kar paya, chalo diploma kar leta. And based on skills, not a resume or a degree, should the hiring happen. And this is where we really need corporate India to step up. You hear so much talk about 70-hour week or 90-hour week. I'm not getting into that. I've had a position on that earlier.
What is your position on that?
I think firms that want to charge a client hours will talk in terms of hours. And firms that want to create a product and innovate will talk in terms of efficiency. So it's not just hours. We know, in government we know. But people can sit in office and do other things. You need to be effective in what you're doing. And that effectiveness is very important. What Prime Minister says, that zero defect and zero effect, sustainably, climate responsibly, and creatively, and produced for the world according to the best global standards. That is what brand India should be. So I think what I'm saying here is that even as this is an iterative process, there will be changes that happen in the landscape. My ministry's job is to work actively with industry, so we're going to do regular skill surveys, skill gaps, skill assessments, and we are going to have to constantly retool our formal and apex.
Further upgradation of the ITIs, etc., to meet with the new needs?
That's a massive scheme. It's been announced and it's being worked out. There's a dialogue that is happening with industry and states, because you need active participation from them. You need to give them real ownership of this exercise. And that's where real change will happen.
By when do we start to see change happen on that front, given the fact that the scheme is already in progress?
I think we're already seeing change. Once you started that dialogue, you have to understand that every state government must prioritize skills. And I think after the Prime Minister talks about skills, after the Finance Minister talks about skills, it gives us all a mandate and a certain power. And I think even Chief Ministers, our Honorable Chandrababu Naidu ji, I spoke with him, and all the Chief Ministers, Fadnavis ji, our Chief Minister from Telangana is here, Revan ji, Central Ministers. You ask them. Every dialogue they've had with every global leader, corporate leader, they're stressing about the skills.
Mr. Chaudhary, it's been an absolute pleasure. Thank you very much for joining us here in Davos. We wish you the very best of luck with the plans that you're currently working on. It is going to be an arduous but a very critical and important journey to make. But thanks very much for your time. We will take a break here, but the conversations continue in Davos. We're back with you with more insight, more voices and more opinions. Stay with us, don't go anywhere. Back in a moment with more.
About India, we have them growing strong next year, consistent with what they grew this year. It's now moved to the 5th largest economy.
The Honeywell view on India, and how do you see the next few years?
Domestic business doing extremely well. Can't be more pleased in terms of opportunities in India.
It is, and there are lots of reasons for that. One is because he's in a much stronger position in the United States than he was in 2017.
They're working on AI. They're working on all the innovative capabilities that we want to input into our products. A lot of that's coming out from India.
If I were to say even heart and mind put together, India is an exciting story.
India is going to be the office of the world. You and I discussed about it.
Trained. The last time we spoke here, you had given me a number. What does that number look like today in terms of the people that have been trained on AI within Infosys?
So within Infosys, it's a huge number because there are two types of training. One is what we call AI aware, and one is a deeper training where people are using it. The AI aware, which is a broad training, is over 270,000 out of about 320,000 people are in this AI training. And it's really across the board because there needs every discussion with client, every deal, every large deal, every medium deal, there's a lot of interaction on AI. So it's built into many things.
So clients are asking you now specifically for what the AI use case is going to be and how you can contribute to that?
Clients are interested in where generative AI can help them. And what we are seeing is through agents or through small language models, in the past through large language models, we have various ways in any large transaction or program where they can benefit from this AI. And so we are using it and they're quite happy with it.
So what is this going to Let's talk about India. The outlook that the IMF has put out pegs growth at 6.5%. Still one of the fastest growing large economies in the world. What do you like about India today? And in the context of what we will hopefully see in the budget, what would your expectation be?
So firstly, just to emphasize what you said, which is, I mean, India remains the fastest growing large economy of the world. We do expect to see growth to recover in the second half of this fiscal year, which is how we get to 6.5% growth. So for us, potential growth for the US, for India is 6.5%. To get to much higher levels of growth will require structural reforms on many fronts. Also, it will require continued public infrastructure investment, which the government has been doing a lot of, but you're going to require that at the central government level, but at this and the state government level, and to be able to execute on a timely basis, that's going to be quite important. There's also the more long-standing issues in terms of the ease with which you can start a business, the ease of doing business, the ability to buy and sell land, labor reforms. I mean, all of those are required. And lastly, you know, we're now in a world where companies are looking around for how to build their supply networks. And India is an attractive destination for them to do it. So this is an opportunity for India to be able to plug itself more firmly into global supply chains.
You know, on India, we've got of course, 6 Indian states, along with the central government being represented here in Davos. And we've only seen the India presence go up over the last few decades here in Davos. How do you see, especially in areas like manufacturing, foreign direct investment moving to India in this context of reshoring, which has now been the buzzword here in Davos through COVID?
Yeah, and you have also this notion of friendshoring. Yes. And the thing is that India is seen as a friend by many countries. So this Make in India initiative, getting more manufacturing.
Good evening, ladies and gentlemen. Thank you very much for joining us here again for what promises to be an interesting and insightful conversation with the Chief Minister of Andhra Pradesh and, of course, leaders from different sectors and different parts of the world on what Andhra Pradesh can do to leverage its potential to emerge as a sustainable development hub. Very ambitious growth targets have been set by the Chief Minister in what they want to achieve. But to talk more about that, Mr. Naidu, let me start by asking you the focus on sustainable development, this focus on green energy, the focus on developing Andhra Pradesh as an export hub. What will you focus on? What will you prioritize? And more importantly, what is the ask of industry?
2025 World Economic Forum is centering around green energy, green hydrogen, and also logistics and deep technology in all walks of life. These are all the issues now. Regarding to Andhra Pradesh, ocean economy is the biggest advantage for us. Starting from tourism, and sea cargo. And also now we are focusing more on petrochemical complexes. We need more and more ports and also green hydrogen. Now for exports, we need a port. This is where we are having advantage of 1,000 kilometers. We wanted to leverage ocean economy. Green energy, we are planning nearly 10 lakh crores investment immediately. 2 projects already started. Both 2 projects are port-based exports, either Kakinada Port or Visakhapatnam Port. And also there is unexploited resources in the sea. That also we have to work in that direction. We are studying with all our friends, their ideas, everything. Ultimately, that is the biggest exercise I want to do. If you can see here, employment opportunities in blue economy, nearly 40 million jobs. The ocean food sector employment, nearly 237 million people globally. And also maritime, coastal and maritime ecosystem contribute nearly 11.5 billion US dollars. Maritime transport, 80 to 90% is only based on that. From India to anywhere, global transportation, everything. This is sustainable economy also, even rural poor, even seafood, fishing, all these things, for especially fishermen community. That is the main livelihood. So even India's blue economy contributes 4% to the GDP.
Yeah.
In this, as on today, we are using 95% of money, GDP is coming only for transport sea cargo. There is so much of unexplored wealth in the sea, ocean economy, that we have to use it. In Government of India has introduced some programs, this Sagarmala, and also Amrit Kal Vision 2047. If you can use all these things, then we'll have a better advantage. Even we are watching our third largest coastline, Andhra Pradesh in India. 6 operational ports, 4 greenfields ports are available. That also we are working now. Another 1 year time, they will come operationalized. Cargo handling capacity as on today, 321 TPA. Another 1 year or 2 years, it will go 431. This is the area where huge opportunities are available for us. Even shipbuilding activity is a big activity. In India, we are doing extremely well other areas. Even shipbuilding is not proper in India. So that is also in economy, Indian economy is related maritime policy. We have given excellent policy. We are working in that direction.
Nico, I'll start by asking you, as the head of business development at the Authority of Rotterdam Ports, with the focus on sustainability as well, what would you say are the enablers that one needs to focus on in your experience that perhaps the state of Andhra Pradesh can learn from as well?
Well, first of all, let me thank you for having me on this panel. So I really appreciate the hospitality. So thank you very much. Maybe to elaborate a bit on your question is as a key point, ports are always nodes in a network. It's not just a port; they are connected with the hinterland, with exports and so on. And if I then first maybe elaborate a bit on the position of Rotterdam. Today, Rotterdam is such a node. It's a hub for Europe. And I won't go into all kinds of details and numbers, but one is, I think, important, that, for instance, 1/3 of all energy that's used in Germany passes through Rotterdam. 1/3. And now if it comes to how do you address the challenges that we have around, well, climate change, sustainable development, in the future we would like to remain as important as we are today for Northwestern Europe. And the difficulty with ports is that all kinds of investments really take a long time. It's infrastructure investment with an horizon of 20, 30 years. So what we did is really focus on what we want to be in the future. And we then decided that we want to be the port that delivers your goods in a clean way, that we produce it in a clean way, and that we produce clean goods. So those three elements are key of our strategy, and we translated that into an approach where we focus on infrastructure development for today and to raise efficiency today, the building of an energy system that is green, and the building of a industry that's sustainable and focus on sustainable transport. And in all elements we have now over 70 projects running, and one of the key elements I think is, and maybe that also relates to your development, is that it's nearly always public-private partnership. Because public enterprises or private enterprises, they have different ways in how to address and mitigate risks, and that's key for these kinds of developments.
That's very helpful, Nico. Thank you very much. And I think that those are some of the issues that the Chief Minister alluded to as well when they talk about building out the port system. Of course, the linkages that you spoke of, but also ensuring that it is sustainably done in the form of green energy and so on and so forth as well. Tushar, let me address the same question to you. In your experience of doing ports elsewhere, what do you believe the focus areas need to be?
Yeah, so we're a UAE diversified group into upstream oil and gas, ports and logistics, power EPC, and also invest in private equity and venture capital. We've been operating ports for the last 50 years. We built the first container terminal in the Middle East. So our port subsidiary, Gulf Dana, operates across the Middle East, in the UAE, in Saudi Arabia, in Iraq, and also the US. We manage around over 6 million TEUs and have a logistics subsidiary that provides end-to-end logistics services, including logistics cities, ICDs, inland container depots, and the whole solution. I think if you take a step back from our perspective, what's exciting is the growing bilateral trade between India and the region. With the signing of the Comprehensive Economic Partnership Alliance, CEPA, in 2022, bilateral trade has grown exponentially. There was a target of 100 billion in 5 years, and that's expected to be exceeded well before time. I think Andhra Pradesh in particular provides a great opportunity because, of course, the strategic location, of course, your leadership and the vision, and initiatives like the blue economy. If you look at it, the West Coast, if you look, handles about 72% of container traffic in India. The East Coast only 28%. So that itself presents a huge opportunity because the population, in contrast, the population split is 50-50. So the East Coast is less congested and presents a great opportunity. And we've been learning more about your plans on the port development side and be keen to explore.
Is it an opportunity that you're actively considering today?
Absolutely. I've spent time with Honorable Chief Minister's team and the Andhra Pradesh team, and we'd love to explore it further.
Well, Dipali, let me come to you. What can be done to leverage some of the aspects that we just spoke of to ensure that India and Andhra Pradesh today, since we're talking about that in specific, can position itself as an export hub?
When we talk about textiles and what we are talking about the global supply chains here and the blue economy, I think important thing for Andhra Pradesh is that you have your cotton right next doors, and the DCH, which is the finest cotton that you grow, could be an opportunity, and the yield and the acreage of that could be something that we could really work on, sir. Because, when you talk about India being an agricultural country, but the yield is still far lower than anywhere else, that could be a great opportunity. The world has been talking about regenerative agriculture, whether it's corn, whether it is millets or cotton. I think that's where the soil gets protected, the acreage increases, and could be the new way forward for us. And educating the farmers could be a great opportunity, sir. The transparency of the supply chain is what we talk about in the global supply chain that we are working on in the terms of the blockchain and the traceability from the farm till the final mile is a very important aspect. The important thing, again, is about when you're talking about sustainability, you're talking about the carbon emissions, you're talking about how much water are you using in textiles, actually. For example, at Wellspun, we actually use 30 million liters of water, but not even a drop of fresh water is used, sir. We actually use the sewage of the villages, we pay them royalty, and use it into our complete manufacturing. And that could be a very huge opportunity that we can really look at. That could be something, and of course, Sumant is here, I don't want to take that away. But I think green, so like for example, for Wellspun's mission that we have, by 2030, we will be water positive, we will be completely green by 2030. We'll be using 100% sustainable cotton, zero landfill. We'll be impacting around 1 million communities across. I think it's a great opportunity for whatever we can actually look at. Last but not the least, it's the people. So when I talked about the farmers, and I think when I talk about textiles, it is labor intensive. It is the second largest employer after agriculture in the country. We are talking about people, we are talking about our workforce, we are talking about the skilling centers in India. But I must tell you, sir, and you're talking about the ports here, there are certain skills that need to be acquired by a country, even in textiles, like fashion bedding. The culture of, working, I think our neighbors and even China would have that better. And if we can set that up in SEZs and have that talent come in, even a lot of technology can come in, I think we could learn from the best and really make Andhra Pradesh the hub of, the sourcing destination. I mean, when you're talking about the retailers here, I think the important thing that they struggle with, there's certain industries, sir, like the wrought iron, or the toy industry, they could itself become $2 billion in itself if we can really make it into a kind of a global supply chain, literally, sir.
India, I think is going to happen and is already unfolding. We know that Apple didn't produce any iPhones in India a few years ago. No, I think it's like 25% of their production or something. Take the number with a pinch of salt. But India is developing also when it comes to manufacturing. But what really works for India and also moving forward, where we do expect most growth in the decade to come, is on digital trade and on services. And these are two areas where India is very strong and has comparative advantages. And if it also can catch up on manufacturing, I think this can be a very good decade for India.
What are they talking to you about when they speak about India specifically? Are there any sectors in particular that they're most excited about? You bring the PwC Global Board to India in 2025. So what looks exciting to you?
What looks exciting to us is now India has always been a destination for talent, the global capability center for many of our clients, a great services industry, and talent in India is being leveraged across the world, pretty much. Now what we're seeing is that the rest of the world is now looking at India as a manufacturing center, a center of production, which requires new skill sets, but manufacturing is now coming to India. So having an economy that is both a services economy and a product-based economy and manufacturing economy is going to be critical. And that is what our clients today are looking into India to understand that it is a big market where many clients are looking at India now as a new manufacturing center for the world.
There are reports suggesting at this point in time that the government may review its policy to get manufacturers to actually make in India, especially as far as the EV side is concerned. And now, you have Elon Musk quite literally in the White House. What's the expectation in terms of possible changes? Are you hearing anything on that front?
We are not hearing any possible changes, but our stance has always been that we welcome competition. We feel that we will get better with competition. We have over many years. And from an electric vehicle standpoint, it will help grow the market as well. So the part that what we've seen the government always focus on is Make in India, because Make in India is essential. We have the ability today to make world-class vehicles. What we've done with our 2 vehicles is a testament to that. These are designed in India. The technology comes from India. Our Research Valley has really set them up. And that's something that we are starting to see as world-class products being made in India and being made for the world now. So that is in line with the vision that the Prime Minister has laid out on Vikasit Bharat and on India being a manufacturing hub for the world.
The government has also tried to draw in foreign direct investment under the Modi administration. Do you see more foreign investors like yourselves looking at the opportunities that present in India from a sourcing perspective, manufacturing perspective, and a retail?
It's going to be better, brighter, safer, cleaner, healthier over the next 100 years. India is a growing market, is a growing population, but also has a fantastic base to develop with so many fantastic Indian people, and this is why we are committed to India. My advice to companies is that don't come here with shortcuts. Come to India with the long-term view, and this is what we are for. We did when we came to India initially. We went in depth what IKEA stands for and what Indian society stands for and how can we connect. And we felt from the very beginning, a lot of connecting points. That's why we are deeply committed to India.
Your heart is
Yeah.
with India and in
India, that's
as you
right.
pointed out.
I think, for example, on the trade front, I was pleasantly surprised that they didn't impose tariffs right off the bat, which seems suggestive that they will be a little more considerate about it. But
Calibrating what rate they should impose?
Calibrating what rate and doing less damage, more from the US perspective than from the other countries' perspective. But I think the announcement of External Revenue Service implies what I thought earlier, that he is serious about tariffs, both from the perspective of raising revenues for the US so that he can cut taxes more, which he needs to. Also from the perspective that he really believes by putting tariffs on others, he can bring jobs back to the US. I'm skeptical that he'll raise much revenue. I'm skeptical that too many jobs will come back to the US because manufacturing has gotten so automated that, it's not going to happen in a big way.
Do you foresee the need to scale down hiring? Do you believe that you will continue at the pace that you are, or you may even have to look for more?
I think that you won't have to scale down at all. I do think that over time, and at least we've seen this in our software portfolio, that there is a certain non-linearity between number of people hired and actually growth. So I think that more and more not looking at them as, a direct correlation is something that will happen. But for example, in our engineering services in ERS, even though almost 80%.
You continue to watch our conversations here from Davos 2025, and as we've been telling you, it's either about President Trump or it's about AI, and there's quite literally nothing in between. Joining us now is a man who is spending all of his time focused on digital transformation and what corporations are doing to adopt many of the new technologies, including, of course, AI. Nigel, many thanks for joining us. It's great to have you back here in Davos. So, as I said, nothing in between. It's Trump or AI, and AI was the theme here last year as well, but what we're hearing this time around, that it's a little bit more real.
Absolutely. And I think what you saw is companies move out of the proof of concept, trialing stage, and starting to really recognize that this is as fundamental a shift as the move from steam to electricity. Right. I think, there's lots of analogies being used, but primarily speaking, every aspect of business can be reimagined. From a Publicis Sapient perspective, a lot of the work we're doing with clients now involves building agentic architectures where you have very specific agents acting almost as a digital workforce, in part alongside your traditional workforce, doing very specialized things from healthcare to retail and financial services. Every one of these things now is moving businesses forward pretty substantially.
Yeah, that clearly is the theme here. Agentic AI is what a lot of people are talking about, but you talked about how the digital workforce is working alongside the traditional workforce today. But do you see a divergence between that, and how soon can we expect that divergence to take place, if at all?
I don't see a divergence. I almost see it as a convergence. So if you think about, the way we think about this is like Iron Man. You've got a person in a suit. If you don't make investments in the suit, you just have a very good person. Yeah. But if you make investments in the person and the suit and you bring them together, you get a superhero. And it's almost that idea of how technology and people are going to need to coexist fundamentally, where you're now starting to value people not just on their own abilities, but on their abilities to leverage this technology. I mean, one of the things we've done at Sapient is built a platform we call Slingshot, which we've invested hundreds of millions of dollars in, building a lot of the expertise we've had over 30 years of transforming business into this. And even in our organization, as we bring new people on, we're constantly saying to them, look, we want you to leverage technology and the capabilities you bring. It's not either or. And it's not competition to show how much better you are without the technology. It's about saying how you can bring these two things together to accelerate.
But what is the pace of adoption now? As you talk to your clients, from Marriott to McDonald's, what are we talking about in terms of the speed as well as the scale of adoption?
The adoption right now, I think, has moved from testing AI in the context of specific use cases to now broad-based applications. Where companies are recognizing that by connecting different data sources in their organizations, they're able to do things across customer service, sales, and marketing that they were just not able to do. When you think about, personalized marketing offers based on the last action you had. When you think about allowing you to pick your own hotel room based on the view or the personal preference you express. When you think about room allocations, every one of these things now can be automated on the basis of data that you have shared with these organizations for the purpose of them actually helping you. So now as you start to see that evolve, I think there's a real opportunity.
But is it more in terms of IT spends, or is it a reallocation of capital as far as the existing IT spends were concerned?
I think definitely most organizations will tell you, and most CEOs in Davos will tell you, that there's no magic tree where they can shake to generate more money. So I think a lot of this is essentially about how do they fundamentally look at the inefficiencies in their business. We're doing large programs in a number of industries. In one case, a 10-year mainframe migration, which is not a project that Sapient would typically do, because it was a low-cost, large-scale, low-cost offshoring type operation. Now using our platform and using our tools in AI, that program's taking 3 years to do, which means it's freeing up so much capital for the company to reinvest in more transformative initiatives. It's the same thing when you think about how call center first-time right handling, when you start to think about marketing messaging, every one of these things being more efficient means you're freeing up more capital for folks to actually do things better.
Speaking of doing things better as well as large spends, I don't know if you caught the overnight announcement that came in from President Trump about the $500 billion between
Stargate.
Stargate. I mean, when you hear numbers like that, what does it mean eventually as far as the ecosystem is concerned? What does it mean in terms of the opportunities that could potentially open up?
I started by using a power analogy at the beginning, right?
Yes.
And I say, I do think AI is going to be as ubiquitous as electricity. And when you start to think about what that means, is in the same way that you saw massive capital infrastructure investments in electricity, whether it was nuclear, whether it was traditional power plants, in order to power what was effectively the Industrial Revolution, I think you're now going to start to see the same in this massive AI transition. One of the biggest things that come, and it's not just the United States, it's the UAE, it's Saudi Arabia, it's India, it's China. All of these markets are making massive investments because they realize without that underlying infrastructure, companies are going to struggle, particularly when you move beyond the Fortune 500, to start to leverage a lot of this capability to really reinvent business. And I mean, India's done a phenomenal job of establishing, public-private partnerships with payments, with national identity, which has accelerated millions of people into digital adoption. And I think what you're going to start to see with AI now, countries realizing that unless you start to make these infrastructure investments, you're not going to see the same kind of progress that you want to see.
Well, you talked about India, but let's talk about your business in India specifically. It is one of your largest in terms of headcount for Publicent. So, take me through the view on India, what the outlook is from here on.
We're extraordinarily excited about India. When you start to think about where the world is moving to a very literate, English-driven, technologically driven workforce, and India has all of those things in spades. Our workforce in India continues to do some of our most pioneering work. Some of the platforms I talked about building, whether it's agentic platforms for industries, a lot of that work happens in global teams, but driven in large part by our teams in India. One of the things we observe about India, though, is I feel like there's a huge opportunity, but also a huge disruption to the traditional hierarchy of Indian IT services. I think historically IT services were about cost arbitrage in the context of India. So you scale businesses on a cost arbitrage basis. What we're seeing now is this next generation,
which is the move towards innovation.
Absolutely, which you have to start to do to move towards innovation, but also recognizing the fact that AI is going to mean a significant amount of disruption to those lower cost, lower paid cost arbitrage jobs. And I think what you're starting to see is the sapient model in India, which was always focused on the very best engineering talent, people who we were always competing with the startups, not with the traditional IT services space, because we were looking for those people who were real builders in the organization, people who were looking to pioneer stuff. And I feel like when we think about India now, it creates another huge opportunity for real disruption there.
Well, yes, we will look at the opportunities that AI throws up in India. And thanks very much, Nigel, for joining us here in Davos to take us through what you make of the move towards agentic AI and where we find ourselves. Thanks very, very much for joining us.
Thanks for having me.
We will take a break, but the conversations continue here in Davos. We're back in a moment with a lot more. Don't go anywhere. Stay right there.
Of now, let's say, coding can be done through AI. But then what we are training our engineers is how to build applications on top of it and how to do a lot more of design around it.
We have a presidential memorandum that was issued that delays the imposition of tariffs, and in fact calls on each of the trade agencies to start a process to look at countries with which we have a trade deficit, unfair trade practices, looking at existing free trade agreements, looking at sectors that have national security implications. And those reports are due to the president on April 1st. So it appears that there could be some delay in imposition of tariffs, perhaps with the exception of Canada and Mexico. He did make specific reference to those two countries. And China is obviously an outlier as well. So we will see, but there is likely to be a delay in the imposition of tariffs.
Ladies and gentlemen, the President of the United States, the Honorable Donald John Trump, and Mrs. Trump.
having witnessed another successful moment in the experiment that you have entrusted into the hands of the American people. We pray your blessing on our 47th President of these United States, Donald J. Trump, and Vice President James D. Vance.
And we are going to bring law and order back to our cities. This week, I will also end the government policy of trying to socially engineer race and gender into every aspect of public and private life. We will forge a society that is colorblind and merit-based. As of today, it will henceforth be the official policy of the United States government that there are only two genders, male and female. This week, I will reinstate any service members who were unjustly expelled from our military for objecting to the COVID vaccine mandate with full back pay. And I will sign an order to stop our warriors from being subjected to radical political theories and social experiments while on duty. It's going to end immediately. Our armed forces will be free to focus on their sole mission, defeating America's enemies.
Welcome back. You're watching a continuing coverage here from Davos 2025. We've been getting you a whole host of global CEOs to give us a perspective on what the year looks like, but more importantly, what the trends will be to shape things for the global economy as we move forward. Joining us now is the global CEO of Bain, one of the world's largest consulting companies. Christoph, thank you very much for joining us here on CNBC-TV18. It's a pleasure to have you with us on the program. You know, I want to start by asking you about what you make of the read here in Davos in terms of confidence. We're picking up on a lot of optimism from CEOs today, but you know, what's driving that to your mind?
Yeah, there is a cautious optimism, I would say, on the state of the economy and where it's going to go. And fundamentally, there's a few trends that are going to drive where the economy is going to go. Obviously, there's a lot of excitement around the opportunities that are driven by artificial intelligence and the next technology wave, and how that is going to enable fundamental transformation of companies. And that technology combined with the post-global world that we're going to be in, I think it gives a lot of optimism of the...
You're not calling it a post-Trump world.
No, it is a post-global world because it's a trend that has been going on actually for 5-10 years, where everybody tries to find their place in how do we play an international portfolio, and that creates opportunities. Every dislocation creates opportunities for companies, and that's where we're trying to support them. The opportunities around AI, the opportunities in a post-global world, the opportunities in the energy world, because there's a lot of questions around the energy as well. And if you put everything together, I think if we're going to look back 5 or 10 years from now, we might see 2025 actually as the year of the start of a great transformation, powered by all of these fundamental trends of AI, energy, and post-global realignment. And that is exciting in terms of the opportunities that it poses for companies.
And I'm sure that there will be plenty of challenges along the way as well to deal with. But 2025, the year of transformation. So let's unpack each of those trends that you just spoke of. And let's start by talking about AI, because that clearly is the big buzzword here. As you speak with your clients today, what is the readiness? What is the willingness? What is the capacity to take the risk at this point in time? What are they telling you?
Yeah, so if you see 2 years ago, it was ChatGPT launch, and everybody
Yes.
was really excited. And this year, the excitement is there. I mean, the models have accelerated significantly. The results of the companies are very mixed. And so now what we're discussing is how do you turn the promise of AI into true results. And we find it exciting that as we listen to CEOs and what we hear on the ground and what we observe from our clients is we would call that probably only 10 to 15% of the companies around the world are what we would call on high alert status, which is really ready to lean in and to take the opportunity that AI will present in the world, because it will be fundamental. And that is a number that we would love to see increase so that companies really work on their competitive positions for the years to come.
So this 10 to 15% number that you spoke of, and that's a global number that you're giving us, could potentially be the early adopters of AI at scale. Are there any particular sectors that you find these companies in?
Yeah, there's a few sectors that we've truly seen leaning in the generative AI world. And contrary to what might have been expected, it's actually the financial services industry that's at the forefront. It's more regulated, but at the same time, they're truly leaning in. I think in the life sciences and in the pharma world, we see a lot of opportunities followed by retail. Of course, everybody is moving, but if you would have to say who's ahead now, we would call out probably the financial services industry.
Yes, and I think that's what I'm picking up here as well in my conversations with CEOs. But let's talk about the other bucket that you laid out for us, and that's energy. And I think there are question marks at this point in time, especially in a post-Trump world, specifically on what happens now as far as the energy transition is concerned. Do you believe that the threat of a setback is perhaps overdone at this point in time?
We look at it from three different angles because we see energy as having a triple challenge. The first challenge is probably one of the bigger ones that is emerging is we need enough energy to power the world, the growth in India, and of course also the technology transformation. There needs to be enough energy. From a social point of view, it needs to be affordable. And at the same time, we need to continue on the transition. And I think each poses different challenges for companies in order to ensure their availability of industry and to ensure a competitive price situation so that wherever you sit around the world, whether it's in India, in Europe, you have enough energy and it helps you to make your industry competitive on the longer term. And then the energy transition, we believe, will continue around the world for different reasons, societal transformation, energy independence. And in certain places, it's also the lowest cost source of energy. And so we will think that from a market point of view, that will play out. And on the longer term, we will continue to see investment behind the energy transition if you take it at a global level.
And the third bucket, what a post-global world means in terms of opportunities. Here over the last few years, especially post-pandemic, everyone's been talking about reshoring, friendshoring, supply chain resilience and diversification. What will that now lead to? We've seen some of that happen already, but what will you expect on that front?
Yeah, so this is going to happen, and companies need to think about it. And you highlight some individual questions on topical points. The way we think about it is, as companies, you need to think of your portfolio strategy from a geopolitical point of view. Companies have learned in the past to think about their portfolio strategy in products, in markets, customer segments. Nowadays, you have to think about your portfolio strategy also from a geopolitical lens. Where I'm going to play, where I'm not going to play, where is it worth, where isn't it worth to play? And I think also for countries like India, for instance, what role can I play and should I play into that post-global world? And how do I take that realignment as an opportunity so that I can support my industrial base, my companies in my country, in order to tap into the opportunities that the post-global world will present?
So let's talk about India then in specific. Where do you believe India finds itself placed to take advantage of some of the opportunities that you spoke of in more generally and more specifically as far as Bain is concerned? It's also the country that is home to the largest talent base for you outside of the Home Office. So on both fronts, generally as well as specifically, what does India look like?
Yeah, I mean, India looks great. Like, if you want to be in a position where you still have favorable demographics in the world, where you have an economy that's growing, you know, structurally above 5%, and where you can tap into the opportunities of a post-global world more than almost any nation in the world, I think every country would sign up to that portfolio of opportunities that India is sitting on. And so, in that sense, I think it's also good for India then to say, now, how do we put ourselves on high alert around the opportunities so that we tap into the opportunities of AI, enable the energy transition, the energy availability, build the infrastructure to support our companies in the AI wave. And I think that is also something that we want to do together with our talent. As you say, after the US, it's our biggest talent pool. You know, our consulting staff, a capability center, our support staff. And what we want to ensure is that we will bring our consulting staff and our capability centers towards the future, enabling themselves to be centers of excellence in an AI world. And I think that will present great opportunities, not just for us, but also for our India teams as we look into the future. A great economy, a great country to be part of, to support the growth of the companies there, and great opportunities for all the talent that we have in the Indian market.
Well, Christoph, you've also very closely been looking at M&A at Bain and looking at private equity at Bain as well. So, you know, from a 2025 perspective, what's the expectation, especially when we talk about AI? Do you believe that's going to lead to M&A and consolidation? Also private equity, where is the money going to be headed?
Yeah, so there's two trends there. On the corporate side, there's going to be M&A. And we will see an acceleration of M&A coming out of this cycle, because if you would put a pause in 19 and look into 25, it's actually on certain dimensions more normal again, coming out of the big cycles of COVID. And so we will see a resurgence of M&A. I think we see it every day happening now. On the private equity side, private equity has gone through a similar cycle as the overall economy, with a peak and a slowdown. But if we look into a long-term trend, making abstraction again of the COVID period, we see that 2024 was already a good year of growth again for the private equity. And we think that the industry is in a healthy base to continue that underlying trend line that we saw before COVID. And corporate deal making will be great, because corporate deal making is typically a great exit route for private equity firms. And then the stock markets are healthy, and IPOs are also a healthy exit route. And when the exit routes are good for private equity, we see private equity thrive.
Is there convergence between buyer and seller expectations?
There's increasingly convergence of buyer and seller expectations, and that's why we see the deal flow again accelerating, I think, which is great news for everybody involved in the industry.
How acquisitive is Bain feeling at this point in time? You've done about 24 acquisitions in the last, 18 odd years. What does it look like from here on?
Well, we do acquisitions to expand our offering, to increase our capabilities, and a lot of our acquisitions that we've done and our partnerships have been in the technology space, expanding the talent that we have to support our clients in their AI transition and transformation. And we will continue to take a posture, because we are looking very optimistic towards the future in looking how we can strengthen our talent pool, strengthen our capabilities in a world of the great transformation, in a world of AI and technology.
So if I were to ask you to give us a headline for 2025 for the world and for Bain, what would it be?
Go for the opportunities as the start of a great transformation.
Go for the opportunities. It's the start of a great transformation. That's the story, that's the buzz, and that is the readout here from the Global CEO of Bain. Christoph, it's been an absolute pleasure. Many, many thanks for joining us here on CNBC-TV18. We are going to take a break, but the conversations will continue right here. Don't go anywhere. We're back in a moment with more from Davos.
Like in 2017, we will again build the strongest military the world has ever seen. We will measure our success not only by the battles we win, but also by the wars that we end, and perhaps most importantly, the wars we never get into. The golden age of America begins right now. From this day forward, our country will flourish and be respected again all over the world. We will be the envy of every nation, and we will not allow ourselves to be taken advantage of any longer. During every single day of the Trump administration, I will very simply put America first. Our sovereignty will be reclaimed. Our safety will be restored. The scales of justice will be rebalanced. The vicious, violent, and unfair weaponization of the Justice Department and our government will end. And our top priority will be to create a nation that is proud, prosperous, and free. America will soon be greater, stronger, and far more exceptional than ever before. I return to the presidency confident and optimistic that we are at the start of a thrilling new era of national success. A tide of change is sweeping the country, sunlight is pouring over the entire world, and America has the chance to seize this opportunity like never before. But first, we must be honest about the challenges we face. While they are plentiful, they will be annihilated by this great momentum that the world is now witnessing in the United States.